TSMC, the world's largest chip foundry, about the company's investments into the U.S. and how it plans to meet the global AI demand. Stay tuned.
In a
All right, so we've got Japan out of play. This is just a reminder for Marine Day holiday. It's out of action, but the markets that are open looking like this. So ASX 200 is not really doing much. It is just in positive territory, edging higher, just about to 0.14%. The real action is in South Korea, and it's pretty interesting how the semi-names, the chip makers, are coming back a little bit. So it's really just the first 30 minutes of very volatile trade, but they gapped lower, really pricing in what we saw in Asia on Friday, but we do see the urge to push SK Hynix into positive territory. Let's see if it's anything sustainable. But for now, SK Hynix in the green, higher by 0.4%. Shri.
Sherry, elsewhere, the world's largest chip foundry, TSMC, plans to invest an additional $100 billion in its Arizona plant. This makes its total commitment to U.S. chip making $265 billion. Now, our China connection anchor, Emily Tan, joins us now, and she sat down with the CFO in Taiwan. What were the highlights of that conversation?
Well, Shri, when we had the earnings come out from TSMC, there were some key messages that came through. And of course, this $100 billion investment was top of that. So this brings now to $265 billion, the amount of money that TSMC is investing into the United States. And if you didn't know, this becomes the largest single FDI into the United States in U.S. history by a corporate. So with this $100 billion, the latest addition, this will add 4 fabs, 2 nanometer as well as below technologies, that is more advanced technologies, and an advanced packaging fab. This will bring to 12 the number of leading edge chip facilities in the United States. So far, there is 1 fab that is up and running currently in Phoenix, Arizona, with a very good yield, according to TSMC. The 3 nanometer chip factory is expected to come online in the second half of 2027, and phase 3, the 3rd fab, the construction there will start soon. So in addition to the $100 billion investment, there was a boost in capex, now to $60 to $64 billion, up from an earlier $52 to $56 billion. C.C. Wei, the company's chairman and CEO, saying this is very big money and they're going to be doing it carefully, investing heavily to support customer growth. So I sat down with CFO Wendell Huang, and I started by asking him how much of this $100 billion investment is baked into this increased capex.
From the U.S. side, we also see very strong demand from the customer, continued strong demand, multi-year demand. And we're doing very well in Arizona, which I'll explain to you a little bit later. But we decided to continue to increase the investment in Arizona because it's a multi-year structured demand increase. Okay, so for us in Arizona, we're doing really well. We're very happy about it. Our phase 1 using N4 technologies is up and running. The yield is as good as its mother fab in Taiwan. Phase 2 will be moving in tools very soon. It will be N3 technology. Phase 3 will be N2 technology. The construction has already begun. And phase 4 and the first phase of the advanced packaging fab in the US, the preparation works have started. So we're doing really well. We're seeing strong demand from the customers. And we also receive very strong support from the US government, federal, state, city, very strong support. So we decided to increase our investment in Arizona by another $100 billion US.
At this current stage, how soon will we see the 3 nanometer come online?
We expect the phase 2 using 3 nanometers to be online in second half of 2027. And phase 3 and phase 4 will follow. But as you said, it depends on market conditions, customer demand. At this moment, we like to do it as soon as possible. But please note that the capacity is not born overnight. It takes 2 to 3 years to build a fab, 1 to 2 years to ramp it up. So it takes time, but we're doing everything we can to accelerate that.
This $100 billion investment that you are making in the United States, in addition to the $100 billion that was committed at the beginning of this year, was this at the request of President Trump? We heard about 2 weeks ago that he said that TSMC was doubling its chip-making operations in Arizona and increasing investment in the United States. You mentioned local support, government support, federal support. What does that look like?
All of our overseas expansion decisions are made based on customer needs and a necessary level of government support. So when we see the customers' demand is so strong, we see the government support is very strong as well. We decided to continue to increase the investments in Arizona.
In terms of the government support, does that come through in the form of subsidies, grants, and is it milestone driven?
Well, there are CHIPS Act, there are ITC, investment tax credits. So both of them are funding support. They are milestone based, no doubt about that. The other supports are local infrastructure, logistics, water, power, etc. This are also permits, air permits. These are also need to have government support as well.
We also heard about margin dilution from overseas expansion, 2 to 3 percentage points in the early stage, and that's going to widen to 3.4 later. Can you explain why that is?
expansion overseas is more expensive. It takes 4 to 5 times more in constructing a fabs in the U.S. compared to in Taiwan. Therefore, there will be dilutions from overseas fabs. Give you an example. Phase 1 started from dilution. It will improve. The profitability of phase 1 will improve, although it may not reach the Taiwan's level, but it will improve. But then phase 2 comes in, and phase 2 will improve, but then phase 3 comes in. So that's why we're saying in the 5-year period between 2024 and 2029, the dilution at first will be 2 to 3% a year and widen to 3 to 4% a year. That's because the size is getting bigger and bigger. And that actually, I have to stress that the investment, the increasing investment in the U.S. actually help the U.S. It's beneficial to the U.S. in the sense that it further fosters the development of U.S. semiconductor ecosystem, strengthen the supply chain, and help create more high-tech, high-paid jobs in the U.S. So this is really beneficial to the U.S. When we increase our investment.
Is it correct to say that you'll have 12 leading-edge chip facilities in the United States? And if that's the case, in terms of the need for power, the supply of water, in terms of your strategy to ensure that you have these resources, what are you doing?
We need to work with the government. That's very important. That's why we're saying the overseas decisions are based on customer needs and necessary level of government support.
You're also building here domestically in Taiwan, 13 fabs in Taiwan over the next few years. What's the investment sum for the domestic expansion?
We don't have that number to share, but as you can imagine, it's very, very big. For this year, it's already increased from $56 billion to between 60 to 64 billion. We also share that the total capex in the next 3 years will be even more significantly higher than the total capex in the past 3 years. We're seeing this strong structured multi-year demand, and we do not plan to leave any food on the table for anybody else.
And we are continuing to watch shares in TSMC getting hammered on a Friday. Of course, the entire sector was under pressure, but the stock was down 7% in Taiwan trade. So we'll be watching what happens today. This comes as the TAIEX was punished as well, plunging its biggest single-day drop on record, down almost 3,000 points, breaking a previous record which was set on April the 7th following the Trump tariff policies last year. But I did get a chance to speak to Wendell about this fragility that we're seeing, Sherry, in the market. The ban by SK regulators, or I should say Korean regulators, on the single stock ETFs, whether or not that impacts TSMC and how they view their stock. But really, the investors were also punishing the fact that they're having lower profit margins for the next quarter, 2 to 3 percentage points in the early stage, and then 3 to 4 percentage points at a later stage because of the build out that they're having in the United States.
Yeah, and the build out, I think there is definitely a great story angle to it, and you can look at some of the companies that will be receiving that kind of capex money, and you could find some winners. But I think it was just really across the board washout that we saw on Friday. But this massive, aggressive investment number coming from a very rather conservative and really careful management in TSMC. Pretty interesting. And you actually touched on this with the opposition party, the chair of Kuomintang party, when you were in Taipei as well. So what does she have to say about this particular investment? I mean, it's really the global focus right now.
Yeah, everybody wants to know about the Silicon Shield. Right now that we have $265 billion investment from TSMC, being the largest single FDI into the United States in history. We're watching whether or not this Silicon Shield is being thinned out. Now, this comes, my conversation with Chung Li-wen, chair of KMT, comes as the DPP, this is the ruling Democratic Progressive Party, they held their annual convention and they were reminded reminding their followers or their people that they oppose the red terror coming from Beijing. He being a President Lai Ching-te, expecting comrades within the party to stand on the front lines, unite as one, and jointly oppose the threat posed by China's red terror to the Taiwanese society. We must work together, he says, to protect our democratic and free way of life and absolutely never allow democratic Taiwan to turn back and become China's Taiwan. So with that, I sat down with Cheng Li-Wen, chair of Kuomintang. She recently was in Beijing. This was in April. This is the first time that the leaders of the two parties, being KMT and China's Communist Party, sitting down for face-to-face talks. And then a few weeks after that, she ventured over the United States and had a 2-week trip in the United States, visiting multiple cities. Some saying that this could be signs of presidential ambitions when they go out on the international stage like this. But I did ask Cheng Li-Wen about the United States' support for Taiwan. My question was, President Trump, having commented just recently having to travel 9,500 miles to fight a war, his hesitation towards flying that far to support Taiwan. I got her reaction to these comments.
We should be clear-minded about this reality. The United States cannot be expected to support Taiwan unreservedly and unconditionally, or to commit itself to any future war in the Taiwan Strait. This red line is clearly directed at Taiwan's independence. The reason that cross-strait relations have become so dangerous and fraught with crisis is that Taiwan's independence has become the most important trigger. Therefore, effective crisis management and maintaining stability across the Taiwan Strait require clearly eliminating unnecessary wars that could be provoked by moves towards Taiwan's independence. In fact, President Trump's statement does not mean that the US will no longer provide Taiwan with military or security support. Rather, it means that the US will not get involved in a Taiwan Strait crisis brought about by what it sees as irresponsible moves towards Taiwan's independence. I believe it is a good thing to make this clear in advance, so as to prevent anyone within Taiwan from irresponsibly taking reckless gambles by using calls for Taiwan's independence to provoke military conflict and create unnecessary tensions between the two sides.
Taiwan's crown jewel, TSMC, has just announced another $100 billion in investment in the United States, bringing the total investment now to $265 billion. Does this weaken Taiwan's silicon shield?
台积电对台湾来讲非常非常的重要。
For a company like TSMC, expanding its global footprint is entirely normal, including investments in the United States. The key, however, is that TSMC's core technologies and R&D capabilities must remain in Taiwan. While we continue to protect and support TSMC's irreplaceable global leadership, we must also begin cultivating the next national shields after the semiconductor industry. We cannot rely on the silicon shield. Otherwise, it will pose challenges to Taiwan's future competitiveness, economic resilience, and overall security.
President Xi Jinping introduced a framework of constructive strategic stability with President Trump in their meeting. Does this give Taiwan more or less autonomy in deciding its future?
无论中美做什么样的决定。
Regardless of what decisions the US and China make, those of us in Taiwan must retain the voice and the initiative in shaping the future of the Taiwan and the Taiwan Strait. The right to self-determination is something we must secure through our own efforts. Taiwan has strategic advantages. We will never allow ourselves to become merely a passive victim or a bargaining chip in someone else's geopolitical game. As a responsible political party, we should adopt this way of thinking, and we should pursue a cross-strait policy based on these principles. For the Trump-Xi summit, from KMT's perspective, we believe this represents a positive and healthy development. After all, between the world's two superpowers, we don't wish to see a zero-sum game that's marked by confrontation and mutual losses. that would have global repercussions, and Taiwan, in particular, would be among the first to bear the consequences.
The $14 billion U.S. arms package, which includes interceptors, air defense systems, which is needed in today's warfare, what do you think is holding it up?
根据我们从媒体的报道，
According to media reports, President Trump, based on U.S. national interest, and I believe also taking into account interactions with Beijing, has prompted a reconsideration of the $14 billion deal, what had originally been planned as a second round of U.S. arms sale to Taiwan this year. It is now quite clear that this package has been put on hold. Based on my knowledge, it seems that this latest round of arms sale is rarely mentioned anymore. However, in the long run, I believe that military and security cooperation between Taiwan and the United States will remain very close and stable. We do hope that Taiwan can build a truly sound and effective defense system. In this regard, there is no denying that our most important partner remains the U.S.
我们最重要的合作的伙伴还是美方。
Would you support a peaceful reunification? What would it look like? Could it be something like one country, two systems, like what we have in Hong Kong?
在香港的一国两制，
The one country, two systems model implemented in Hong Kong has never gained traction in Taiwan. Public acceptance for such an arrangement in Taiwan is extremely low. It would be very difficult for such a proposal to win public support in Taiwan. Regarding the future of cross-strait relations, I take a very pragmatic view. At the current stage, the priority should be to establish and strengthen a framework for peace, so that peaceful exchanges and dialogue can be sustained over the long term. The framework shouldn't be subject to change for political reasons, such as party change in Taiwan or leadership change in mainland China. If I could achieve this goal during my term as the KMT chair, it would be an extremely significant accomplishment. Within a peaceful cross-strait relationship, we can develop many new mechanisms based on the needs of the people in a healthy and constructive way. As for discussing peaceful reunification, that would be part of the eventual end state of cross-strait relations. My principle is very simple. I do not presuppose any particular outcome or position. I simply want everyone to understand that if an arrangement is not accepted by people on both sides of the Taiwan Strait, it will be very difficult to achieve. Therefore, the best final arrangement is one that reflects the wishes of the people on both sides and meets their needs.
就是最好的安排。
Emily, I can certainly see what you mean when you say that Cheng Li-wen has presidential ambitions, but bringing it back to TSMC, which doubled down quite clearly investing in the US. And we just heard from the opposition there saying, don't neglect the supply chain in Taiwan and move it from a silicon shield to a national shield. The challenge for TSMC is, can they do both?
Yeah, we are watching this very, very closely with this latest $265 billion investment in the United States. So with this, it raises the question whether or not there is a silicon shield. We're looking at diversification rather than completely moving all of the production to the United States. There's two ways to look at this. First, the U.S. becomes less dependent on Taiwan. Advanced chips now are being produced in Arizona. There's going to be a total of 12 advanced leading-edge chip facilities that are eventually manufacturing in the United States. Yes, this is going to take a lot of time because only the first fab is currently up and running, and the second one will only come online in the second half of next year. So what we're seeing is the development of manufacturing in the United States. So production is being globally diversified by TSMC, not only in the United States, also going through into Japan as well. They're trying to do things as fast as they can because, simply put, the supply is not. The gap is too big with demand. So this disruption that we're seeing, TSMC, the company is trying to catch up as fast as it can. Then you look at the flip side of the coin, the positive side. Taiwan still remains the epicenter of the AI revolution. They're still building more fabs in Taiwan, 13, of course, in addition to the many that are already in production in Taiwan. And Phoenix is just a diversification rather than a relocation. But then having said that, U.S. jobs will depend on TSMC, this expertise that Taiwan TSMC is bringing to the United States. It still comes, the brain still stays in Taiwan. So I guess my conclusion is that the silicon shield is there, but it is being thinned out.
Yeah, I think you make an important point there, that the brain is staying in Taiwan. And sure, I think it's also legitimate to question whether this sort of weakens Taiwan's silicon shield, but maybe it just needs the U.S. shield in all this. So maybe it's really the complicated geopolitical calculation that goes into this while keeping that brain in Taiwan. And I think it's very interesting how the CFO was talking about how he doesn't plan to leave any food on the table for anybody else. Maybe this formidable foundry company in the global market is feeling some heat from the U.S. government. Remember, the Trump administration is really providing this cushion for companies like Intel in the form of what some are calling state capitalism. So I think it's a clear sort of signs of heating up the competition with the likes of TSMC over in Taiwan to further foster the manufacturing prowess of the United States. Sure, it will take time. It would be more expensive, but I think that is just really the way of a TSMC hedging in all this as well. But of course, to be continued and never going away, this conversation and this company. Thank you very much, Emily, for that.
Thank you
and
very
of
much,
course, bringing
Emily.
us important
Great work.
conversations from Taipei. Squawk is going for a quick break here. We are back in 2.
The hearing
got the South Korean markets coming back from a holiday and, yes, looking negative. But I think it's interesting to show how the Kospi heavyweights are playing out this morning. So, yes, the memory trades are still struggling. And the consensus that we seem to be getting so far is that there is more leverage cleanse to go, more volatility to go. So, yes, we did see some flickering around the negative territory and positive territory for names like Samsung Electronics and SK Hynix, but they are both down now. But I think the real trade is what you see at the bottom of the screen, Samsung Electromechanics. So that is the component maker, that is a semiconductor package substrates maker. I think that's where the market has nibbling onto, and it's not all semi trades being gone, but I think it's really the market looking for more nuanced trades after what we saw in memory sector. Stay tuned for the rest of the market opens. Taiwan, Singapore, and Malaysia all set to open in just a couple minutes.
News agency.
Day, and it is stable at 5,526. You're watching Squawk Box Asia. I'm Sri Jagaraja at the SGX.
And I'm Shara Kang in Hong Kong. Let's get to your headlines this hour. Asian stocks mostly on the back foot as oil climbs on an escalation on the war in Iran. The U.S. Central Command says it is conducting a new wave of strikes against Iran, making it the 9th consecutive night of attacks.
And China shows its AI muscle at the World AI Conference with a raft of announcements and plans for real-world rollouts of products. Meantime, companies including Huawei and Alibaba unveil new AI hardware to narrow the gap with the United States.
And the CFO of the world's biggest foundry, TSMC, talks to CNBC about its overseas investments and the challenges of meeting the global AI demand amid the prospects of higher inflation.
We did see a higher price from some of the materials and gases, but so far we're able to manage that, the impact.
Let's take a look at these markets because the big one is not trading, and I'm referring to Japan, which is closed for a public holiday, Marine Day. Nevertheless, we do have South Korea and Australia to consider. The Kospi is an interesting one. It's the first opportunity to react to tighter regulations limiting single stock leveraged ETFs. So expect something of a clear out or a washout of some of the weaker hands in the market, or it could be an agnostic event in the minds of the retail traders, which are quite a formidable force, and there could be more retail money going into these ETFs. Anyway, well, let's bear that in mind. The Kospi in the here and now is down by 2%, the Kosdaq down by 3.5%. Australia, given exposure to rising oil and gas prices, given the resources exposure there, is up by 0.2%. Singapore, Malaysia, Taiwan have just joined the trading day. We were just talking about Taiwan and the somewhat curious reaction in TSMC and on the broader TAIEX last week. Nevertheless, TAIEX is coming back, up by about 0.6%, 42,900. Straits Times is a little bit wobbly at this level of around 5,500, and Malaysia is holding on in there at this level of 1733. Sherry.
Yeah, and I was just looking at some of the top tech names in Taiwan. Right. It is a mixed picture, but we do have a TSMC in the money after really the brutal session that we saw on a Friday. So UMC is down, doing its own thing. It's down as much as 8% or so. But TSMC is coming back, trying to come back from the Friday sell-off. And let's bring in our colleague, Emily Tan. And you actually had the chance to sit down with the CFO of a TSMC. I mean, what are some of the highlights? I mean, we're just talking about this in the last hour as well, but he was just saying that I'm not going to leave any food on the table for anyone else out there, and that explains his really the decision to go big with the U.S. investments.
This is the world's largest contract manufacturer of chips, commanding market share of something north of 70%. And we're looking at TSMC continuing to spread its tentacles with $265 billion now pledged to the United States to build out the semiconductor industry there. We already talked about the Silicon Shield, how this is going to be impacted, but then we also heard about TSMC and the boost to capex. They've raised that now to $60 to $64 billion, up from an earlier $52 to $56 billion. All of these key messages coming through from the company's latest report card, which for its part was at a record high. And because of the carnage on the Friday market, the market forgot that they reported stellar results for the second quarter. It was a record $22 billion, up 77%, with revenues of $40.2 billion. So with that, the company raising capex to $60 to $64 billion. And why are they doing this? Well, the company, CC Wei, says that it's due to demand and inflation. So I dug into that a little bit because we never really talk about inflation when it comes to raising prices and the impact that it has on the company. And I asked him where they are seeing the price increases. This is Wendell Huang, CFO at TSMC.
You see price increase in many places. So we build that into our assumptions. And then that becomes part of the increase in capital expenditures.
Are you able to share a little bit more? Because as we were watching the Iran conflict, the energy shock that came with it, were you impacted by this?
The source, we are able to diversify multiple vendors, even multiple locations. So the source itself isn't a problem. We did see a higher price from some of the materials and gases, but so far we're able to manage that. The impact.
Were you impacted by the Middle East conflict?
I would say the impact is manageable.
So in terms of the Strait of Hormuz and the closure, the need for gases to manufacture your products, access to helium, what gases are needed and what impact did you see on these supplies?
The people always mention about helium, but we do have multiple sources. diversify from to different vendors, to different countries. So we also keep our own safety stocks. So we don't see any disruption in short term to our operations from this Middle East conflict.
Are you able to indicate or share which resource, which part of the supply chain saw the biggest price increase?
I'm afraid not.
And how long do you expect this inflation to persist?
We think the inflation will continue, but we'll see.
So we continue to watch the latest to come through from the Middle East, the Iran conflict, as we know that the fighting now it does continue, and TSMC shares making a comeback today, better for almost 2%, 2,335. This is after sinking more than 7% in Friday's session. This as investors were fretting over the lower profit margins next quarter, 2 to 3 percentage points in the early stage, 4 to 5 percentage points later. I did get a chance to ask Wendell about the fragility that we are seeing in the stock market to do with SK Hynix and all the single stock leveraged ETFs and the impact there, whether or not he was concerned about that. He said that the ban by the SK regulators, they're not concerned because they do not have control over the market. And also when it comes to the global memory space, the shortage and the hefty price increases, has that impacted business? And he says that the market will be challenged because of component price increases. But for TSMC, he says that they're focused on high-end markets, so there is no impact for TSMC. We're looking at some of those South Korean chip makers and, of course, TSMC as well, making a comeback today. And the one-year jump in shares, it's more than doubled so far in the last 12 months, up about 50% so far this year. So we're going to be keeping an eye on TSMC, and we'll have more discussion throughout the day on the China connection. I, of course, asked him about the Chinese market, which we've seen in from recent sales or the revenue figures that the percentage of contribution from China has declined because they make legacy chips in the Chinese market for the Chinese market. And we'll get into that coming up in the next hour. Sherry, it's back to you.
Yeah, I thought it was interesting how the TSMC CEO actually said that he's jealous of memory companies and profitability as well. So really, everyone is watching the price action. Thank you so much, Emily, for that. Now, we are less than half an hour away from the start of trade in Greater China. So right now, we've got the futures showing some comeback here, especially when it comes to FTSE China A50 futures. We do see some comeback. So let's see if really carries through for the cash trade in Hong Kong and mainland China. And we just got China's 1 and 5-year loan prime rate as well just a few minutes ago. And those benchmark lending rates were left unchanged. And this was widely expected, although you could argue, given really the soft investment numbers as well as weak credit numbers, it could reinforce the hope or the urge for some easing when it comes to monetary policy. But we didn't really get that. This is, of course, as we are counting down to the mid-year Politburo meeting in China. So there are signs of an uneven recovery in the world's second largest economy after second quarter economic data did come in softer than expected. Sri.
Sherry, before we go out for a break, Spain are champions of the world once again. Super sub Ferran Torres struck in extra time to seal a 1-0 victory over defending champions Argentina, crowning the Spaniards world champions for the second time in their history. It caps a golden era for Spain, adding the World Cup to their 2024 European Championship win. For Lionel Messi, the dream ends in heartbreak, with the Argentine legend in tears after what could be his final World Cup appearance. Felicidades España, campeones del mundo Argentina, jugaste bien. Quick break here, back in 2 minutes. Welcome back. Let's take a look at these markets. You're not seeing any quotes for Japan. Remember, let me remind you, the market is closed for a public holiday. That is Marine Day. Elsewhere, we are seeing some weakness on the Kospi and the Kosdaq. It's not particularly pronounced, given the volatility, the sheer volatility and the sheer outsized losses that we have seen before. But perhaps this is market coming to terms with the regulations that were announced last Friday to limit the retail investors and their access to the leveraged ETF, single stock ETFs. High leverage, of course, remember. Straits Times and Australia are doing manfully. They're up by about 0.2%, although we are seeing a little bit of slippage on the TAIEX, which started off quite strongly, all things considered, but now is starting to sell into that rally. Malaysia at 1,730. Let's bring in Jackie Tang now, CIO of Emerging Markets at Deutsche Bank. Jackie, great to have you on the program. Let's kick off with South Korea. Does the Hynix US listing on the NASDAQ narrow, ultimately, the Korea discount, or does it deepen it?
So basically, we think that there are a lot of clients actually asking the questions about either whether the Korean stock market is in a bubble. So our short answer is no. Why? Because fundamentally, it's not a bubble. You look at all these earnings growth, from the Korean companies, especially the Korean equity market, is expecting to deliver a 3-digit earnings growth for this year. And if we are thinking for next year, 2027, we are still expecting a 30 to 40% earnings growth for next year. So on a fundamental perspective, we don't think this is a bubble. And also, if you look at valuation, right, after a 60 to 70% run up in terms of the equity prices, the forward price earnings ratio is still below 10 times. So from that perspective, we don't think it is a bubble. But from a sentiment perspective, we think that was a bubble in May and June, because if you look at some of the technical indicators, they're all pointing to an extreme overbought in the past 2 months. And in the previous occasion, when that extreme overbought in the subsequent weeks and months, we are going to see some major corrections like what we have seen so far in the past 2 weeks. So basically, that 30% down, we think that it is a technical correction. It's not a fundamental correction. And very importantly is that after this 30% down, we are not in the oversold territory yet. Right. So that means in the next couple of weeks, we may continue to see some volatility in the Korean equity market. But on the medium to longer term, we are more positive in the equity, Korean equity, given where we are in the AI cycle.
2 questions, Jackie. Are there then, where are those value opportunities outside the 2 index heavyweights of Samsung and Hynix? And just how critical is July the 29th going to be, which is when Hynix deliver their next set of results, which I would imagine are going to be scrutinized by this new cohort of US investors. And we know how harsh Wall Street can be.
But we're still expecting a pretty decent earnings from majority of the semiconductor players, and that's why we think that the second quarter earnings is a important milestone for the equity prices to go upward. And very importantly is that we expect Q2 a strong Q2, and also they will deliver a good Q3 guidance, and that's what always also pushing the equity prices upward. And going to the point where besides semiconductors, we also like financials, because if you look at the current yield spread, right, the long-term yield versus the short end, basically the spread is still quite steep, which is usually a benefit to the banks and financials in general.
Jackie, how are you approaching China and India? Because there's a sense, once again, when you consider what's been happening with the real escalation in the Middle East, oil is once again likely to challenge $100 a barrel, possibly even higher. Are emerging markets going to be left at the altar again?
So obviously, in the past few days, we have seen the geopolitical tension tighten. But at the same time, this is actually for exactly where our investment thesis, where our base case scenario sets. It is a ceasefire, but it's a fragile ceasefire. So we basically don't agree that oil price will shoot up above $100 at this point. We think that it will fluctuate between $75 to $85 towards the end of the year. And inflation at this point will start to come down gradually. And with that, basically, it will benefit majority of the financial market, including equity. So to your point, in terms of China, we actually identified a few structural drivers to push the Chinese financial market in the second half of the year. So, for example, of course, we have to look at AI. In terms of AI in China, we have just have the AI conference in Shanghai. The latest K3 models looks pretty promising with lower costs. And also, if you look at the other sectors, including like the EV sectors, the advanced technology, and also the energy security theme that we always highlighted that after the war, a lot of Asian countries started to diversify their energy mix, and that will benefit the energy infrastructure players in China. And finally, of course, when we look at China, we also look at the other reforms, like for example, the SOE reform, and also some of the export leaders in the Chinese space. So that's where we are, and we think that China in the second half will continue to do well in the second half of this year.
Well, China doing well in the second half of this year. I mean, China has been such a frustrating market for some out there. I mean, it's really about positioning as well. And when you were listening to President Xi Jinping on Friday at that AI conference, and when you see all these narratives playing out around a Kimi K3 and people trying to play around it and what's actually superior compared to some of the U.S. competitors, what investment ideas came to your mind? Because I'm thinking if the appeal is a cheaper open source, then you don't really want to touch the China internet names at this point, right?
Yes, that's true. And actually, we received a lot of questions over the weekend that if the K3 model were going to impact the U.S. Model, because people will switch from the U.S. model to the Chinese model. Yeah. But our short answer is no, because first is that the Chinese model, a lot of Western corporate and government, they are quite sensitive of using the Chinese model. So Kimi 3 is just the new one, but DeepSeek, you remember 2 years ago, the adoption of DeepSeek generally in the international world is not that high. I mean, the adoption is mainly in China and also some emerging markets. So in that regard, so basically we don't think that the Chinese model is going to replace the US model at this point. And also you look at the US government and also the EU government, they also have a lot of restriction in terms of data flows, and also they're promoting all these AI security, AI compliance, right, all that. So I mean, to us, it's not a replacement, right?
Yeah.
But so, and then President Xi, over the weekend, they mentioned that it's a collaboration, right? It's all about one AI, right? So we have to cooperate with each other. So I think that's the point where he wants to make. And, we'll see, because there's still a very fragmented world in AI at this point.
Yeah, I feel like China was playing the long game, and maybe it was also playing the game of building friends. I think that's what President Xi Jinping was highlighting as well in his own very subtle manner as well. So do you think we should be looking at like the Chinese AI labs, and some of them could be tapping into the public market soon, as an export item coming out of China, which can be quite different from how we perceive OpenAI and Anthropic's of the United States, because they're really just the U.S. household names. So how should we view these Chinese AI labs right now?
No, the Chinese AI lab, obviously, what I mentioned earlier, the adoption is more domestic in China, but at the same time, emerging markets in general, right? Yeah. So that export side will be onto the emerging markets. So of course, we're not expecting they have a big influence in the Western world, but emerging market is very big, right? So that's why, to your point, is that it is actually an export, exposure over there, right? So that's why I think investors should look into this sector, especially when we talk about AI, right? In our investment strategy, we think that AI, we should think beyond the Max 7. We should think beyond the hyperscaler, the US model, because we have the huge value chain over there, semiconductors in Korea, Taiwan, and also there's like, Chinese model, also Chinese AI, also, those construction companies, utility, this entire value chain. We should own that because the rotation is very fast within the AI value chain.
Talk about rotation being so fast. It's really hard to keep up. I do want to quickly go back to South Korea because I think it worked as an amazing non-U.S. alpha. And then foreign investors exited to South Korea, really at the end of April as well. What's next within the emerging market? What is going to prove to be the non-U.S. alpha in the second half of this year?
It's $1 million question. And of
yes.
course, what we have seen is, for example, past 2 years, the Max 7 went up, and then now there's Korea Semiconductors, TSMC, all that went up. And I think next is more about, like, for example, Chinese AI definitely is the underperformer over the past 1 year. And also we're looking at some other derivatives, like what I mentioned earlier, the storage company, the construction company who build data centers, and also the utility companies, because electricity consumption will go off the roof because of the data, training, etc. So all these segments, right, will be quite important to play the entire AI supply chain in the second half of this year.
Picks and shovels and infrastructure plays back on the table. Jackie, thank you so much for coming in this morning, despite the dismal weather conditions here in Hong Kong. Jackie Tang there from Deutsche Bank. Coming up on the show, Hong Kong and mainland China markets coming online in just a few minutes. We've got you the opening trades when Squawk comes right back.
Administration in
Welcome back. You're watching Squawk Box Asia, and yes, it's pretty wet out there in Hong Kong. Let's take a look at the market opens here in Hong Kong and mainland China, and the Hang Seng Index is... Ooh, did you see that lane drop? Yes, and then we've got some gains coming through. The Hang Seng Index higher by 0.8%, and look at the outperformance for the Hang Seng Tech Index popping by more than 2%. There's got to be a good story out there. Let's go through some of the heavyweights and to see where the action might be coming from. And yes, my guess was Alibaba, and I was right. It's higher by 2.9% or so. Tencent is also in the money, although some of the other names are looking pretty subdued this morning. So that's really the story, the tech strength playing out in Hong Kong. And let's zoom in on one of those names. Alibaba, the Chinese tech giant, has launched a preview version of its flagship Qwen 3.8 Max model, which is reportedly comparable to leading frontier AI models. Alibaba claims it is, quote, second only to Anthropic's Claude Fable 5. The Qwen 3.8 Max preview is said to be the strongest model of the Qwen family. Meantime, the mainland markets coming online at the same time. Let's take a look at the action there, and a similar story playing out here. Strong for equities. And when it comes to the currency story, we are tracking 677 for the onshore yuan. So the yuan strength is what we see here. And we also got China's 1-year and 5-year loan prime rate out top of the hour. They didn't move the rates, and we're really talking about the mortgage rates, benchmark mortgage rates, and no change. And this was widely expected. Now, that's despite signs of an uneven recovery in the world's second largest economy after second quarter economic data came in softer than expected. Now, let's dig deeper into China and AI. We've got the AI startup Moonshot making a lot of ripple effects right now, reportedly preparing a Hong Kong IPO within the next 6 months as Beijing steps up support for domestic AI development. Our China reporter Elaine Yu has more. So have you had the chance to play with it over the weekend?
Not personally, but I've been reading all about it. And, you know, with the WAIC happening, I feel like Moonshot here really stole this thunder with Kimi K3, its largest open-weight AI model with 2.8 trillion parameters. That's being a threat to these expensive frontier American models. And some even said that, you know, Claude actually included its Fable 5 back to its more premium subscription plans instead of charging those usage-based fees in order to stay competitive with the Kimi K3, which costs less. And now Moonshot also reportedly told investors it is preparing to list in Hong Kong in as early as 6 months. That is according to a report by Bloomberg. But over the weekend at the World AI Conference, we do see companies ramping up their challenges, their efforts to challenge the dominance of American AI giants. We have Alibaba's chip unit, T-Head, open sourcing its proprietary software stack. The sale that it says will lower the barrier for programmers globally to adopt its hardware. And also we have Alibaba previewing its next generation Qwen 3.8, as you were talking about, Sherry, earlier, but also the chip design firm Biren, which is listed in Hong Kong. It unveiled its light-based architecture to link thousands of AI chips together. And of course, you have Huawei as well, unveiling its large-scale AI computing system to train models and for inference for the agentic era as well. So it's not just about helping the global south, but really challenging that U.S. dominance.
Yeah, so let's talk more about that with Ronald Keung. He is the managing director and head of Asia Internet Research at Goldman Sachs. Ronald, thank you so much for coming in this morning. So it's really another DeepSeek moment, as some people would say, and we've had many DeepSeek moments along the way. And I think, you know, compared to the very first DeepSeek moment, DeepSeek R1, I think people are better composed about the impact in all this. But let me ask you this. Is it positive or negative, NVIDIA and the GPU story around the U.S. sector right now?
I would say let's focus first on the LLMs.
Sure.
We put out a 50-page primer just a week ago. We're talking about the DeepSeek moment from a year ago to JIPU moment, which was not just good enough, it's getting better and better towards frontier. And now we have a Kimi moment, which we call it the kind of pricing plus frontier moment. And that is kind of where, in essence, we're looking into why and how have they achieved these open source models towards frontier. And we're looking at quite a competitive landscape, which is 7-8 players. I think all of these moving ahead of itself, and then we have another moment. So what we introduce is a competitive positioning framework. So we look at the pricing power, which is time to market our models, cost advantage for long-term sustainability and financial strength. And therefore we could see a lot of funding of the LLM players. And this is the financial strength, which is one of the 3 key pillars for long-term success.
Okay.
We also need the inference kind of advantage of cost, but ultimately it's who reaches towards the frontier closer and closer, or even leading. So over the weekend, we've seen this K3 that has reached #1 in front-end coding on arena.ai. And we call this the major moment that drives the really strong interest in the space, but we also saw significant pullbacks of Knowledge Atlas and Minimax on Friday because of that. Who is the winner? Who is the long-term? Standing to the end, that is where investors are most
Okay, so
focused
let's
on.
just slowly build up the conversation, and we'll probably get to the GPU angle at the end of this conversation. But what I found interesting is that a lot of these Chinese AI labs, they actually kick it off with open weight, open source, and then they somehow evolve it, and after drawing some developers here, and then they go closed with some of their tiers. What is the strategy? Because this is something that's not really playing out in the US and some of the frontier AI labs in the United States. Is that really the way for maybe the Chinese AI labs to draw in some of the, not only the domestic developers and companies to engage here, but really, are they thinking like going global, at least ex-US global?
Yes, so we call Chinese LLMs reaching the critical point of intelligence for global proliferation. And for coding in specific, when you have the coding data that runs through your own API channels, those real-life data gets to train your model for self-improvement. And therefore, what we're seeing is that increasing models in China, scaling up to initially 1 trillion, but now the latest 2.8 trillion from K3. And with that, an increased boost in API demand for the official channel that these companies offer. And with that, that data feedback loop goes to self-improvement. And that's where we saw in the JIPU and now in Kimi, there's strong demand for coding, and that trains your model again and again through the iteration process. I think from open source and moving to open weight, and what we call for is potential community license. How about open weight means you could still offer, and most of these models, you could house it on Bedrock, you could house it on any overseas hyperscalers. And the LLM companies actually don't even get a revenue for those. What we're calling, for example, Minimax has started a community license. If it's for commercial use, you start to have a revenue sharing. This looks more and more like a SaaS kind of LLM model with less burden on compute. And that's kind of the result of a very tight computing environment and tight chip supply, all of that led to a open source approach, going to open weight with global proliferation and an API channel that drives the internal feedback loop for self-improvement. So we are in a very critical moment of that.
Yeah.
So do you see that, the revenue sharing, with the more selling to third parties, with the open APIs being the future of how these developers monetize?
So first you have your own API channels that you offer the compute. So that's kind of where LLM companies are different from the past kind of era of kind of that software or SaaS. It's LLM that you offer your compute, your gross margins, all of that. But yes, there's also another part is for global proliferation. When these models are housed in another hyperscaler or third party, that revenue sharing could create, we think, a blended kind of revenue structure for these LLM companies for China. Open source and open weight, I would say, that's the China approach at this point.
And for American, lawmakers, we see them, more talks about considering ways to restrict American companies who favor a lot of these Chinese AI models because they are lower cost. Do you think targeting the non-U.S. markets, the global South, will help make up for any restricted access potentially from the U.S. side? Is it enough to offset that?
So we look at three different risks for the current proliferation and on our strong token consumption demand that we're estimating for the Chinese AI models. One is, of course, Western markets, data security. Where will the data be housed? Where is that compute being done? So that reminds us of a bit on that TikTok kind of first you have a lot of attraction, a lot of users, and then kind of regulations typically come through in a second stage. The other would be as Chinese models become more and more advanced. We're talking closer and closer to frontier, or with some cases already at the frontier. Are these still going to be 100% open for anyone? Any country, any businesses to just put it onto your racks and compute on that. So there are some news reports talking about whether the top of the top funnel would be more restricted, but majority of Chinese models would still have an open source approach. And third would be the access of the high-end computing to iterate models at the current very high pace.
Sherry has a question for you.
Thanks, Sherry. Hi, Ronald. You touched on Meituan's. I need some help here, Ronald. Longcat 2.0 open weight mixture of experts LLM. In plain English, can you tell me what that means and how potentially transformative it could be for Meituan in putting itself ahead in the game? So amongst the internet mega caps, we've seen Alibaba, the Quen 3.8 Max that we just talked about, and ByteDance. These two have leading models, and Tencent is now catching up with its Hunyuan 3. Meituan has a unique approach. They pursued the whole 1.6 trillion parameter model through 100% domestic chip. So we do call this a very first move of 100% self-sufficiency, and that will likely set the future on not just for inference, where we have a domestic ASIC supply ramp up that we're anticipating hyperscalers will spend more capex into the second half on that increased supply, but on the training side, and that this sets the first on 100% trained on domestic tech and infrastructure, and we think this increases the resilience, of course, of the whole LLM sector in model iteration and model inference, and what we see a 25x increase in tokens between now to 2030 from our global team, and we're also expecting that sort of ramp up in agentic AI adoption, driving that token increase, and domestic chip and the ASICs of low cost, high efficiency will be a key driver there. Ronald, I can't help but feel that the open weight model is not going to work, especially when major US cloud providers are already hosting Chinese models. Is that arrangement going to continue, or is it going to be ultimately reconsidered given the concerns about national security?
So we're talking about these models are reaching a good enough, and now even up to a frontier at a quarter to a fifth of the price. And I think the key would be where these models are housed. And we just talked about if it's for Chinese customers, these are housed in the Chinese hyperscaler. If it's for anywhere outside of the mainland, then it's housed on either the API channels, that is, the data is located outside as well, or completely housed on a US hyperscaler. And so at the end, it's the US hyperscalers that are doing the compute. That's where the data stays. And the key would be the cost efficiencies and the increasing performance of these models. And of course, the open source community creates a positive feedback loop even amongst developers, and how that open source is quite different from the proprietary closed approach that we see in the West at this point.
Ronald, you put it all together, and we know how the Chinese internet names have been beaten down because there's this market fixation on the chip sector. Where does the buying opportunity, or where does the value opportunity lie, given the balance of what the Chinese internet names have been doing to really reinvent themselves through the LLMs?
Yeah, so from our LLM primer, we actually compared the, as we said, pricing power, cost advantage, and financial strength. And the independent companies on our ranking does come higher towards the top 2, top 3. And that brings to a question, how about the mega caps of China Internet? Of course, we see that in the US market as well, where you have independents versus mega caps. And the model companies are still pursuing frontier, and that's the case in China as well. I would say for the China Internet mega caps, cash flows, core business, and funding that core business, strong cash flow into a compute hyperscaler business is where our companies, including Alibaba, have been focused on. And both of these, we actually talk about harness as one of the key second half focuses as well, not just the models, but coding agents. So we have WorkBuddy from Tencent, Coder from Alibaba, Trade from ByteDance, and Zcode from Zhipu. So that is where the application layer, first coding and more to come in workspace and enterprise. And those would be the key drivers, not just on compute, but also on the model layer with model as a service. So we're seeing the strong growth in that part of the businesses from a China Internet mega caps as well. But admittedly, the second quarter macro was extremely soft, and therefore a lot of the core business from payments to advertising, these were pretty soft in the second quarter. That led to a pretty difficult second quarter, but we're seeing some of that turning points on the core businesses into the second half.
Ronald, great conversation. We'll leave it there, sir. Thank you very much indeed for joining us on the programme. Ronald Keung there from Goldman Sachs, and Elaine Sherry, thank you very much indeed. Now, on to the biggest IPO in Asia this year. Chinese chip maker CXMT's IPO has drawn strong institutional demand, with investors subscribing a total of 1.24 trillion shares, meaning the offering is about 570 times oversubscribed compared to the 2.17 billion shares put on offer to them. But that's still nowhere near the level seen in recent star market IPOs, which were over 5,000 times oversubscribed. Retail portion of its IPO, meantime, was 240 times oversubscribed. Demand may be taking a hit due to a recent sell-off in chip and tech stocks. The star market is now in bear market territory, currently down more than 20% from its peak on July the 1st. Take a quick break. We're back in 2 minutes. I wanted to update you with some headlines coming out from Marco Rubio, the US Secretary of State, of course. He anticipates that Chinese President Xi Jinping will visit in September. US remains open to a diplomatic solution in Iran, despite the escalation that we have been seeing. And Secretary Rubio saying he is open to meeting Wang Yi in the Philippines. US remains open to a diplomatic solution in Iran. Pardon me, I've said that before. And he also mentioned that a meeting with the Lebanese president was very positive. Remember that that is yet another theatre in the Middle East in terms of the Israeli component to all of this, and Israel's occupation and Israel's attacks on to degrade Hezbollah in southern Lebanon. Let's leave that for now and move on. Over in Southeast Asia, Singapore Airlines defending its investment in Air India, saying it gives it access to growth opportunities that, quote, cannot be fully realised through a single hub model. Our Southeast Asia reporter JP Ong joins us with more now, but this is a commitment that's really being tested.
Indeed, Shri, and it's a big commitment that Singapore Airlines made in Air India, and in a response to a set of inquiries issued by the Singapore Investors Association, actually, or the Securities Investors Association of Singapore. They did issue some of the key questions really revolved around that particular investment, which at the start was gave them a 25.1% stake. It also see them invest about 60 million Singapore dollars in total investments. In the response to the inquiries issued by SIAS, they did say that Air India is making tangible progress in their transformation efforts across the customer journey and experience, and also that SIA continues to provide aviation industry expertise to support Air India's transformation and unlock its particular potential. The reasons for this investment, Shri, are apparent because, as we've seen, India is arguably the fastest growing and probably the most lucrative, fastest growing aviation market, with one of the most lucrative potentials out there in the long term, and getting a foothold in a market that will have about 1.4 billion possible passengers and flyers is something they can't pass up. And to do that, Air India is seen as being a big portion of this. The reason that a lot of questions have been raised, Shri, is because since that investment was made, at least over the course of the last fiscal year, we've seen significant losses linked to Air India, which again, SIA actually credits to a number of reasons. Forex loss, Forex weakness, for instance, a lot of issues with regards to rising fuel costs, and the Air India tragedy that happened in June of last year. Now, just to highlight how big this was, if you take a look at the earnings that is of full year earnings that is of Singapore Airlines, for the full year of 2026, we actually saw a significant rise in operating profits. So in terms of operating on a daily basis, it's actually more profitable right now. But because of losses from associates that totaled about 828 million Singapore dollars, we actually saw their net profit plunge by a significant amount. And these associates are mostly due to some of the losses related to Air India. They actually said that they might have had to write down the carrying value of their stake in Air India from over 2 billion Singapore dollars in 2025 to just 1.1 billion Singapore dollars. And of course, a lot of these losses also coinciding and really mounting since the tragic crash that really left more than 200 people dead.
Exactly, and we still need resolution, and there are still implications for the reputational damage there incurred on Air India. But Singapore Airlines knew what they were heading into with this. It was a massive turnaround story, but you're quite right, and I think you nailed it. The long-term prize is really the access that it gives to the Middle East and the Middle East economic corridor with India, which is really up in the air at the moment.
It is up in the air, no pun intended there, Shri. Yes. But at the same time, I think there are questions as to, you have to point out the fact that it might be a coincidence or perhaps a correlation only that we saw these losses mount since the Air India crash happened, which by the way left 260 people dead during that time. Right. And thus the question is, were there issues with regards to how Air India operates? We remember that the findings from the investigation are not due out until October, but that will put it about 18 months since the crash actually happened, about 16 months since the crash happened, which means we still don't know exactly what caused that crash. Was it negligence on the part of the airline? Yes. Was it plane failure? And if it was negligence on the part of the airline, that is something we'll have to raise, because in the month after the crash, it was documented that the safety regulators in India found Air India culpable for 51 violations, which means there might be issues with how they're operating the airline. And also the question of, could this have been avoided? Is this something that Singapore Airlines should have been aware of before they committed all this money and before they started losing a lot of money money on this investment. Again, are these questions that Singapore Airlines investors are worthy, or at least, or is it okay for them to ask these at the AGM, which happens this coming Friday, July 24?
The counterfactual here is that, yes, I mean, this is out of Singapore Airlines' hands. It's in the hands of the accident investigators and the regulators. And you're quite right. That investigation is dragging quite severely. And the other issue here is, look, in order to draw a line under this, maybe Singapore Airlines, with its very solid record, can really engender some operational excellence and rigor and discipline here.
On the flip side, though, Sri, if you're committing this much money actually into Air India, should you, as Singapore Airlines, was seen as a relatively higher reputational and operational track record, actually, should you have actually gone in and perhaps imposed and perhaps said, hey, you need to bring yourselves up to the standards of Singapore Airlines as well, because this is also a matter of safety and a matter of reputation? Or does a 25% stake still not deemed enough to actually give Singapore Airlines a right to at least say this, or at least urge the investee that they're actually investing in to actually raise their standards? But again, this all depends on what the findings are from this particular investigation, which are due, the draft of it due at least in October of this year, about 3 months away. But again, that puts it 16 months since the crash happened that resulted in the tragic loss of 260 lives.
It's non-negotiable, isn't it? For any airline operating globally and domestically, safety comes first. Safety is paramount, and you need to have that operational discipline and safety. JP, thank you. That brings us to the end of Squawk Box Asia. I'm Sri Jevaraja in Singapore.
And I'm Shara Kang in Hong Kong. Thank you so much for watching. Keep it right here, though. The China Connection is up next.
The measure were Tom Barrett of Mission.
Good morning. It's the start of a brand new week. You're watching Power Breakfast right here on CNBC TV18. I'm Hormuz Fatakia. With me as always, Rashna Dhanrajani. Rashna, good morning and welcome back after the weekend.
Good morning and welcome back to you as well. And what a morning. Spain finally won that FIFA World Cup. And let's set you up for the morning with headlines. First up is the US Central Command conducts the 9th consecutive wave of airstrikes against Iran. Iran claims under construction nuclear power plant comes under attack. The Indian embassy in Iran also issues advisories to Indians to exercise utmost caution.
Brent crude prices climb above $90 a barrel as escalating hostilities between the US and Iran raise fears of further disruptions to oil flows from West Asia. Meanwhile, gold prices fall back below $4,000 an ounce.
Wall Street extended its decline on Friday as a pullback on stocks associated with the AI boom morphed into a larger risk-off sentiment. Meanwhile, markets in Asia opened largely lower. The GIFT Nifty is indicating a weak start for the Indian market.
Reliance Industries reports a good quarter led by growth in the O2C and retail businesses. Quarterly revenue drops 3 lakh crore rupees for the first time. The profit after tax growth gets impacted though by higher finance costs.
A whole host of banking names report numbers over the weekend. ICICI Bank leads the pack with a 16% rise in net profit. HDFC Bank reports softer than expected earnings, while Axis Bank reports a mixed quarter. Kotak Mahindra Bank's net interest income misses street estimates. Well, first up, let's take a look at the Asian markets. It's a mixed start to the week in Asia. Taiwan is trading in green, up almost now down about when it started off in early trade. It was up almost 1%, but now, as you can see, down 0.5%. With TSMC and the AI supply chain, this is exactly what the vibe has been with Taiwan over the last week when the global chip rout was taking place. Hong Kong has opened up almost about 2%. The Hang Seng is testing key support after holding up more than better than its peers last week. Then there's South Korea, the epicenter. The Kospi is, let's take a look at Kospi. Kospi is down almost 3.5%, 3% as you can see. But this would be an extension to last week's near 9%. Now on Friday, Kospi was shut. But on Thursday, we saw the session ended about 6% and weekly average of about 9%. Japan is shut today for Marine Day, so no follow through on Friday's session, where the Nikkei tumbled nearly 3%. The handover from Wall Street has also been negative. The Dow fell over 400 points on Friday. The Nasdaq lost 1.5%, and semiconductors officially entered bear market territory, down 20% from their June peak. But here's the early signal. Nasdaq 100 futures are up about 0.5% this morning, hinting at a bounce back after Friday's rout. Crude, meanwhile, stays elevated with US-Iran strikes keeping the Strait of Hormuz in focus. Back home, Hormuz, what do you think GIFT Nifty would be implementing today?
Well, looking at the state of affairs, the GIFT Nifty is looking fairly fine as of now. It's just a minor 13-point downtick is what the implied open is suggesting. But there are multiple factors that we have to consider. You mentioned about the Nasdaq futures. Even they, unfortunately, have given up all the gains now. They are down into flat territory again. The Dow futures are now down 80. But the bigger trigger is the fact that oil prices are at 90 and so on and so forth. That's the bigger problem. And then, of course, the whole host of results that we reported after market hours on Friday and, of course, during Super Saturday. But let's set you up for today's trade. Our research team is here to tell you all that you need to watch out for going into today's trading session. First up, Vivek joins in to get all the market cues that should be on your radar today. Vivek, good morning.
Well, that's right. As you encapsulated at the start of the show, one thing that we will be watching out for is the fact that there are concerns emerging as the escalations, especially as far as the US-Iran conflict, have gone up quite significantly since close of trade as far as Friday is concerned. On the back of that, you did see US markets close significantly lower on Friday, but oil prices, especially Brent, has now gone about the $90 a barrel mark. And on the back of that, Asian markets are indicating a bit of a soft start, quite mixed in fact, and GIFT Nifty 2 indicating at this point of time a mild gap down, but it will be interesting to see closer to 9 a.m. what exactly the GIFT Nifty is indicating, especially given the fact that we have had so much to digest, especially in terms of results since Friday. Now, in terms of Friday, what exactly did we do? We ended higher, especially led by Reliance, banks as well as the IT pack. And the broader end of the markets actually outperformed. Advance decline ratio you did see in the favor of advances. Now, when you're talking about key things to watch out for, especially in today's trading session, none higher than the fact that you will be seeing reactions to results. Reliance Industries, remember, delivered a good set of numbers on Friday evening. Along with that, the entire Nifty Bank will be in focus. So many constituents delivered results: HDFC Bank, Axis Bank, Kotak Mahindra, ICICI, PNB, RBL, and you will also see the reaction as far as Yes Bank is concerned. In terms of key results that we will be watching out for today, Ultratech will deliver its numbers, Paytm as well as Soba, and another trigger, remember, the monsoon session of Parliament opens today. That will also be something that market participants will keep an eye out on.
Vivek, thank you for that update there, as the implied open is also suggesting a subdued start for our own markets as of now. Over to Ria now, who will list up the stocks that should be on your radar today. Ria, good morning.
Well, good morning. Let's start off with Reliance Industries reporting its Q1 numbers. Good set of numbers seen this time around, with the growth being led by the O2C business as well as the retail segment of the company, and with the quarterly revenue topping 3 lakh crore rupees for the first time. For HDFC Bank, we have seen a soft quarter this time around, with the lowest ever net interest margins at a record low of 3.26% this time around. For Axis Bank, the business momentum has been good this time around, with the core earnings remaining resilient, but the NIMs have been under pressure and the asset quality has also slipped significantly. NIMs this time around have come in at 3.46%. For ICICI Bank as well, we've seen a strong quarter this time around. Earnings beat all around and healthy asset quality as well, with the NII rising by nearly 13% on a year-on-year basis. For Kotak Bank, the provisioning credit cost has almost halved to 0.46%, and the provisions have also declined by 45%, which has provided a strong boost to the profitability this time around. For Yes Bank, the net profit has gone up by nearly 34% on a year-on-year basis, but it has missed estimates due to the higher provisioning, and the net interest income has also gone up by nearly 17.5% for the company. For RBL Bank, net interest income has gone up by nearly 12%, while the NIMs have dropped by nearly 28 basis points on a sequential basis to 4.13% this time around. For PNB, we have seen a healthy quarter, with the profit surging and the asset quality continuing to improve for the bank, with the GNPA at 2.78%, declining by nearly 100 basis points on a year-on-year basis. For Poonawalla Fincorp as well, it has been a robust quarter this time around. Strong loan growth seen as well as improving asset quality, with the AUM of the company going up by nearly 63% compared to the previous year. And lastly, Tata Technologies has also posted a strong set of results, with the constant currency revenue growth going up by 4.3% on a sequential basis and up nearly 25% on a year-on-year basis as well.
Ria, thank you for that. Of course, there are plenty more than what Ria just highlighted in her list. You run out of breath while trying to figure out the number of results that we need to react to this morning. And lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. You're happy for the fact that Spain won the World Cup, but would the market see a similarly happy day today?
Good morning, Hormuz. So the key question for today is Nifty poised for 24,500. Well, it depends on how these banks and Reliance Industries react to their quarterly earnings, and that's for Q1 FY27. But as far as the option data is concerned, it's one of the strongest option data cues that we have been seeing for the last several months. Why I'm saying so? Because on Friday, we have seen aggressive call writing and also Friday's surge that we have seen in the market, and that has led to all these call writers to cover their positions aggressively, and that's reflecting even the Nifty PCR, which has risen to 1.40 versus previous day's level of around 1. But here, we need to be cautious as well, because when Nifty PCR crosses 1.30, normally we get into overbought zone. So we'll have to look at the levels. As of now, 24,400 looks very imminent, but we'll have to wait for 24,500. Talk about GIFT Nifty, it's indicating a flat start for as of now. But FIQs, look at index futures. They have bought more than rupees 5,400 crore. In the stock futures too, buying figure was more than 900 crore. After several days, they have added long positions of more than 5,000 contracts. At the same time, they have reduced short positions by more than 28,000 contracts. Now, FI's longs exposure has increased to 11% versus Friday's level of around 8%. Now come to the options data. On the put side, 24,200 has seen a change of open interest of more than 94 lakh shares, and for 24,000 put, it was more than 61 lakh shares. But on the call side, if you take a look, 24,700 was the only call option which has seen an increase in the open interest, while 24,100
decrease in the opening test. 24,202 has seen a decrease of almost 42 lakh shares. These were the levels where call writers had to cover their positions. Now support for Nifty. Support would be around 24,100 to 24,150. As far as resistance is concerned, first resistance would be 24,400. Next resistance would be 24,500. One stock remains the band, that is Keynes Technology. I'll keep an eye on Reliance Industries because ahead of earnings, it was seeing short covering. It has come out with a very strong set. HDFC Bank, it was a mixed Q1 and it was even seeing fresh short addition on Friday, and TCS continues to see short covering. It's one of the strongest looking stocks amongst all the IT names.
All right, thank you so much, Sudarshan, for that. You had cautioned us for this Monday last week on Friday, so let's see how this Monday goes. But on to updates from West Asia now. The US Central Command says its forces began a new wave of attacks against Iran, marking the 9th consecutive night of operations. Iran reported explosions in 5 Iranian cities, including 2 key ports, shortly after US Central Command announced a new wave of attacks, according to the Tasneem news agency. A US service member was also killed in northern Iraq on Saturday during the controlled detonation of unexploded ordnance from an Iranian drone. US military forces redirected 6 commercial vessels and disabled another during an ongoing naval blockade against Iran as regional allies encounter threats from Tehran. Kuwait came under attack with reports of a desalination plant hit and operations at Kuwait International Airport suspended due to repeated missile and drone threats. All right, let's get you an update from the commodity space now. Manisha Gupta joins us with all the updates. Good morning, Manisha.
Morning, and thank you for that. Well, let's start with the crude oil prices because everything that's happening in West Asia has had an impact on crude prices, which have gained above $91 a barrel in early Asian markets. Remember, the price has gained 11% in the previous week, and with this gain, we are now 30% higher from the kind of lows that we saw in July during that peace talk. Well, the U.S. has completed 8th round of strikes against Iranian targets, and it's more now not just about the bases, but we do understand that the bridges, utilities, port facilities also are being attacked. The U.S. Central Command also said that the U.S. official death toll now stands at 17 since conflict began in March. So markets are looking at higher highs when it comes to the crude oil prices. In the meanwhile, you're looking at declines in metals. That is because the U.S. dollar has strengthened yet again near 101. The U.S. Fed officials are warning about persistent inflation, and the markets are pricing in a 53% chance of a Fed rate hike in the month of September. The Chinese physical gold demand is not so strong right now, and that is the reason you also are looking at some pressure continuing in case of gold and silver, which are now trading at around 8 to 9 month lows.
Manisha, thank you for those updates there. The big headline, of course, being that oil prices are back at $90 a barrel. Take a short break. All the action from Wall Street on the other side. Stay tuned.
Imagine given
Welcome back. You're watching Power Breakfast on CNBC TV 18. In the US market, Wall Street ended lower on Friday with all 3 major indices closing in the red. The S&P 500 and Nasdaq led the gains, while the Dow Jones fell more than 400 points. CNBC's Angelica Peebles gets us a wrap of all the action on Wall Street.
U.S. markets were down across major indexes in Friday trading, with the Nasdaq down more than 1% on another sell-off in chip stocks. The Dow dropped 407 points, the S&P 500 fell 76, and the tech-heavy Nasdaq lost 362 points. Iraq and Syria have signed an agreement to rebuild a long-dormant oil pipeline, giving Baghdad an alternative to the Strait of Hormuz. The route would carry up to 700,000 barrels a day from northern Iraq to Syria's Mediterranean coast, and it's been out of service since 2003. Iraq's oil output fell by more than half in June as the U.S.-Iran war disrupted tanker traffic. U.S. Energy Secretary Chris Wright presided over the signing in Washington as Gulf producers look for new export routes around Hormuz. And beer sales in the U.S. have skyrocketed since the World Cup kicked off. During the first 4 weeks of the tournament, beer sales at bars, restaurants, and stadiums were up 14% compared to the same period last year. That's according to the Beer Institute. FIFA said that fans drank a total of 290,000 stadium beers in Philadelphia over the course of the 6 games there. That's what's happening here in the U.S. Back to you in Mumbai.
Angelica Peebles, thank you for that update there. Negative week for Wall Street, and futures too are not showing any promising signs today as well. Staying with Wall Street, here's some opinion from Joyce Chang, the chair of global research at JP Morgan, on the US earnings season so far.
The overall capex that we're looking at for the S&P 500, I mean, we're looking at $1.3 trillion. So still very strong capex numbers that are coming through, not just on AI, but across the non-tech sectors as well. So I'm not surprised, given the strength in the market we're had, that there's some problems in absorbing this. But the financials have been performing, pretty strongly here, and I think that that's going to continue. But more importantly, I think when you look at some of the underlying consumer spending, it's just still remained very resilient, very strong here. So it's not surprising that we're having just more volatility here, just given what the market is digesting. A lot of this hasn't just been the earnings, it's been a lot of the issuance that's coming out as well. I wouldn't change the view that we're still in actually a pretty good shape in this earnings season.
All right, on the earnings front then, big boy Reliance reports a strong set of Q1 earnings with growth led by O2C and retail business. Rima joins in with more. Good morning, Rima.
Hi, good morning. So Reliance Industries, which is got a weight of nearly 8% on the Nifty, reported very strong numbers. The company's revenues crossed 3 lakh crore for the first time ever. And the star in the performance was the oil to chemicals business, O2C. If you look at the bottom line, you will see a profit decline. And that's because in the prior quarter, comparable quarter of last year, the company had a one-time gain of nearly 8,900 crore rupees on account of the Asian Paints stake sale. But as I said, the oil to chemicals business was the clear star. For the O2C business, the EBITDA margins came at a 4-year high, and even the cracks were ahead of street expectations. For Reliance Retail, well, numbers were largely in line. Some brokerages a slight bit disappointed. Gross revenues adjusted for the RCPL demerger was 11.5%, and Jio has reported a steady set of numbers. In the absence of a tariff hike, the company's EBITDA for Reliance Jio went up double-digit, but the key for Jio is going to be industry-wide tariff hikes and when the IPO kicks in. Back to you.
Rima, thank you for that. Of course, one of the many major earnings reactions that we are going to see today from Reliance Industries, of course, the standard disclaimer on your screens. But after Reliance Industries, a lot of other index heavyweights also reported results. HDFC Bank, ICICI Bank, Kotak Bank, Axis Bank. And the list is an endless one. Ananya, who was doing all the number crunching all through Saturday, is joining us with a breakdown of all of those numbers. Ananya, good morning.
Good morning. So if you look at the quarter in general, it was less about loan growth and more about the earnings quality, margin resilience and asset quality. So let me first start with ICICI Bank. So in private sector banks, ICICI clearly led the pack. If you see, it beat street expectation across all key metrics with an industry leading ROA of 2.49% and strong asset quality. Now, your management also clarified that the sequential increase in slippages was seasonal, with slippages actually improving on a year-on-year basis, if you see. Now, coming to Kotak Mahindra Bank, it was also biggest positive surprise this quarter. Now, profit grew 26%, supported by sharply lower provisions here and improving asset quality, reinforcing the bank's improving profitability overall. Now, Axis Bank, they also reported a healthy performance despite growth of 18%, almost matched loan growth of 19%. So here a key positive in the current funding environment. Now another important takeaway was the 2,000 crore contingency buffer remained untouched here, reflecting management's confidence in the underlying loan book. Coming to the HDFC Bank, they reported the softest quarter among the large private banks, with NIM declining to a record low of 3.26%. However, answering to CNBC TV 18, management said margins should be judged over the full year rather than quarter by quarter, and remains confident of gradually moving back towards pre-merger margin levels. It also highlighted strong traction in FCNRB mobilization. Now, moving to the mid-sized bank, Yes Bank continued to strengthen its turnaround story, with PAT rising nearly 34% and record low NPAs, although liability mobilization remains the key monitorable here. RBL Bank, on the other hand, reported a relatively softer quarter as margins remain under pressure here. But the management struck an optimistic tone, guiding for a 30 to 40 bips recovery in margins from Q2 onwards. Lower credit cost at credit card stress normalizes, and ROA improving to around 1% in the second half of FY27. Now, among the PSU banks, Punjab National Bank delivered one of the strongest performances this season. Profit rose 3.1 times year-on-year to 5,253 crore, driven by sharply lower provisions, while asset quality continued to improve, with GNPA at 2.78% and NPA at just 0.28%. Slippages also declining 25% sequentially here. Now, management also remained confident of further margin improvement as funding cost eases. So overall, ICICI Bank remained the clear winner here, but going forward, throughout the banking industry, margins will be the key monitorable.
There's a lot to digest, and Ananya, thank you for that. While you go and catch your breath, we'll take a short break as well, get you all the updates from the world of AI on the other side. Stay tuned.
Down fuel prices.
Welcome back. Rachna has hopped over to the wall now. She's going to get you all the latest from the world of AI. Rachna.
Well, first up is Apple, that briefly reclaimed the title of world's most valuable company on Friday, overtaking Nvidia in intraday trade before the two swapped back. At one point, Apple touched around $4.88 trillion against Nvidia's $4.84 after the chip maker shed roughly 3.5% on the day. But Nvidia closed slightly ahead. So the crown never really or formally changed hands. The bigger story is the gap in 2026. Apple is up about 22%, whereas Nvidia around 7%. And this is as investors rotate away from the AI infrastructure trade. And that rotation had help from Beijing. Chinese firm Moonshot released a new version of its Kimi model, Kimi K3, this week. The company says it still trails Claude Fable 5 and GPT 5.6 Soul, but claims frontier-level results across its own tests. Independent reads from Arena.ai and Val's AI call it competitive. The launch coincided with a speech by Xi Jinping at the Shanghai AI conference, and the Nasdaq fell about 1% on Friday as investors sold Nvidia and its peers. Amid that North Asia AI concentration, UBS is pointing investors towards India. Hamid Aizal of UBS Global Wealth Management says Indian IT service sector stands out as a diversifier as the boom in Korea and Taiwan leaves room for it. He says investors are changing their minds on India, now viewing it as a fundamentally driven pool of opportunity. Staying with the chip chain then, TSMC is doubling down on Arizona. The day after its record second quarter, CFO Wendell Huang told Reuters and CNBC the company is adding $100 billion. Thereafter, this lifting the total US investment to $265 billion. Huang cited multi-year structural demand and said the first Arizona fab is matching Taiwan yields. He flagged a shortage of construction workers as the main constraint, though. The physical AI push ran through Tokyo as well. NVIDIA CEO Jensen Huang spent 2 days in Japan and left with deals across a national AI factory, robotics partnerships and chip material suppliers for his next gen of chips. His message, AI's next chapter belongs to factory floors and he wants Japan to build them. And last week's sharpest fall was SpaceX. Musk's newly listed giant dropped for a 6th consecutive session, shedding almost $1 trillion from its peak. The stock is now trading below its June IPO price, down roughly 23% since it joined the Nasdaq 100. That's all from the AI space for now, but we'll get you more through the day.
The rocket is coming tumbling down for SpaceX. Rachna, thank you for that. But the one rocket that soared into orbit on the weekend was that of Indian space startup Skyroot Aerospace that launched the country's first privately developed orbital rocket, a key test of national efforts to compete for a bigger share of the global commercial launch market. The Vikram 1 lifted off from the Satish Dhawan Space Center in Sriharikota and successfully injected its payload into a 450-kilometer orbit about 15 minutes later, making India only the 3rd country to achieve the orbital launch capability through private enterprise.
16 years after clinching their first World Cup in extra time, Spain has done it again, beating defending champions Argentina 1-0 in extra time to lift their second World Cup title. Substitute Ferran Torres struck in the 106th minute to break Argentina's resistance. Argentina were reduced to 10 men after a late red card and struggled to create much through the game, failing to register a single shot in normal time. For Spain, it's a second straight international title following the Euro 2024 triumph.
And for all of those who are upset over the turn of events during the World Cup, they'd find some joy in this victory for Spain. We take your leave on this edition of Power Breakfast from Rachna and me. Thank you for watching. Bazar Morning Call sets you up for the day's trade on the other side.
morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good morning.
Hi, good morning. So what should we begin with? The FIFA finals, or the fact that crude is at 90, or that today markets will react to 34% of the Nifty weightage in terms of an earnings reaction?
Well, that's right. And don't forget, overnight, Rohit Sharma as well saying, I'm not done as of yet. And I've still got plenty of fight in me. What a knock by that champion. But I think FIFA World Cup was top of mind. 4 a.m. It's a late snooze today. So
I unknowingly, I did the right thing. I only got up at, I think, with about 30 minutes to go for the end. I mean, I think I started watching at about 2 a.m.
Without the alarm.
I mean, I think without the alarm, I think kids were watching, they were watching. By the time I reached there, they were all sleeping. And I started watching at 2 o'clock. And it was nil. I mean, nothing on the board. Absolutely one-sided game. And, I dare say, not worthy of a final, actually. Argentina, for example, 0 shots on target, right? I mean, not even attempts at the goal. And, of course, I mean, nothing on the scoreboard at all. But, yeah, I mean, that was the final for you. Very, very one-sided. Spain, of course, scoring in the extra time, which was given, extra 30 minutes, which was given. Perhaps could have been 2-0. There was one goal which was disallowed towards the end, right at the end. But anyway, I mean...
worthy champions.
Worthy champions. I could make lots of jokes around it, but they've got it. Yeah.
I think conservatively you're saying 2-0. It could be much more. I don't think it was Argentina versus Spain. It was Spain against Martinez. Yeah. They were just playing against the goalkeeper. Lack of intent, and I would like to have seen Messi go off on a high. But unfortunately, that wasn't the case. And, the moment at the end of the game, there was a bit of a scuffle between players. But Yamal walks up to his earlier idol, Messi, gives him a hug and comforts him. That was something as well that warmed your heart. And don't just look at those visuals on the screen. Yeah. Mr. Trump photobombed the celebrations as well. If you saw that, as the Spanish team went to lift the cup, Mr. Trump forgot that he had to move out of there. So they had to, in fact, tell him towards the end of that guy, that...
That's New Jersey, Nigel, and that's the U.S., right? So that's President Trump's territory now. And, I think those are visuals which remind us of the football spectacle once every 4 years. We're going to wait for 4 more years now for the next one to come through.
It's going to be a void, but... every morning you wake up and you've got the score to
We've got enough other sport happening to keep us...
And you got Trump.
Yeah, we got Trump.
And Prashant, that was the reason I sat up to watch it last night, because, when my son is probably your son's age, he may not want to watch it with me. So he said, Papa, can you watch it? I said, let's do. We did the entire 120 minutes together.
Nice. Well, okay, there's enough to tackle in terms of markets as well, right? And I think we're starting with a bit of a sort of negative cue this morning. And I think oil's back on the table at 90, that is Brent oil, and we're about $90.5 a barrel as far as crude oil is concerned. This is Brent, once again, specifying. So, is there anything new? There is new. There's reports over the weekend that a facility for a nuclear power plant which was being constructed that was hit. There's been escalation from both sides. The U.S. Central Command has put out information that they are continuing strikes for the 9th straight night in Iran. They're targeting infrastructure, they're targeting bridges, highways, etc., etc. And of course, Iran is retaliating, not just against, countries like Kuwait, but also, countries like Jordan, etc., which have come under heavy attack. Iran's response essentially being that these are the bases which are being used to attack us, and we will attack those bases in retaliation. So, this is phase 2. Now, the only question is, markets are still pretty well behaved in that sense. Has oil, storage, oil facilities been hit in a very large scale? Not yet. But I think if you start to see that, I think you will see a very, very sharp run-up as far as oil is concerned. In any case, I think we've gone up from about under 80, I think 76 to 90 in about 6 or 7 trading sessions. So, that's been fast-paced. as well. Now, Trump, of course, saying that, we're hitting Iran, and I quote, very hard to honor American service members who've been killed. By the way, I think since the 28th of February, the count for American soldiers killed, I think, is about 16 or 17. So, the toll's adding up in that sense as well. Now, NASDAQ, the other bit, right, which is the tech unwind which is happening, is the other bit. Now, this has, of course, been in some ways positive at the margin for some amount of foreign flows to come in, etc. But, a completely unhinged kind of sell-off is not what you want, because that will take everything lower with it. You need, that big AI balloon to deflate slowly, gently, and, some of that money can come to other markets which have been ignored like India. But you don't want the balloon to pop, because if that happens, I think you're looking at a bigger sell-off, which, as I said, takes everything lower. Now, the big anxiety on Friday, the reason why NASDAQ was down about 1.4% was, China's Moonshot AI, which is the name of the company, essentially saying that they've launched an AI model and it outperforms some cutting-edge US systems, right? This is Kimi 3. Now, NASDAQ, by the way, Friday to Friday was down 4%. It's down 7% from the highs. And, of course, it's now below the 50-day moving average as well. So that's the tech index, so to speak. The semiconductor index, the Philadelphia Semiconductor Index, is now officially in a bear market. It's down about over 20% from the late June highs. And by the way, this is all happening even as you look at the Russell 2000, which is just a shout away from all-time highs. You look at an equal weighted S&P 500, which is almost at an all-time high. So this is very, very specifically tech. You can say US markets are selling off, but US markets is largely tech now. At least it's been driven by tech, and tech is what is selling off in the US as well. The other big AI-driven markets, right, Korea and Taiwan. I looked at, by the way, Korea this morning is down another 3%. But just look at this last week. Last week, Korea down 10, Taiwan down 6. But 2026 so far, Korea is still up 83%, and Taiwan is up about 52% or so. So, this is we can argue whether this is these open models, lower cost of compute, question marks around AI AI capex and ROI questions, etc., etc. This is just, too much positioning into one theme which has gone in, which is getting out a little bit. And I think that debate will continue. Long list of earnings that we're going to, of course, react to. Just the big ones: Reliance, ICICI, Kotak, HDFC, Axis, and so on and so forth. And we'll get you color on all these as we start this morning. Nifty, by the way, on Friday ended above the 24,300 mark, which is, of course, the first resistance, as we've been pointing out. We ended about a 1% with a 1% gain. The next resistance is 24,604. It's again that same band, 24,604. But I think this morning, as GIFT Nifty will come up on your screen, the support also perhaps important to note. 23,800 is back on the table once again. We don't know. The point is, the market was being bid when it sold off hard. So it's possible you go down to about 23,800 and then come up. Or is it possible that you don't see any interruption and the market continues to go higher? I think unlikely, but let's see. Those are levels: 23,800 on the downside, 24,600 on the upside. And of course, the pivot is 24,300, which we closed slightly above on Friday with. Well, GIFT Nifty comes up, gives you a quick sense of how we start. It's about 15, 16 odd points lower. So maybe at the margin, you've got some single stock earnings support coming through, but the macro backdrop is decidedly negative this morning. Nigel is walked across to the wall with the F&O positioning and the cues. Nigel.
Well, on Friday, it seemed like there were two markets that were trading. The large cap names, they were very, very strong, while the broader markets came in for selling. And that's the inverse of what we've seen in the previous couple of months, because the broader markets have actually outperformed, while the Nifty has remained in a range more or less. In Friday's trading session, that totally turned. The Nifty and the Nifty Bank, they were spiking away, while in fact we saw some kind of selling in the broader markets. This morning, we're waking up to that negative macro cue, because Brent crude prices are back over $90 per barrel mark as that conflict continues. Hopefully, there is some kind of sign of de-escalation. For the time being, we are waking up to that shock that Brent crude prices are holding above the $90 per barrel mark. The Indian rupee is going to be top of mind, because after showing some strength, that again is showing some weakness. And last week, it weakened to around 96.5 odd. It ended at around 96.3. if you're going to see Brent crude prices spike up, well, that's what's going to weigh on the Indian rupee as well. And then those hopes that the FI selling will not return, well, that could gradually diminish. For the time being, at least, the FIs are not big sellers. Even in Friday's trading session, they sold close to around 400 crores. Now, that's a digestible number. The DIs, they continue to show the faith. They put in close to around 1,000 crores. So you net it together. Well, you had a net institution buy number of close to around 600 crores. And you were wondering whether or not there was massive short covering because the kind of move that we saw on the headline index. And that's precisely what the case was. On index, you had shorts that covered out, close to around 28,000 contracts in a single trading session. There were some mild longs as well. So there's a swing factor of close to around 33,000 contracts in Friday's trading session on index futures. On stock futures as well, there were some shorts that covered out. So that big move that we saw, that would largely be attributed to the institutional number staying positive, while you had shorts as well that did cover out. The long short position from the FIs now is holding it still at around 89% despite that big bounce that we saw in Friday's trading session and that massive covering that we saw. What did they do on index options? Well, they went ahead and they wrote more puts than calls. And this put writing will keep the bulls enthused that yes, this market can hold on to lower levels and will gradually try to knock off those resistance marks at a higher level. So let's pull up the options data then. There was some writing that was seen at around the 24,200 put. Bulk of the writing actually was seen out there with close to around 95 lakh shares getting added out there and the premium holding at around 85 rupees or thereabouts. So there are signs of writing out here. But there was some out of the money call buying as well. In case things get up and going, in case the markets want to go to around the 200 DMA, there was around the 24,700 out of the money call buying as well. What are the key levels to track? Crucial support at around this 24,000 to 24,100. I say that the 20 DMA as well comes in at around 24,100 and there's a fair bit of options activity at around the 24,100 put as well as the 24,200 put. Resistance though will come in at around this 24,750 going by the options data. The Nifty Bank, that's going to be an important player today because remember it ended very, very strong. It had a 1,000-point rally on Friday's trading session. Now the 20 DMA becomes the nearest reference point. So that's a little bit deep from where we closed in Friday's trading session. You don't want that to get violated on the downside. ICICI Bank will be the bank that will have to lead the way because those numbers look good. HDFC Bank, though, that's the larger weight. That could be a little bit subdued in today's trading session. That's what could weigh. But I'll be watching out on Axis Bank very, very closely because the NIMs they'll weigh, that was definitely a miss in comparison to what the street was looking at. However, the management commentary that it's bottomed out, well, that could be one of the stocks that we'll be tracking for today's trading session. So banks need to get their act together to drive this Nifty higher.
Thank you very much for that. There are two big global stories to track before we get to the domestic cues. One, of course, crude at $90 plus as the West Asia conflict enters ninth day, and the AI trade is showing some signs of fatigue globally. Richard Harris, Executive Director, Port Shelter Investment Management, is now with us on the show. Richard, let me begin with AI. The Philadelphia Semiconductor Index has now entered a bear market, 20% off from the recent high. Micron down 20%, Broadcom down 25%, and in comparison, a Nasdaq is only down 6%, or an S&P 500 lower by 3%. Is this just a crack which we can paper over like we have in the past, or do you think it's a start of a deeper fissure? Which side are you on in terms of actual positioning when it comes to the AI trade?
Well, I think all we're seeing really is a reversal of the enormous increases that we've seen earlier in the year. We've seen these semiconductor stocks go up substantially over the past year. And now we've seen a bit of a reversal. So I think it's a bit difficult to really call it a real bear market. We haven't really got a name for a bull market. You know, is a bull market up 20%? Well, if it was, we've got a 5 times bull market and we've only got a 1 times bear market. So I think these terms can be a little bit misleading. And yes, investors don't like share prices falling, usually because they buy at the top. But I think in this particular case, we've seen prices come back to maybe slightly more realistic levels, although they're still clearly extremely high and outside the bounds of true valuations. But it's likely that we're seeing the kind of technical moves that we would see at this stage of the market.
Richard, for us here in India, the question is if everyone starts to look for the door and this becomes a bit of a let me book all the gains I've made, and so much gains have been made, and so people aren't going to sit on cash. I'm assuming they want to do something with it if they want to book out. Could I mean, emerging markets, by the way, had a good week, except Taiwan and Korea last week. I don't know if you're starting to see the first signs of some amount of gains. Markets like India have been huge underperformers over the last year and a half or so. Any thoughts?
Well, there's always this kind of rotation that happens, and market interest has been on AI, and it's been on the what's happening in the chip stocks, and of course other markets have held back. I think it's a bit too early to say, are we going to see a switch from one to another? I think what we're seeing basically are largely technical moves. India has one slight concern, is that although it used to be new economy in terms of things like outsourcing and in terms of things like call centers and things like that. Of course, we're seeing call centers being affected by AI. We're seeing elements of the Indian economy being affected by the fact that they're not so new anymore. I think that that's probably a bit of a concern that investors should watch and maybe keep an eye on what might be the new economy, you know, what might be the things going forward. And at the moment, there's nothing really that stands out, except, of course, you had that story today about the Indian private space shot. You know, that's the kind of new economy I think that international investors are going to be looking for.
All right. Hi, Richard. Good to see you, Ben. So, Richard, you know, to sum things up then, where does India rank in terms of, you know, preference on equity markets? The point that you made that, you know, yes, Indian markets have actually underperformed. Maybe the offering up till now wasn't what the FIs really wanted. But gradually, you know, there are better offerings that are coming about. And that AI trade could possibly be flattening out just in the near term. And that sort of a scenario, where does India come in the pecking order?
Yes, I don't know if the AI trade is flattening out. I think maybe investors are thinking a little bit of, you know, where is the revenue going to come from? I'm not sure they're there yet, maybe in a couple of months' time after the summer, but I think this is more a technical move. In terms of India, I think it's basically a neutral view at the moment, whereas previously it was growth. Don't forget, India's had a fantastic run in terms of what FIIs will be looking at over, you know, a good number of years. I tend to look at these things more over years rather than weeks. India's had a good run, and it's not surprising that it would be treading water at the moment, especially with these other themes bubbling on. It'll be interesting to see how India looks in the future. As I said, you know, we need to look for these new industries, the things that really interest the markets. And I think FIIs will be broadly looking at that at the moment from now on. But I think there is another element to this that investors often forget, is that if you do have a big bubble, as we're seeing in AI, investors will sell off those markets first. And markets that haven't done an awful lot will tend to be relatively defensive. And I say relatively because if markets globally come off, then, of course, India will come off as well. So there is some defensiveness still in staying in stocks you like, in markets you like, even though they haven't moved on ahead as much as you might have seen, say, the glory stocks like the AI sector.
All right, Richard, we'll leave it there. Thank you very much for joining us. Good speaking with you. Always a pleasure having you here on CNBC TV 18.
Thank you.
Thank you. Well, here's what's coming up. Maulik Patel comes up at 8:40 from Aquarius Securities. Piyush Pandey of Centrum also is going to be with us. Reliance Industries first quarter performance in focus, 9 o'clock. Piran Engineer of CLSA India to put the spotlight on the major bank earnings, which reported over the weekend. 9:20, Nilesh of Kotak Asset Management will be a market march of the day. 9:30, we got Tata Technologies with us to discuss the quarter gone by. We have JSW Steel Management talking to us about their quarter and outlook. 9:50, Federal Bank Management with us on the first quarter and the way forward. Latha will be speaking with the management of PNB on the earnings at 10:15.
Time to take go full tilt on stock-specific action on the other side. For the time being, I give you a sneak peek into our top 10 list. Reliance Industries, Punjab National Bank, Poonawalla FinCorp, as well as Tata Technologies. All four of them will be reacting to positive news flow. On the flip side, you have HDFC Bank that will be reacting to negative news flow, Axis Bank, ICICI Bank, and RBL Bank. So all those stocks could probably react to negative news flow, while you have Kotak Mahindra Bank and Yes Bank that could see a mixed reaction. We'll tell you about all of this on the other side of the short break.
Washington, Rubio. CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Novama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right. Welcome back. Let's talk stocks then. Our research team is standing by with CNBC TV 18's list of top stocks for the day and full tilt on the banking earnings. Ritu, it's all yours. Tell us about HDFC Bank, Axis Bank.
Well, I'll start with HDFC Bank, which reported a soft quarter, net profits rising just by 5% year-on-year. It's the slowest among the large banks at about 19,060 crores, while the core income, that grew by about 6.7% over the previous year. But the biggest disappointment from HDFC Bank was the margins, and they've slipped to a record low of 3.26%, and the management only expects a very gradual improvement from here on. Asset quality stable, though gross NPAs did inch up and slippages rose as well, but the management attributed this to seasonal Kisan credit card related stress, which we've seen across banks. And on the CEO appointment, again, no update with that board meeting over the weekend as well. The management says the work is in progress. As far as the FCNRB deposit is, opportunity is concerned, they didn't really put a number to it, but called it a big opportunity. Now, Axis Bank in the, meanwhile, it beat profit estimates, but that's largely because of the lower OPEX cost. Profits up 23%, net interest income missed expectations, and margins saw a very sharp fall at 3.46%. Although the management thinks they've bottomed out. Asset quality weakened a bit, higher fresh slippages again because of seasonal factors, but the management is confident of restoring NIMs to about 3.8% in the next 12 to 15 months, going with the red for both of these because it was a miss.
Thank you very much for that. And I'm going to go with green for Reliance Industries. A good set of numbers. The company's top line crossed the 3 lakh crore for the first time ever. EBITDA was strong, and the star performer segment-wise was the O2C business, where we've seen the cracks go up from 2.5 to 4.5 times on transportation fuel, and even the middle distillate cracks saw a surge. So O2C did very well. Retail was steady. Gross revenue is up about 11.5%. Jio was also a steady performance. Brokerages are largely bullish. You've got Goldman Sachs with a buy call. Nomura has a target price of 16.90. CLSA also an outperform call. So all in all, a good set of numbers from Reliance Industries. At the bottom line, you will see a decline on a year-on-year basis, and that's because the comparable quarter of last year had a one-time gain on account of the Asian Paints stake sale. So that was about 9,000 crore rupees.
Got it. So that big boy could support as well found its form in Friday's trading session. Going across to Ananya, who's had a very busy weekend. Ananya, tell us about ICICI Bank as well as Kotak Mahindra Bank. How do you read those numbers?
Well, yes, for ICICI Bank, we can say the street expected a strong quarter, but they delivered an even stronger one. So it was a clear beat across all metrics. If you can see, NII was up nearly 13%, PAT rose 16% year-on-year, and both comfortably ahead of the street estimates. Now, asset quality remained one of the best in the industry, with GNPA at just 1.38% and ROA at a strong 2.49%. Now, here management remained confident on healthy loan growth, broadly stable margins, stronger deposit mobilization through FCNRB, and credit cost of around 50 basis points, while highlighting that even the seasonal KCC-related stress remains well under control. Now, for Kotak, on the other hand, saw margins moderate here, with NII missing estimates estimates slightly. The main monitorable is a fresh slippages also increased sequentially, although they remain lower than a year ago. Now, the positives, however, more than made up for it. PAT surged 26% year-on-year, held by a sharp decline in provisions and credit costs, while asset quality remained robust with GNPA at 1.18% and NNPA at just 0.27% here. Now, beyond the numbers, the biggest talking point was CEO Ashok Vaswani announcing that he will not seek another term after December 2026 due to family commitments. So, all in all, ICICI remains the clear winner in all the private sector banks here.
All right. Thanks very much for that. Well, I think it's completely financials day, and we're back to Ritu with Yes Bank and RBL Bank in focus. Yeah, Ritu, take it away.
Well, Prashant, the mid-sized private banks gave a more mixed picture. Yes Bank's net profit, it did rise 34% year-on-year, but it missed estimates on the back of higher provisions that the bank had to make. Its core income was healthy, 17.5% year-on-year growth. And, its NPAs are at a multi-year low at 1.3% for gross NPA. Retail slippages, again, 10-quarter low. But here, the SME stress has inched up sequentially, and that remains a watch point, especially in light of what's happening in West Asia. Margins were flat for Yes Bank, but the management is hoping to get to that 3% mark by the end of FY28. So going with the yellow on this one. Now, RBL Bank, it was a stronger earning print. Net profits were up 27%. Core income grew 12% as well, although the core income sequentially saw a decline. Asset quality improved. Gross NPAs at 1.3%, but unsecured book, that remains a key overhang for RBL Bank. Margins also contracted very sharply to about 4.13%. Fresh slippages again remained elevated. So going with red on this one. RBL Bank, though, in the commentary did say they expect margins to recover in the current quarter, and they're targeting double-digit return on equity, return on equity in the next 3 to 4 years, and ROA crossing 1% by the end of this fiscal.
All right. Ritu, thanks very much for that. PNB is the next one, and Poonawalla FinCorp, as I said, financials, right there, front and center. Back to Ananya. Ananya, take it away.
So both delivered strong set of numbers. Let me first start with PNB Bank. So if you look at the numbers, PAT rose more than 3 times to 5,253 crore, supported by lower provisions here and tighter costs. Now, even as NII growth remained modest at 2%, margins improved slightly with global NIM at 2.50%, helped by deposit pricing, lower cost of funds and better yields here. Now, loan growth stood at 12.7%, led by retail, MSME and agriculture, while the banks deliberately exited low-yielding exposures. Now, coming to asset quality was the key highlight, with slippages falling 25% quarter-on-quarter, GNPA improving to 2.78% and NNPA to at just 0.28% here. Now, management retained its guidance of slippages below 0.9%, credit costs below 0.4% and ROA above 1%. So all in all, good set of numbers from PNB. Now, coming to Poonawalla FinCorp. Also, they delivered healthy quarter. Meanwhile, AUM surged 63% year-on-year. NII rose 87%. Operating profit more than doubled year, and PAT nearly quadrupled. Now, GNPA improved to 1.37%. Management reiterated its 35 to 40% AUM growth target and 3 to 3.5% ROA target by FY28, supported by loan growth, new products, AI-led productivity, and the recent 2,500 crore QIP. So all in all, going with green for both.
Thank you very much for that. Tata Tech is the lone IT stock we're watching today. Overall, good set of numbers. The company's constant currency revenue growth went up 4.3% quarter-on-quarter, 25% on a year-on-year basis. Margins steady at 16.1%. But the company management, they sounded very positive. They're saying the company is well positioned to deliver strong double-digit organic revenue growth in FY27. So numbers are fine. JP Morgan, though, is just raising the concern that the stock has already rallied 28% since early May versus the Nifty, and valuations, according to them, look rich at 33 times forward multiple FY28. So will that sort of cap the gains on Tata Tech? So JP Morgan has an underweight rating, but purely on numbers, particularly the strong growth and the double-digit commentary for FY27 could go down well.
Got it. Okay, all right. We'll keep an eye out on that one as well. Well, here's a quick recap of all the stocks that we just discussed in our special Top 10 segment. First, the ones with positive news flow. Big boy Reliance Industries, Punjab National Bank, Poonawalla FinCorp, Tata Technologies, as well as ICICI Bank. All of them will be reacting to positive news flow. The ones with negative news flow, HDFC Bank, Axis Bank and RBL Bank. While the ones that could have a mixed reaction, Kotak Mahindra Bank as well as Yes Bank. Plenty of banking names will be reacting to its numbers. Those are all the equity stocks in news. For the time being, let's hop across to Manisha Gupta, who joins us to tell us about what's going on in the commodity market. Morning, Manisha. Oil on the boil again.
It is, yes. $91 a barrel is how we started the Asian markets, and 3.5% of gains. That is slightly off those kind of numbers, but we are still holding well above $90 a barrel. It has been 11% of gains for the crude oil prices in the previous week. And with that, the prices have gained up by 30% from its July lows itself. So continues to be very, very volatile, but the U.S. has completed an 8th round of strikes against Iranian targets. There are concerns now, not just about oil, but bridges, utilities, port facilities, which are also getting targeted within West Asia, and that is what is keeping the prices on the higher side. The kind of statements that we have seen come in from U.S. and Iran, both of these sides do suggest that the peace treaty clearly has collapsed, and we could be looking at heightened concerns coming in from West Asia, keeping those prices higher. The safe haven buying also has come in for the dollar index, which is back above 101. That is putting pressure on various metal prices. So gold and silver back around 8 to 9 month lows. And there is some pressure that we also have seen in case of base metal prices. So in Asia, you have copper, zinc, steel, all of that trading in the negative.
All right, Manisha, thank you very much for that. So that is commodities in focus. Let's just look at Asia, how that is doing. Look at the GIFT Nifty as well, and then we'll take a quick commercial break in a bit. So I think, that's Taiwan, and Taiwan is absolutely flattish. Hang Seng. Well, I think Japan this morning I checked was down sharply.
Japan's shut today.
Japan's shut today. Okay.
Japan's shut today on account of Marine Day. Kospi is the one which is down nearly 4%.
Yeah, but Kospi, Taiwan, I think maybe tough to kind of correlate, look at that and look at what happens here. Japan maybe so at the margin, but Japan, I think that 4% cut that I saw was from Friday's session. As Rima says, the market's shut today. GIFT Nifty should come up on your screen, and I think we should take a quick look at it before we take that break. So I think still 10, 11 points lower. So will we start there or something else? We'll find out. But we closed above the 24,300 mark on Friday's session. Take a break. We're back. Dharmesh Kant of Chola Securities for some fundamental stock conversation. We'll also connect with Maulik Patel and Piyush Pandey to talk about RIL's first quarter performance. So coming up in just a bit.
Leaders in that system.
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central, for your daily source of market intelligence and wealth creation, with a commitment to doing it right.
Welcome back. Hope you're having a good morning. Well, let's get some fundamental analysis going on various stocks. Dharmesh Kant, Head of Research at Chola Securities, joins us on the show. Hi, Dharmesh. Good morning. Good to see you. Plenty of banking numbers did come out. Let's focus on them then. Now, what do you like from the pack? It appeared ICICI Bank's numbers were very, very good. You know, consensus says that they were good. HDFC Bank, there was a bit of a worry out there. So what's your view on the stock? Valuations obviously are comfortable. And Axis Bank is going to be interesting because the whisper was it's going to be a miss on NIMs. The miss was bigger than expected. However, valuations could give some comfort and management commentary as well is positive that NIMs have bottomed out and it will improve from here on. From the pack, what do you like?
Yeah, very good morning to you, Nigel, and thanks for having me for the show. So definitely ICICI Bank came out with a stellar set of numbers if you look at the internals of the numbers. So coming first to Axis Bank or HDFC's or Kotak Bank. So sequentially, the numbers were not that great. If you look at the internals, there were slippages on a sequential basis. At the same time, credit costs went up and they were declining the NIMs, or all three of them has a compression in the NIMs, which was not expected this time around, giving regard to the business update which they have given on the advances growth. But the reason for that was, one was the term deposits went up more than the CASA ratio, and the second time they were slow on the retail asset growth. Loan growth, it was in single digit, which is high yield assets for them. There they went slow. They were more focused on MSME and corporate loan growth. And there I think MSME has given them some pain. Because of that, the credit costs and slippages went up. So all three, to my mind, may have some, flicker today in the stock price, but nothing noteworthy to take care of in spite of valuation comfort. ICICI Bank, on the other hand, has a better NIMs growth. At the same time, if you look at the retail advances growth, it was in double digit, around 12% kind of a retail growth they have given. And that's the reason why their net interest income went up very good. And at the same time, the NIMs have an improvement. At the same time, if you look at them, the asset quality was well contained. Price to book, they are trading cheap compared to, say, Kotak Bank or Axis Bank. So there, I think there will be more juice. So top pick in the pecking order, based on the numbers which they have reported, is ICICI Bank. Going forward, Axis Bank commentary has been that it's getting bottom out, but it all depends upon whether they are talking about technical. If they are talking about technical bottoming out, I don't think so. Because if they are to go slow on the retail asset growth, then NIMs won't improve. It has to be high yielding assets.
In the last 1 year, and ICICI Bank is up 1% and HDFC Bank is down 16%, while an Axis Bank is up close to about 20%. So that's the extent of divergence, with Axis Bank right on top and HDFC Bank being the rank underperformer. So you can buy Dharmesh and ICICI Bank today?
Yeah, definitely. It looks like Rima, because the other reason why last 1 year there has been underperformance by ICICI Bank is the only bank where both FIIs and DIIs were seller out there. So I think this trend is likely to reverse with the kind of earnings update ICICI Bank has come through. And going forward, having regard to other numbers which have been reported so far, so economy is definitely on the uptrend. There's a strong underlying current in the economy, unless this Middle East tension escalates further and derails it. If that's not going to happen, if it's shorter within 15 to 20 days going forward, then I think in the second half, ICICI Bank will do far better than what it has done, and the stock price catch up will follow, because the return of buying interest will come into play.
Okay, Dharmesh, hold that thought. We'll come back and discuss all the other banks. You've got a PNB, Yes Bank, RBL, so many others. We'll come back and talk more about it. For now, it's a break. On the other side, Maulik Patel of Equirus Securities and Piyush Pandey of Centrum will talk about Reliance Industries Q1 performance.
Jakers.
Welcome back. Let's talk about big boy Reliance Industries. We have with us, they reported a good set of numbers ahead of street expectations. The company's revenues crossed the 3 lakh crore mark, and oil to chemicals did very well. We have with us Maulik Patel, head of research at oil and gas oil and gas expert at Equirus Securities, and Piyush Pandey, senior vice president at Centrum India, joining in. Gentlemen, good morning. Thank you very much for joining in. Maulik, let me begin with you, since O2C was the clear star in Q1. How did it compare with your own expectations? And is this kind of a performance sustainable given the fact that crude prices have also gone up now?
Yeah, good morning and thanks for having me. Definitely, I think we were waiting for the O2C performance to go up, given that the middle distillate, the gas oil and jet fuel crack at a multi-year high. And also the petchem spreads have improved significantly. So we were expecting this performance. There was slight disappointment in terms of volume, though the volume had dipped by almost around 10% on a YOY basis. So that led to some sign out of the O2C business. But EBITDA per ton, what we looked at is around $115 per ton, which is highest in last many quarters. Now, whether this is despite after the government putting that a special excise duty on an export products on a gas oil and ATF. So we believe that this trend will continue at a $90 per barrel of oil, given that still the middle distillate spreads are at around $60-65. We believe that the Q2 will also be strong in an O2C segment like what the Q4 was.
Okay, so the oil to chemicals performance should sustain as of now, even in Q2. And Maulik, yeah, go ahead.
Yes, yeah, and globally there has been a massive shortage on gas oil and ATF, partly because of the Russia, which was one of the largest exporter of gas oil in the world, has become a now net exporter given that the situation within Ukraine. So that has been an added, which was not there in the previous quarter. So probably this quarter number may go higher than the Q1, and I won't be surprised on that.
General, morning. Maulik, on oil and the chemicals business, what is the underlying thesis now? Is it the scarcity in products, refined products, or there is expansion afoot, or there is, I mean, what's the drive, or what's going to be the earnings driver from here, according to you?
I think it's a scarcity. We are in the refining super cycle just because of the supply has been disrupted. Supply has been withheld. There has been an export ban on the products from the China, Thailand when the war started. So you have, plus the Middle East situation is there. So we are in that till the time this war is there or not settled, the spread will remain high. So it's just about a spread moving up to the multi-year high. And that will continue at least for another quarter in my view.
But as oil goes up, is there a risk that some of this taxes on exports comes back on again? I think something has been imposed again, right?
Yeah, but it's pretty much very clear, since if you look at that fortnight announcement of the government has allowed them to make around $20. But you have to remember that Reliance has two refineries. The export refinery, the second refinery is not part of this particular restriction. It's only the first refinery. So if you look at for all the other players, their entire capacity has been impacted. It's on, whether it's for the Reliance, it's only the first part of the capacity which has this export excise duty is there. Reliance is a beneficiary of global increase in the middle distillate spreads.
Okay. Maulik, at Equirus, what's the view on the retail business, if you've spoken to your counterpart there? Because there is some concern that while the company's revenues in the retail business were strong, adjusted it was up 11.5%, but margins came under pressure, and that sort of offset the positivity from the oil to chemicals business.
Well, yeah. There continuous investment in the digital groceries business or the hyper deliveries business. Even if you look at that this quarter, the numbers on the delivery side were almost up by 116%. So that has led to some shine out of the overall number. And management guidance is that the investment will continue. So we have moderated some of this, the margin estimates, which Reliance has been putting over the last couple of quarters. We have seen some moderation in numbers for the next couple of quarters till the time they scale up their investment in the retail business.
Piyush, you want to come in on Jio? What stood out for you?
Probably I would say like bit of numbers. Only thing was that ARPU was bit lower than estimates because Q1 has slightly say like one extra days compared to Q4. So ARPU growth would have been at least 1% higher compared to Q4. But apart from that, I would say customer addition very strong at 9 million sequentially, with a strong 5G addition, and plus in terms of air fiber, they are doing well, along with the improvement in operating margin. So I would say very light set of numbers. Maybe now I think how the ARPU pans out in the coming quarter, that is something we have to watch out for.
So have you made any changes to your estimates because of the slight disappointment on the ARPU front for Jio? And what is the expectation, Centrum expectation on Jio's IPO valuation?
So, see, now we are building in tariff hike, say something around close to November, December. So, of course, our ARPU estimates for FY 27-28, they see a slightly downward revision. But apart from that, maybe just like a delay. And in terms of valuations, we are building in close to $130 billion. That is roughly close to 10 lakhs, 12 lakhs crore. And IPO might come at a price of roughly close to 11.5 to 11 lakhs crore.
Okay. And finally, what's the call, Piyush, that you'll have on Reliance Industries? The stock's been a bit of an underperformer. On Friday, it did well, but it's down 15% year to date.
See, I would say Jio is definitely doing well, and its IPO will be definitely unlock the value. Now it depends on how the other segments do so maybe value unlocking can drive the stock in that near term.
And Malik, you want to tell us what's the Equirus call on Reliance Industries? Does it play catch up after the recent round of underperformance? Can Jio be the big trigger? And what are the other triggers the street should watch out for, which can move the stock?
So only a month back, we upgraded Reliance from our ad rating to the long rating after almost 4 years of being on a sideways. One of the reasons was the underperformance. It has big time underperformance related to the Nifty. And we are also saying that an earnings have made in the bottom in terms of refining of earnings are going to get upgrade. Plus you have some momentum related to the Jio IPO. So we believe that the stock will outperform. We have on the target price of close to around 1,537 on Reliance within a long rating.
Okay, all right. We'll leave it there, gentlemen. Thank you both for being here. Appreciate your time and really great to speak with both of you here on RIL. So we'll see. I think the pre-open session is about 12 minutes out and we'll look at where the stock ends up at. Reliance and the big banks and the IT stocks were essentially the reason why the Nifty went up 1% on Friday. If you go back to that session. Dharmesh is with us. Dharmesh, IT services, the index was up about 4.5% last week, Friday to Friday. And of course, it's up more from the absolute lows recently. What's the view?
Bachchan, is more of a tactical buy which is happening in the IT services space. And there was a sigh of relief when Kotak Mahindra reported its numbers. The numbers were far better than what the expectation was. And the announcements coming from IT companies like LTTS or LTM, they have enrolled Anthropic Claude for the entire thing, software knowledge management to software development, at the same time validation, testing and lifecycle management. So that's the, forward-looking route for all the IT companies they are doing with. It will take a gestation period of 1 to 2 years, but my understanding of IT is technology with time it gets better and less costlier, so it becomes cheaper with time. So the margins will definitely be under pressure. But what surprised and we already have a buy on that was Tata Technologies number. It came way better than what the expectation was. And having regard to what KPIT Technologies has to say about the number and Tata Elxsi numbers which came through, though NTTS did have the mobility business number coming in a bit better than that. Management guidance has been strong on Tata Technologies. They have said constant currency growth of over 10% for the organic business for the entire FY27. So that should be, one should be watching out for that. Valuation-wise, it's a bit expensive, but having regard to how other IT companies have fared, I think it looks a better bet. So selectively, 1 or 2 stocks, like we have been having 2 recommendations. One is on Tata Technology, the other is on the Orion Pro Solutions. That number is expected in a week's time on Orion Pro. So we'll see them. But on the long-term basis, we are not very constructive, but neutral on the IT space.
Dharmesh, I remember you were last, or maybe the time before last, we were discussing that you were looking at initiating a coverage and some work was going on. Still out with the report? Or still on it?
Yeah, we are still on it. One is the price movement has been very sharp on the real estate company. It's a Mumbai-based real estate company, and things are looking pretty fine. They have recently won a large order as well for the gross development values in excess of 8,000 odd crores. So the work is on, but very soon we are likely to come out with that.
Yeah, from the time of the idea to the putting pen to paper, stocks run up. I just was, yesterday I was talking about IT. I was looking at e-clerks, completely dead and out stock. And I remember asking about e-clerks beginning of this month. And let's just pull up the month-to-date change for e-clerks. It's up 50%, 15 sessions, and 1,300 something, 1,350 to about almost 2,000 rupees now. And what's changed? I mean, it just completely baffles the mind. But tremendous run. That's the change. 1 month is, but from the end of last month, it's up 50 basically, not 36. I don't know how that is being calculated. I checked. Well, Hormuz is here with the big movers on Friday, which saw heavy volumes. Hormuz, take it away.
Morning, Prashant. And since you were on the subject of e-clerks, let's start off with that then. And it was the top gainer on the Nifty 500 on Friday. It was the biggest single day gain since May of this year, so in a couple of months. The stock, in fact, in the last 13 sessions, it has gained in 11 of them. And Friday's volumes were the highest since October of 2025 is what we checked. And 35 lakh shares were traded on Friday. The 20-day average is less than 4 lakh shares, so 9x its a 20-day average. Around 18% of the total shares were marked for delivery. 6 lakh shares, around 6.25. The 20-day average is just 1.5 lakh as well. The stock, despite this up move, is still down 20% for the year and still down close to 25% from its 52-week high, which is close to around 2,400 rupees. Federal Bank was the other one that was a positive earnings reaction that came in on Friday. As the biggest single day gain since the start of the year. The premiums on the 350 call option went up by around 160% as well. Volumes were the highest in over 2 months. 4.5 crore shares were traded on Federal Bank. The 20-day average is only 65 lakh shares, and a quarter of those were marked for delivery. 1 crore shares for delivery. The 20-day average is close to 40 lakh shares. It was among the most traded stocks on the Nifty 500, and in fact, after this 31% up move that the stock has seen this year, it's trading at record high levels. And lastly, a negative earnings reaction that came in, that was from CEAT, and that was after the biggest single day fall in 4 months. It's down around 7.5%. The stock volumes on Friday were the highest since April of this year. 13 lakh shares were traded. The 20-day average is less than 2 lakh shares. Here too, a quarter of those were marked for delivery. 3 lakh shares, and the 20-day average here is close to 80 lakh shares. And the stock, this one too, is down over 20% from its 52-week high levels.
Got it. All right. Thanks a lot for that, Hormuz. Well, Dharmesh, before we let you go, I want to ask you about the stock of the last 45 days or last month, Kalyan Jewellers. There was that valuation gap with Titan, but that's always been the case. However, it appears that that gap got widened a little bit more. And what feedback is that probably there's a big buyer out there, and the big seller that was there, that seemed to have cooled off. That could probably be another reason as well. What's your view on the stock? Some believe it's already rallied 40-45% in the recent part. But the other argument is it's still a distance away from the previous high that we saw. Your view on Kalyan Jewellers?
Yeah, I mean, if it's a trade-off between Titan and Kalyan Jewellers, then definitely Kalyan Jewellers makes more attention. One is that because the revenue growth has been excellent. I mean, 38% is no less than 41%, couple of percentage point here and there. At the same time, if you look at the entire jewelry space, everybody has been reporting strong set of numbers. So the discretionary spend is going largely into the jewelry space. Earlier, it was more of a the grammage was less, but the volume was high, and that was the reason why the top line growth was taking. With gold prices now back to for sub $4,000 an ounce at the end, silver prices also corrected sharply. So jewelry, why it will be more of a grammage gain right now, and there won't be any letdown in the jewelry spends by Indians. So I don't think there's a chance where the stocks can correct a bit. If there is a correction, one should be buying, and we have always advocated basket buy kind of a concept. So Kalyan, Titan, Thandamil, PN Gadgil are the ones one should be looking at if they are building a jewelry portfolio. Maybe 10% of your portfolio should go into it.
Okay, all right. You're sounding very optimistic on prospects. I'm sure Mrs. Kant as well, your wife, will be listening in and wondering what is Dharmesh bringing home. But thanks a lot for that view. You seem to be optimistic on prospects of these companies and you believe that dips could be bought into. Appreciate you joining and have a good day, Dharmesh. Let us know whether or not you gift the wife anything and we catch up soon.
Yeah, stocks I would be gifting, not the jewelry.
Thanks a lot. Well, time to slip into a short break. When you come back, our technical experts will be joining in. We have Sudarshan as well as Mitesh that will join us to help us out with some technical trades. We'll also be joined by Piran Engineer of CLSA India to discuss all those major banking results that came over the weekend. Stay tuned for that conversation as well.
Okay, welcome back. There's about 16 minutes to go for the market open, and we'll just come back with the pre-open rates in about 2 minutes or so. I think 18 points lower. Sudarshan Sukhani is with us, and so is Mitesh Thakkar with what they'd want you to do with regards to a new week and a fresh session. Mitesh, thanks very much. Sudarshan, thanks very much for joining us. Sudarshan, why don't you start and kick us off? The absolutely flat start, if you go with the GIFT Nifty, what do you think? Maybe a little deeper gash given the macro screen, and then perhaps at some point during the day there's bids which emerge, or and what would you like to do here?
Well, it's almost exactly what you said. See, that market trend is up. I have been saying go and buy the dips. On Friday, we saw a mini breakout. The real breakouts will come if and when the Nifty crosses 24,500. But I would assume that will also happen. I can't say when. So today's, say, sideways market open is actually a wait. Wait patiently for a dip towards 24,200. A small dip becomes a buying opportunity. This market is compressing and getting ready for a very big move. I'm assuming it's on the upside. So we position long. If you don't have it, wait for a dip to 24,200 and go long.
Mitesh, what about you? Wait for a dip, go long is what Sudarshan is saying.
I think, good morning. One, going long is a good idea given the fact that, there were two indices, the Nifty and the Bank Nifty. The Nifty was closing near the upper end of the range and therefore is ready for a breakout. And the Bank Nifty has managed to get past 58,415, close about that. Now, I think today I would look for continuation. So the first idea would be to keep a eye on the Bank Nifty. If we start getting past Friday's high, which was 58,597, then I think the Bank Nifty could possibly gain to about 59,200, and in a good case scenario, even 60,000, 60,200 level. So That should also, help the Nifty get past 24,400 and on to next target of 24,600, beyond which even further upsides can be looked at. So yes, I think the idea is to remain long, hunt for more long opportunities on the indices as well as stocks.
On the Nifty Bank, the positive numbers came in from ICICI Bank, and they've got a weightage of 9%. But on the flip side, an HDFC Bank, Axis, Kotak Mahindra Bank, if you add the weightage on the Nifty, it's close to about 17%. So sort of, there are more negatives in just going by the large four banking numbers compared to ICICI Bank's positive weightage. What about stocks, Mitesh? What would you go with?
I have three long calls and a sell side call. On the long side is Indian Bank, which has completed a 6-7 day kind of a pullback to its averages. That's a buy with the stop below 820 for targets of 855. Also a buy on Reliance. If it starts getting past 1330, that's a minor supply pivot for Reliance. It's just close below that. So buy about 1331, 1332. Keep a stop at 1314 and look for a first target of 1370. A buy on Britannia with a stop at 5340 for targets of 5560. And one sell call, that's Angel One, after a long time showing signs of a deeper pullback here. So it's a sell with a stop at 335 half in the short term for a target of 315.
Sudarshan, what about you? What are your trades?
It's almost the same as Mitesh in the numbers. Bajaj Finance is a buy, and it keeps on coming in my list with a stop under 135. This time I also have a buy on Reliance. But for me, I must tell you that Reliance is always an investment opportunity. You buy it and put it in a locker. There is no need to do a swing trade. But if you want to, then Reliance gives that opportunity for the time being of also being a swing trade, stop under 1300. KPIT Tech is a buy with a stop under 545, and Eternal is a short sell with a stop above 295.
Okay, all right. Thanks very much, both of you, for joining us, Sudarshan and Mitesh. Appreciate your time here on CNBC TV 18. Piran Engineer is with us, Senior Research Analyst at CLSA India, and he's going to take us through what to do with the banking companies which have reported numbers over the weekend. Piran, so it's a long list, busy day, I guess. It's been busy weekend and busy day ahead for you. So let's just start with, what you thought were, on one end of the spectrum in terms of really outperforming what you thought they would do.
Sorry, what? Could you repeat that?
Which were the which were the banks which really outperformed compared to what your expectations were?
Look, I would say in the large caps, it was ICICI, and in the mid caps, it was Federal that really outperformed our estimates. Having said that, the other names didn't do as bad as what the market thinks they've done. I think a lot of people put so much focus on NIMs without looking at A, what NII was, and B, with lower NIMs also comes lower OPEX and credit costs. And I think there's just too much focus on NIMs and too much discredit given to some of these banks on the NIM performance without looking at the overall picture.
Just explain that a little bit more, the NIMs point with specific banks where this you feel is an issue?
So barring an ICICI, all the banks reported 10-15 bips NIM compression, right? And one reason for this is over the last 2 quarters, everyone has grown really fast in corporate loans. Now, corporate loans will come at lower NIMs. If you're lending to a AAA rated corporate, they'll borrow at GSEC plus 60-70 bips. So it'll come at lower NIMs, which hits you immediately. But it'll also come at lower OPEX because it's B2B. It'll also come at a lower credit cost because they're AA, AAA rated. But I think, the street and investors and analysts are just so focused on just the NIM line item that they're missing out on what comes below that. That's what I meant.
Okay. So if the stocks correct today, because the street is still disappointed, they do focus on the NIM performance. And we've seen that with the rest of, HDFC Bank, Kotak, Axis. Would it be a buy, these stocks?
Absolutely. I would say especially an HDFC Bank should be looked at from this perspective. Growth is picking up. I think NIMs have bottomed out. Asset quality for all these banks, not just HDFC, but all the banks that reported over the weekend are trending at much below normal levels. Look at the slippages some of these guys have delivered. It's at like 5-year, best performance or 7-year best performance.
Is there any bank on which, Piran, you have a sell call or you don't like?
Among the mid caps, it's RBL.
RBL. And
None of
large
the
caps,
large
you have a bullish call on all large
Yes.
private sector banks?
That's right.
And just stock-wise, if you have to play for an upside, buy it. Which stock, according to you, has the highest upside and why?
Well, for me, it would be HDFC and SBI. I think, look, I could get into the reasons for both, but effectively, it is premised on core PPOP CAGR picking up for both of them, along with asset quality issues sort of being at bay. And core PPOP is picking up because loan growth is picking up for the sector as well as for them. And the margin headwinds that banks faced last year are behind us now. The third thing also, actually, one thing of note which often gets missed out is that the banking sector has not hired any new employees in the last 2 years. 2 years back, the headcount was 18 lakhs. Today, it is 18 lakhs. So you've actually got a lot of operating leverage that has played out, which is also being ignored. So your OPEX to assets ratio has been improving for all these banks.
Wow. That is quite some statistic, Piran. You're saying that banks...
Most people don't know this.
I don't know this. I mean, actually, IT services and banks and telecom used to be the fountain, the torch bearers, the private sector hiring, right? You're saying that banks, and this is only private or banking total?
Well, banking total, but driven by private. So if you take like a trend of the last 10 years, PSU banks were growing headcount at maybe 1% CAGR. The private banks were growing at double-digit CAGR, barring, let's say, the years of COVID. Now that double-digit has gone down to 0.
Yeah. Wow. So you're saying that...
And that shows up in the operating leverage, right?
Yeah. No, absolutely. So yeah, lots of these things. But your broad view is that most large, your buy is HDFC Bank in the private sector. I mean, if you had to pick one, but most are trading at attractive valuations, you're saying, right?
Absolutely.
Okay. So it would make sense to buy a basket of these and just sit tight. I mean, this would be the right time. I mean, the counter is that, well, last 3 years, any point was the right time. But it didn't work. So it was dead money in that sense. But you think this is different?
Look, I think in the last 3 years, you'll also have to look at it in context of A, the environment, and B, FI buying and selling, right? In the last 3 years, you've had a tight liquidity under the prior RBI governor. B, you had some asset quality issues in unsecured microfinance, credit cards, etc. And then in the last 1 year, you had NIM compression playing out because of the rate cuts. If I were to think about all of these are over now. We are in ample surplus liquidity for the last 18 months. And the new RBI governor keeps harping that he wants to maintain adequate liquidity in the banking system. Asset quality is not an issue anymore for anyone. In fact, as I said, slippages are better than pre-crisis levels also. And C, with rate cuts being over, the NIM pressure is also over. Now, when you look at that versus in the context of valuations, in the context of, FIs have sold a lot and at some point they'll come back, I think banks look like a strong idea. Which other sector in India, large sector in India, that is expected to grow at 15% on profits, trades at 12, 13 times earnings?
I completely agree. Only thing is, it was true a year ago as well. But yeah, I completely agree that a lot of stuff has changed. I'm not disputing that. I agree with you. Just one quick point. PSUs have done superbly over the last 5 years. We looked at this number, PSU Bank Index, Private Bank Index, some 10% CAGR, and that is some 30-35% CAGR. Is there, any point in looking at PSU? Your top picks are HDFC and SBI, so it's actually both. It's not they saw that. But any way to think about this, PSU versus private question?
No, so that's a good thing. That's a good question, actually. Look, it's premised on two things. One is where the valuations were 5 years back and the entire corporate recovery cycle. That led to the re-rating. And then some bit of it is in the last couple of years, PSU banks have actually gained loan market share versus private sector banks. If I were to think about the next 2 years or 5 years, would PSU banks continue to be able to gain loan market share? I don't think so. And the reason for that is their deposit market share still lags that of private sector banks. Sorry, their deposit growth still lags that of private sector banks. And until you have excess liquidity on the balance sheet, you can continue to grow loans faster than deposits. Once that liquidity dries up, which according to us is probably just 2 or 3 quarters away, then your loan growth converges with deposit growth. Okay. That's really how I think about it. Having said that, then if your next question is why SBI, then I don't look at SBI like a regular PSU bank. I think they're far higher quality than your average PSU bank.
Okay. All right, Piran, one final question before we let you go. Axis Bank, that's a casualty of the morning. The stock is down close to around 4% because of that NIMS miss. However, you have the management commentary that was indicating that things have bottomed out now, and now the NIMS will recover from here on. Stock has corrected a little bit from the top. The counter argument is now valuations are far more attractive. Will you buy into that argument, given that the stock is going to pull back more than 4% in start itself?
The answer is yes, and that is not because NIMS have bottomed out or not bottomed out. I would rather look at NII rather than NIMS. See, one reason that the NIMS are low is because they've grown faster, but it's added to your absolute profit. I think people are missing out on that point. So I don't know actually if NIMS will bottom out in June or in September. But if NIMS are lower in September versus June, I'm rest assured that NII will not be lower in September versus June. But the answer to your question is yes, I would buy.
Right. And just one quick word in terms of a valuation argument. Post this correction, what does it trade at roughly in comparison to its averages?
Look, Axis Bank's average can't be taken because it's gone through multiple cycles. But versus its peers, if I take the top 4 banks, if it's down 4% today, it would be the cheapest of the top 4 banks. It'll be about 1.7, 1.8.
Yeah, that's the number.
Just, Piran, great view on banks. Do you track NBFCs as well? By just checking.
Some of them, yeah.
So, what's the top idea there in NBFCs for you?
Bajaj Finance.
Bajaj Finance. Okay, got it. Gives you exposure across segments in that sense. I may not have active coverage, but housing finance, any view, Piran?
Actually, we don't have coverage, so I'd rather refrain from giving up.
And same thing with microfinance as well, right? You're kind of.
No, actually, I think it's a good time to be in microfinance. The cycle's turning. The weaker customer cohorts have been cleaned out. Many MFI companies have taken yield hikes, so you'll see some bit of margin expansion playing out over the cycle. And typically, when any such cleanup happens, your credit costs actually undershoot steady state levels. So your ROA can actually be better than what it usually is.
Yeah. Got it. Piran, a great chat. Come back again. Thank you very much for joining us. Really appreciate your time here on CNBC TV 18. Well, that's the banking view and interesting conversation to set us up as we go into this big bank Monday earnings reactions day, so to speak. JK Cement is also going to be in focus. Nigel, take us through why.
Well, that's right. JK Cement came out with its set of numbers over the weekend, and that's a cement name that we'll be tracking for the time being. The stock is likely to open up flattish. But actually, the numbers look pretty good. Revenue growth of close to around 20%. That looks very, very good. The operating profit, though, on expected lines, it pulled back. It came down by close to around 6% or thereabouts, which meant that the margins came down. But what the street will like is the kind of volume growth that they're delivering. And that's something that the street will latch onto. Just take a look at the volumes. If you compare it on a year-on-year basis, there's a big growth. More high teens is what we have seen out there. So volumes coming at around 6.6 million tons, though the EBITDA per ton has pulled back. And in all probability, in Q2 as well, it'll be a little bit softish. But the volume growth means that they continue to gain market share and the expansions are coming on stream. The standalone debt, well, that moved up a little bit because they have a capacity expansion plan that's coming on stream. And as of now, the current capacity is close to around 32 million tons. They have their eyes set at around 40 million tons, and then they look to go to around 50 million tons. So put everything together, EBITDA per ton, yes, it has pulled back because of higher input cost. However, the volume growth is something that the street will latch onto. So JK Cement is the stock we're talking about.
All right. Well, we've got first rates coming up. It's not 10, 12 points. It's about 90 points, 100 points. 24,234 is where we are at as far as market open is concerned. The Nifty Bank is down about 1.33%. The small cap index is starting lower. And the mid cap index is down as well. Mid cap index at down about 50 points. And the small cap index is starting lower as well. So 24,233, it's about 0.4% cut straight to the word go, right out of the gates. Look at the NSE Advance decline. It's very initial, so maybe a minute more and things will give us a real picture. But ICICI Bank is on one end, on earnings, of course, and HDFC Bank is on the other end as far as the Nifty pack is concerned. And it's kind of evenly balanced. There is Tech Mahindra, ONGC, JSW Steel, some of the other winners. On the other side, apart from HDFC Bank, there's Axis, Kotak, Indigo, which are starting lower. So 95 or 100 points lower to begin this morning at 9:15. Prema.
Well, the Nifty Bank is down more than 1% at open. And the problem is that ICICI Bank, yes, it's higher. That's up 1.5%. But that has about a 9% weightage on the Nifty. But on the flip side, if you add up HDFC Bank, Axis and Kotak Mahindra Bank, the weightage on the Nifty is close to about 17%. And all those three names are declining. Axis Bank down 4.5%, HDFC Bank down 4.5%, and Kotak Mahindra Bank down 3%. So the cuts in the large banks, which are under pressure today, the three of them are outweighing the gains that we are seeing in ICICI Bank, and that's putting pressure on the overall Nifty, which is down 0.5%, and the Nifty Bank, which is down 1.25%, 750 points lower on that. So the top three losers are Axis, HDFC, Kotak. Then you go down the curve, you've got an Interglobe Aviation reacting to the increase in crude prices, and M&M is subdued. Jio Financial, Shriram Finance, Bajaj Finance, weakened trade. IT is still holding up one end of the market. The Nifty IT index has opened up in the green with a gain of close to about 0.5%, taking its month-to-date rally on the Nifty IT index to close to about 11.5%. And here buying is visible in Tech Mahindra. Tech Mahindra's numbers were the strongest of the lot. Reliance Industries opened flat, but now is up nearly 1%. The street is rewarding the oil to chemicals performance, and plus remember, it's been an underperformer. ONGC, JSW Steel, Coal India are some of the names in the green.
Well, the stock of the morning from the broader markets, it appears like it's Tatva Chintan. Very strong showing is what they've delivered in the first quarter. There's a good growth on a quarter-on-quarter basis as well as in a year-on-year basis. Revenue has come at around 170 crores. That's much higher on a sequential as well as year-on-year basis. And the EBITDA number, the absolute numbers come in at around 24 crores odd, which is a near double on a year-on-year basis, and on a sequential basis as well. It's a sharp increase. Explains why that stock is up and about in today's trading session. Big move on Tatva Chintan. The other one is Turtle Mint. Yash says that those numbers look quite good. That stock as well has popped up close to around 5%. Remember, that's the new listing that we're seeing in there. VA Tech Vabag, well, they won a new order, and the stock, after seeing such a big rally, continues its winning ways. So that stock as well is up close to around 4%. The other one that's gaining is Natco Pharma. I think that's the other stock that came out with its set of numbers. So that one as well up close to around 5%, 4% now as we speak. Good move is what we're seeing on that particular name as well. So good uptake. PNB, that stock is up close to around 3.5%. So good going on that name as well. So quite a few winners from the broader markets. JK Cement, for the time being, the stock has opened up on the back foot. It's down close to around 2% as we speak. It's pulled back actually. It started off 2% lower, but the volume growth is something that the street will latch onto. And that's why, in fact, we are seeing that the stock has seen a good recovery. We'll try to get the management exclusively here on CNBC TV 18. India Cements, the turnaround continues. Now they're doing EBITDA per ton of around 600 rupees. The street likes that. But credit will go to the parent, which is Ultratech Cement. And at some point of time, it'll get folded up into there. So after delivering good numbers, well, that stock is still down close to around 4.5%. Super turnaround is what we're seeing out here. Remember, it's doing 600 rupees per ton. Ramco Cement could do 650 rupees per ton. So that's the kind of gap that we've seen in the last many quarters as well.
All right. Well, I think, we'll get to the minutiae in as we go along with regards to the earnings. But, this morning you've got, 130 odd points lower as far as the start is concerned, 24,200 right now. Nilesh Shah is with us, and he's Managing Director at Kotak Mahindra Asset Management Company. Nilesh bhai, good morning. Great to have you back on the program. It's been a while. So update us with what, lots of water is passed under the bridge and through the Strait of Hormuz also, lots of ships. And then again, we got some conflict and oil's back in 90, etc. Will markets be fussed equally to the same degree this time around as well? Or you think, we've seen this movie before. What's your sense?
So thank you, Prashant Bhai, for having me over here. Undoubtedly, market is recognizing that there is a taco trade. Many announcements by President Trump do get reversed over a period of time. However, the reaction to the actions in Middle East will continue to happen, albeit at a smaller scale than before, based on the previous experiences. I think for us in the near term, what is important to track is oil prices. Whatever action happens in Middle East, if that doesn't result in increase in oil prices, it will be fair to assume that our market reactions will be very muted. But if it does result into oil prices moving up, there will be reaction in our market too. So watch out for oil price movement rather than just the Middle Eastern actions.
You're saying so markets will react. I mean, that's their job, right? I mean, we open every day and you react to what's thrown our way, but to a lesser degree, because as you said, we've seen this, right? One step forward, two steps back, maybe two forward and one back, perhaps, hopefully. But oil's back in 90. Just hope that oil facilities are not hit and oil doesn't spike up from here in that sense. Nilesh, markets have done quite well, right? Mid-cap, small-cap indices are at new all-time highs. Raging bull market in certain pockets, right? That entire power/electrification, whatever way that we have ways to play the entire AI trade, that's through power and everything downstream from there. What do you make of that space, Nilesh bhai? Overdone or you'd stick with it?
Prashant bhai, there seems to be multiple trades that happen. One is on a fundamental basis where people are believing that electrification of India is a way forward. There will be more focus on power sector and energy independence. And this can be played as an AI proxy also for providing power to the data centers. It can be seen as an energy independence trend also. It's a longer term trend, and you have ability to invest via power equipment manufacturer, power producer, from thermal to solar to power transmission companies, and also all the ecosystem intermediaries which come into play. The other way to look at this, in the large cap, especially 10 large stocks across banking and IT, there has been FII selling. However, there are 100 odd mid-caps where FII holding is all-time high. In some sense, there is also diversion between where FIIs are selling versus where FIIs are buying. So fundamental and flow, both are coming together to differentiate various sectors.
So and of course, I mean, another way to slice the same thing is that large FIIs, right? I mean, they seem to be some of the largest. It looks like they've been actively selling large caps and buying smaller companies, mid caps, right? Some of the names, I know you don't want to talk names, etc., but was unimaginable 10 years, 15 years back. But we're seeing that across the board. So there is that way to slice the data as well, right?
Absolutely. We have seen active versus passive FPIs. We have seen FPIs with local presence vis-a-vis FPIs with global, more top-down approach to investment. We have seen boutique FPIs who are giving proxy to Indian small and mid caps. There is a whole host of FPIs investing in India, and depending upon their mandates and ground presence, they are moving into small and mid caps aggressively, and which is why more than 100 mid caps, small caps have all-time high FPI holding.
Nilesh, my morning. Rima here. Now, you're equal weight in equities for a while now, but you did tell aggressive investors to go overweight since April, and that call played out. Markets have outperformed since April. It's done very well. Does that call still hold?
So, Rima, sometimes we become lucky. And our view was that Middle Eastern tension will ease off. That should result into oil prices coming down. And more importantly, it will increase supply of petrol as well as gas. Today, those hypotheses are coming under pressure. I'm still holding on to my equal weight call for investors. and for aggressive investors, a marginal overweight call. But it will be subject to what happens to oil prices. It's impossible to predict what Middle Eastern situation is going to turn to.
And on AI, we just had the Philadelphia Semiconductor Index enter into a bear market. Global AI capex is being questioned. Do you have a view on how that's playing out?
So on the AI side, we are watching a couple of things. One, let's say till about 6 months back, most of the AI was funded out of cash flow. Now we have started seeing hyperscalers coming to borrow money, and their future investment is likely to be funded out of majority debt and slightly lesser equity. When debt is funding your investment, you have to pay interest. That puts a red signal. The second thing related to hyperscalers and the equipment providers, GPU providers, was contra trades. One guy's sales was becoming other guy's purchase, and other guy's sales was becoming first guy's purchase. Those contra trade also creates some red signal. What is comfortable on the AI side is the valuation. Despite sharp run-up in prices, the valuations for equipment providers have remained in single digit, low double digit. So it's an interesting space which we are watching. Like internet, undoubtedly AI will change the way world functions. But will there be people or companies making money out of it? Or we will see, like all the data companies, data cable companies of the internet era, where investors ended up losing money. These are the trends to watch out for. How much is debt funded? What is contra trade between players? These are the two red flags to watch out for.
Hi, Nilesh Bhai. Good morning. Good to see you in. Nilesh Bhai, the domestic investors' maturity has been tested. And actually, as of now, at least, it appears that we're passing that test pretty well, because the flows continue on the domestic front and there's only so much we can do. However, going by what we are seeing on the global front, do you think we're still bracing for a tougher time ahead, probably crude holding above $100 per barrel mark and the rupee inching towards that 100-odd mark? What would your message be to investors? Because the flows have been solid, but their patience is going to be tried from here on as well.
Undoubtedly, Nigel, the rupee will continue to depreciate in our opinion, albeit with all the measures announced from FCNRB scheme to relaxation of ECB to bank borrowing in overseas market. We think rupee's depreciation will be orderly. There's nothing undue to be worried about. However, on the global side, there are many geopolitical actions which can impact not only global growth, but also India's balance of payment. Oil in triple digit is beginning of Rahu Kal for India. It will have consequences on rupee, inflation, current account deficit, fiscal deficit, and eventually growth. So oil prices will have to watch carefully, undoubtedly.
How are flows holding up here? The retail bid, Nilesh Bhai, in that sense, all strong and good. June, you had a bit of a flutter, but I think it came right back.
So retail investors, as Nigel mentioned, are showing tremendous maturity. SIP has become part and parcel of their lifestyle. They are still believing in long-term India growth story. And they have seen that even FPIs in certain occasions have become buyer in the month of July. So there is confidence that at this valuation, there's nothing much to lose. There is still fair amount of money waiting on the sidelines. One particular point I would like to raise is the IPO. We have seen when Maruti Suzuki kind of IPO came after the bear market of 2000 to 2003, it really was priced appropriately. It brought investors back to equity market and laid the foundation for 2004 to 2008 bull run. We have seen large IPOs coming at the top of the market, very expensively priced, and they make top of the market. There are two large IPOs in the pipeline, one National Stock Exchange, second Jio. If these issues are priced appropriately, they have potential to rekindle investor interest even from global investment side. And if they are mispriced, then certainly it could have consequences. So we'll have to keep a watch on the primary market. If quality issues are priced correctly, it can bring investors into India.
No, absolutely. And I think SBI Funds has done a good job in terms of pricing things in a good way. And of course, they've got a tremendous response. Nilesh, just one last point. We're not at a moment where you need to rethink small cap. I mean, you were one of the early a few years ago. I mean, you started getting cautious on mid caps, small caps after the euphoric run, right? After, as you said, I mean, for about 100 companies, FPI holding is at all-time high, indices at new highs. You're not getting into a euphoric zone, or do you think so? I mean, what's the message to the team at Kotak? I mean, be a little careful now overall. I mean, generally, or you think it's all good? I'm talking specifically mid and small caps. Yeah.
On the small cap, Prashant, my message to my team is be very, very careful on the promoter whom you are their governance standard. Price volatility will have to bear. If my small cap fund goes up and down 15-20%, investors don't bet an eyelid because they know small caps are volatile. But if I go wrong in selecting promoter, if I go wrong in understanding their governance practices, the losses will be permanent. Undoubtedly, some of the small caps where we have invested are today trading at much higher valuation, but they are also delivering fantastic earnings growth. Last quarter, March 26, that is, the mid-cap basket itself delivered 34% earnings growth, well ahead of expectation. The small-cap basket delivered 19% earnings growth. When this kind of earnings growth is flowing through, it's difficult to, take a sell call. We might as well withstand some of the underperformance for a while if we believe long-term trajectory is good. And which is where, to our investors as well as distributors, my message is, please evaluate our small and mid-cap fund on a 3 to 5 year horizon. It's quite likely that we will be holding on underperformance for a year if we believe their long-term outperformance is still possible.
Nilesh, always a pleasure chatting with you. Thank you very much for joining in. Thank you. Moving on now, Tata Technologies reported a strong set of Q1 numbers. The stock, though, is under pressure, down close to about 2.5%, because valuations for Tata Tech are ahead of peers, so which is why JP Morgan has an underweight rating and Kotak Institutional Equities too has a sell call. We have with us the CEO and MD of the company, Warren Kevin Harris, joining in with us. Thank you very much for joining in. Well, you've guided for strong double-digit revenue growth for FY27. Now, Q1's already running at 19%. Can you end the year with high teens kind of growth rather than low double-digit? What's the expectations for FY27?
I'm not going to confirm a number. All I'll say is that I'm much more confident now than I was at the start of the fiscal year. I think this is going to be a breakout year, not just a good year for Tata Technologies, but a breakout year in terms of our performance vis-a-vis the sector.
Well, not just a good year, but a breakout year for Tata Technology. You've won some large deals, Warren, and they will start ramping up. Does that mean H2 growth will be higher than H1?
The Tenneco deal is going to ramp up in Q2, and certainly in Q3 and Q4 it will make a material contribution to our numbers. In addition to the Tenneco deal, we celebrated at the beginning of the fiscal year the full vehicle win with one of the Japanese OEMs. That's ramping up now, and we'll start to see that achieve scale towards the September timeframe. So certainly, I think the second half of the year will continue to kind of build upon this sequential growth momentum that Tata Technologies has established.
Warren, it's been a great year for you. You're sounding positive. But on the other hand, we had KPIT Tech issuing a profit warning, and that sort of shook up the industry. Can you explain why we're hearing two different commentaries from the same kind of company in the same industry?
I think what is happening is something that we have essentially established a thesis around in terms of where we're investing and where we're driving the company. We believe that that in the automotive space specifically, our customers increasingly, given the clock speed of technology change, given the challenges that the industry has in terms of reacting to the competition from China, they're going to have to reduce their core, and they're going to have to build an ecosystem of partners that are capable of taking on turnkey responsibility for complex work packages and specifically products and full vehicles. And that's the difference that matters that Tata Technologies represents. And I think what you're seeing is that the ESP sector is starting to segregate into those organizations that can do the complete vehicles and those companies that are restricted to just providing services. And I think in the full vehicle and full product space, with the industry having to react again to the competition from China, I think that's where the demand is now, and that's essentially where Tata Technologies is intersecting.
So the difference between you and some of the other companies is the nature of your clients, and your clients are doubling down on tech capabilities and the kind of work that they do with vendors like yours?
I think that's right. But one of the things that I would say about the type of work that we do, when we are trusted to take on the responsibility for a full vehicle, we're being entrusted with the family jewels of the company that we're working with. Typically, the decisions that underpin that are made by the C-suite. And so our relationships with the customers that we're dealing with is from the chief exec down. And that affords us a great deal of influence, not just in terms of full vehicle outsourcing or full product outsourcing, but also in terms of all types of outsourcing that, again, extend across our portfolio of services and capabilities.
Okay, so strong double-digit growth this year, FY27. Warren, is that something that's sustainable?
Well, the deals that we're winning now are not discrete single-year deals. These are multi-million-dollar, multi-year deals. And so not only are we confident in double-digit growth this year, we think that we are at the beginning of a cycle that is likely to extend for at least 3 to 5 years. And so we are not only confident in double-digit growth this year, but we expect to continue that as we enter FY28.
Oh, well, that's bullish commentary. What about margins? You, in Q1, 16.1%, but your guidance was for 18% by Q4 FY27. Is that on track?
Yeah, I think we will see economies of scale. As the organization scales, we think that will translate directly to margin improvement. We also, at the beginning of the year, are focused upon launching the deals that we've secured. Typically, that requires a great deal of onshore presence in order to be able to establish the infrastructure and the connect with the customer that ultimately then translates into business both onshore and offshore. And as we scale offshore, then the margins are improved. So we certainly continue to be confident in our ability to be able to expand margins quarter on quarter. The margin improvement in Q1 was modest, but we expect to kind of build upon that Q2, Q3, and then Q4. Our North Star is to exit the year at 18%. We are seeing some headwinds in territories like Germany, given the recent announcement of BMW and VW. So we'll continue to calibrate our expectations, but we think we'll be in and around where we plan to be come the end of the year.
Warren, thank you very much for joining in. That is Tata Technologies saying that this is going to be a breakout year, and they believe that this upcycle for the auto industry for their company will last for the next 3 to 5 years. So confident of double-digit growth even next year.
Okay, all right. Let's focus on the next big name then. JSW Steel reported a good set of numbers, and all-round beat is what we saw out there. To understand how was the past quarter, what's the trajectory going ahead, we're joined by Mr. Jayant Acharya, the Joint Managing Director and CEO at JSW Steel. Hi, Mr. Acharya. Good morning. Always a pleasure, sir, to have you on the show. Well, give us a couple of details first in terms of steel price move. What was the increase that we saw in quarter one? And given that we're entering a seasonally weak quarter, what's the trajectory in quarter two from here on? How much of softness are you factoring in?
Yes, we had a strong operational performance. Our capacity utilization, excluding our BF3, which was under shutdown, was at 94%. And we had console sales, which was helped by a better mix towards flats and a better value-added and special product overall mix. On the NSR, on the price realization, if you recall that the prices started recovering from Jan 26, and it went through to March, and that spilled over into the quarter one. So we have a quarter-on-quarter NSR improvement of roughly 6,500 rupees per ton, which was offset by higher costs and a better mix, and that's what's giving you the EBITDA per ton.
Okay, you can give us some more clarity though on the price outlook for quarter two?
So the prices for longs have actually fallen during the last quarter itself. And during a seasonally weaker, or rather a seasonally monsoon quarter, the long demand does get impacted because construction activity is weaker. The flats would also moderate somewhat, but not to the extent which long has done. So it's difficult to give you a number as to what the impact would be. But yes, there is a cost impact in quarter two because the coking coal prices are going up to some extent. And there would be a seasonally, I would say, impact because of the monsoons on the price.
You mentioned that input costs have gone up. So tell us about coking coal price increase. You had guided that it should go up by around $15 per ton in quarter one. Has that happened? What's the outlook of coking coal prices that you're working with for quarter two? How much higher will it be?
For the quarter one, our coking coal cost went up at $17 per ton, slightly higher than what we had guided. Our quarter two coking coal cost, we estimate to be in the range of $12 to $15, again upwards. While the coking coal prices have started moving down in the last week or two, I think major part of that benefit would get reflected in the subsequent quarter.
All right, Mr. Acharya, put everything together. What's the outlook on the EBITDA per ton? Given that volumes could recover, but it's a seasonally weak quarter, coupled by the higher coking coal costs that you just spoke about.
In the quarter two, what you will see will be increased volumes from JSW Steel on the ramp up of BF3 furnace at Vijayanagar and our Ohio operations in US. That should play into the overall absolute number EBITDA. On the cost side, I already gave you an idea that the coking coal would impact costs to some extent. The prices are difficult to estimate, and therefore I'm not able to give you a band of EBITDA, what would appear in quarter two. But yes, I think the volume would help us to be able to improve the absolute numbers. The other thing which is on the positive is that the iron ore prices have also started reducing, both in Orissa and recently from NMDC, and that would play into the quarter two to some extent as we go into the second half of the quarter.
Okay, we've got the India bit out of the way. Let's talk about the overseas operations then. US has seen some improvement. Even Italy has seen some improvement. Do you expect both these two operations to continue to improve from here on?
The Ohio operations have done well. Their caster upgrade and the vacuum degassing are all in place. Their volumes have gone up. The unit is ramping up well. Baytown has also done well. And if you see the overall US operations has performed well, they have done an EBITDA of $16 million from virtually a break-even in the quarter four. If you look at the Italian operations, in the quarter one, we have had a 7 million euro EBITDA. In spite of a shutdown, annual shutdown, which was there in the rail mill. On the other positive is that we have signed the Accordo di Programma with Italy, and that will help us to fast track our rail modernization project. We have received a 33 million euro grant in this ADP, and we expect better orders now from the Italian rail. So both US and Italy should improve operations and results, therefore, in the quarter two.
Let's focus on the leverage in books then, Mr. Charya. And as you had guided for, that deal with JFE has been done, and that's where the debt number's coming down. But what's the capex outlook from here on? And also, the street will be interested to know whether or not there's a possible equity raise that's in the works. Is there a QIP or something in the works?
No equity fundraising plan. Our net debt to EBITDA, you're right, has fallen, and it's at 1.46. We had said that while we grow our capex and while we go towards our target of 62 million tons in JSW Steel by 32, we would be comfortable with a net debt to EBITDA below 2.5. I think we have reached that number quite well in advance. But we would keep our focus on this and see that our ratios are, our financial prudence is such that the ratios are well maintained.
Okay, sub 2.5, got that. Give us some details about JSW1 IPO. You're saying that you're going to be raising some money via that. So how much are you looking to sell? How much will JSW Steel hold in that particular unit?
So JSW1 is looking at various opportunities, and one of them is to get into the IPO. At this point of time, I think it is difficult for us to be able to disclose too much more. I think we'll wait for them to file the prospectus and then see the details.
Okay, Mr. Charya, you all have been mentioning that you're going to be looking to scale up capacity. Now, Vedanta Steel and Iron, that's been demerged. Part of the street believes it could land up in more experienced steel hands. Are those hands those of JSW Steel?
The way we have charted our growth path from 30 million to 62 million is mostly through brownfield and Paradeep, which we have started the greenfield in a modular fashion. We believe our specific cost of investment is one of the best, and we would be able to put up world-class facilities at very competitive costs. We would focus on that unless there is an asset which is really so attractive that we need to look at it. So as of now, I think our focus would be to expand our own brownfield growth path, which we have already guided.
Okay, all right, Mr. Charya. Always a pleasure having you on the show. Thanks a lot for joining in, telling us about the past quarter and the trajectory ahead. All the best to you and the team in the second quarter as well. Well, Prashant, just one quick word. I think you had met the management of Skyroot as well, in the past week. And over the weekend, I was lucky to meet the management of Solar Industries. And I met Mr. Manish Nuwal. And obviously, we know that's been a multi-bagger, the stock, Solar Industries. But you know what? In Skyroot, they invested 18 crores 5 years ago when they were looking at initial capital. And that 18 crores is today worth more than 1,000 crores. And the management made this point, this was pre the launch. So after the launch, in all probability, it will be higher. So in 5 years,
stake?
no, they have around 4.5% stake, which could probably get diluted. But that stake, so you talk about the stock being a multi-bagger at times, diversifying something and taking a bet that you're backing also pays off. 18 crores becoming 1,000 crores. Wow, that's a 50 bagger in 5 years. So
Solar would perhaps be a supplier to Skyroot in operations, and perhaps that's how the linkage would have happened. I'm saying the initial touch in that sense.
Right. The reason I asked them is because I knew other family offices as well that were in talks and they didn't do it. But Solar Industries, I knew they put some money and I just got that number out, 18 crores. So interesting.
Now the big guys are there, right? GIC and Temasek and many others have come in the last round. We'll take a break. We're back. Federal Bank management on the other side. Stay tuned. Federal Bank is the company in focus now. They reported a strong set of numbers. Stock ran up on Friday in a very, very sharp way. Healthy growth across the board. And NIMs have improved. Even though yields were down, I think the fall in cost of funds really offset that. Asset quality is well under control. Loan growth is super strong, I think about 15% or so. Harsh Dugar is with us, Executive Director at Federal Bank, to take some questions. Mr. Dugar, great to have you with us here. Good morning. Thanks for joining us. So it's all going very well, I must say. Despite, of course, what we saw, right, with that Middle East volatility and question marks around remittances. And mid-quarter, we did speak and you said, well, it's all on track. There's been no real big change. And I think in terms of remittance market share, you maintained your remittance market share. I want to start with CASA. I think CASA is down on a quarter-on-quarter basis, but I think it is up on a year-on-year basis. Could you talk to us a little bit about where this is headed? Your reliance on current accounts, your reliance on wholesale deposits. Just give us some sense of that, and what's the aspiration here?
So as we've been guiding, CASA is one of the key areas which we have been focusing on to improve our ratio. And if I look at YOY, it has actually been up by about 188 basis points. If I look at it, there are many factors which have been contributing towards that, increasing the products per customer, focusing on the mid-markets and the small MSME segment has really resulted in that part. We continue on that trajectory in terms of improving our CASA ratio over the medium term to about mid-30s to 36% kind of a thing.
Mid-30s, 35, 36% is...
36% in the medium term is what we are guiding for, with a quarter-on-quarter improvement. What you saw in Q1 vis-a-vis Q4 is a seasonal impact, because Q4 typically tends to be a segment where typically tends to be very high, and Q1 and Q2 typically tends to be a little weaker compared to Q4. But if I look at on a year-on-year basis, it has been strong. And one more thing which doesn't get often commented on is the average CA and the SA. What you saw was the level, but if I look at the averages, the average on CA and SA has been pulling on very, very strong, which has actually resulted in our cost of funds going down significantly more and also contributing towards a NIM improvement.
Right. And medium term, 35, 36% is, what is medium term, sir?
2 to 3 years, 24, 36 months. Yeah.
Aspiration is to get to 35, 36%. Just talk to us a little bit about the FCNRB scheme, sir. How much has come through the Federal Bank channel?
So we have launched our scheme. We have launched FCNR Max, and we have offered the leverage product to our customers. We just recently did that part also, and we had to tie up for lines to provide leverage to our customers. While the general feeling was that the FCNRB deposits growth would be very high, but it has been slower than expectations. But there have been a variety of reasons over there. One of the main reasons was the tax implications. In the US and European markets, the tax gets taxed on a gross basis, which leaves you out a small segment, which is largely the Middle East and Singapore. Second, the Middle East crisis is also weighing down on people. So that was one of the reasons for the slower growth. And also compared to 2013, if you look at it, this time around the differential or the delta between the US rates and the India rates was significantly higher last time around. And hence, this time even the leverage product doesn't give a very significantly higher return. Having said that, it's too early to comment on that part, and we still have 2.5 months to go. So I'm reasonably confident that this flow will actually increase substantially as we go forward.
So when did you launch this, and could you give us some sense of what has happened so far?
We launched that in the last month, the last quarter itself, and we started offering this to our customers. We've seen attraction, but like I told you, this is going to pick up because customers also tend to compare to the other bank. They also want to get advice on the tax implications and to be very sure about it. So I do see attraction coming in. Obviously, 30th September is the cutoff date, so you'll see a lot of traction happening in July, end of this month, August and September in particular, will be significantly higher. And what we are gathering is that our share in the FCNRB market is what we will be garnering as well.
Yeah. No, what was that share?
Our share in the FCNRB segment for us in the banking system is about 2.5%. So 2.5%, 3% is what we would be able to garner on the incremental FCNRB coming in. And the markets are guiding. Earlier, the guidance was $60 to $80 billion, and now people are talking about $50 to $55 billion. So this is the range in which the market is, or the industry is broadly talking about.
You think we will get to 50 to 55, Mr. Dugar?
Well, that's what the industry is expecting, and I would think so.
And you think, you mentioned two reasons, tax implications in US, Europe, and second is interest rate differential being not that attractive as it was last year.
2013. And yes, plus the overhang of West Asia, because the large part of the actually come from the Middle East. Unfortunately, that is also a segment which have a bearing on it.
You know, dollar rates have also moved up recently. I mean, they moved up more. So that makes it even tougher, I imagine, right? I'm talking about last 2-3 weeks.
The FCNRB, technically, they get a dollar return. So that should not really impact them. But yes, the markets were expecting a larger inflow earlier on, which did not happen. And after seeing a rupee appreciating after the RBI announcement, it has actually depreciated in the last 1 week or so.
Harsha, hi, morning. Rima here. Loan growth at 15%, deposits growth at 11.4%. What's the outlook for the full year? And are you comfortable with this gap between loan growth and deposit growth?
So let me give you a color on that part. While we have been guiding on the loan growth at about mid-teens, and we stand by the guidance with a positive bias, that's number one. On the deposit side, let me highlight while 11.5-12% is what it looks like for the deposit side. But our retail deposit growth was at about 14.5-15%, which was reasonably strong. The corporate deposit, the wholesale deposit growth, we have consciously kept it low for two reasons, because obviously it comes at a higher pricing and we want a deposit base to be granular. And secondly, with the FCNRB funds coming in, we do not want to offer really a higher rates or a premium to wholesale deposit. But if you look at the granular retail deposit growth, it has been quite strong. And apart from that, within the deposit, if you look at the CASA, ratio has been improving YOY. Our share of CA and SA both has moved about 16 to 19% YOY basis. So that's also contributing not just to growth, but also lowering the cost of funds.
Okay. Credit cost was at 41 basis points. Your guidance is 50 to 60 basis points. Is there scope to reduce it?
So we are not changing our guidance, Rima, at this point in time, but I can say that we have a positive bias. So we'll probably be at the lower end of our guidance, but we are not guiding for it. And yes, we also have kept in mind that there could be some impact of a West Asia crisis. We really do not know how it will fall out, if at all, and we are kind of watchful about it. But at this point of time, our guidance of 50 to 60 basis point holds with a positive bias towards the lower end.
All right. Hi, Mr. Dugar. Good morning. Good to see you. Wayne, a quick couple of questions. You know, your earlier guidance on the FCNRB inflows, I think, was approximately $1 billion odd. So that holds, right? Going by mathematically, $50 billion, and y'all have around 2%, as you said. So $1 billion is gettable, right?
Yeah. So I'm not guiding for a number, but what I'm trying to indicate
mathematically, it works out to approximately that. Okay, got that. Let's talk about the gold portfolio. I think that's mid-teens as a percentage of your mix, if I remember correct. You know, gold prices have come down. What kind of cushion are you all sitting on? If you could give us a trajectory out there, do you see growth continue at the pace at what it has been going?
So if I look at the gold, we have a portfolio of about 41,500 crores, and we are among the largest private sector banks in this business, and it has grown about 33% YOY. While we do expect the gold loan portfolio to grow, the industry has also grown, but obviously on a higher base, and you can't expect the growth rates to continue at these rates. So we will see some moderation in growth rates, but we are quite hopeful and confident of growth coming in from the gold loan portfolio. Coming to your gold loan prices and all, let me also highlight the fact that the LTV on our portfolio stands at just about 60%, which keeps into account the fluctuations in the gold prices. So we are kind of mindful of that part, and we build in a buffer in the per gram gold loan which we give.
Got it. All right. And what kind of a growth trajectory are you looking at? It could cool off a little bit, but for the year, what could we look at? And where do you see this contribution head from around this, 15% approximately?
So we have 15%. We obviously, within the overall portfolio, this is a segment which is growing faster. And like I said, it has also, if you look at the quarter on quarter, also has been 8% plus. So looking at that, a 20-30% growth is possible, number one. And secondly, within what is the comfort zone is about 15 to 18% of our total loan portfolio can be in gold. It's actually a low risk product. So that's something with slippages, cost of credit, the cost of credit is significantly low credit cost.
Okay. The Standard Chartered credit card portfolio integration is expected by the end of this calendar year. Some are factoring in better fee income as well. Could you give us some kind of guidance on that front? What are the objectives you're looking at and the aspiration on that? And also the ROA is going to be the next big trigger for the re-rating because the stock has done quite well. And most brokerages are saying they are expecting an improvement. Give us the number, next couple of years. Where is it headed?
So our credit card portfolio, this is one of the very key areas we would like to grow, and we have been guiding that. Acquiring the Standard Chartered portfolio was a step in that direction. We are looking to grow the card portfolio both organically as well as purchase. If something comes at a NIM accretive basis, we are quite open to that part, including growing the cards business through a partner. So this is on the card side of it. Coming to your ROA question, we grew our ROA by about 22 basis points if I look at YOY basis, and we have been guiding for a growth of about 3 to 4 basis points in ROA quarter on quarter. But let me also qualify this. It can be non-linear and not necessarily sequential. So you could see some quarters having a higher than 3-4 basis points growth in ROA, but this is what we've been guiding for the current year.
Always a pleasure, sir, talking to you. Thanks a lot for joining in. You're sounding optimistic on the prospects. We'll track you some of these numbers. Wish you well, and we keep in touch.
Much.
Okay. All right. So that's the management of Federal Bank talking about better times going ahead as well. By the way, for the markets, the Nifty is still down 150 points, but individual stocks are doing a thing of their own. Just to highlight a few of them, Laser Power, that new IPO that came about, it started the day at more than 300 rupees, suddenly saw a sharp drop down, and now I think it's showing some signs of stability. So that's, just take a look at that. 310 is the high of the day. Did come down sharply. The other one I'm looking at is Bansali Engineering. Keep an eye out on that stock. I think it came out with its numbers. The street likes it. That's flying away. And Himadri Chemicals as well. We had spoken to the management of Chartbusters just last week. The management sounded optimistic. I think the PAT number was around 1,100 crores is what they were guiding for. In the last few days, if you pull up the last 10-day chart, it's up, I think, close to around 10 to around 15% on a stock that's already rallied close to around 50%. So keep that one on your radar as well. Nagraj Sethi, the Senior Technical Research Analyst at HDFC Securities, joins us on the show. Hi, Nagraj. Good morning. What's your take? Mid-cap index is showing some positive trends, but do you think you would be a buy on the Nifty at around 150 points lower?
Hi, good morning, Nigel. Yes, market is weighing high on the geopolitical conflicts, rising crude and depreciation of rupee. I am expecting Nifty to be resilient at the lower levels. I'm not expecting a bigger decline from here onwards. And a further decline from here, around 24,000 is going to be a strong support for the market. And I'm expecting a bounce back from the lower levels. As far as mid-cap broad markets are concerned, they are still strong at the higher levels. Mid-cap and small-cap at the resistance, at showing consolidation moment, and not a bigger decline is expected at this point of time. Eventually, this is just preparing a base for a decisive breakout over the period of time. So I'm staying with the mid-cap and small-cap segment at this point of time. Eventually, I'm expecting this to be a breakout of the important resistance.
Nagraj, stocks that you would go with, and any particular call on an Axis Bank, HDFC Bank, down 4-5%?
First of all, I have two stocks from my side. First one is from a PSU banking side, Punjab National Bank. The stock price was after consolidation broken out today, placed at the higher levels. 200-day EMA is a little bit at the edge of a breakout. The overall chart pattern is indicating a decisive breakout in the PNB in the near term. One can look to buy at this point of time, currently trading around 110 and 110.20. Immediate target would be around 117. One can place a stop loss at 106. Second one is from IT side, Emphasis. Emphasis has been a constant uptrend from the after important bottom reversal. Currently placed at the breakout of 200-day EMA, currently trading at 2441 levels. One can look to buy at current market. Immediate target would be around 2600, and one can place a stop loss at 2350. And the Axis Bank has been moving up very well from the lower levels. I think today's decline is going to be a buying opportunity. The overall chart pattern of private banking sectors as well as Bank Nifty and this Axis Bank is still positive, and this current decline volatility is going to be a buy and dips opportunity.
Okay, all right. Thanks very much, Nagaraj, for that. Appreciate those trades and that view as far as the index is concerned. Well, let's revisit what's happening with the big news which reported HDFC Bank and Axis in particular. Ritu is back. Ritu, take it away.
Well, it was a soft quarter for HDFC Bank. Net profits, the slowest growth among the large lenders at just 5% at about 19,060 crores, while the core income growth was half that of ICICI Bank, 6.7%. But the biggest disappointment by far for the street was the margins slipping to a record low of 3.26%. That's a 12 basis point dip, quarter on quarter, and the management only expects a gradual improvement from these levels. The CASA ratio also, by the way, was one of the lowest that the bank has ever reported. Asset quality stable, although gross NPAs and slippages, they inched up sequentially, but that was because of the Kisan credit card related stress, which is more seasonal in nature. And, leaving this agri portfolio aside, it was more or less. Business momentum was good. Advances growth, though, remained higher than deposit growth, so that CD ratio concern remains. On the CEO appointment, though, the management says the work is still in process. There's no update there yet. And on the FCNRB deposit, which is expected to be a big one for HDFC, they just called it a big opportunity, didn't really dole out a number. Axis Bank, meanwhile, they beat profit estimates, profits up 23%. Net interest income, though, that missed expectations, and margins again fell the sharpest among the large banks by 16 basis points to 3.46%, despite the cost of funds remaining benign for the bank. Asset quality weakened slightly. They also had higher fresh slippages, again seasonal in nature. Going ahead, they are confident of getting NIMs back to about 3.8% in the next 12 to 15 months.
Thank you very much for that. Get into a break. On the other side, Manisha Gupta will talk commodities. Stay tuned.
Jimmy?
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो। Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. Let's talk commodities. As promised, Manisha is now joining in and she's tracking the metal space today. Hi, Manisha. Good morning.
Morning, and thank you for that. Well, I'm looking at precious and the base metals, both of these, and we're looking at prices coming off their highs, and that is because there is strength in the US dollar index back yet again, trading very close to 101, and is the reason you're looking at prices coming off slightly from the kind of highs that we saw on Friday and early Asian market as well. Well, it also is about escalating attacks between US and Iran, which are driving the oil prices higher, where the markets are anticipating more oil-driven inflation to come in. And when you look at the overall US Fed officials' statements that came in the previous week, all of them have been warning about persistent inflation. Market also is pricing in more than 50% of a possibility that US could be looking at an interest rate hike in the month of September. So the gold and silver prices, both of them are trading near those 8 to 9 month lows as we are looking at. More than gold, silver continues to decline quite sharply, trading below $60 an ounce, even now in the Asian markets therein. But it is also about the copper futures, which have continued to decline. Also, it is trading nearly 6% off its all-time highs. The LME price is still 8% in the positive, but clearly, as I said, it's trading off its highs therein. The pressure clearly comes in from the fact that there's uncertainty in the Middle East, and the markets are looking at weaker demand growth coming in from the European Union as well. But everything else, every other fundamental clearly has been supportive for copper prices. To start with, there's a storm in Chile that has led to power outages and damages to facilities as well, supporting prices there. Chile, in any case, has cut 2026 economic growth to 1.8%, citing uncertainty in the Middle East there. Also, production in Chile has continued to decline. The markets are looking at water shortages, power ore grades, unplanned maintenances. all of that causing concerns therein. And then Chile accounts, by the way, for 50% of overall copper production in the market, and that is where the concerns are coming in from. There also is a statement from IEA which has flagged concerns going forward in sense of sulfuric acid supplies which are tightening. Rio Tinto came out with a report suggesting that they're looking at second quarter copper output declining by 7% to 213,000 tons and are expecting the second half to be slightly slow as well. That's exactly what we're looking at in sense of number and statements from various other companies. The global copper cathode demand is estimated to increase by 1.6%. The Chinese demand also is expected to increase to nearly 13 million tons in 2026 itself. The China consumption is estimated on the stronger side, and that is where the markets are taking cues from. And then apart from that, there's also a statement from Antofagasta saying that the first half of copper production has declined 9.5%. So not just one company, but major coppers have said exactly the same thing, including BHP, which says that China production is expected to decline in this year and the next year as well, supporting copper prices going forward.
All right, Amarija, thanks very much for that interesting data. We'll take a break. We're back on the other side. We connect with Ashok Chandra of PNB on their first quarter numbers and outlook going forward. Stay tuned.
Engaging in the discussions.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
Welcome back to Corporate Radar. A bunch of big banks announced their Q1 numbers over the weekend, as we know. But today, the market has given its verdict. The stock that has gained the most is that of PNB, Punjab National Bank. The stock is up nearly 5%, 4.4744 as we speak. And that's quite clearly because the bank has reported excellent asset quality numbers. It's almost as if there is no bad loan or not even a difficult loan in a large bank, 17 lakh crore size in terms of deposits. To discuss the quarter's performance and the outlook ahead, I'm joined by Ashok Chandra, the Managing Director and CEO of Punjab National Bank. Good morning, Mr. Chandra. Many congratulations. The market has given you a thumbs up. But there are always pockets that investors want to know. The first one is that your advances growth is a good 4 percentage points ahead of your deposit growth. Now, are you going to continue with this, big difference because your CD ratio is comfortable? what should we expect in terms of deposit advances growth for the rest of the year?
Good morning, madam. It is always pleasure to talking to you. And let me first express my sincere thanks to my 1 lakh plus employees, 18 crore plus customers for reposing faith in our bank, and all the stakeholders. Now, coming to this, the deposit and the CD ratio, I think we had indicated last time also that since our CD ratio is in the range of 72-73%, and this quarter it is crossing 73.5%, and we are comfortable with the growth in the deposit at 8.5%, and that is the reason we had given the guidance also in this financial year that deposit side we will grow at 9 to 10%, and credit growth will be in the range of 12 to 13%. We are holding to this position, and I think the moment we cross 77-78%, we will look for some good growth happening in the deposit. I can tell you one thing, that deposit mobilization is not at all a challenge for the bank. It is a conscious decision of the top management.
No, I agree with you. You told us in the previous interview that
yes, madam.
You're going to take advantage of the very low CD ratio, but very comfortable CD ratio. But this 78% you're saying is your comfort zone. When your CD ratio goes to 78, you will start pushing up your effort on deposits as well, correct?
Yeah, yes, absolutely.
By when do you expect to get there? Will it be this year itself?
No, we will be touching around 75-76% this year. And next financial year, I think by Q2, I think somewhere we will be starting touching around 77%.
Okay, now despite the fact that you are not under pressure to raise high cost deposits, something which other banks are because they have very high CD ratios already, your NIM is still under pressure. Do you expect it to improve this quarter, Q2, the quarter we are in, because you will start getting FCNR and other cheaper deposits? Even market CDs have gone down. So should we expect an improvement this quarter and for the full year?
I think last quarter it was bottomed out, and you have seen things are started happening in this particular quarter. Both NII and the NIM has shown in absolute number also. NIM in the percentage term, 4 basis point, both the global as well as the domestic, it has shown the growth now. And going forward, like I had indicated in my previous interactions also, that in this financial year, if everything remains the same, I think you will see the good growth happening in the NII as well as in the NIM. I'm quite comfortable that the guidance which we have given, 2.6 to 2.7, I think we will be able to do it by end of this financial year.
Okay. Well, let me come to bad loans. I mean, there's hardly anything. It's such a good slippage ratio number. But, if I want to find a problem area, your SMAs have gone up. Just for my viewers, special mention accounts are accounts which have not paid their interest in the due date. They have paid, it is 60 days, but it is not yet over 90 days. So they are not NPAs. That's what is the technical term for SMA. SMA has gone up quarter to quarter. Would you worry?
No, not at all. And I think SMA, if you see the 5 crore and above, it is 0.12% in the SMA 2 book. I think it is one of the lowest. And overall also, SMA 0, 1, 2, all put together for the entire book, it is hardly 2.90%. And 2.90 is a very good number in the present situation now. See, I will tell you, it used to be around 4.5% 1 year, 2 years back now. And we have brought it down to 2.9%. And it is one of the best in the industry.
Not disputing that. Like I said, if I have to find a mistake or find something that is perhaps not A class, it is just that the SMA quarter to quarter has risen a bit.
But we are monitoring it. We are not complacent about this.
I agree. Even if I look at your GNPA numbers, they are highest in Agri and MSME, but they have fallen quarter to quarter. I agree that in terms of totality, it's not a problem, but this is also an El Nino year. It is also a year when exports are under pressure into some quarters, to Gulf, etc. So would you worry that this may be your best NPA and SMA number, and there may be stress in Q2? Would you worry?
No. In fact, we need to further improve our position. Like this quarter, in the absolute number, slippages is around 2,080 crore. Absolutely, it is under control. But we have set up a different benchmark for our team. and you will see the good performance happening in this particular quarter. We are absolutely not complacent. Now, as of now, we are not seeing any impact of any of the things which is happening in the geopolitical front or the El Nino factor. I think we need to wait and see. I always believe that we need to be very positive. Indian economy is very, very resilient. That is coming out with the number in the GDP and all. And that is reflecting not only the PNB, in fact, all the banks who have declared the result. I think you are seeing the good growth happening in the credit side. So that speaks about the economic resilience of the country. And PNB being one of the largest banks in the country, I think we are very mindful of all those things which is happening in the geopolitical front or El Nino front. And we will see what is happening, and we are ready for all those situations if it emerges.
Fair enough. Your NIM, can you give us a number for this quarter? Because you have fair idea, 1.5 months are over. How much do you think you can improve your NIMs? You said it bottomed last quarter.
Yeah, see, this quarter global NIM is 2.5%, and there is an improvement of around 3 basis points. And I'm expecting that around 4 to 5 basis point improvement further should happen in this particular quarter.
Okay. What are you targeting in terms of FCNR? I think a little less than 500 million has already come in, which is what you said in the investors meet. When do you expect to get, and what is the full amount you're looking at?
We are expecting around 2.5 billion USD to be mobilized under that FCNR route. And we are in connect with all my NRE customers. In fact, through NRE existing customers, we have got very good connect with some new connects also. And my team is fully charged. We have created a stable, one nodal desk in the bank. And I think the target which, or ourselves which we have set up, I think we are going to exceed that target in the next 2 months' time.
Okay. Do you have any guess of what is the total FCNR be in the market so far? People say, okay, sir, you have to excuse me, the Prime Minister is speaking ahead of the monsoon session. Hasn't it come in? Okay. We will wait for the Prime Minister to start speaking. Okay. Let's listen to the Prime Minister.
और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे। साथियों, पिछले 1 महीने में देश ने अनेक सिद्धियां प्राप्त की है और देशवासी गर्व से भर जाएं, इस प्रकार की सिद्धियों का सिलसिला चला है। चाहे राष्ट्रीय हो, अंतर्राष्ट्रीय हो और अब तो अंतरिक्ष भी हो। एक प्रकार से भारत के लिए गर्व के पल रहे हैं। पिछले वर्ष मॉनसून सत्र के ठीक पहले भारतीय नागरिक इंटरनेशनल स्पेस स्टेशन पर पहुंचा था और कल ही परसों भारत का एक युवा स्टार्टअप, उसने बहुत बड़ी सिद्धि प्राप्त की है। विश्व के कम ही देश हैं जहां इस प्रकार से प्राइवेट साहस हुए हैं और भारत के युवाओं ने अंतरिक्ष में नई उड़ान भरी है। बहुत बड़ी सफलता है। और ये जो स्काई रूट स्टार्टअप है, उसमें जो नौजवान काम कर रहे हैं, मुझे बताया गया उनकी पूरी टीम की जो एवरेज एज है वो सिर्फ 28 साल है। ऐसे नौजवानों ने ये काम करके दिखाया है मैं किसी 56 साल के नौजवान की बात नहीं कर रहा हूं। मैं देश के ये स्टार्टअप ने 28 के एवरेज वाले नौजवानों ने अंतरिक्ष में भारत का झंडा गाड़ दिया है। उनको तो बधाई है ही है, लेकिन ऐसी बातें जो हैं जो भारत को आत्मविश्वास से भर देती है। विश्व में भारत का प्रोफाइल सर्वमान्य सर्वस्वीकृत बनता जाता है। साथियों, ये संयोग नहीं, ये एक संदेश है और बड़ा मजबूत संदेश है कि हमारे देश के युवाओं की क्षमता और उनकी आकांक्षा अंतरिक्ष जितनी असीम है, इससे बड़ा संदेश देश के लिए कोई और प्रेरणा नहीं दे सकता है। साथियों, जो रिफॉर्म एक्सप्रेस पर सवार होकर के आज देश चल पड़ा है, उसी का नतीजा है कि भारत के नौजवान इतना बड़ा साहस कर पाते हैं और सफल भी हो रहे हैं। साथियों, पिछले दिनों राजस्थान में बहुत बड़ी ऑयल रिफाइनरी देश को समर्पित की गई। पिछले कुछ सप्ताह पहले एक सेमीकंडक्टर प्लांट यानी तीसरा देश को समर्पित किया गया। अभी कुछ दिन पहले ग्रीन हाइड्रोजन से चलने वाली ट्रेन, और विश्व में बहुत कम देश ऐसे हैं कि जिनके पास ये सुविधा है, लेकिन भारत ने जो हाइड्रोजन ट्रेन देशवासियों को समर्पित की है, वो सबसे ताकतवर इंजन वाली है और सबसे लंबी है। ये अपने आप में भारत के वैज्ञानिक, भारत के इंजीनियर्स, भारत के इनोवेटर्स, भारत के उद्यमी, भारत के श्रमिक, ये जो एक लक्ष्य लेकर के देश के लिए जी रहे हैं, देश के लिए काम कर रहे हैं, उसी का परिणाम है। साथियों, हम भली भांति जानते हैं और पूरी दुनिया चिंतित भी है, लगातार कहीं न कहीं युद्ध की स्थितियां बनती रही है। पश्चिम एशिया के युद्ध के कारण भारत जैसे देश जो एनर्जी के लिए औरों पर डिपेंडेंट है, उनके लिए ये पश्चिम एशिया का युद्ध एक बहुत ही बड़ा संकट का कारण रहा। पेट्रोल, डीजल, एलपीजी, फर्टिलाइजर, केमिकल्स, यानी हर विषय में अनेक बाधाएं, अनेक संकट आए। उसके बावजूद भी भारत 7.7% के ग्रोथ से दुनिया की मेजर इकोनॉमी में सबसे तेज गति से आगे बढ़ने वाला देश बन के रहा। ये भारत के सामर्थ्य का परिचायक है। भारत किस प्रकार से उत्साह और उमंग के साथ नई ऊंचाइयों को पार करना चाहता है, उसकी इसमें एक झलक है। और ऐसे में जब ये मॉनसून सत्र आरंभ हो रहा है, देश ने स्पीड पकड़ ली है और संसद का स्पिरिट उस स्पीड में नई ऊर्जा भर सकता है। सकारात्मक स्पिरिट राष्ट्र के लक्ष्यों को प्राप्त करने के लिए बहुत आवश्यक होता है। हमारे सदन में बहुत अनुभवी सांसद भी है, दल उनका कोई भी हो, लेकिन उनके पास एक लंबा अनुभव है। ऐसे समय में उनके अनुभव की, उनके ज्ञान की संसद को भी जरूरत है, देश को भी जरूरत है। और इसके लिए संसद का चलना, सार्थक चर्चा होना, मिलजुल करके देश को आगे ले जाने के संकल्प लेना, ये मैं समझता हूं कि बहुत ही समय की मांग है। एस्पिरेशन से भरे हुए देश के युवाओं की मांग है कि हम आगे बढ़े। आज समय की मांग है कि राष्ट्र निष्ठा से भरे हुए, राष्ट्र भक्ति के लिए जी रहे आवाज को सदन में उचित मंच मिलता रहे, वे अपनी आवाज को बुलंद करे, देश को दिशा दे। और इसलिए मैं आशा करता हूं और मुझे पक्का विश्वास है, जहां तथ्य होते हैं, जहां तर्क होते हैं, वहां तूफान के लिए जगह नहीं होती है। अगर तर्क मजबूत है, तथ्य मजबूत है, तो शांत चित्त से भी अपनी आवाज को बुलंद बनाया जा सकता है। मैं आशा करता हूं तर्क और तथ्य के साथ सदन की चर्चा को समृद्ध किया जाए, हर आवाज को अवसर मिले, हर विचार को सम्मान मिले। ये संसद की हमारी भूमिका है। मैं सभी सांसदों से बढ़ चढ़ करके इस सदन में हिस्सा लेने के लिए निमंत्रित करता हूं। आज सुबह स्पीकर महोदय जी ने भी सोशल मीडिया के माध्यम से देश के सांसदों का स्वागत करने के अपने भाव को व्यक्त किया है। मैं भी उसमें अपना स्वर मिलाता हूं। आप सबका बहुत बहुत धन्यवाद। नमस्कार।
Okay, no taking away from that extraordinary achievement by Skyroot and their very, very young scientists, if you can call them that, scientists and engineers. The nation was witness to a breathtaking takeoff yesterday. Well, with that, let me just wind up this conversation, PNB. Mr. Chandra, apologies, we can't take more time. A last question to you. After this 2.5 billion, whether or not you get there on September 30th, will you also look for an OFCB? Because that also seems to be lower than the domestic cost of deposits.
Yeah. In fact, that also we have planned. We are going to board for the approval. But that activity we will look for after this 30th September, maybe somewhere in October and November. I think for the timeline is also there up to 31st December. So, but PNB is looking for that opportunity also.
Okay. So I'll literally take a rain check from you. I believe it's raining in Delhi also. Take a rain check from you for a longer chat sometime later.
Yes.
We are out of time today. Thank you very much and many congrats again for a very good performance.
Thank you very much. Thank you.
Well, that's the word from PNB. Wrap up on Bazaar a bit too late. Chartbusters coming up in a jiffy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा। जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमें।
Axis Bank is the top Nifty loser, down 5% as margin pressures persist and interest income misses expectations. HDFC Bank is the other heavyweight under pressure as margins hit a record low for the first quarter. Kotak Mahindra Bank and Yes Bank also slump as earnings miss expectations.
PNB is the outlier in the banking pack, up over 4% as the street cheers a strong set of first quarter numbers. The management tells CNBC TV18 that they expect credit growth to grow at around 12 to around 15% going ahead.
Stocks of crude sensitives come under pressure as the US-Iran conflict heats up over the weekend. Airlines, paint companies and refiners all trade with cuts.
Tatva Chintan Pharma surges as the first quarter profit in EBITDA hit multi-quarter highs. JSW Steel also trades higher on strong numbers. The recent listing, Turtle Mint Solutions, trades higher as it reports its first profit for the fourth quarter. Tata Technologies, though, is under pressure despite a better-than-expected first-quarter number.
Viatech Vabag rallies as the company wins 2 orders worth up to 600 crore rupees. Larsen & Toubro trades higher after an order worth up to 15,000 crore rupees is won by the company.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And though the markets are under pressure, we've seen a bit of a recovery on the headline index from the lows of the day. And the good news, Mangalam, is that the mid-cap index is doing a relative outperformance today. So the portfolios may not be feeling that bad.
It's a good trading session so far, give or take everything. Yes, we're down about 113 points, but remember, Brent crude prices are at $90 per barrel. And at the same time, we've seen a big gash on some of the banking names as well. Despite all of that, the market's holding important levels. And as Nigel pointed out, the broader market's doing a lot better. The advanced decline lines come up for you. We have way more number of stocks advancing than the number of stocks which are declining right now. So about 1,700 in the green, versus about 1,200 in the red. The mid-cap index actually at the high point of trade. A couple of notable gainers. Asian Paints, that's the one which actually opened in the red, given crude prices being at highs. But remember, we had the management of Berger Paints tell us that the entire industry has passed on the entire price hike. This at a time when crude was over $100 per barrel to the industry. So there's not big margin expectation pressure that these paint companies have. And add to all of this, Eternal reports its numbers later this week. That stock too has moved to the high point of trade. And we are seeing traction on Trent as well, which is the top Nifty gainer. Good time to welcome Saumil Mehta for a quick technical check on the market then. Saumil, yes, we've opened with a cut, but we're holding important levels and we've recovered from the lows. Where do you see the market headed from here on?
Good morning to everyone. We are in a range we've been in a range for a very long time now. We are trading about 20 and 40 daily moving average still, and that is a very positive sign. We have some hurdles. Nifty has some hurdles above this, around 200 daily exponential moving average, which is very close to 24,400. And the previous swing high, which is 24,600. These are the two hurdles which I'm looking out for. But overall, I think my view still remains positive, and I'll be expecting markets to, break these range and move above this. But in the very, very short term, we may still see range bound movement where we will go down till 24,000 or probably take resistance around 24,400 level. So the 500-point range or the 600-point range, I'm still expecting to continue for probably next 1 week as well. Overall, in the medium-term outlook, we are still making higher top, higher bottom formations, trading about 20 and 40 daily moving average. All of these are positive signs in the short to medium-term outlook, and I'll be expecting markets to break this range on the upside. So overall, bias remains positive, and buy on decline should be the strategy.
Okay, all right. Buy on declines, sounding quite optimistic on the prospects. Amal, we got that. What about individual stocks? If you could give us some ideas.
I'm aiming for two stocks, two sectors. One is PSU banks and the other one is pharma. Pharma have been positive for a very long time now. On the PSU side, I have Union Bank. Union Bank is already trading above 200 daily exponential moving average, making higher top, higher bottoms already. Today, the stock has taken support at 20 and 40 daily moving average, and a new move has started on the upside. My stop loss would be 166 and my targets would be 182. The other stock is Cipla from the pharma space, and Cipla has been consolidating just about 200 daily exponential moving average and also the 40 daily moving average. Today we have seen a very good move taking support at those averages, and I'll be expecting this move to continue on the upside. Stop loss should be around 1400 and my targets are above 1530.
Got it. All right, Samuel, thanks a lot for that. Look forward to chatting up with you soon. For the time being, we slip into a short break. On the other side, we'll put the spotlight on FMCG sector. We'll be joined by PL Capital's Abneesh Agarwal. Stay with us.
With similar resolution.
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। चॉली सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार।
Welcome back. You're tuned into Chartbusters. You're on CNBC TV 18. As promised, Mangalam has hopped across to the wall because he's going to tell us what do we expect from the FMCG sector. Mangalam, take it away.
Well, before me, it was all the companies which have given you a peek into what one can expect from the FMCG sector this time around. And we have the previews as well. From what we know so far of the updates that have come by, the first quarter will see some sort of consumer recovery. So consumption recovery is on the card. Price growth will lead revenue growth. And more importantly, margin pressure. All these companies have said are transitory as crude prices though volatile, have come off high. So what we know from all the updates that have come by, and I've divided that into three parts. It's the consumer staples, then it's the retail players, and then you have the discretionary. So if you pull up the staples, you would see, between Dabur and the others, all of them have reported double-digit revenue growth. And Marico actually low 20s, Godrej Consumer high teens, and Dabur has been double-digit. Volume growth has been double-digit for Marico, high single-digit for Godrej Consumer, and mid to high single-digit for Dabur as well. As far as margins are concerned, we've seen some sort of compression, but all these companies have said either the margins are stable because of the price hikes that they've taken, or at the same time, copra prices for Marico are down about 45% from the peak, so they will see gross margin expansion. And, someone like a Godrej Consumer has said that margin pressures are currently transitory, and going forward, we will see improvement as, the year progresses. And finally, we do have a lot of these retail companies as well, which have actually reported their updates. And the retail companies have reported good updates on the value retail side, but DMart and Trent have been slightly shy of street expectations, and we've seen that in stock price reactions as well. But look at V-Mart, Vishal Mega Mart, we have V2 Retail and, Bazaar Style, all of them between 29 to 60% in some cases with strong store addition as well. What really has stood out in the consumption space this quarter is the jewelry sector. Titan up 39% growth, Kalyan Jewelers 38% growth, and Senco up 60% as well. And here too, operational performance will also see an element of a one-off gain because of the customs duty hike that came by during the quarter. Now, what are the important expectations that we have from the companies that are yet to report their numbers or updates? HUL, high single-digit revenue growth, high single-digit EBITDA growth. Nestle, 18 to 20% revenue growth with 23 to 25% EBITDA growth. Britannia as well, 9 to 10% revenue growth, 15 to 16% sort of EBITDA growth. And we have expectations which are on the higher side for both Asian Paints as well as Tata Consumer, led by price hikes and favorable input costs as well for, in case of Tata Consumer. In terms of valuations, the sector has not done much for the last 3 years, especially on the staples front, and which is why, even though at the higher levels, and on an absolute basis been fairly high, but most of these valuations compare with 5-year average price to earnings, and players like Nestle, Asian Paints, Godrej Consumer, ITC, HUL, all of them are lower than their 5-year average price to earnings. So this makes you think, what is it that we are expecting going forward from these numbers? Demand impact due to lower monsoons and El Nino risks is something that we will monitor. Geopolitical and supply chain overhangs is the other thing that we will be monitoring. Finally, what we'll also look at is input cost volatility, and are these companies going to use their balance sheet to make some more mergers and acquisitions and synergize the mergers and acquisitions that they've done already. So that's what one has to expect from the FMCG sector in the first quarter. In fact, it's a good time to now bring in Amnish Agarwal of PL Capital as well. Thanks a lot, Amnish, for joining in. And the absolute obvious question is, do you think all these consumer staples are in an inflection point now that price growth is coming? Or do you think that maybe, it's still a no-go zone given the valuations and limited visibility that you have on demand improvement and raw material price volatility?
Yeah, hi, Mangalam. You see, as far as your numbers are concerned, the current numbers and expectations, they are already built into the stock prices. But what is important at this point of time is 2 to 3 factors. One, that so far we have nearly 24% deficit in the monsoon so far, which is likely to not only push up the inflation, but it also might start impacting demand at certain point of time. Secondly, the last year we had seen due to GST in certain categories, there were price cuts ranging between, say, anywhere between 3% to 12%. So part of the price cuts now, they have gone because the companies have gone into increase the prices wherever the input costs have gone. And the third factor which one needs to look at volatility in the commodity prices due to geopolitical issues, because you can say the crude then 10, 15, dipped to 70, and now it's already 90 plus. So this kind of a volatility, I think it is yet to get fully in the performance of companies because the inventory which they hold for the raw material or the bookings already. So I think the peak raw material prices which we had seen in middle of 1Q, that will get reflected in 2Q and remains uncertain because the crude has again started going up. Is going to a very, very stock-specific approach. So far, demand has held, I would say, reasonably well, continuing to outperform urban. But how long that will continue, I think the next few weeks are going to be very crucial with regards to monsoon.
Right. If you had a pecking order, what would that be in terms of staples? Are there any top buys or, you're staying away from it? Or is there a hold call that you have?
This is a very, very stock-specific kind of a call. We are constructive on Britannia. We are constructive on Marico, to some extent Nestle. So barring three names on the staple side in particular, we are not constructive on any of the other names. Similarly, on paints also, we believe that while 1Q might be good, the big part of the, you can say, rally has already happened in many of these stocks. And yes, the top line growth will be good in this quarter, but here on, I think the returns will be meaningfully slow in comparison to what we have seen in the past few months.
All right, and just before we let you go, any call on the jewelry stocks?
You see, jewelry space has been doing well, and look at the various updates which have come from companies. The growth is actually led by value and not by volume. Even if the gold prices remain where they are, we will see a roughly reasonably good value growth coming even in 2Q as well as in 3Q. That is one part. The second aspect for here is that you can say the gold prices have corrected despite your import going up, which has actually brought the customers back buying jewelry. And the third is the marriage season to be good next year. So jewelry, I think, overall should be, you can say, outperforming most.
All right, Amnish, thanks a lot for that. It was a quick chat, but insightful one nevertheless. We'll come back to you when these companies report their numbers for further updates and clarity as well. With that, we'll take a short break, come back on the other side. Stay with us. There are more news and updates that you have to follow.
We have outlined it.
Welcome back. Well, a packed legislative calendar awaits Parliament as the monsoon session begins. Rachna joins us to tell us what all is on the list. Rachna, take it away.
Well, Parliament's monsoon session opens today, running until August 13 across 19 sittings. The government has listed 7 key bills, 2 pending and 5 new. The agenda was discussed at an all-party meeting on July 19th, which also saw the opposition walk away. The 2 pending bills first. The FCRA Amendment Bill, introduced in the Lok Sabha on March 25th, is listed for passage. It provides for the cessation of organizations' FCRA certificate on expiry or non-renewal and sets up a designated authority to manage and dispose of foreign-funded assets. The second is the Viksit Bharat Shiksha Adhishtan Bill, introduced on December 15th and referred to a joint committee. The committee's report is expected to be adopted in the sessions that are coming. The report backs the bill, which dissolves the UGC, AICTE and NCTE and replaces them with a single regulator. It also states that concentrating powers in one central body could affect institutional autonomy and recommends safeguards. Now the 5 new bills. 2 of them replace ordinances. Now, under the Constitution, an ordinance lapses unless approved within 6 weeks of Parliament reassembling. The Supreme Court Judges Amendment Bill replaces the May 16 ordinance that raised the court's strength from 33 to 37 judges, excluding the Chief Justice. The Income Tax Amendment Bill is the second one that replaces the June 5 ordinance exempting foreign institutional investors from tax on interest and capital gains on government securities retrospective from April 1. This could also be a measure to strengthen the rupee, is what the government has said. Now the remaining 3. The Births and Deaths Registration Amendment Bill, which makes provisions for delayed registration more stringent. Then there is the MSME Development Amendment Bill, which strengthens the mechanism for delayed payments to small enterprises. And lastly, the Prevention of Insults to National Honour Amendment Bill, which extends to Vande Mataram. The protection currently is given only to the national anthem. Separately, the JPC report on the 130th Constitutional Amendment Bill is also expected in this session. That bill is not among the 7 listed, but as a constitutional amendment, it would require a special majority for passage, so it would be an important one to look out for in the monsoon session.
Right, Rachna, thanks a lot for that. We will definitely monitor all the developments in the monsoon session, even as we monitor monsoon spread across the country this time around as well. But one stock which has been a buzz post its numbers is Tattvachintan Pharma, up nearly 20% on our last check. Sonal joins in with the details of those updates. Sonal.
Well, strong numbers from Tattvachintan Pharma, and this is a company which had been underperforming when it comes to financials in last couple of quarters, and they have reported remarkable results at a time when we did see a lot of impact of West Asia war as well. So let's take you through the numbers, because EBITDA and profits of the company came in at a multi-quarter high this time around. Their revenues were up 42% on a YOY basis. Their EBITDA was up 88%. Margins high by around 500 basis points, and profits were up 142% as well. As I said, that strong numbers and EBITDA and profits were at a multi-quarter high. You'll get the EBITDA trend as well. In quarter 1 of FY26, they had done 17 crores, and this has doubled on a YOY basis. There has been a consistent increase in their EBITDA over quarters. Similar is the story with profits as well. They had done profits of around 7 crore rupees in the year gone by, and now it is around 16 crore rupees. There's consistent increase here as well. Last quarter was a weakish, but overall they have maintained their numbers, and that's why the stock is reacting to those numbers.
Okay, all right. Thanks a lot for that, Sonal. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour comes up next. Stay tuned.
Movers and shakers.
Good morning. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu. With me is Ritu Singh. We're about 100 points lower on the frontline index, led lower by some of the big banks. The bank Nifty is down about 1.5%. And we'll talk more about all of this in detail as we progress along the show. The good part is that the broader market is doing a lot better, with the mid-cap index largely in the green, with more stocks advancing than the number of stocks which are declining. Hi, Ritu. I suppose you watched the game yesterday, but it was a busy weekend for you. On Sunday, there were a lot of numbers that came in from the banking space, the big ones.
Well, Mangalam, good morning to you. No, I didn't really watch the game, and it turns out I didn't really miss much because nothing much happened for 90 minutes. Of course, later you had Spain score and win that championship. But yes, it's been a busy weekend, heavyweights, and you're seeing that reflect in the markets. The banking pack dragging the Nifty lower. In fact, some of the top draggers on the frontline index are these banking heavyweights, HDFC Bank being one of them, Axis and the others as well. Missing street estimates and therefore seeing that red reaction on the street today. The crisscross lines had crossed before, but for now, you still have more stocks that are advancing than declining on the National Stock Exchange. The broader markets, like you said, they continue to hold up. For the Bank Nifty, though, and especially the private banking index, it is a deep red. The Bank Nifty trading with cuts of more than 800 points as we speak, and the private bank index also down by almost 2.5%. The IT pack also flattish, not really pulling its weight today either. As always, let's put the spotlight on the top movers and shakers, individual names to keep your eye out on, and Hormuz joins in with that list.
Today's start is something that you could say that it could have been a lot worse, but it is what it is right now. We are 100 points lower on the index, and the bulls will take that, especially considering the fact that one of its biggest constituents is down 5%. Oil prices are at 90 and are extending their gains as well. So as of now, the index trying to hold on to that 24,200 level, which the analysts also were mentioning that is going to be a support. The Nifty Bank, though, is the principal culprit. It was at 800 points lower on the index and is now back at the lower end of the trading range that it has been in, that 57,500 to 58,500 range. Is now down to the lower end yet again. And of course, two stocks that are leading. But before we get to the stocks, you look at the broader markets. It's a flip from Friday when the index did well and the broader markets didn't. Today, the broader markets are doing well while the index is struggling. So a 200-point up move on the mid-cap index and the small-cap index too, just about managing to stay in the green. But take a look at HDFC Bank and Axis Bank. They are the ones that are dragging the index lower. Both of them are down 5% each. HDFC Bank, in fact, has received a downgrade today from Investec, the only one that is not a buy recommendation among all the 47 analysts that track the stock. And Kotak Mahindra Bank too, putting in its contribution in dragging the index lower. But the standouts among the results on the banking sector over the weekend, one was, of course, PNB. 4.5% higher on the stock today, and ICICI Bank, well, not significantly higher, but has outperformed every single banking peer that has reported results so far. And not only that, in terms of the stock price as well. To take a look at some of the other result reactions beyond banks, and the Tattvachintan Pharma, of course, 17% higher in today's session. We just heard the numbers from Sonal a few minutes ago. 12% higher on Bhansali Engineering as well. Numbers came in on Saturday evening. And India Cements is a negative earnings reaction despite a very strong operating performance. 4.5% lower on that one as well. To take a look at the newsmakers today, Viatech Vabag announced a big order win. Two orders, in fact, 4.5% higher on this one. MTAR Tech, ever since it has been in the stage 4 of the ASM framework, the stock has been making 5% lower circuits every single day. And eClerx, of course, the stock that was the top gainer on the Nifty 500 on Friday, is seeing some profit booking in today's session, down 4.5%. And lastly, stocks that are at 52-week highs today, another day and another high for Aegis Logistics, 4.5% higher on that one. Gabriel India is extending gains from Friday, so that's another 7.5% added to the tally. And Himadri Specialty too, after its results, has done very well, as has Shyam Metallics, 4.5% higher on the stock and a 52-week high as well.
All right, Hormuz, thanks a lot for that. Bulls will take this as a win despite the 100-point cuts that we're seeing. What we'll do is, in fact, get in the management of another stock which is buzzing around in today's trading session. Opened sharply lower, and from there on, it's seen some recovery. That's Premier Energies that I'm speaking about, just under the flat line as we speak. And this, as the Ministry of New and Renewable Energy, MNRE as we know it, has extended limited exemption from the ALMM list 2 for net metering and open access renewable energy projects till 31st December 2026. So let's get in the management. We do have with us, Premier Energies leadership who's joining us on the show. Thanks a lot, Mr. Rastogi, for joining in. If you could give us a sense of two things. One, the quantified benefits that you got from ALMM 1, and now that ALMM 2 has been limited, is there any word on them bringing a new scheme, ALMM 3? If you could give me these two things. One, the quantified benefits from ALMM 1, and then any visibility on ALMM 3.
Yeah, sure. Good morning. Thank you for having me. So I think this ALMM policy is actually instrumental in supporting the domestic manufacturing sector for solar space. As you said, the policy is being implemented in phases. ALMM 1 refers to modules, ALMM 2 refers to cells, and ALMM 3 refers to ingots and wafers. So ALMM 1 is already in place for the entire solar sector, which means all the 55 to 60 gigawatts of modules that are consumed in India, they're all made in India. And Premier, as well as all the other manufacturers, we are direct beneficiaries of that policy and the Make in India support from the government. In terms of ALMM 2 is what we have been kind of talking about and where the MNRE new announcement has come in. ALMM 3, as you mentioned, refers to ingots and wafers. So that is a part of the value chain where India historically has had no presence whatsoever. And it is basically an attempt of the government to integrate backwards and basically to become more self-sufficient in this space. The timelines are that from 1st of June 2028, the rooftop solar, the solar pump scheme, as well as the corporate market, together accounting for about 70% of total demand, are expected to switch to ALMM 3. So I said June 2028. And then for the utility scale market, which is about the remaining 30% of the total demand, that timeline is expected to be kicked in, I would say, sometime in 2030.
Vinay, let's talk about ALMM 2 then, with the government pushing this, use of the imported solar cells until, of course, December. What does it mean for players like you? I mean, does it change your business outlook materially, for this year? And give us a sense of the kind of investments you had made and, what happens to that? I mean, this advantage you would have had, do you lose some of that because of the extension that's come in?
Sure. So I think I'll give you a slightly longer answer if you got some time. So ALMM 2 was supposed to kick in from June this year for three main segments. That is the residential rooftop solar market, the Kusum or the solar pump market, and finally the corporate market. These three segments in total are about 30 to 35 gigawatts of annual demand. Now, what the government has done, basically because of slightly tight supply of domestic cells, they have given the relief only to the corporate market. The policy timeline still holds for the residential rooftop solar and the Kusum markets, which together will account for about 20 to 25 gigawatts of demand this year. So I think it is a relief given only to one segment, and that too only for about 5.5 months. So it's a very small relief in the overall scheme of things. Now, what does it mean for us as a company or for the industry on the whole? So we actually have our total production over the next 6 months sold out to the residential rooftop solar and the Kusum markets. So, we have almost nothing to sell right now. Prices are fixed, contracts are in place. So because of that, we don't see any impact on our business. In terms of the industry on the whole, also the corporate demand has actually just started coming in. As I said, we already have a domestic demand for about 20 to 25 gigawatts. Supply today is also pretty much in line. So because of the marginal relief that has been given, I don't expect there to be any material impact on any of the domestic manufacturers in this timeline.
All right. So you don't expect
your next question was about, what is the impact on our investments and overall business, going beyond 6 months. So, I think the main thing to say here is that the overall policy framework stays in place. The government support for domestic manufacturing stays in place. So I don't think there's any impact in terms of the industry overall.
All right, we take that point. And, I just wanted to understand, for you, all your expansion targets, are they on track? And by virtue of these regulatory, issues, would there be a need that would arise for you to raise more funds, or, could there be an impact on your margins? If you could give us a sense on the financial impact of this, if at all?
Yeah, sure. So, all our expansion programs remain on track. Our first phase of expansion was 5.6 gigawatt module capacity, which has already been implemented. The next phase is 7 gigawatts of cell capacity, which is due for completion on time in the next 2 months. And beyond that, the next phase is the ingot wafer capacity of 10 gigawatts between 2027 and 2028. That also, I'm very happy to say, remains on track given the government clarity on the policy framework. In terms of our total investments, all our investments in these programs that I just outlined, they are already funded, so there is no need to raise any external money. And we are now indeed looking at the next phase of growth beyond ALMM3. And as and when that takes shape, we will reevaluate our financing plans.
Right. Just a small follow-up. I didn't get the exact number of benefits in terms of quantifiable benefit that you got from ALMM 1 and 2 so far.
So I think the best way to look at to quantify the benefit is that ALMM 1 applies to modules. The module market today is about 55 to 60 gigawatts. If you look at, assuming that all these cells were imported as allowed under ALMM 1, that market is, I would say, somewhere around 80,000 crore rupees on an annualized basis. So that is the kind of business that is being done in India right now as we speak. ALMM 2 applies only to cells, and today we are producing about 20 to 22,000 megawatts of cells every year. That is the current run rate. And there, that in value again will be something around 30,000 crore rupees. So that is very ballpark estimates of the megawatts and the financial amounts associated with those volumes.
Got that. Vinay, thank you very much for joining us here and helping us understand the impact of some of those developments coming in. Thanks very much for your time. We'll slip into a short break, but up next, we'll get you more on the bond markets with Manisha Gupta.
Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. You're watching Trading Hour, and as promised, let's shift focus to the bond market action. And Manisha Gupta, as always, joins in to fill us in on that. Manisha.
Thank you for that. Well, as on expected lines, we've seen a bit of a decline continuing in case of the Indian government bond prices here, with the crude oil prices gaining 11% in the previous week and almost hitting $91 a barrel today are the major concerns here right now. With the rising crude oil prices, the inflation-linked concerns, all of that comes back into the market there. And with that, there are various reports suggesting that there is a fear of a repo rate hike in India in the month of August. At this point in time, the percentage of that are still very, very low on people who are anticipating that, but there are conversations onto that one. And there clearly are concerns about the fiscal slippage in 2026-27 due to a higher subsidy burden as well, which India would be looking at. The rupee decline is also another thing that the street is watching out for, and the markets are now also tracking the southwest monsoon. Even as we are 1.5 months into the monsoon, it still is 23% of a deficiency that we are looking at. The markets will also take an eye on the 12 states which are looking to raise nearly 217 billion via bond sales, and this happens Tuesday, that is tomorrow. If you look at the private bond issuances, well, there are two things, or the two board meetings that the street will watch out for. One is Sobha India, which is looking at a board meet which is happening today. They will consider approving of issue of NCDs on a private placement basis. And then you have Cholamandalam Investment and Finance Company also, which is in a filing told exchanges that they have a board meeting on 28th of July, where they will also consider issuances of NCDs. In the meanwhile, there are 2 or 3 companies which are already looking at biddings in this week itself. You have Kisetsu Science and Finance, which is looking to raise 2 billion. They're doing it via bonds, which is maturing in 2036. You also have 361. They are looking to raise 2 billion with bonds maturing in 2029. And Nuvama Wealth as well is into the market. They plan to raise nearly 3.5 billion. They are issuing bonds which are maturing in 2029. And finally, some numbers on your screen as well. We all have been talking about on how the foreign inflows in sense of bonds have been quite on the stronger side. So the total number that stands right now from 1st of June till time has been to the tune of $6.5 billion that have come in from FIs. Of course, June has been a record number. July slightly on the positive side there. This is on the back of dovish central banks, lower taxes and the dollar schemes as well that have led to a lot of buying coming in. If you look at the overall numbers, the FIs and into India are slightly on the lower side, just about at 7%, whereas Malaysia, Indonesia have much higher numbers at around 14 to 22%. So these are the numbers that India perhaps is looking at.
Right, Manisha, thanks a lot for that. So those are the updates coming in from the bond market. What we'll do is we'll take a short break, come back on the other side, we focus on the markets, we get you some more, commentary that comes in. Suresh Iyer joins in from Canfin Homes to share insights on their first quarter earnings estimates.
Why those sanctions were put in place.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
Welcome back. Let's continue to focus on earnings that have come in. Canfin Homes, that's one stock that's in focus after they announced a steady first quarter set of results, although the softer growth and margin concerns appear to be weighing on investor sentiment. So today on the show, let's welcome in Suresh Iyer, the MD and CEO, to talk about their first quarter performance and the way ahead. Mr. Iyer, thanks very much for your time here on CNBC TV 18. You're growing your approvals pretty fast. Disbursements are almost pretty, at 30% or so. Why is that sort of not translating into faster growth in your AUM? Loan growth at 11%. I mean, could you do a lot better in FY27 as a result?
First of all, good morning. In fact, in our AUM projections, we have targeted for 14% for the full year. But last year we ended with around 10.4. So on a quarter-on-quarter basis, this will see a slight improvement over the previous quarter as we move forward. So that for the end of the year, we expect to end by about 14% for the entire year in terms of the AUM. Now, one of the reasons why our disbursement growth is not translating into our AUM growth is because we also have some rundowns. And this particular quarter, our rundowns have been slightly higher also because last quarter we had a large amount of portfolio which we moved from annual reset to quarterly reset. So the amortization and the rate benefit impact that we passed on was more in terms of the EMI remaining steady and tenure getting shortened. So the amortization number has been higher. It is not much in terms of the BT outs or the prepayments, but it's more because of the amortization impact in this particular quarter.
Got that. Your gross and net NPA ratios have seen an improvement, from what we can see, at least year on year. Sequentially, there's been an uptick in both the GNPA and net NPA. Could you give us a sense of what's happened there and a guidance that you could give us for what the full year would look like?
Actually, in terms of the cyclical trend, if you see every year in the first quarter, we have a slight increase in our NPA. But if you see the overall stage 2 and stage 3 assets, that is SMA 1, SMA 2 and NPA put together, in fact, there is a reduction compared to March numbers also. So basically, a little portion of our SMA 2 book has moved to NPA, which also to some extent is something which we have done intentionally so that we get the full year to work on the surfacey accounts and recoveries. But otherwise, if you see the SMA 1 plus 2 plus NPA has actually come down compared to March in absolute number. So that is an improvement. And in terms of the full year, we would say our credit cost guidance has been 10 basis points. Last year also we had a guidance of 10 basis points only. I mean, we ended up with 10 basis points. And this year also we don't expect the credit cost to be anything any different from last year. So our guidance would be about 10 basis points for the full year.
All right, so 10 basis points of credit cost guidance, 14% in terms of AUM. If you could give us a sense on what you are guiding for in terms of yields as well going forward, given the interest rate trajectory, and how are NIMs likely to pan out? If you could give us a sense on both of these.
In terms of the NIM, in fact, as I mentioned, we had a large component of our book which moved from annual reset to quarterly reset, and we also passed on the interest benefit to them, which was effective from 1st of April. So there we had already guided in the last quarter results, that is the March quarter results, that our yield on the entire book would be around 9.81. So for the full quarter, we have maintained that kind of a yield. And as at the end of the first quarter of this year also, it is 9.81. So in terms of the overall NIM for the year, we have been giving a guidance of 3.75 and we've ended with 3.81. And our guidance in terms of NIM for the year will continue to be 3.75.
All right, 3.75 is your NIM guidance. And if you could give us a sense of your loan mix as well. Two things that stand out. One, a large part of incremental loans have come from the southern part of the market. So are you looking at concentrating on that region itself or looking at geographical diversification? And the second part, the mix is shifting towards higher ticket loans where you've primarily been a low to mid ticket players. So are those two conscious decisions?
See, in terms of the southern book, actually, it has been coming down over the period because our last 3-year branch expansion strategy has been to open more branches in the north and in the west. And we are basically a south-based player, and we have a larger presence in the 5 southern states. So obviously, it was actually much higher at 72% in the beginning of, 3 years back, which we have now brought down to somewhere below 65% in terms of the south concentration. So that is more of a, going forward, we'll see the rest of the India market actually contributing more. And the 65%, we intend to bring it down to somewhere close to 60% by FY28. That's the plan. So it's in fact the contrary is what we are working on. And this year also we have planned 28 branches. Most of it are, a majority of them are in the north and in the west zone. And that is non-south geographies. So that's what we are planning for. And in terms of the second
just a quick comment on these. Yeah, go ahead.
Yeah. The second question regarding your, concentration of business coming from, the other products. I think ticket size, yes, it has been slightly going up, mainly because of, the overall cost of construction has also been going up, and inflationary impact is there. Secondly, some of the, geographies that we are looking at, we have been a little, higher ticket size business we've been doing in Bangalore and Hyderabad, which last 3 years we've had some impact because of e-Khata for the last 1.5 years, and also Hydra issues. But now these markets are also picking up. This year, in fact, Karnataka has grown at 18%, which is in fact the lowest growth among all the zones that we've had this year. So basically, the zones where we have been doing slightly higher ticket business have also started showing good results. So that's the reason why our ticket sizes are going up.
Got that. Mr. Iyer, just apart from the results, these recent guidelines that are coming in from RBI on the stressed non-financial assets and how long banks and NBFCs can hold them, given that there is this 7-year cutoff and, more stringent on how you value it and how quickly you dispose it, are there legacy assets you will have to look to dispose on account of this? Of course, the compliance window is a little longer until next year, but the rules kick in from October.
See, normally these are basically the NPA assets that we acquire under SARFAESI. Normally, we don't have that kind of a long duration where we have to hold them. And second thing is, if you see the guidelines, it also talks about you can take them under this window only if you have actually transferred them in your own name, which normally we don't do because it's normally under SARFAESI we have a quasi-judicial powers to sell off the assets. So we don't get them transferred into our names. But yes, we can, and anyway, we don't hold them for 7 years because as soon as the account becomes an NPA, we initiate the process for sale of the assets. And normally 1 or 2 transactions and 1 or 2, advertisements, and we are able to offload that property. So max, we would be having about 2 to 3 years where we would be having these properties. So 7 years actually is a very long window, and I think it is very fair. I don't think that will impact us much.
Got that. Mr. Iyer, thank you very much for taking the time out and joining us here today.
Thank you so much. Thank you.
All right, let's move on and get you all of the latest from the F&O space. What are the trends pointing to? Mangalam Malu joins in with that.
Well, if you look at, the Nifty, which is down about 125 points right now, it's the Nifty Bank which is dragging it most. The Nifty Bank is down about 1.5%, and that's what's reflecting the weakness that we're seeing in the market right now. But no such problems with the mid-cap index, which is holding at the higher end of today's trading range, if not the high point of trade in particular as well. So the Nifty Bank down 1.5%. And if you pull up quickly the contribution chart, you'd see most of that is contributed by HDFC Bank, which is the top dragger on the index by about 86 points. Add to that, it's about Axis Bank, 60 points. Add both of them and take that off, the Nifty would probably be higher by about 14 or 15 points. So it is solely and wholly the Nifty Bank. The advanced decline tells you that portfolios are feeling a lot better despite the weakness that we're seeing in the overall market. We have a few more stocks advancing than the number of stocks which are declining. And the volatility as well has been fairly contained. The India VIX is currently actually at the low point of trade with a gain of just about 1.3%. This should give bulls a lot of happiness. given that oil prices are at $90 per barrel and we are seeing geopolitical uncertainty re-emanate as well. Despite the market being lower and the Nifty Bank being lower, it's still respecting important levels. We have the Nifty, which is held above the 20-day moving average at around 24,100 all through today's trading session. And even the Nifty Bank, which has been under pressure, is actually holding well above the 200-day moving average. So till such time that holds, bulls still have their hopes. Remember, for all the options that expire tomorrow, 24,200, a mark where the Nifty is right now, is a bit of a fulcrum. So the 24,200 call and the 24,200 put, both of them come up for you. The 24,200 call has a premium of 80 rupees. The 24,200 put has a premium of 86 rupees. Add both of them together, you get a premium of almost 170 rupees. And that's exactly the range on either side of 24,200 that the bulls and bears are playing for. These option writers expect some support to come by around that 24,000 to 24,050 mark, and supply to come around 24,350 to 24,400. So that's the broad range that we're looking at. In terms of stocks, fresh shots added understandably on the underperformers today, HDFC Bank and Axis Bank. But PNB, those short writers have been caught on the wrong side. The stock's actually doing a lot better, and a large part of that could be attributed to short covering as well.
Mangalam, thanks very much for setting that up nicely for us to invite our next guest. Shivangi Sarda from Motilal Oswal Financial Services is here with a quick check of the technical check of the market and her top stock picks. Shivangi, near-term support levels you'd be looking out for on the frontline index and the top stock picks for the day.
Very good morning, Ritu and Mangalam. Thank you for having me. We've seen that, the markets have been facing a little bit of consolidative move off lately. Even though it has been witnessing a support-based buying, but overall intraday perspective, there are quite a lot of swings within a very smaller band per se. So we are, of course, looking at 24,100 as an important support level for the Nifty index immediately for the next expiry, that is tomorrow. And on the upside, we're looking at 24,400. This would be the band expected of the Nifty index, but buy and decline to continue over here. And little positional, we are looking at 24,000 to 24,500 band for Nifty. Now, of course, talking about Bank Nifty, we've seen that, there is some bit of underperformance today because of the heavyweight underperforming. But, there are some particular counters which are contributing to the, index sitting standstill at the higher zones. So, of course, we're looking at 57,500 very closely. This will be like a immediate psychological make or break zone for the index sentiment. And if it holds above the same, then we could expect levels like 58,250 odd levels with immediate support of 57,250 levels. So this would be the take on Bank Nifty. But of course, with the kind of improvement in the PCR and the India VIX kind of contributing to the bulls, everything looks quite positive for buy and decline to continue.
All right, and individual stocks, since you expect buy and declines to continue, do you have long calls on your list today, Shivangi?
Yes, absolutely, Mangalam. So long calls, first up on my list is Aegis Logistics. We've seen that, this stock has seen an upward sloping channel from the last 8 to 9 weeks. And, we've seen that any declines are being utilized for buying. It did surpass its previous hurdle zone, which it attempted earlier in the July of 1420 odd levels. So this one's looking quite positive. And the next targets... so this one's looking quite positive, and the next targets that we're looking at for is 1470 levels with a stop of 1390 zones. And the second pick is Eternal. We've been bullish on this, and it has kind of shown a bottoming out structure on the monthly frame as well. Immediate basis picking up quite a lot of momentum and good risk reward at these levels for this one. So the next targets we're looking out is 300 with a support base of 280 levels.
All right, Aegis and Eternal, your top pick. Shivangi, thanks very much for joining in with that take. We're going to take a short break on that note, but up next, we'll decode how the large 4 private banks that have reported numbers over the weekend, how they performed in the first quarter with their report card in just a bit.
ए दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
Welcome back. We've been speaking about banking results. So the first quarter report card is in for India's big four private banks. ICICI Bank has emerged as a standout performer, even as fresh slippages inch up across lenders, largely due to seasonal factors. Ritu's done a roundup of all of this. Ritu.
Well, the June quarter is in for the four largest private lenders, and they're all pretty much dealing with similar headwinds, but the winners are becoming clearer. If you look at the big picture first, ICICI Bank posting the best all-round print of the pack. Overall, credit growth does continue to outpace deposit growth at almost every bank. Corporate lending is also seen picking up across the board because bond market funding is getting pricier for corporates, so they're coming back to banks. Margins remained under pressure, and of course, slippages have increased across the board, but that is largely a seasonal factor, not much to read into it. So let's get into the numbers. Starting with profitability, HDFC Bank remains the biggest profit machine of the four by far in absolute terms. It is the largest, but growth is just 5% year on year, and it is the slowest among the four large lenders. ICICI Bank's profit growth was far healthier, rising almost 16%, while Axis and Kotak, they did post the fastest growth rates, although on a much smaller base. Now, moving to the core income, ICICI Bank again leading the pack here with its net interest income growing almost 13%. HDFC Bank grew at half that pace, about 6.7%, while Axis and Kotak reported high single-digit NII growth numbers, but that trails a much punchier profit growth. On business momentum, loan growth remained stronger than deposit growth. So those CD concerns, high credit deposit ratio concerns remain. ICICI Bank here leads the pack on credit growth. Axis Bank is also growing pretty fast, followed by Kotak and HDFC Bank. On the deposit front, Axis is mobilizing deposits the fastest year on year. Kotak is the standout, on the other hand, being a laggard, with a 12% growth year on year, but flat sequential performance. Now, margins, that continues to be a pressure point across the banks that have reported. ICICI Bank is the only exception, the lone bank to expand NIMs among the large lenders. HDFC, Axis, Kotak, all of them reported sequential compression, with Axis seeing the sharpest decline. Finally, on asset quality, it is benign overall, but if you were to nitpick, Axis is the one where gross NPAs have risen the most among these. HDFC ticked up marginally as well, while ICICI Bank and Kotak Bank actually improved their gross NPA ratios. Fresh slippages again rising across the board, but this is a seasonal story. So overall, it is clearly ICICI Bank that's come out on top.
Indeed, ICICI Bank has come out on top, and private sectors are back in focus. CLSA believes the sector offers compelling value. Here's an excerpt of our chat with Piran, engineer of CLSA, and his rationale behind the calls.
Barring an ICICI, all the banks reported 10-15 bips NIM compression, right? And one reason for this is over the last 2 quarters, everyone has grown really fast in corporate loans. Now, corporate loans will come at lower NIMs. If you're lending to AAA rated corporate, they'll borrow at GSEC plus 60-70 bips. So it'll come at lower NIMs, which hits you immediately, but it'll also come at lower OPEX because it's B2B. It'll also come at a lower credit cost because they're AA, AAA rated. But I think, the street and investors and analysts are just so focused on just the NIM line item that they're missing out on what comes below that. That's what I meant.
Okay. So if the stocks correct today, because the street is still disappointed, they do focus on the NIM performance. And we've seen that with the rest of, HDFC Bank, Kotak, Axis. Would it be a buy, these stocks?
Absolutely. I would say especially an HDFC Bank should be looked at from this perspective. Growth is picking up. I think NIMs have bottomed out. Asset quality for all these banks, not just HDFC, but all the banks that reported over the weekend are trending at much below normal levels. Look at the slippages some of these guys have delivered. It's at like 5-year, best performance or 7-year best performance.
Is there any bank on which, Piran, you have a sell call or you don't like?
Among the mid caps, it's RBL.
RBL. And large caps, you have a bullish call on all large private sector banks?
That's right.
Okay. And just stock-wise, if you have to play for an upside, buy it. Which stock, according to you, has the highest upside and why?
Well, for me, it would be HDFC and SBI. I think, look, I could get into the reasons for both, but effectively, it is premised on core PPOP CAGR picking up for both of them, along with asset quality issues sort of being at bay. And core PPOP is picking up because loan growth is picking up for the sector as well as for them. And the margin headwinds that banks faced last year are behind us now.
Okay, so that's as far as the private banking space is concerned. In the public sector banking space, Indian Bank started out very strong. PNB has also posted a good set of numbers. But here you have CLSA saying the tide could be turning in banking. They believe PSU banks could struggle to hold on to their market share because deposit growth is trailing that of private lenders. Listen in.
Where the valuations were 5 years back and the entire corporate recovery cycle. That led to the re-rating. And then some bit of it is, in the last couple of years, PSU banks have actually gained loan market share versus private sector banks. If I were to think about the next 2 years or 5 years, would PSU banks continue to be able to gain loan market share? I don't think so. And the reason for that is their deposit market share still lags that of private sector banks. Sorry, their deposit growth still lags that of private sector banks. And until you have excess liquidity on the balance sheet, you can continue to grow loans faster than deposits. Once that liquidity dries up, which according to us is probably just 2 or 3 quarters away, then your loan growth converges with deposit growth.
All right, with that, we'll take a short break, come back, we'll discuss the key technicals of the market with Rohit Srivastava, who's the founder and strategist of IndiaCharts.com and Strike Money.
Wins.
Welcome back. 24,200 is where the Nifty is at right now. The Nifty Bank a little above that 57,650 mark. The broader market is doing a lot better. Colgate as a stock has actually come up for some sort of buying in the last few minutes or so. It's been doing well all through today's trading session, but currently at the high point of trade, and we are seeing increased traction in a lot of these upstream oil companies as well. Case in point, something like in Oil India, which is sitting with a gain of almost 3.5%. Good time to then get in Rohit Srivastava, who's the founder and strategist of IndiaCharts.com, to discuss the key market trends and his top sectoral picks as well. Rohit, The Nifty has been in a bit of a range. Every time it extends itself beyond that, some sort of news piece comes by to take it back into that range. But do you think increasingly, with the kind of bounces that we're seeing from slightly higher levels, bulls have it a lot more when it comes to resilience than downside for the frontline index? Would you agree with that view? The broader markets are doing a lot better as well. And if that were the case, then have we made a low and are we looking for higher highs?
So I'm working with the model that we bottomed out in April, and we are slowly building towards an upward trend, something that we do see in individual stocks, the broad market or certain sectors. But the Nifty itself is probably still not out of the woods. So I don't think you're going back to the April lows, but what we can't rule out for the main indices is that it remains range bound. It retests the recent support levels or lower than that again and again and again. Based on the news flow, as you mentioned, which keeps coming in, whether it's geopolitical or otherwise. And for that reason, we on the Nifty have to keep open the possibility that you may retest 23,800. If you break that, you can retest 23,500, 23,300. So we keep all those lower levels open. But look at them as longer term entry points, and therefore on the trading side it does become a little difficult because you're not getting a trending move that you can keep buying the dip on. But individual stocks or on a broad basis, you do have a view that you need to accumulate and build your portfolio. So that is how we are approaching this.
Rohit, hi, this is Ritu. How would you approach the banking space with the spate of results that have come in over the weekend? I mean, private banking stocks have been lagging the PSU counterparts for a while, and the numbers also tell you that, an Indian bank or a PNB is done far better than some of these top-tier private sector names. Do you expect that trend to continue to play out, or as, one of the CLSA analysts was telling us later, perhaps over a longer-term horizon, PSU banks may not be able to continue to gain market share?
Yeah, so there is a sense that the private sector banks will make a comeback. We've seen some of that trend in the recent weeks. If we just analyze the last 3 to 4 weeks, we have seen underperformance in PSU banks and a pickup in the private banking sector space. So that definitely shows that pattern. Private banks, when we look at historical valuations, ended up reaching, between 1 and 2, negative 1 and 2 standard deviations on their long-term valuation charts. So that definitely made them attractive. At the same time, if we look at the rally in PSU stocks, they'd also come from an extremely low valuation base, and they're not even crossed their 10-year mean or median. So it's not like they have become extremely expensive. The only thing is that we have reached a point where the larger banks need to play catch up. But again, within that, if I just think of private banks as a segment, you also see outperformance in private banks within the smaller ones. So it's an RBL, or if you look at AU Small Finance, IDFC, these versus the big ones, which is HDFC, Axis, ICICI, and they've actually done better. So we also see that divergence within the private sector banking space. So I'm actually pushing for the smaller private sector banks doing better than the larger ones. But I do think that we will enter a phase where the large banks or private banks beat PSU banks on performance for some time.
Any individual stock that you really like? You've spoken about the banking space. You've spoken about the private versus public sector banks. You do believe that maybe the Nifty is on a structural uptrend. If one was to bet on this via a few stocks which you believe should offer the maximum upsides from here on, which ones would they be?
So we do have a recommendation on EU Small Finance from a long-term perspective. We've been in and out of it twice, and we are still, have it as an open idea, keeping a 3-year, 5-year kind of time horizon. So it has been doing well. It broke out of some 2-year, 3-year kind of range that it was stuck in a year back. And since then, it's been, trending better than most of the other banks.
Rohit, crude above $90 a barrel, how does that change your thesis for the energy names?
Yeah. So oil is the near-term risk, which is why we are not sure whether the market has a runaway move right away, or we will first, see some kind of a near-term correction on a knee-jerk reaction, because the geopolitical risk has spilled over to the oil space. now that we're actually seeing, oil, drop to, below 90, above 90, then it's actually showing indications that oil might be heading into an uptrend from the correction that we have already seen. Okay, we've seen that correction, and we are seeing this uptrend. It doesn't look like something that's over. It looks like something that is likely to continue over the next couple of weeks. And therefore, I think rising oil prices will pose a risk, and it may not be good for oil marketing companies again, because that's, those are the ones that are most impacted by higher oil prices. So it's going to be a little tricky on the oil space. Rising oil prices, not exactly what we want to be looking for.
Right, Rohit, always a great conversation speaking to you. Thank you for joining in. That's the view coming in on the markets. Just as we take that short break, pull up a couple of stocks which are doing well. Bata, as the new leadership takes over in the company, has been doing well ever since the announcement of the new MD CEO was made. And alongside that, we have Vectors, which continues to do well too. After Sunil Singhania bought stake in the company sometime last week, that stock has continued to be a bit on the upside and currently sitting with a gain of almost 10%. The purchase price for Sunil Singhania was close to about 169. We take a short break, come back, get you more on the markets and macros on the upside.
Massey of Kentucky.
Welcome back. Let's get you some updates from a new one on the bourses. Turtlemint Fintech Solutions has reported its fourth quarter numbers. Yash is here to do all of the number crunching for us.
Well, it's been a very strong quarter for Turtlemint, but do remember, this is the fourth quarter results which the company had reported. It's a recently listed company. They had, disclosed numbers till the third quarter, but now after listing, fourth quarter numbers have been reported and first quarter will be reported very soon. But as far as the fourth quarter results and the FY26 results are concerned, extremely strong set of numbers, looking metric by metric. The revenue from operations, that has seen a strong growth of about 42% in the fourth quarter. Service EBITDA has grown by about 60% on a year-on-year basis. As a margin, service EBITDA margin, that is coming at 16.8% versus 14.9%. Adjusted EBITDA, which is your service EBITDA minus corporate head cost, that has come in at about 2.9 crore versus an adjusted EBITDA loss of about 34 crore. On the margin front, it is a positive 1% margin versus a negative margin of 13% on the adjusted EBITDA front. As I said, what has led to a strong adjusted EBITDA performance is the corporate overhead. That cost has come down by about 19% to 57.2 crore versus 71 crore. Apart from your regular financials, two important aspects which have been a positive one. The first one is with respect to active transacting digital partners as a percentage of verified digital partners. That has grown to about 12.7% versus 11.6%. Second metric, your platform premium and your revenue from operations, a ratio of that has gone to about 28.4% versus 23.8%. So in quarter four, no complaints and a very strong set coming in from Turtlemint.
Indeed, a strong set coming in. Yash, thanks a lot for that. But you don't go anywhere. We'll also be joined by Dhirendra Mahiyavanshi, who's the leader at Turtle Mint, who joins us at 12:05 today on their earnings. Stay tuned for that conversation to CNBC TV 18. Let's get you the macro signal. Markets, Nifty Bank, broader markets, all of them. The macro backdrop is negative today. Oil prices have surged, and Ritu joins in with all the details.
That's right. I mean, for the markets, of course, getting impacted by the banking numbers. But, the macro backdrop is pretty negative. If you look at it today, the oil prices, they've surged quite a bit. Brent crude crossing $90 a barrel mark again. And that's primarily on the back of the escalating tensions in West Asia and the fears of supply disruptions once again. So the major international benchmarks, they're seeing substantial gains this morning. Brent and NYMEX on your screen, trading with gains of about 3% plus minus each. Look at the rupee. Now, as a result of what's happening in the oil prices directly, it opened 13 paise lower and it remains under significant pressure and is inching closer to that record low of 96.96 against the dollar that we had seen earlier because of these higher oil prices and the resultant higher import bill concerns weighing on sentiments. It has declined by almost 1.7% so far this year, currently trading at 96.51 against the dollar and the dollar index at 100. Now, look at the 10-year benchmark yields. They're hovering around the 6.78, 6.8% kind of a mark. There you have it on your screens. The yields have been facing upward pressure recently, and that's reversing what was a brief period of moderation that we saw, primarily, again, because of these higher oil prices and the rupee decline. What's also not helping sentiments, as Manisha was telling us earlier, is the supply dynamics, the heavy supply expected from state government bond auctions scheduled later this week. So all of that taking a toll on the sentiments as far as the bond markets are concerned. But that's all we had in this edition of Trading Hour. Mangalam and I take your leave, but stay with us. Halftime Report will take all of the action forward.
Presidential war power.
Private banks are the big drags for frontline indices, even as mid-caps eke out gains. Realty is the other sector in the red, while metals and utilities add some green to the screen.
Reliance Industries clocks quarterly income of more than 3 lakh crore rupees and EBITDA of over 54,000 crore rupees, powered by record O2C margins and strong growth in retail and Jio. Chairman Mukesh Ambani says this makes him optimistic about FY27 with new energy projects and Jio IPO on the anvil.
HDFC Bank, ICICI Bank, Axis Bank and Kotak Mahindra Bank all post strong credit growth in Q1 even as deposits lag. But while HDFC, Axis and Kotak compression net interest margins, ICICI ekes out a higher margin.
US-Iran hostilities escalate with a ninth night of strikes expanding across the Gulf and pushing Brent crude past $90 per barrel mark. Reports of 2 ships bursting into flames in the Strait of Hormuz only fuels further concerns.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me Sonal Boothra and Vinny Motiwala. Well, it is turning out to be a mixed session for the markets. We have the Nifty, the Bank Nifty under pressure as geopolitical concerns weigh as well as earning reactions are top of mind. But we do have the broader markets which are managing to hold up. So we have the mid-cap index which is up around 0.3% along with the advanced decline ratio which needs some amount of improvement at this point in time. Yes, we do have crude which is spiked above $90 per barrel. We have the rupee which is depreciated to almost 96.5. So those continue to be concerns for our markets, but banks continue to be the key talking point today. So we have ICICI which has managed to buck the trend, PNB which has managed to hold up quite steadily and they are guiding for a net interest margin which should be steady for FY27, and just watch out for a couple of others such as Jana SFB which has gained around 13% on a month-to-date basis post numbers as well.
Hey girls, good afternoon. A Monday morning, the week is going to be very action-packed. As Ekta pointed out, banks are under pressure, but look at the PSU banking index. Despite it being one of the biggest gainers, it is unable to support the Bank Nifty. So 1.5% lower on the Bank Nifty, but PSU banking index, that's the one which is in the green, up around 1.2%. The mid-caps, where the advanced decline ratio or those lines have been quite volatile, is definitely on our radar, considering some of these numbers that have come by. A lot of these chemical companies, the stocks are surging there. You have Tatva Chintan Pharma, Himadri Chemicals continues 4th day of its run after stellar set of numbers. So we'll be tracking earnings for you, but it's a power pack show for you as well. We do have some managements line up, and that is something we'll be discussing today, Vinny.
Absolutely. Good afternoon. So let's on that note talk about what's on the show, right? First up, we'll talk about some of the top stocks that are buzzing around in the trading session. We'll have Reliance and top banks that are reacting to the Q1 earnings. Are the movers and shakers segment where we'll cover all of this. Then we'll connect with the managements of Turtle Mint Fintech as well as Rosari Biotech to discuss the recent earnings and the outlook of the company going forward. We'll also bring you an interesting conversation with SkyMet's Weather Service President GP Sharma on the key trends shaping up in India's monsoon season. How is that looking like? Mangalam will also take us through what to expect from FMCG sector in Q1 FY27. So that's what we're watching out for in terms of the show. But first up, let's go across to Vivek, who's here to take us through all the stocks that are moving around in the trading session. Afternoon, Vivek.
Well, good afternoon. When we came to trade, we were worried that we could follow some of the Asian peers and see a sharp cut, but that's not happened. Advanced decline ratio, especially broader end of the market, is quite positive. In terms of individual stocks, have a look at Aegis Logistics. It's been very volatile, but the stock, after a brief snapping of its gaining streak in the week gone by, today higher by another 5%. Tatva Chintan Pharma, you alluded to it earlier, very strong Q1, and that is something that has seen a significant up move based on strong volumes as well. PNB, you alluded to that particular name as well. Very strong Q1, clear. PSU is clearly outpacing private banks, and also as far as the NIM guidance is concerned, 2.6 to 2.7 is what the management is guided for as far as FY27 is concerned. After a while, you're seeing utilities make an up move today. So most of the names are JSW Energy, Torrent Power, Tata Power, NTPC, NSPC, all of these names higher in the session today. And after a while, you're seeing some of the mid-cap FMCG names do quite well in the session. So Bector's Food was a sharp mover in the week gone by. Today higher by another 11%. Bajaj Consumer 3% higher, and Zydus Wellness too joins this particular trend. On the other hand, can't look past the private banks when it comes to the list of laggards. Muted Q1 results, disappointment on multiple fronts. Axis Bank down over 5%, HDFC Bank and Kotak Bank, all three heavyweights on the Bank Nifty under significant pressure. Tata Technologies, even though it was a very strong Q1, profit booking seen in this particular name. Campus Activewear, one of the top NSE 500 gainers. Footwear stocks did make an up move significantly in the week gone by. And lastly, as expected, most of the OMCs today under a bit of pressure, HPCL and BPCL taking it on the chin.
Okay, all right, Vivek, lot of buzzing stocks in today's trading session. And yes, banks are top of mind. But one particular company that we're looking at this point in time, which is managing to do well and is a recent listing, is Total Mint Fintech Solutions. It's the first management on the show. The company's reported its Q4 earnings. Remember, it's a recent listing. Revenue from operations has jumped around 42% on a year-on-year basis. The company's profit after tax also turned positive for the first time. So to talk more on this, we have Dhirendra Mahayavanshi, who's the CMD and CEO of the company, joining in now. Well, thanks, Dhirendra, for joining in. Well, it is the first quarter that you have reported post-listing, so it is your Q4 numbers that we're talking about. Your revenue from operations has been around 42% in terms of growth. But just give us a sense in terms of what Q1 has looked like for you all, considering that the quarter is closed and you would be reporting your numbers there soon. Was it as good as what Q4 was?
Yeah, thank you very much for having me on the call. So it's our first results. Obviously, we were going through our understanding of how to go about the process. It's been a great quarter four for us. We grew in Q4 by about 42%. Service EBITDA expanded by 60% plus, and for the year, the service EBITDA expansion was about 70% plus. So just to explain our business, basically, service EBITDA allows us a certain level of operating leverage. So as it keeps expanding, we keep seeing higher margins. The second key leverage is the corporate overhead. As the way to understand the business is as the platform has been built out, and as the corporate overhead stays same, as a share of the revenue, it keeps dropping, and that improves our EBITDA. And so that's Q4 sort of delivered on that. So this was the first quarter in the history of the company in the last 11 years that we turned profitable. And it is largely built on the last 5 or 6 years of data, which we've also published in the earning call, where each of the parameter which is critical, that is revenue, the service EBITDA, and the EBITDA has improved over the last 5 to 6 years. And the key KPI that we track is also number of active partners on the platform, which has also grown at a CAGR of 40-45% plus. And that will continue from a Q1 point of view, the way we have executed in the history of the company, the same growth rates across all the parameters. We will continue keep building the business the way it has been built out. Both the operating leverage and the service EBITDA expansion will keep delivering better value for the business.
Give us two numbers. You spoke about the service EBITDA and you spoke about corporate overheads as well. These two numbers worked in favor of the numbers as well. What are you targeting for in FY27? Because you grew your service EBITDA by 70% and declined or reduced your corporate overheads by 8% in FY26. What is the number that you're looking out for in FY27? Will you better these two numbers?
Right. So the corporate overhead as a share of the revenue will continue to decline. However, on an absolute basis, it will remain the same, or there could be a marginal inflationary effect, which will allow us to ensure that any growth that we get improves the profitability. So profitability will continue to improve. Will improve. Last year, it improved by more than 50%. This year also we expect. And for the entire year, we expect to be fully profitable. There will be some seasonality. Q4, as we know, insurance, Q4 is a big quarter. So there we will see some seasonality play out. There could be a few quarters where we will have YOY, it will continue to deliver the way we have delivered in the history of the company.
The same rate will continue?
Yes.
Okay. So same rate, so that's 70% around is what service EBITDA can be expected at, right, for the next FY27 and over there
Correct.
as well. Okay. I want to understand one more thing. Now, obviously, if service EBITDA grows at the rate that you're talking at, you will have corporate overheads. Maybe absolute term remains same, but you will still see a reduction coming in as a portion of the revenue. Does that reduce your adjusted EBITDA loss significantly? What is that one could expect coming in for FY27 now?
Yeah. Last year in Q4, we were minus 34 crores and then turned profitable in Q4. And last year for the entire year at an adjusted EBITDA level, we were minus 105. So both will play out the way it has played out in the Q4. So from an FY27 point of view, we will see the same leverage play out. That is, corporate overhead as a share of the revenue will drop and service EBITDA will expand. That will deliver a significantly better profitability of the company.
So that means you would become adjusted EBITDA profit, or could we expect that to be on the positive side?
Yes, for the year we will get.
So just give us a number when you talk about that adjusted EBITDA as well as the profitability, because for Q4 you did around 3.1 crores in terms of profitability on the bottom line, and that's a significant reduction in terms or improvement as compared to the 39 crore loss same time last year. And your EBITDA on an adjusted basis was 1%, your EBITDA margin. So if you're talking about an exit rate for FY27, tell us what you will do in terms of profitability as well as that adjusted EBITDA. What does 1% go to? What does that 3 crores go to?
So it will be this. It will be similar to how Q4 performed, Q4 FY26 over the previous year. So we saw minus 34 become positive. And last 4-5 years history has been that we have grown every year by at least at a rate of 40% plus. Largely it is driven by this one single KPI, which is P3M active. As the P3M active continues to perform, we will see a similar leverage play out in the business. So from an exit point of view, we can expect a similar growth both at the revenue level and also at an EBITDA level.
Okay, so you're doing what, double-digit profit at least for FY27, say around 12 to 15 crores. Can we assume that?
So for the exit Q4, which is FY27, we'll have that significant growth. For the year, we will definitely be profitable, and for Q4, the exit will have a similar growth as what we had last year.
Okay. Mr. Dhirendra, third KPI that you said one should look at in your business is the number of subscribers, or I would say the number of customers. How has that grown, and what do you expect that to be in FY27?
So that is the P3M active, the past 3-month rolling number of partners who are active on the platform and who are transacting. In the last 4 to 5 years, it has grown at a CAGR of about 46%. And that is the growth rate for FY27 also we expect. So we get growth from 2 areas. One, the existing set of POSPs who come onto the platform, they grow their productivity every year because there is a learning curve that sets in for them. We handhold them and take them through the Turtlemint Academy platform so that they are able to do better. And then the new cohorts that come in who get recruited in this year. So last year we recruited 1,15,000 new partners who came onto the platform. This year we will recruit about 1,45,000 to 1,50,000 onto the platform. And the same cohorts will play out the way it has played out historically, and both will deliver growth onto them.
Dhirendra, just a very quick one. We're absolutely out of time, but revenue as a percentage of platform premium, where do you see it moving? It has improved to 28.4. FY27, what's the number that we could expect?
A similar range. I would just like to highlight that we also have a tech services business where we give our technology to other large distributors, and hence revenue is not always linked to the platform premium that gets delivered, because it's a combination of POSP and also the large platforms that we get, where the revenue is more on a license basis, but it will more or less remain the same as a percentage of them.
Just a quick last question. This IRDAI's distribution regulations and Bima Sugam, any impact on your guidance on account of that?
Also, one key point here to be understood is that the government's mission is to drive insurance penetration, and a tech-based platform is the best way to drive this penetration, and there is zero doubt about it. So any changes in the regulation will be in the direction of driving more penetration, driving more sort of affordability in the market. So we are a platform, and our business is to ensure that more and increasingly more participants use the platform and distribute insurance in the market. So in that sense, we will continue to do what we are doing. The regulations historically has been a big enabler for our business. Digitization, POSP regulation, plus expansion of products that have been covered under POSP has worked out very well for us. And I think the same thing will play out, because as we go forward, the Insurance for All 2047 is the mission that is driven by the government, and under that we will continue to deliver.
So much for joining us today. The street likes what you're saying. The stock is up 12%, but we have to slip into a short break. When we come back, we'll connect with the management of Rossari Biotech to discuss their Q1 earnings. Stay tuned for that.
Which will decide.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. You're still tuned into Halftime Report. Rossari Biotech reported a strong set of first quarter numbers. Revenue jumped 28%, with the company saying the performance is supported by deeper market penetration and expansion into new application areas. We now have Sunil Chari, who's the co-founder and managing director at the company, joining us now. Mr. Chari, good afternoon. Thank you so much for joining us. It's been a good quarter, but if we look at the numbers, your revenue growth is much higher than what you've seen on the bottom line and EBITDA as well. It must be led by a lot of inflation in raw material pricing. What is a sustainable number that you have for FY27 when it comes to top line growth, especially margins and bottom line growth, considering that you do have some of these expansions which are coming on stream as well? What is the macro setup as well on the supply side?
You see, when we did our IPO, we were just a 500 crore company, and for the last 4 or 5 years, we did not invest anything. And all the capex has been invested in the last, few quarters. And we hope for a gradual ramping up of facilities of this expansion in the next few quarters. The markets have been very volatile, very uncertain. The war also has played, its part. But we have navigated this and maneuvered this through this crisis in a very, very good way. We have had record EBITDA and record sales. We feel that, as new capacities come on stream, we should see a better performance.
What do you mean by better performance? I know it's very volatile and chemical companies are hit the hardest at times. But what is the outlook considering you do have a lot of capex coming up? The other plant from Unitop is going to get commissioned. Is there a growth target that you have on the revenue? If not the revenue, since it could be volatile because of pricing, on the margins and bottom line?
So we are seeing, some overseas ventures. The Thailand plant has just started. We are looking at some opportunities in Saudi Arabia. And as you would have seen that, we also took the board approval for putting the Saudi Arabian subsidiary under the Singapore Global Holding Company, which we are planning to make. The Singapore Global Holding Company is a 100% subsidiary of Rossari Biotech Limited, India. And the plan is for all global subsidiaries to be merged, to be transferred to the Singapore subsidiary. So it's a single subsidiary. Saudi Arabia, we see, good opportunities for the future. At the moment, it will be difficult to hazard a guess on the exact amount of growth or, percentage. But we have been growing, in spite of all the issues in the last 5 years, we have grown. And I'm confident that we will grow well in the current financial year also.
Okay, expecting to grow well. Hi, sir. Good afternoon. This is Vinny joining in the conversation. Thailand blending facility also, that is also something that you're planning to set up, right, in Southeast Asia. Any sort of additional opportunity or the guidance that one could expect there coming in from the company if things start moving on the better note?
See, the focus has been, we have 3 divisions, HPPC, Animal Health and Nutrition, and Textile Specialty Chemicals. If you see the last financial year, we've grown between 15 to 20% in all the 3 things. Animal Health and Nutrition, if I start, which is the smallest division, we invested in a very state-of-the-art Swiss plant for trace minerals and enzyme premixes and vitamin premixes and other poultry premixes. And this could add, a good amount of sales. We also have added fermentation capacity in terms of biosurfactants. We got the REACH approval for our biosurfactant, the first company in India to get a REACH approval. In the next 5 to 10 years, I think biosurfactants would be a significant part of our portfolio in the future. The textile and specialty chemicals, we have added spin finishes, which I think should do very well for the future. And we are already seeing, very good growth in that segment now. And in the HPPC segment, the oil and gas segment and the pharma segment would do very well. Agro seems to be, a little slow because of the El Nino. And I do not know how it will pan out globally. In India, the growth is slower than last year, but we have overtaken the sales of last year because of our aggressive positioning in the market. In terms of surfactants for home and personal care, this seems to be a focus area which will continue to grow. We have now nearly Q4 reduced export. And in the next 5 years, I expect, HPPC would be 90%, but the other divisions will grow. They will grow at a comparatively slow rate, but the HPPC should, as an amount, should be 90% of our sales in the next 5 years. That is what's my expectation.
Just quickly, Mr. Chari, before we let you go, 2-part question. Just wanted to touch upon the institutional and the B2C performance. You did incur an EBITDA loss this quarter, and that lessened on a year-on-year basis, but it's still in the red. When do you turn around on the business there? And in terms of a revenue pickup also, it was absolutely flat this time. What are you expecting within that segment in terms of growth? And secondly, just take us through your balance sheet.
Yes. So if you see the institutional cleaning and hygiene business, we have been now focusing on reducing our losses on the EBITDA front and making it more profitable. We also are focusing on our working capital management. If you see in the last quarter, we had a fantastic decrease in the receivables, and also the stocks as a per number of days was much less. Especially in agro, and because of this volatile, uncertain, environment, we thought that we should focus more on collections rather than sales and not allow any bad debts. We have a record of last 29 years of having practically zero bad debts, and that is something which we want to continue in the domestic and also in the export sector. We understood that we need to hive off some divisions which are not, core to our strategy. And we are on path, and hopefully in the next 9 to 12 months, we should see some results where we, reduce our debt by selling some divisions which are not doing so well, or not part of the strategy.
What is the current gross
The
debt in your
institutional cleaning and
books?
hygiene.
What is the current absolute debt in your books? How
It's
much will you
around
reduce it by?
It is around 240 crores now, which is not too high, compared to our EBITDA. And we have been always on a boundary line of less than 2x of EBITDA as our debt always. And I think other than what we invest in Saudi Arabia in the future, our debt in India should go down by the growth of profits and also of hiving of some divisions. Coming to your question, the institutional cleaning and hygiene chemicals, we feel that we should be profitable by the end of this year. The pet business, which is now one of the ones where we have a little higher loss, is something where we want to also focus on making it EBITDA positive.
Okay, Mr. Chari, thank you so much for joining us today. A lot more questions, but we are completely out of time. But thank you so much for joining us with your take on the future of the company going forward. Time for a break now. Sachitanand Uttekar, VP Research at Trade Bulls, will join in with some trading strategies on the other side. Stay tuned.
Is the use of military force.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना. सॉरी सर. सर आपकी ग्रीन टी.
थैंक यू दे. गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई.
अंडा सर्कल हाँ आया.
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का. उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया. शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था. सब मीठा मीठा था, गुड़ जैसा. कड़वा हुआ जब कोविड आया.
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं.
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते. उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया. अब बचा था
Welcome back to Halftime Report on CNBC TV 18. Nifty as of now is around 24,170. Around that mark is what the Nifty is trading at. In the last few seconds, we're seeing a bit more of a dip that's coming, 6/10 to 7/10% of a decline for the Nifty 50. Other than that, when you look at it in a broader end of the market as well, what's not doing well in the last 20-30 odd minutes, we've seen Physics Wala, Imami, Force Motors, which has given up some of the gains and furthermore have moved to the downside. In the last 20 odd minutes, they're down almost 1%. So look at Physics Wala, sharp spike down that's coming for the stock as well. Similarly for Imami as well as Force Motors. But on that note, let's also bring on board Sachitanand Uttekar, who is joining us right now to take us through his trading strategies. Sachitanand, hi, good afternoon. Thank you so much for joining us on the show as always. As of now, 24,170 around that is what the Nifty is trading at. What are the important levels we're keeping an eye out on? Tomorrow is going to be the weekly expiry for Nifty as well. What is it that one should watch out for now?
Good afternoon, Vinny. For the day, at least 24,170 is very significant because this is where its 5-day exponential moving average is placed, and it looks like an inside bar, trading range itself. So we are not expecting any major move outside, Friday's trading range. So if you look at the last 3 weeks, the Nifty has been oscillating between 24,400 on the higher side and 24,000 looks like a decent support. So we expect this particular oscillation to continue, and probably 24,360 would be a marker going forward in the coming days. If that particular level is breached on a closing basis, then we may see good strong direction momentum play, which may push the index higher towards 24,700 750 bracket itself. So as of now, I think it's a day of consolidation. The weekly range has been wide, and we still maintain a bullish bias until and unless Nifty doesn't break that 24,000 mark. So I think for the day, the Nifty may see further slippages, but we are expecting some kind of a support at around 24,100, 24,080 kind of a level, wherein some contra buying can be expected.
Okay, some contra buying could be expected at levels of around 24,100 to 180. That's what the advice is right now from Sachidanand, and those are the levels that the Nifty is at this point in time. But Sachidanand, there's some amount of resilience which is coming in from the broader markets as well as the PSU banking space. Anything that you recommend within that space, and what would you be recommending in terms of stocks in any case?
Good afternoon, Ekta. I think one space which has been very consistent is Nifty Pharma, and even here, if you look at all the major constituents, they are trending very well. From this space, we still believe that Reddys Labs has a good, strong probability of scaling towards 7,700 levels. So one can still initiate fresh long positions here. One can keep a stop loss at 73.40 on closing basis. A trading swing can be expected towards 74.60, but eventually we see Reddys Labs scaling towards 77.30 going forward. It's a very strong, consistent performer. We have already seen a good, strong bullish flag formation breakout, and we may see this particular outperformance getting continued here. The other pocket of strength, which we feel could be very significant for this particular week, is the cement pack. Even here, if you look at a stock like Dalmia Bharat, it has been consistently outperforming since last 3 trading sessions. What we are observing here is an inverse head and shoulder pattern breakout. And if you look at the conversions of its 5 and 20 exponential moving averages, we are expecting further momentum to get up here. So we are expecting this particular move to extend towards its 50-week exponential moving average, which is placed at around 1930. One can keep a stop loss at 1840 on closing basis and build fresh long positions in Dalmia Bharat futures for a positional target of around 1930.
Okay, take that point, Sachidanand. Thank you so much for joining us with your thoughts today on the market levels and individual names as well. It's time to go across to Mangalam Malu. He's joining us with all the trends from the F&O space this afternoon. Mangalam.
Well, good afternoon. If you're looking at, the major indices on the bourses today, we have the Nifty, which is lower, but it's buoyed lower largely by the Nifty Bank. You adjust for that, and it's actually a positive move that we're seeing on the Nifty, and that's further reflected by the mid-cap index as well. And bulls would look at that as a win, largely because it's not about the earnings. If you look at the macros as well, crude oil prices back above $90 per barrel. The rupee weakened further to 96.4 against the dollar. So all these factors would have taken the market a lot lower, but there is a lot of resilience. Amidst all of this, the advanced decline ratio, fairly even, Stephen, if not more green than red right now, makes you feel that there is a fair amount of optimism still, or rather resilience among the bulls. And even after this decline, the Nifty is held on to the 20-day moving average, and the Nifty Bank as well, which is a bigger gash today, is holding on to the 200-day moving average. And this is the point that we've been making. So long as that holds, bulls have a fair chance. Tells you that maybe the market has perhaps made a bit of a bottom in the very near term. And option writers are paying for that. If you look at the options that expire tomorrow, 24,200 call and 24,200 put are the ones which are extremely active, and those who are writing this straddle, which is a 24,200 put, which has a premium of 100 rupees, and a 24,200 call, which has a premium of 60 rupees, net it off up to about 150, you are playing for a Nifty range between 2450 to about 24,350, and that's basically the range that the market has been, just about 100 points higher from the earlier range of 23,950 to about 24,250 thereabout. So that's something that I will be tracking as we go along, whether this range plays out or not. But one pack which has been abuzz over the last few minutes or so is the pharmaceutical pack. So you pull up all the other stocks, Cipla, Divi's, Torrent Pharma, as well as Alchem Lab. They are seeing some incremental buying, and if the intraday charts of these come up for you, of the Nifty Pharmaceutical Index, that tells you that this is a very recent phenomenon. So let's see whether this sustains from here on or not. The pharmaceutical pack has been fairly volatile, outperforming during the time there was war and geopolitical uncertainty, then started to underperform, and now as we speak, the index is back at the high point of trade. So sustaining this is something that I'll be tracking.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break. After the break, we'll come back, and Manisha Gupta will be in conversation with GP Sharma of SkyMed Weather Services. Stay tuned in.
First pub.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क, और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे।
Welcome back. Well, for the Nifty, pressure, so down around 170 odd points at this point in time. We have the Bank Nifty, which is reeling under pressure today, so down around 1.5%. Just watch out for Sham Metallics. Approved fundraising to up to 4,500 crores. The stock is spiked up with a gain of around 6 odd percent, along with its numbers. Net profit up around 18 odd percent this quarter, coming in at a cool 345 crores. But let's go across to Mangalam now. He's standing by with a preview on what to expect from the entire FMCG space in the first quarter. Mangalam, over to you.
Well, before me, it was all the companies which have given you a peek into what one can expect from the FMCG sector this time around. And we have the previews as well. From what we know so far of the updates that have come by, the first quarter will see some sort of consumer recovery. So consumption recovery is on the card. Price growth will lead revenue growth. And more importantly, margin pressure. All these companies have said are transitory as crude prices, though volatile, have come off high. So what we know from all the updates that have come by, and I've divided that into three parts. It's the consumer staples, then it's the retail players, and then you have the discretionary. So if you pull up the staples, you would see, between Dabur and the others, all of them have reported double-digit revenue growth. And Marico actually low 20s, Godrej Consumer high teens, and Dabur has been double-digit. Volume growth has been double-digit for Marico, high single-digit for Godrej Consumer, and mid to high single-digit for Dabur as well. As far as margins are concerned, we've seen some sort of compression, but all these companies have said either the margins are stable because of the price hikes that they've taken, or at the same time, copra prices for Marico are down about 45% from the peak, so they will see gross margin expansion. And, someone like a Godrej Consumer has said that margin pressures are currently transitory, and going forward, we will see improvement as, the year progresses. And finally, we do have a lot of these retail companies as well, which have actually reported their updates. And the retail companies have reported good updates on the value retail side, but DMart and Trent have been slightly shy of street expectations, and we've seen that in stock price reactions as well. But look at V-Mart, Vishal Mega Mart, we have V2 Retail and, Bazaar Style, all of them between 29 to 60% in some cases with strong store addition as well. What really has stood out in the consumption space this quarter is the jewelry sector. Titan up 39% growth, Kalyan Jewelers, 38% growth, and Senco up 60% as well. And here too, operational performance will also see an element of a one-off gain because of the customs duty hike that came by during the quarter. Now, what are the important expectations that we have from the companies that are yet to report their numbers or updates? HUL, high single-digit revenue growth, high single-digit EBITDA growth. Nestle, 18 to 20% revenue growth with 23 to 25% EBITDA growth. Britannia as well, 9 to 10% revenue growth, 15 to 16% sort of EBITDA growth. And we have expectations which are on the higher side for both Asian Paints as well as Tata Consumer, led by price hikes and favorable input costs as well for, in case of Tata Consumer. In terms of valuations, the sector has not done much for the last 3 years, especially on the staples front, and which is why, even though at the higher levels, and an absolute basis been fairly high, but most of these valuations compare with 5-year average price to earnings, and players like Nestle, Asian Paints, Godrej Consumer, ITC, HUL, all of them are lower than their 5-year average price to earnings. So this makes you think, what is it that we are expecting going forward from these numbers? Demand impact due to lower monsoons and El Nino risks is something that we will monitor. Geopolitical and supply chain overhangs is the other thing that we will be monitoring. Finally, what we'll also look at is input cost volatility, and are these companies going to use their balance sheet to make some more mergers and acquisitions and synergize the mergers and acquisitions that they've done already. So that's what one has to expect from the FMCG sector in the first quarter.
Okay, Mangalam, thank you so much for that. But with that, we're going to step into a very short break. After the break, Manisha Gupta will be in conversation with GP Sharma of SkyMet Weather Services. Stay tuned in.
FAR's news agent.
ए दया, कौन है रे ये?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क, और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा,
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें ये सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है।
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी। और बजाज फिनसर्व।
Welcome back. Joining us on the show now is Mr. GP Sharma from SkyMed. Mr. Sharma, thank you so much for joining in. It's 20th of July, almost 2 months nearing that. I understand there's 10 days still remaining to the month, but 24% of a deficiency, even as we are done more than half of July. How concerning is that?
Thank you, Manisha. I have no pleasant news to share with you since we spoke last. I was very apprehensive even at that time also, and it remains without any change. 24%, though it is stagnant for the last 4 days actually, from 16, 17, 18, 19, it is stuck now at 24%. Otherwise, gradually there was a decline, or rather every day 1%, 2%. So it is arrested now. But then it still doesn't bail us out from the grave situation which we have landed up, and then in the coming days also. Yes, some better situation, I will say, for the next about few days, because we are having you can say a revival of the monsoon over certain parts, but that is only confining to eastern parts and Indo-Gangetic plains, and then traveling even up to parts of northern plains. Okay, so that will happen for the next about 1 week or so. It is not going to go worse from 24. There could be a marginal recovery, I will say. But in any case, it's not going to drop below 20%. It could possibly, I think, at 22%, it may close the month of July as such. Okay, so July by itself is, as I spoke last also, it was about 5% below normal. Now it is about 8% below normal. It is going to close somewhere around that only. Could be a single-digit shortfall. Anything between 8 to 10% shortfall will be there. But the more worry will be in the starting next month, in the August, the start itself possibly, I'm a little afraid. It's not looking good. It's looking a little scary. So month of August as such, I keep mentioning, it's notorious. Breaks are longer. This time we had a break for about 4, 5, 6 days only. That the one which is coming up, possibly in the month of August, it could be a longer one also. Yeah.
Okay. Mr. Sharma, I get your point when you say that July could end 8 to 10% and deficient. What does it do for it cumulatively from 1st of June to 30th of July? Are we still looking at 20% of a deficiency then?
Oh, yes, definitely. Definitely. Not less than 20%. It could be maybe one notch higher than 20%. It is not going to drop below 20% June and July put together. Okay. And whenever such a scenario is there, and the projections for the month of August and September, the more I am going into it, like I had promised that we are collecting and collating the data and share the latest picture with you, the more it is compelling and forcing that read it again and again and again, because it is not rosy at all. It's a gray area, what I'm looking at. So the fear is possibly we may not improve from this percentage, even when the situation closes for the for the monsoon season as such. That's the fear. Anyway, we are still working at it, and within about a week or so, we get back and we share the latest, whatever is SkyMed guess or SkyMed forecast that we share with you. But it's not looking great. Okay,
Mr. Sharma, the not very pleasant word is drought. Are we looking at that for 2026 as a monsoon?
For sure. For sure, it's going to be a drought. How severe? That's the only question. Okay, drought starts at below 90%, and it is going to be, in any case, below that. My apprehension and my fear is it could be a stronger one also. Okay, you cannot rule out the possibility. Though all the super El Nino years so far, 6 of them since 1950. One was the worst one, which was 72, 73, which mentioned last time also. It gave us 24% below the LPA. But then there are years even without the Super El Nino also, which have landed up in a severe drought. We call it the severe when it is a shortfall is about 20% or more. 19-20% have been a couple of times in the recent past, be it 79, 87, 2002 and 2009 were the worst actually in the recent times of 22% shortfall. So that is my worry. That is it going to become a little better, or are we going to exceed 15%?
Mr. Sharma, I have a final question then. The last time we spoke, you said you are still at 94%, IMD is at 90. Is it time to revise those numbers?
Sure. We are in the process of revising, as I told you last time, possibly after another 1 week or so.
Okay.
And since it is looking a little alarming, so that is more reason to read it again and again, whatever the signals are there, whatever the model output, but it's looking definitely bad is not the worst, it's looking bad, possibly worst also. Okay, some of the areas it's looking very bad, and for that includes some Northwest India, even up to Gujarat or parts of Madhya Pradesh, parts of Maharashtra, going up to plains of North India. So those are better picture is somewhere in the northeast and eastern parts. Okay, but share with you the complete details. So that's after about another 1 week or so. I think we come back to you with all those details.
1 week.
Yeah.
All right.
Yeah.
Okay, all right, Manisha. Well, we're going to leave it on that note. Thanks very much for joining in, Mr. Sharma. But the fear of a drought cannot be ruled out for 2026. So that's the somber news which is coming in at this point in time. For the markets, down around 186 odd points for the Nifty, the mid-cap index managing to hold up. We'll take a short break. But up next, we'll focus on Reliance Industries Q1 numbers and what the brokerages are saying this quarter. Stay tuned for that on the other side. Stay tuned.
Play the long game.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया
Welcome back to Halftime Report on CNBC TV 18. Now, Reliance Industries reports a good quarter led by the growth in the O2C as well as retail business. Quarterly revenue tops rupees 3 lakh crores for the first time. Let's go across to Sonal, who's decoding us the key highlights, what the brokerages are saying as well. Sonal, over to you.
Well, a strong set of numbers from Reliance Industries in Q1. Quarterly revenue topped 3 lakh crore rupees for the first time. These are the quarterly numbers that I'm talking about as well. Let's talk about some more numbers here because their EBITDA came in much higher. 54,067 crore rupees, which is higher both on a quarter-on-quarter and on a YOY basis. This is the consolidated EBITDA. What led to this? It was the oil to chemicals business that did really well this time, where the EBITDA came in at a 4-year high. Transportation fuel cracks were up 2.5 to 4.5 times. We saw other quarterly average middle distillate cracks also coming in at an all-time high. And remember, this is at a time when West Asia crisis were at its peak, and there was an export duty as well on diesel and petrol. So the oil to chemicals EBITDA came in higher at 17,010 crore rupees, much higher on a quarter-on-quarter and on a YOY basis. Even the really well. Adjusted for the ALD merger, the gross revenue is up 11.6%. And if we talk about the Jio business, where the company reported a double-digit EBITDA growth to come in at 15% on a YOY basis. Brokerages continue to be very sanguine. Goldman Sachs is a buy with a target of 1870, and they say that oil to chemicals is likely fared better than market expectations, despite the drag that we saw in terms of elevated crude prices, and Q2 outlook is looking more constructive. Also, the company is getting closer to commissioning their fully integrated solar PV and battery manufacturing plant. Nomura also has a buy rating with a target of 1690 rupees a share. They say record Q1 was driven by sharp improvement in O2C crack spreads, and retail margin recovery remains the key from here on. CLSA 2 has an outperform rating on the stock with a target price of 1800 rupees a share. EBITDA and profit after tax beat their estimates by 3% and 20%, and Q1 was led by strong oil to chemicals business, higher other income as well, and management is targeting doubling their retail EBITDA within the next 3 years despite the near-term muted growth. CLSA says the new triggers would be new energy ramp-up, resilient O2C retail recovery, and value unlocking in FMCG and media as well. Now, Macquarie also has an outperform rating with target of 1510. Retail EBITDA doubling target over 3 years provides long-term confidence to the street, according to them. Morgan Stanley also said Q1 was a beat on both quality and profitability. Now, execution in the new energy business continues to accelerate, and that is something that they'll be watching out for very closely. It's just not the brokerage. The management also sounded very sanguine. Mukesh Ambani, the chairman and MD of Reliance, said, "The start to FY27 gives me the reason to be optimistic about the year ahead as we move forward, with phased commissioning of new energy projects and unlock value through the Jio IPO."
Okay, all right, Sonal, thanks very much for that. On that note, it's also a wrap on Halftime Report. Business Lunch will take all of the action forward. Stay tuned.
It's being drawn into a prolonged...
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क, और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां हैं और प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया, और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है।
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व
ये दया कौन है रे ये?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विथ मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना। सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
Private banks are the big drags for the frontline indices, even as mid-caps eke out some gains. Realty is the other key sector in the red, while metals and utilities add some green to the screen. Reliance Industries clocks quarterly income of over 3 lakh crore rupees and an EBITDA of over 54,000 crore rupees, powered by record O2C margins and strong growth of retail and Jio. Chairman Mukesh Ambani says this makes him optimistic about FY27 with new energy projects and a Jio IPO on the anvil. ICICI Bank, Axis Bank, Kotak Mahindra Bank and HDFC Bank all posted strong credit growth in the first quarter, even as deposits lagged. But while HDFC, Axis and Kotak see a compression in net interest margins, ICICI ekes out a better margin picture. US-Iran hostilities escalate with a 9th straight night of strikes expanding across the Gulf and pushing Brent crude past the $90 a barrel. Reports of 2 ships bursting into flames in the Strait of Hormuz only fuels further concerns. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Fatakia. Well, could have been far worse if you could call it that. The market has been fairly okay in terms of the moves that we have seen today. The dip is been getting bought into, and after slipping below the mark of 24,150 at just a few minutes back, there is some buying interest that is emerging at those levels for the index. So still 150 points down, yes, but trying to hold on to that 24,200 level on the downside. The Kospi 2 in South Korea ended 4.5% lower in today's session, and of course in line with the chip sell-off that we've seen on Wall Street across Friday's trade as well. The principal culprit today has been the banks, undoubtedly so, and when you have names like HDFC Bank and Axis Bank both declining over 5%, it is unsurprising that the Nifty Bank has bore the brunt of this. 850 points lower on that one as well, is now at the lower end of the range, is where the Nifty Bank is still trying to hold on to that 57,500 mark as well. So ICICI Bank is one standout, still trying to offset some of the pressure that HDFC Bank and Axis Bank is generating. Of course, add Kotak to that mix as well. That too is down in today's session. It will be interesting to see whether the index closes above the mark of 24,200 heading into the weekly expiry session tomorrow. But today is also the start of the monsoon session of Parliament, and Prime Minister Modi addressed the media ahead of that. Listen into what he had to say.
मॉनसून हो या मॉनसून सत्र, अगर दोनों प्रोएक्टिव हो तो बहुत ही प्रोडक्टिव होते हैं। और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे। हम भली भांति जानते हैं और पूरी दुनिया चिंतित भी है, लगातार कहीं न कहीं युद्ध की स्थितियां बनती रही है। पश्चिम एशिया के युद्ध के कारण भारत जैसे देश जो एनर्जी के लिए औरों पर डिपेंडेंट है, उनके लिए ये पश्चिम एशिया का युद्ध एक बहुत ही बड़ा संकट का कारण रहा। पेट्रोल, डीजल, एलपीजी, फर्टिलाइजर, केमिकल्स, यानी हर विषय में अनेक बाधाएं, अनेक संकट आए। उसके बावजूद भी भारत 7.7% के ग्रोथ से दुनिया की मेजर इकोनॉमी में सबसे तेज गति से आगे बढ़ने वाला देश बन के रहा।
Numbers from Indian Overseas Bank flashing at the bottom of your screens. Some spike in the net NPAs, 0.8 compared to 0.2. Of course, net profit has gone up by 49% from last year. Be interesting to see if there is any other income component or lower provisions involved behind this jump. And the net interest income too has gone up by 34%. So that's a healthy performance on the core income front. 34% growth on the NIIs, and the stock has now moved higher by close to 5%. After this, the gross NPAs have improved, so 1.33 compared to 1.42, and provisions too have come down from 1,000 crores to around 834. So that has contributed to some extent of the profitability. But of course, the core income growth being very healthy, that has had a major role to play. The stock 4.5% higher. But staying with the Parliament, it's a packed legislative calendar that awaits the monsoon session this time around. And on the agenda, reforms to the FCRA, changes to the income tax framework, fresh measures for the MSME sector. Rachna is here to summarize all of that for us. Rachna.
Parliament's monsoon session opens today, running until August 13 across 19 sittings. The government has listed 7 key bills, 2 pending and 5 new. The agenda was discussed at an all-party meeting on July 19, which also saw the opposition walk away from it. The 2 pending bills first. The FCRA Amendment Bill, introduced in the Lok Sabha on March 25th, is listed for passage. It provides for the cessation of an organization's FCRA certificate on expiry or non-renewal and sets up a designated authority to manage and dispose of foreign-funded assets. The second one is the Vikasit Bharat Shiksha Adhishtan Bill, introduced on December 15th and referred to a joint committee. The committee's report is expected to be adopted in the current session. The report backs the bill, which dissolves the UGC, AICTE and NCTE and replaces them with a single regulator. It also states that concentrating power in one central body could affect the institutional autonomy and recommends safeguards. Now the 5 new bills. 2 of them replace ordinances. Now, under the Constitution, an ordinance lapses unless approved within 6 weeks of Parliament reassembling. The Supreme Court Judges Amendment Bill replaces the May 16 ordinance that raised the court's strength from 33 to 37 judges, excluding the Chief Justice. Then there's the Income Tax Amendment Bill that replaces the June 5th ordinance, exempting foreign institutional investors from tax on interest and capital gains on government securities, retrospective from April 1. The remaining 3, the Births and Deaths Registration Amendment Bill, which makes provisions for delayed registration more stringent, the MSME Development Amendment Bill, which strengthens the mechanism for delayed payments to small enterprises, and the last one is the Prevention of Insults to National Honour Amendment Bill, which extends now to Vande Mataram, the protection currently given only to the national anthem. Separately, the JPC report on 130th Institution Amendment Bill is also expected in this session, though it hasn't been mentioned, and that bill is not among the listed 7. As a constitutional amendment, it will require a special majority for passage, so that will be one of the most important ones to watch out for along with these 7.
Rachna, thank you for those updates there. Of course, the correction on the Indian Overseas Bank net NPAs is also on your screens, 0.18 compared to 0.21. So asset quality has improved, core income is healthy, provisions have dropped as well, and profitability has been aided. So strong show from the state-run lender in this quarter, 3.5% higher now on the stock. On to updates from West Asia. Then the US Central Command says that the forces began a new wave of attacks against Iran, marking the 9th consecutive night of operations. Iran reported explosions in 5 Iranian cities, including 2 key ports. Shortly after, the US Central Command announced a new wave of attacks, according to the Tasneem news agency. CNBC's Dan Murphy gets us the latest update.
Over the weekend, an Iranian missile struck Mufawak Salih Air Base in Jordan, which is obviously a very critical American base here. Central Command saying 2 service members were killed, 1 went missing, and then several others there were wounded. Separately, CENTCOM also said another American died in northern Iraq on Saturday, killed during a controlled detonation of a downed Iranian attack drone. A second service member there was also wounded. So very dramatic developments at the weekend, tragic developments, in fact, because before this week, the Pentagon had put the U.S. death toll in this war at around 14. In a statement out today, CENTCOM said it was withholding additional information, including the identities of the missing and fallen service members out of respect for their families during the notification process. So we're watching and waiting to see exactly what comes of that tragedy. President Trump, of course, saying he would consider returning to all-out war if Iran killed American troops. The Defense Secretary, Pete Hegseth, also saying in the last 24 hours that the death of those Americans only stiffens our resolve. And what this could ultimately signal is larger strikes may be coming as well. The Wall Street Journal reports that the U.S. is already rushing more warplanes into the region now, including F-16s from Germany, stealth F-35s from England, and aerial refueling tankers as well. The question now is how far President Trump will go. He spent the last week broadening strikes to hit bridges and infrastructure. He's now threatened Iran's power plants and energy sites this week. And he's also weighed, according to some earlier reporting, seizing Iranian islands or also bombing a deep nuclear site called Pickaxe as well. So a number of options on the table for the commander-in-chief to respond to the death of these Americans. And of course, the American deaths put all of those options back on the table.
Dan Murphy, thank you for those updates there. Now, with oil prices hitting $90 a barrel and the dollar also strengthening, the currency was expected to see a weak day. The currency is now down around about a quarter percent, but has done better than some of the Asian emerging market currencies. Lata is here with more details on this. Lata.
It was always expected that the rupee will be under pressure. $90 is a psychologically significant mark. The dollar is as strong as last week. It has not strengthened even further, so that's a bit of a consolation. But the rupees, it is the rupees not falling that has actually surprised the market. At $90, the fall was expected to be stronger. But if you list the entire EM currencies, then the Indian rupee is somewhere in the middle, with the Thai baht, the Indonesian rupiah doing worse, even the South African rand doing much worse than India, and Taiwanese dollar, Korean won doing a little better than India. So we are right in the middle. The reason why the rupee perhaps did better is because the Reserve Bank is believed to have supplied dollars at higher levels above the 96.50 mark. The market is also somewhat ambivalent about the future flow of dollars. The market is cognizant that in July itself, the FPI equity and debt flows have been positive. It is about 1 billion positive on each, so 2 billion positive. And more importantly, the outflows, the huge outflows of the previous months have definitely stopped. That is a bit of an anchor to the currency, as well the expected FCNR flows. There as well, the market is mixed in its feelings. There is one section which believes that they thought that the flows are not as good as originally expected. And there is another section which believes that always people come more towards the close of the date, expecting that, you may get a better interest rate if you wait, since there are El Nino fears and there are crude price fears. So a higher inflation, a higher interest rate is always something NRIs will expect, considering that it is a 3-year to 5-year lock-in of their money. So the market is mixed in all these issues, and therefore the rupee also is kind of middling. It's not expected to go beyond the 96 mark, which is the prevailing low. At the same time, not a great deal of appreciation is expected.
Indeed, 96.41 is where the rupee currently stands against the dollar. Flashes at the bottom of your screens from Bloomberg. Iran's foreign ministry spokesperson Ismail Makei has said in a press conference, without elaborating on further details, that they have received, quote unquote, some proposals from unspecified mediators with regarding the war. What are those proposals? Who sent those proposals? All of that still remains unclear, but there have been some proposals. Just pull up all the oil prices as well. At one point, Brent had crossed the 91 barrel mark. They have cooled off from those levels, still higher by about 1.75%, around about the 89.60, 89.70 mark, but still slightly below the early morning highs. But that has, of course, raised fresh concerns over aviation fuel costs amidst the escalating geopolitical tensions. But even as the sector braces for higher expenses, Air India Express told CNBC TV 18 that they are sticking to an ambitious expansion plan, with an ambitious fleet expansion plan in the years to come. Listen in.
See, in Express, as I said, we should start seeing the deliveries from our order book coming through from the later part of this year. And from next year, we expect about 40 to 50 narrow bodies coming in every year for the next several years. So we'll be scaling up very fast. We have 100 aircraft today. In 5 years, we should be trebling it. We should go to almost 300 aircraft. That's a pretty sizable growth. And we'll be expanding both domestically and internationally. And we have plans to grow all across. Geopolitical situation is very dynamic these days. It's always evolving. We are trying to deal with it the best we can. We are constantly watching, constantly evolving, trying to maintain flexibility, trying to be agile. That's the best you can do. Beyond that, you can't do much.
Take a short break. Back with more news and updates on the other side. Stay tuned.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ये दया कौन है रे?
मैं है।
सखू।
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है।
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
Welcome back. It was a good quarter from Reliance Industries, led by growth in the O2C and the retail business. Revenues also crossed 3 lakh crore rupees for the first time. Sonal is here with the key highlights and what brokerages are making of it. Sonal.
Well, a strong set of numbers from Reliance Industries in Q1. Quarterly revenue topped 3 lakh crore rupees for the first time. These are the quarterly numbers that I'm talking about as well. Let's talk about some more numbers here because their EBITDA came in much higher. 54,067 crore rupees, which is higher both on a quarter-on-quarter and on a YOY basis. This is the consolidated EBITDA. What led to this? It was the oil to chemicals business that did really well this time, where the EBITDA came in at a 4-year high. Transportation fuel cracks were up 2.5 to 4.5 5.5 times. We saw other quarterly average middle distillate cracks also coming in at an all-time high. And remember, this is at a time when West Asia crises were at its peak, and there was an export duty as well on diesel and petrol. So the oil to chemicals EBITDA came in higher at 17,010 crore rupees, much higher on a quarter-on-quarter and on a YOY basis. Even the retail business did really well. Adjusted for the RCPL demerger, the gross revenues up 11.6%. And if we talk about the Jio business, where the company reported a double-digit EBITDA growth to come in at 15% on a YOY basis. Brokerages continue to be very sanguine. Goldman Sachs is a buy with a target of 1870, and they say that oil to chemicals is likely fared better than market expectations, despite the drag that we saw in terms of elevated crude prices, and Q2 outlook is looking more constructive. Also, the company is getting closer to commissioning their fully integrated solar PV and battery manufacturing plant. Nomura also has a buy rating with a target of 1690 rupees a share. They say record Q1 was driven by sharp improvement in O2C crack spreads, and retail margin recovery remains the key from here on. CLSA 2 has an outperform rating on the stock with a target price of 1800 rupees a share. EBITDA and profit after tax beat their estimates by 3% and 20%, and Q1 was led by strong oil to chemicals business, higher other income as well, and management is targeting doubling their retail EBITDA within the next 3 years despite the near-term muted growth. CLSA says the new triggers would be new energy ramp-up, resilient O2C retail recovery, and value unlocking in FMCG and media as well. Now, Macquarie also has an outperform rating with target of 1510. Retail EBITDA doubling target over 3 years provides long-term confidence to the street, according to them. Morgan Stanley also said Q1 was a beat on both quality and profitability. Now, execution in the new energy business continues to accelerate, and that is something that they'll be watching out for very closely. It's just not the brokerage. The management also sounded very sanguine. Mukesh Ambani, the chairman and MD of Reliance, said, "The start to FY27 gives me the reason to be optimistic about the year ahead as we move forward, with phase commissioning of new energy projects and unlock value through the Jio IPO."
Sonal, thank you for putting that together for us. A standard disclaimer on our screens. The company, Network 18, operates the CNBC TV 18, controlled by the Independent Media Trust, of which Reliance Industries is the sole beneficiary. From Reliance, we move on to the other big result reaction from the weekend. ICICI Bank emerged as the standout performer amongst all the major lenders, even as their fresh slippages inched up. But not just them, it inched up across all banks as well, largely due to seasonality factors. Ritu is here to summarize all of that. Ritu.
Well, the June quarter is in for India's 4 largest private lenders, and while they're all dealing with the same headwinds, the winners are becoming clearer. If you look at the big picture first, overall, ICICI Bank posted the best all-round print of the pack. Credit growth continues to outpace deposit growth at every bank. Corporate lending is also picking up across the board as bond market funding gets more expensive, margins remained under pressure, and fresh slippages have risen again. But most banks are attributing that to seasonal factors after a clean March quarter. Let's get into the numbers then, starting with profitability. HDFC Bank remains the biggest profit machine of the 4 by far in absolute terms, but growth is just 5%, which is the slowest in the pack. ICICI Bank's profit growth far healthier, rising 16%, while Axis and Kotak posted the fastest growth rates on paper, though on a smaller base. Moving on to the core income, ICICI Bank again leading the pack with NII growing almost 13%. HDFC Bank grew 6.7%, while Axis and Kotak reported single high-digit NII growth that trails their much punchier profit growth. On business momentum, though, loan growth remains stronger than deposit growth across all of these banks. ICICI Bank again leading the pack on credit growth. Axis growing pretty fast as well, followed by Kotak and HDFC Bank. Now, Axis is mobilizing deposits the fastest, while on the other hand, Kotak is the standout laggard on deposits with a growth of 12% year-on-year, but almost flat sequentially. Margins continue to be the pressure point. ICICI Bank is again the only bank that was able to expand its margins in the quarter. HDFC, Axis, Kotak, all of them reporting sequential compression, while Axis was seeing the sharpest decline. And finally, on asset quality, Axis is the one bank where gross NPAs rose the most. HDFC Bank ticked up marginally as well, while ICICI Bank and Kotak actually were able to improve. Fresh slippages again rose across the board, but this is more of a seasonal story. Overall, though, ICICI Bank clearly coming out on top.
Ritu, thank you for that update there. Take a short break. Back with more on the other side. Stay tuned.
negotiate an age ordered.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विथ मिल्क और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन
Welcome back. Now, thousands of students have gathered at the Jantar Mantar in New Delhi to protest the NEET paper leak and demand the resignation of Education Minister Dharmendra Pradhan. The protests, which have been underway for a month now, saw a surge in attendance after Sonam Wangchuk called for a march to the parliament. My colleague Shivani Bazaz was at the site and filed this report. Take a look.
I'm standing here in Jantar Mantar where thousands of students have come together to join the protest that was started by the CJP as well as Sonam Wangchuk against the paper leaks in NEET. And as you can see, these are not hundreds of students, these are thousands of students who have gathered here. And we spoke to a few students. They're not just from Delhi NCR. Students have traveled all the way from Rajasthan, from Gujarat, as well as from Chhattisgarh and Jharkhand to join this protest today. And hence we can see that the crowd has swelled up much beyond what we saw in the last 1 month. And there was a call to walk to the Sansad, to the new parliament building today. But the parliament is in session, hence the Delhi police had given a statement yesterday saying that walk is not permitted, there is no permission granted. So we can see thousands of students over here protesting and trying to walk to the Sansad, to the parliament, but the police has clearly denied that permission. There is palpable anger in the students, and as I said, these are not just students from Delhi NCR, these are students from all across the country. There are students who have travelled all the way from Gujarat and Rajasthan and Chhattisgarh just for this protest. And there is clearly a lot of anger that you can see in these students. There was a slight lathi charge over here when the students tried to walk towards the parliament today. Whether or not that permission will be granted today, we'll have to wait and watch. But for now, as I said, thousands and thousands of students have gathered at Jantar Mantar to show their solidarity and join the protest against the paper leaks and demanding the resignation of Education Minister Dharmendra Pradhan. This is Shivani Bazaz for CNBC TV 18.
Shivani Bazaz there at the location. Now, Indian space startup Skyroot Aerospace launched the country's first privately developed orbital rocket, a key test of national efforts to compete for a bigger share of the global commercial launch market. The Vikram 1 lifted off from the Satish Dhawan Space Center in Sriharikota, successfully injecting its payload into a 450-kilometer orbit about 15 minutes later, making India only the third country to achieve orbital launch capability through private enterprise. Now, with the launch of Vikram 1, India has become the third country with a private firm reaching the orbit. Now, in an exclusive conversation with my colleague Shireen Bhan, Skyroot co-founder and CEO Pawan Kumar Chandana said that India has the potential to become a global space leader. Listen in to what he had to say.
Now, we're not thinking in the direction because, we just reached orbit.
The next phase is to reliably reach orbit multiple times and then get to commercialization. The target to get to commercialization at scale. So I think it is going to take us some time. In fact, companies in the past have taken SpaceX is a almost 25-year-old company now, right? So you have to take that path of commercialization, and then I think maybe later on we can think in this direction. But right now our core focus is building more rockets, launching them reliably, establishing ourselves as a very reliable launch customer, launch player globally. The next year we want to ramp up the production so that it's difficult to tell at which point we'll get to one launch a month, but hopefully sometime next year we will. We're targeting to reach one launch a month.
Now, 16 years after clinching their first World Cup in extra time, Spain have done it again, beating defending champions Argentina 1-0 in extra time to lift their second World Cup title. Substitute Ferran Torres struck in the 106th minute to break Argentina's resistance. Argentina were reduced to 10 men after a late red card and struggled to create much through the game, failing to register a single shot in normal time. For Spain, it's a second straight international title following their triumph at the Euro 2024. Take a leave on this edition of Business Lunch from me and the team. Thank you so much for watching. The markets are recovering from the lows of the day because oil has come off the highs. Thank you so much for watching. Midcap Radar on the other side.
President, the sole power to...
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना. सॉरी सर आपकी ग्रीन टी.
थैंक यू दे. गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई.
अंडा सर्कल हाँ आया.
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का. उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया. शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था. सब मीठा मीठा था, गुड़ जैसा. कड़वा हुआ जब कोविड आया.
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं.
वो कहते हैं ना, हालात इंसान को रोक भी दें लेकिन उसकी सोच पे लगाम नहीं डाल सकते. उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया. अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा.
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है.
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है.
ए दया कौन है रे?
मैं है
सखू
हाँ
साहब बनेगा रे हमारा दया.
सर आपकी कॉफी विद मिल्क और सर आपकी ब्लैक कॉफी. सॉरी सर, अगर इस बॉक्स
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Vivek Iyer. We start the show with a big recovery in the markets from the lows of the day. Nifty is just 20 points off from the highs. Midcap index is up almost a 400-point and the advance decline ratio is in favor of advances. PSU banking index continues to support the Nifty.
That's right, especially when you're comparing the BSE, the PSU banking index with the private banking index, it's a sharp outperformance, especially in the last 10 days or so. The other important trigger is that oil prices have cooled off below $89, and that also has led to a bit of positive sentiment rub-off as far as Indian equities are concerned. But we have a lot lined up on the show, so let's start off with the top headlines. Market stages a sharp recovery from lows as Brent drops below $90 a barrel mark. Mid and small caps outperformers of the day, metals, pharma and PSU banks lead the charge.
Tattvachintan Pharmachem shares rally sharply. The specialty chemicals maker posts profit and EBITDA at a multi-quarter high. Margins expand nearly 400 basis points.
Canfin Homes slips despite reporting a steady first quarter performance. Concerns over softer growth and margin pressure weigh on investor sentiment. Management tells CNBC TV 18 it expects AUM growth of 14% in FY27.
Goldman Sachs initiates coverage on Sansera Engineering and Craftsman Automation. The brokerage believes both auto ancillary companies are diversifying into larger profit pools by leveraging their core manufacturing capabilities.
Turtle FinTech surges more than 7% after turning profitable in Q4 FY26 for the first time. The management expects to be fully profitable in FY27.
Okay, all right, those are the top headlines that we are tracking. The bigger headline, of course, is the sharp market recovery from the lows of the day, led by recovery in the Brent price from the lows of the day. And there is a Bloomberg report suggesting that Iran has received some proposals from unspecified mediators regarding the war with the US, and they said it in a press conference. So there is some update again, and Iran's interior minister will visit Pakistan today. So those are some of the updates coming in from the West Asia war negotiations. Brent has recovered from the lows of the day, and that is something which the markets are currently liking. As I said, Midcap Index is one of the biggest outperformers today, and Nifty too has come closer to the day's high. But this is our segment, Midcap Movers. Since we are seeing a major recovery there, let's go across to Ria to take us through the midcaps that are moving around in trade.
Well, absolutely. A lot of stocks moving around in today's trading session. Let's start off with the gainers first. We have Aegis Logistics on the gainers list. This stock has doubled just in the last 2 months. There's also Schneider Electric continuing its up run, up nearly 87% on a year-to-date basis. And apart from this, we also have Gabriel India, HSCL, as well as Newland Labs. And all three of these stocks have gained anywhere between 65 to 70% just in the last 4 months. So all of these stocks on the gainers list continuing their stellar up run. Also looking at some of the stocks that have hit their 52-week highs as well as their all-time high today. There's Aegis Logistics, Gabriel India, Himadri Specialty Chemicals, Naveen Fluorine, as well as Divi's Laboratories, all seeing strong traction and making fresh highs today. And on the flip side, looking at the losers in today's trading session, we have MTAR Technologies. Now, this stock, remember, has seen a phenomenal up run, up nearly 4 times just in the last 1 year. But we have seen some profit booking in this stock. It has corrected by nearly 30% since its highs in the month of June. We also have CE Infosystems on the losers list today, continuing its downtrend, down nearly 35% on a year-to-date basis. There's also HFCL, which is up nearly 200% in the last 4 months and seeing some profit booking today. And apart from this, on the losers list is also Gallant Ispat as well as eClerx Limited.
Well, thank you so much, Ria, for joining us and giving us a sense of all of the movers as far as the mid-cap end of the market is concerned. But from mid-cap movers, we now put the focus on Mid-Cap Spotlight. This is our special segment where we will be focusing on a couple of auto ancillary stocks. Sudarshan tells us what triggered the up move in Sansera as well as Craftsman Automation today.
So these two stocks have been seeing a sharp move in the last 2 to 3 months, and those names are Sansera Engineering and Craftsman Automation. So first, talk about Sansera Engineering. This stock has almost doubled in 2026. In the beginning of 2026, the stock price is hovering around 1650, and now it's hovering around 3400 rupees per share. Now, in the recent financial statement, company had said that order book is expected to reach peak annual revenue in next 3 years. And in FY26, ADS revenue, ADS is one of the biggest contributors in the non-auto segment. ADS means aerospace, defense and semiconductor. In FY26, revenue for this segment was rupees 315 crore. Now, company believes that in FY27, it will almost double and reach to as high as rupees 600 crore. Now, talk about the contribution to the total revenue. India forms 61%, exports form around 39%, auto ICE is petrol and diesel, forms around 62%, and non-auto contributes around 19%. And as I told you, in non-auto segment, ADS is the biggest contributor. Talking about the second stock, that is the Craftsman Automation. This stock is up 22% in 2026 and had seen a strong performance in 2026, FY26, where profit had almost doubled in all the three segments. And three segments are powertrain, aluminium products, and industrial and engineering. All the three segments had seen growth of more than 20% FY26. Now today, GS, that is Goldman Sachs, has come out with a note initiating coverage in both the names. For Sansera, target price is 4,130 rupees per share, and for Craftsman Automation, target price 11,600 rupees per share. What does it say? It says market has been looking at these companies cyclical auto parts manufacturers, but cohort of pioneering manufacturers across sector are embarking in a product mix shift and diversifying into larger profit pools that leverage from core manufacturing capabilities. And these factors have led them to raise the revenue and EBITDA growth estimates for entire auto parts sector. So for FY27, 28 and 29, they are expecting revenue growth in the range of 7% to 12%. And as far as EBITDA is concerned, where for FY20, they believe it can rise by 7%, in 28 by 26%, and in FY29 by almost 14%.
Okay, all right. Explains the move on these stocks. Thank you so much, Sudarshan, for joining us as always on these names. The recovery continues, so it's a good time to get Ruchit Jain from Motilal Oswal for a technical check on the markets. Ruchit, good afternoon. Thank you for joining us. Do you expect this recovery to sustain from current levels, or maybe we could build onto these levels? What are the charts suggesting?
Yeah, hi, very good afternoon. Well, on the index front, we have largely been in the range since last 6-7 trading sessions. On Friday session, we did see that positive momentum. But again, the market breadth was not supportive. But today, we can clearly see again at lower levels, good buying interest is there. So 24,000 has become a good support base for the Nifty. So till this 24,000 is intact, the charts are not negative, but rather range bound. So, it's a buy and dip market where as you get dips, is like we saw in the morning today, as we get closer to the 24,100, 150 zone, take that as a buying opportunity. The stop loss is below 24,000 as it has become a good support. So I think from here on, 24,000 to 24,500 would continue to be the trading range for the market. But yes, a lot of stock-specific opportunities can be seen as the broader markets are doing well.
Okay, Richard, thanks for view as far as the Nifty as levels are concerned. But in terms of individual trading ideas, what do you have for us today?
So a couple of recommendations on the long side. One is Bajaj Finance, which is looking quite good within the NBFC space. A clear high top, high bottom structure has started after a good consolidation phase. The price moves are getting supported by good volumes. So this stock, we believe, can continue its outperformance in the short term. With stop loss below 1,020, traders can go long for potential targets around 1140. And within the banking space itself, IDFC First Bank charts are looking quite positive over here on. The entire consolidation of last 2 to 3 weeks was there. The stock didn't even break its 20-day EMA. And now we are witnessing a resumption of the positive momentum with high volumes. The RSI is also hinting at a positive move. So IDFC First Bank, short-term traders can buy with stop loss below 79 for potential targets around 86.
Okay, take that point. Thank you so much, Ruchit, for joining us as always. So those are some technical trades that we are looking at. Numbers coming in thick and fast. We'll keep discussing the newer ones for you. Let's slip into a short break and get you more on the markets. We'll focus on Tatva Chintan Pharma. It is surging in an otherwise weak market. Stay tuned for that.
Welcome back to Mid Cap Radar. Well, the Pharma and the Healthcare Index is doing quite well in the session. Names like Dr. Reddys, Reddys Labs, some of the other healthcare names like Max Healthcare, all of these names are now trading near the day's highest point. But one particular company that's standing out today, and stock too, that's really doing well is Tata Chintan Pharma. It rallied after posting a very strong Q1. Sonal, you've been looking at the numbers quite closely. How do they look?
This is one company which disappointed investors, especially after a stellar listing. The numbers did not match up to expectations and the stock had not been doing well. But they have turned that around, and this quarter itself, these numbers have been very, very strong. It's a multi-quarter high EBITDA and profit number that we are talking about. Overall, their revenue growth has come in at 42%. Their EBITDA is up around 88% on a YOY basis. Margins have expanded by 500 basis points, leading to a profit growth of 142%. As I said, multi-quarter high EBITDA and profits. Look at the trend. They have continuously been improving their EBITDA number, and if the trend comes for you on the screen, you will see that the numbers have improved every quarter. Even with the profit number, there has been some volatility, but versus last year where they saw quarter1 numbers at around 7 crore rupees, they've now come in at 16 crore rupees. So there has been a continuous improvement, and the company says it is across the board. Their SDA portfolio has done well, and across the board other products, the demand continues to be very strong, and hence that big surge in numbers, and the stock surged actually ahead of numbers as well, but continued its up move.
Well, thank you so much. Almost 18.5% higher, just 1.5% to go ahead and hit the upper circuit. But we are now shifting focus to a CNBC TV 18 exclusive. We understand from sources that soft drink maker Coca-Cola has shortlisted 4 bankers for its India bottling arm, Hindustan Coca-Cola Holdings IPO. Let's go across to our colleague Rachna Dhanrajani to understand what she's picking up from her sources.
Well, and what could be the biggest listing when it comes to the Indian beverage space is the IPO of the Indian bottler of Coca-Cola. Sources tell us that Coca-Cola has picked 4 bankers for the IPO of HCCH, that is Hindustan Coca-Cola Holdings, the parent company of its Indian bottler, HCCB. The 4 names on the mandate are Kotak, Morgan Stanley, JP Morgan and Citi. And sources add that more bankers are likely to be appointed as the process moves ahead. Now, here's what's really interesting. Sources say the IPO is likely to be a full offer for sale, which means no fresh issue at all, and only the parent Coca-Cola would be participating in the sell down. Now, why does that matter? Because it fits into a much larger plan. Sources tell us Coca-Cola wants to become a minority shareholder in HCCH over time, offloading its stake gradually, and this IPO is just the first leg of that journey. But let's look at the shareholding. As it stands today, Coca-Cola owns about 60% of HCCH. The remaining 40% is held by Jubilant Bhartiya Group, which agreed to buy that stake in December 2024 for roughly 12,650 crore rupees. The deal valued the bottler at an enterprise value of about 31,250 crore rupees. Compare that with the valuation that's being talked about now for the IPO, which is around $10 billion, and you're looking at close to a 3 times re-rating in under 2 years. As for the timeline, sources say the IPO process kicks off in the last week of July, which has been preponed from the earlier timeline of first week of August is what we had reported. So the fizz in India's cola market is now moving to the Lal Street as soon as they can get there.
Okay, all right. Let's see when this fizz comes to the market. Thank you so much, Rachna, for joining us with all those details. So that's about an exclusive story. By the way, the markets are continuing their recovery from the lows of the day. A lot of stocks in the broader markets which are higher. So Nifty is just down 80 points right now. And the recovery, whether that sustains or not, is the big question next. We'll slip into a short break and get you more on the markets. We'll talk about some more stocks and earnings which are in focus. Stay tuned for that. Welcome back. You're still tuned in Mid-Cap Radar on CNBC TV 18. The broader markets continues to be a buzz with a lot of movers. We have Bansali Engineering, which is up 16.5%. Vectors, also after that big block deal that we saw in the last week, up move. That stock is up 13% as we speak. This month itself, Vectors is up around 20%. We do have other names, the likes of Lloyds and Enterprises. A lot of these PSU banks, PNB for instance, is up around 5%. We do have Bank of Baroda, which is up 3%. Vedanta has also made an up move. That stock is up around 3%. Bank Nifty is off 340 points from the lows of the day. A lot of action in the banking space. We do have Suzlon as well, which is higher in trade as we speak. So that stock is up around 1.5%. But there are some stocks which are buzzing on the downside as well. Yes Bank is one of them, which is lower in trade as we speak. We do have Campus Activewear, which is down around 5.5%. Some of these footwear stocks, they were buzzing in trade last week, but these have come in for some profit booking as well. Fino Payments Bank is the other one. You have AO Small Finance Bank. All these stocks are under a lot of pressure. CEAT also lower in trade. Remember, the company reported good set of numbers, weak set of numbers, my bad. But the downtick continues on that number as well. But we do have a lot happening in the financial space. Ananya is joining us now. She'll talk about Canfin Homes. We have Poonawalla FinCorp as well, which are on our radar. Ananya, take it away.
So, well, yes, Canfin and Poonawalla both are under pressure today, but for different reasons. Let me first start with Canfin Homes. If you see the reported NII growth of 18%, a PAT growth of 20%, they look good. Better margins, strong asset quality. Yet the stock slipped as investors focused on more slower 11% loan growth and weaker disbursement growth here. Now, speaking to CNBC TV 18, today management said that the slowdown was largely technical, driven by higher runoff, quarterly reset loans and temporary e-khata issues. Now, it also highlighted rising ticket sizes in Bangalore and Hyderabad and also rising construction costs here, while retaining its 14% AUM growth guidance, 3.75% NIM guidance and 10 basis point credit cost guidance here. Now, importantly, despite Q1 typically being seasonally weak, SMA1, SMA2 and the overall stress pool declined sequentially here, which the management highlighted, offering comfort on the asset quality here. So the management sounded very confident today. Now, coming to Poonawalla FinCorp, they delivered an even stronger quarter if you see, with AUM growing 63%, NII up 87% and PAT nearly quadrupling, driven by margin expansion, lower credit cost and healthy asset quality. Now, your management also reiterated its long-term growth guidance of 35 to 40% AUM growth backed by gold loan expansion, new products and AI-led efficiencies here. Yet, despite the strong operating performance here, the stock is under pressure because expectations had already run very high after the recent rally. Now, investors were looking for a meaningful guidance upgrade here, but the management largely maintained its outlook and valuations also here already rich. The results ended up triggering profit booking rather than fresh buying here.
Well, thank you so much, Ananya, for joining us, giving us a sense of two important numbers or two important results that came in from the NBFC pack. But another stock on the radar is IOB. Now, that particular stock's doing quite well after a strong set of Q1 results that came just a while ago. Ananya, have you had a chance to see it? Can you break it down for us?
Well, yes, a solid quarter delivered by them. NII up 34%, operating profit up 14%, and net profit surging nearly 50% YOY to 1,659 crore. But the real story is a sharp improvement in the quality of the balance sheet here. Now, gross NPA has fallen to just 1.33%, while net NPA is down to just 0.18%, showing that the bad loans continue to decline here. Now, at the same time, fresh stress remain under control with NPA provision of only 106 crore and total provision stayed comfortable at 834 crore here. Now, what's also reassuring is the bank's conservative provisioning. It has a 97.7% provision coverage ratio, meaning almost all of its bad loans are already provided for. On the top of that, it continues to hold 2,150 crore of forward-looking provisions for the upcoming ECL ECL framework. It also carries another 863 crore of contingency provisions for COVID restructured and natural calamity related accounts. So even legacy stress assets are well protected. Under IBC, the bank has already provided 99.68% against admitted IBC accounts. So that means there's a very little residual risk left from old corporate bad loans. So all in all, a very healthy quarter for IOB.
Okay, take that point. Thank you so much for joining us with all those details, Ananya. That's about IOB, but a lot of stocks in the broader markets which are buzzing. So let's take a look at some of these names. We have SP Apparels, which continues to trend higher. And as we speak, the advance decline ratio is getting further in favor of advances. Torrent Pharma is the other one. We have been talking about pharma stocks. The other one is Oil India. Oil India, on the back of the surge in crude oil prices, is higher by 4%. We have Gujarat Fluoro, which is up around 4%. We'll of course talk about Shyam Metallics in just a bit on the back of those strong numbers. But overall, it continues to be an up move in the broader market space. You also have some stocks which are buzzing in trade on the upside or on the downside, Vivek?
Well, that's right. Have a look at Shyam Metallics. Shyam Metallics, they just came out with their numbers a while ago. Nigel has, sent out what exactly he's making of it. So number one, remember, it's a good set of numbers. Stock is now trading near a fresh 52-week high. Revenues on a year-on-year basis has jumped up almost 23%. EBITDA has jumped up over 32%, and margins have improved both on a year-on-year as well as on a sequential basis. On a year-on-year basis, up almost 100 basis points. Sequentially, up close to 20-25 basis points, which is a positive read-through, indicating that realizations were quite strong in the quarter gone by. Despite higher finance costs of, finance costs almost doubling, profitability has jumped up by 21%. And another important thing, or another important development that the street would be watching out for, would be the fact that the board has gone ahead and approved a fundraising plan of close to 4,500 crore. Now, this particular fundraise could be done via the QIP route. So it'll be interesting to see, what is the timeline of this particular fundraise. We'll assume that this particular fundraise will be done for a little over $1 billion capex plan that the company has outlined as far as its FY31 targets are concerned. But it's an important development nevertheless. And Shyam Metallics, that particular stock in the broader end of the markets, up over 5%.
Okay, all right. That's about Shyam Metallics. The stock continues to edge higher. The broader markets, they are, of course, in focus. We do have the small cap index, which is also surging in trade today. So let's just take a look at, this is mid cap index, of course, at the day's high. There's a massive recovery from the lows. Even the small cap index has made a move from the lows, and it is up around 0.3%. If we talk about some numbers which were just reported, there has been a positive impact. IOB, for instance, is higher in trade. We do have HOEC, the other oil and gas producer, which is higher. This is a private one, so that one is seeing gains of around 3%. A lot of action in the chemical space after Tatva Chintan Pharma reported its numbers, and Naveen Fluorine, you have Lakshmi Organic, all of them are surging in trade. But with that, we are completely out of time on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of the market, we started seeing that recovery coming in from the day's lowest point, right? So, at one point of time, we were at the 24,140 levels. We have seen a spike up coming in from those levels. Now, we're moving up more towards, the day's highest point, 24,255. Around that mark is what the Nifty is trading at. Let's look at the Bank Nifty because we saw pressure coming in on a Bank Nifty in the morning. So as of now, not much of a significant recovery like we're seeing coming in for the benchmark indices, but we are seeing some bit of that recovery coming from the banking side as well. Banking was that underperformer. We had a whole host of banks that reported their numbers over the weekend as well. Now, obviously, slight bit of a recovery there is something that is supporting the up move in terms of the Nifty 50 as well. So yes, that's what we're keeping an eye out on in terms of the market. Broader end of the market continues to do well. We have ICICI Bank, PNB, SBI, Bank of Baroda on the banking side, which are holding on to gains, while Axis Bank, HDFC Bank on the flip side are under pressure. Nifty mid-cap trading at the day's highest point as of now as well. But let's get started with all the stock-related queries that you all have sent us. And to do just that, we have our experts joining us. Today we have Ashish Kyal, CMT, author at Wave Strategy Advisors, and Gaurang Shah, Senior Vice President at Jio Financial Services, to answer all the stock-related queries. Gaurang as well as Ashish, good afternoon. Thank you so much as always for joining us on the show. Let's get started with the first query for today. We have this who's coming in from Prasad, who's writing to us from Hyderabad. This one is on Kotak Mahindra Bank, holding 1 lakh shares of Kotak Mahindra Bank, prices 381 rupees per share. The future prospects of his investment, should they continue to hold this for the long term? Gaurang, afternoon. What's your view on Kotak Mahindra Bank?
Thank you, Vinny, first of all, for having me on the show. Good afternoon to all the viewers of CNBC TV 18, to you and to my good friend Ashish Kayal as well. Now, Vinny, I am a little bit perplexed with the quantity. I hope that this was not a trading kind of a position which has been converted into investment because of loss. So point number one. Point number two, never ever expose your investments to a particular sector or to a particular company in a sector, because that is, over leveraging and exposing yourself to risk. On the fundamental side, last week, Saturday, we saw numbers unfolding for Kotak Mahindra Bank and other banks, HDFC, ICICI, Axis, PNB, Yes Bank, etc. And because of the numbers were a little bit shade below than what the street estimates are, we see a correction, and from lower levels, the stock has recovered today. I believe that was one-off. As a disclosure, and let me give a small disclosure as well, that all recommendations that I'll be sharing with you on your show, Vinny, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Jio or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, absolutely, but we share similar investment ideas with our clients. They might have their investment interest. So first of all, hold on to it. But the quantity and what we don't know, Vinny, is that whether this investor gentleman has any other investments in equity. So that's a little bit of, skewed kind of a scenario, but we have a fundamental positive coverage on Kotak Bank.
Okay. Fundamental positive coverage on Kotak Bank. As of now, the buy price and the stock price is around the same levels itself as well. But Ashish, afternoon, what's your view on Kotak Mahindra Bank as well, right? The quantity is really large, like Gaurang is mentioning as well. Numbers came in. What should the view do?
Afternoon, Vinny, to you, Gaurangji, and all the viewers. If you look at Kotak Bank, just a quick disclaimer, we do have holdings in Kotak Mahindra Bank right now. And overall, we can see that the bank has underperformed if you compare it with Axis Bank or ICICI Bank. But I think that underperformance should end soon. And the prices, once it manages to break above that 393, 400 mark, we should start seeing some positive traction from here on. So suggestion would be to continue to hold here. On the downside, maintain a stop loss of around 360 levels. And on the upside, I think the stock should again touch the levels of around 450 in the near term.
Okay, we'll keep an eye out on those levels over there for Kotak Mahindra Bank. Let's move on to the next query for today. This has come from Ramesh Rajagopalan, who's writing to us from Kerala. He's holding 12,800 shares of NHPC. This is at a price of 74 rupees per share. The other one is 2,130 shares of ITC Hotel, which is at a price of 190 rupees per share. Now, wants to know NHPC as well as ITC Hotels, should they continue to hold both the stocks, or should they book out from this one? Now, for ITC Hotels, they're making a loss, while for NHPC, they're making some bit of a profit. Gaurang, your view on the fundamentals for both the names?
So, Vinny, we are positive on the power sector as far as NHPC is concerned, but that is not something that we have coverage on. So, no specific comments. But if you're really looking at power from a long-term point of view as a sector to get invested in, then our sense is that there are better names to look at. Names like Tata Power, NTPC. These are the two power generating companies on which we have a positive coverage. And I think these would be the beneficiaries of the additional capex that is coming up in terms of new power generating capacities. So I would rather advise Tata Power or NTPC. For ITC hotels, again, we are positive on the sector. Indian hotels is something that we are positive on. And the sense is that the tariffs, occupancy, banquet, and F&B, these are going to translate into a lot of positive over the next couple of quarters. So the sector is very positive. Indian hotels is what we like. ITC hotels, no specific comments, but this is also a strong player in this particular segment.
Okay. That's a view there coming in on both the sectors from Gaurang. But Ashish, what is your view? NHPC and ITC hotels, does it merit holding both these names? NHPC slight bit of a profit. So would you say just get out of this one, maybe look at some other name if you want to play that power story? And for ITC hotels, what's your suggestion?
See, if you look at NHPC, the stock made a low of around 72 rupees in the month of March 2025, I'm talking. And since then, it has been consolidating. So that's a year long of consolidation already that has happened in the stock. I would not suggest to be out from here because this looks like a possible accumulation at these levels. And once the stock breaks out, it will start trending in a very in the form of a third wave, which can be very strong. So suggestion would be continue to hold NHPC. On the downside, the support for the stock is at around 75 rupees. And on the upside, we can expect the target of around 90 and possibly higher from a longer term perspective. As far as ITC hotel is concerned, we can see the stock is down by nearly 3% in today's session. Over the past 3 days, there is some kind of a selling pressure, but hold on to the stock here. The support for the stock is at around 150. And on the upside, once it starts reversing and closes above prior day high, we will have a confirmation of a positive reversal on a shorter time frame. And then we can expect the stock to go towards the level of 210.
Okay, point taken there. Ashish, let's move on to this next query from ITC Hotels. Moving to ITC now. We have G. Krishnamurthy, who's writing to us from Chennai, holding 286 shares of ITC. This is at a price of 455 rupees per share. Wants to know what they should be doing with this one. Should they look to average at current levels? Gaurang, your view for ITC?
A large cap player in the FMCG sector, and of course, because of the cigarette, tobacco, and tobacco product business and the upward price revision, there has been a little bit of pressure, but we believe long term it's a good investment idea because of the diversified business that contributes to the balance sheet of ITC. Two things. First of all, stay invested. The investor is also asked whether he should average. I believe my friend Ashish is better placed to answer this, but my sense is that if you want to average, I think somewhere close to about 260 or sub 260 level would be a comfortable zone to average ITC, but hold and average at lower levels.
Okay, hold and average at lower levels. Ashish, over to you to give us those levels. Is averaging a good option on the technical front, and what is the level that they should look to average at then?
Absolutely. So if you look at the Nifty FMCG sector index, which is currently trading at around 49,000. So Nifty FMCG index showed a good up move in the month of April. From there, it has now corrected in the form of 3 waves. That shows that the fall is only corrective and the major trend might have turned on the upside. I think the FMCG sector is going to lead Nifty higher from here on. So given that ITC cannot be a laggard in that kind of a scenario, ITC has shown a triple bottom pattern with a positive divergence on the indicators that suggests that the overall downside move is weakening and we are possibly reversing back on the upside. So my suggestion would be one can average at on dips towards the level of around 275, 276. And on the upside, I think the stock has a strong potential to even cross 325 and eventually head towards 350 levels. So hold on to your positions. The stop loss on the downside can be around 260 and on the upside 350 can be the target. The risk reward also looks appealing at these levels.
Okay, let's move on then to the next query for today. This is a investment query actually coming in from Bala Subramanian, who's writing to us from Bangalore. Bala, thank you so much firstly for always turning on and tuning on to your stocks and sending us your queries as well. We appreciate that. But the first query is on Apollo Microsystems and Shriram Finance for the short term. So is this a good one to look at right now in both these spaces? Is this the best pick? Gaurang, it's a short-term query. But the defense side, when you look at Apollo Microsystem, it's already run up 100% in the last 1 year. Does it merit looking at it for a short term?
So, Vinny, defense is not a short-term play because of the complex product, high technology, precise engineering, and the time taken to execute the order book. It's not like, companies like Apollo Micro or Bharat Dynamics or Hindustan Aeronautics getting orders and they're delivering it in 24, 48 hours or maybe 2-3 months. These are very precise products made for armed forces and they take time to get executed. First of all, they have to make a prototype, get it approved through various tests, and then the mass scale production starts. So defense don't play for short term. Long term is something that we are extremely positive on the defense. We've got lot of companies in the defense related sector to invest in. As a disclosure, Vinny, Apollo Microsystem happens to be in our coverage. Long term, by definition, in defense is at least 2-3 plus kind of time horizon. If you actually want to reap the benefits of your investment, if you eventually decide to invest in defense, Shriram Finance, again, one of the stronger NBFCs play. And I think the numbers for the quarters gone by have been much better than what we had estimated, Vinny. So both are buy, but long term.
Both are buy, but a long term. These are not short term plays. I beg your pardon. And Ashish, what's your view coming in as well? Should they look at both these stocks for the short term? If you could give us both targets, short term and long term.
Sure. So if you look at Apollo Microsystems, the stock has a very important support, which is lying near the level of around 378. So my suggestion from a short-term perspective, use 378 as the stop loss level. And on the upside, the targets will be around 440. That's a short-term trade one can take. But there is a possibility the stock can even move eventually towards the level of around 550 on the upside from a little longish period. So Apollo Microsystem right now hold with the stop loss given. Shriram Finance, just a quick disclosure, we do have holding in Shriram Finance as well. And the stock is forming a triangle pattern over the near term. The support or the stop loss for the stock can be placed at around 1005, which is the lower end of the triangle. And on the positive breakout, we can expect the stock to move towards the level of 1100. Eventually, on the weekly timeframes, I think the stock will outperform and should head towards the level of around 1300 and possibly higher.
Okay, we'll keep an eye out on those levels over there, Ashish. But on that note, viewers, we're going to slip into a very short break. After the break, we'll come back and answer more of your stock-related queries. Stay tuned in.
Exchange.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back to your stocks in CNBC TV 18. A quick check in terms of where the market is. Right now, 24,250, around that is where the Nifty is trading at. That's where we started the show as well. But Bank Nifty, pull that up, inched up further more also. Yes, still down 0.7%. But if you look at it from the day's lowest point, at 1, you started seeing that up move coming in. And right now, also Bank Nifty is also continuing to trade near the day's highest point. So 0.7 and 0.8% of decline still for the Bank Nifty. But nonetheless, is managing to do well. Those are the names that you can see which are supporting the up move and the downside for the Bank Nifty. But obviously you had a whole host of earnings that came in as well, but a recovery that we're seeing coming in there. Let's keep it going then with your stock related query as well. The next query for today is coming in on from Siddharth K, who's writing to us from Bihar. He's holding 1,214 shares of IRCTC. Price is 669 rupees per share is what he's bought it at. So he's making a loss on this one. Wants to know whether to continue to add or book his losses. IRCTC, Gaurang, a play everyone was talking about in terms of the tourism side, the railway side, then does it merit holding this one for the long term?
So Vinny, we used to cover IRCTC, our targets were in place, and then we have dropped the coverage because we thought that railway-related stocks could underperform going into the future. And that's what exactly happened. I think it's been almost a year or more than a year that railway-related stocks have been underperforming. There was a time, a couple of years back, when they were outperforming. But now I don't think there is going to be a lot of excitement. And since the investor has asked the question whether he or she should book a loss and then move on to something else, well, if investor or the viewer wants to make a shift from IRCTC and look at something else, Vinny, we were discussing defense with respect to Apollo Micro. And one investment idea that we have from the defense pack is BEL, Bharat Electronics Limited. Continuously, the order book is going up. It's growing strong. And the balance sheet is going stronger because of the execution of that order book. And my view is that the defense pack should perform very well. So it can shift to BEL, provided the investor is willing to do that.
Okay. Can look to shift also is a suggestion that comes in here, given that Siddharth, you're asking us whether you can book your losses. Ashish, on the technical front, what would your suggestion be? Book losses or maybe even average, given that it's below the buy price, but they are either asking book losses, add, what would you suggest?
See, I would not recommend to add at the current levels also, because the stock has been underperforming since 2024. There are no signs of recovery even now. And after forming a high at 575 in the month of May, it has again come down sharply. So maintain a very strict stop loss. The stop loss is going to be at 493. If the stock breaks that 493 level, the low of March, then there is further downside to be seen. As of now, hold, but with a very strict stop loss, or maybe switch over, like Gaurangji said, it's better to be switching over at the current levels. On the upside, I'm not seeing much potential.
Okay, better to switch at the current levels. That would be a better bet right now. And if you're keeping it also, then stop losses are going to be important. That's a word coming in from Ashish as well. Next query for today, we have S. Jaikumar, who's writing to us from Krishnagiri, Tamil Nadu, and he's holding 30,000 shares of Tata Teleservices. Price is 44 rupees around the buy price. Right now, the stock is trading at 40. So they're making some bit of a loss. Should they look to average at current levels? Gaurang, this is not a stock that we normally talk about, or, we have a lot of queries coming in the past. What's your view on this one?
This one is rather a trader's favorite, Vinny, if you will. Fundamentally, I don't see any kind of positivity as far as the operationality is concerned. Point number one. Point number two, if you really want to invest in a telecom service provider related stocks, then there are a couple of investment ideas from our side. First of all, Reliance Industries, because of Jio Mobility business. And of course, there is news that could be hived off and listed as a separate entity, unlocking value. Second investment idea is Bharti Airtel. Third one related to telecom is Tata Communication. And the fourth one would be Indus Tower. So there are better plays, Vinny. I don't think Tata Tele would qualify as a telecom service provider. And more importantly, like I mentioned, I hope, looking at the quantity, Vinny, I hope this is not a trading bet turned into investment.
Absolutely. Hope it's not a trading bet turned into investments. But, thanks for the suggestions. There are other names to play the telecom story rather than Tata Teleservices. What's your view coming in on this one as well, Ashish?
So I would recommend it's not even a trader stock because it has moved very erratically. It even breaks the support, then goes up. So it's best to be out from here. It has already broken the prior low of around 41 rupees and trading below that in today's as of now. So be out of Tata Tele. And maybe for a reversal bet, look at Bharti Airtel. That looks much more better than Tata Tele at this point of time.
Okay, better names that are coming in here. Bharti Airtel comes in from both fundamentals and technicals. Better to get out of the stock. That's a suggestion coming in for you as well. But let's move on then to the next query for today. And this is coming in on TVS supply chain. This is from Elango, who's writing to us from Chennai. He's holding some shares. He's not mentioned the exact quantity of the shares of Tata supply chain. Price is 118, making a profit on this one. Asking if he should sell the shares at current levels. What's your view coming in on this one, Gaurang?
So again, not a stock which has been a performer. Correct me if I'm wrong. Possibly Ashish will be able to throw a little bit more light. But if you're looking at the logistic related sector, Vinny, then I believe we have coverage on something like delivery. But the logistics sector, again, Vinny, is going through a lot of erratic moves depending upon the news flows, etc., etc. But if you have to look at logistic, then delivery is something that we are positive on.
Okay, the delivery is something that you would look at instead if the logistic play is what you're watching out for. But let's look at the numbers at the bottom of your screen for you all as well. This is Ultratech Cement, which has reported its numbers. Net profit coming in at 2,600 crores approximately. CNBC TV 18 poll was at 2,453. Margins for the company have seen in line, largely in line. 20.4 versus 20.2 was the poll. So slight bit improvement there as well. Profits are surely better than what we were expecting. Revenue, let's look at that number as well. Our expectation was around 24,440 crores. Revenue is coming at 24,640. It's a slight bit better in terms of that expectation on the revenue front as well. EBITDA is at 5,016 crores. Poll 4,934 crores. Obviously, we'll keep an eye out on those volumes, realizations, all those details, and as well, we'll try getting Nigel also to talk to us about that. But as of now, the stock is up around 1.8% in the trading session as well. So let's watch out for that. Seems like it's a bit of a beat coming in here. Will be interesting to see whether this is something that is going to go from here on. Do we have Nigel ready with us?
Yeah, a good set of results, Vinny. If I just have a initial look at it, the revenue number is mildly better than what we are working with, but the volume number that's at the bottom of your screen, that's encouraging. The street was in this vicinity of around 10 to around 12%. It's coming at around 13.1%. I'll tell you what, at that sort of a scale, when you grow at by 13%, the street will like it, which effectively means Ultratech has outgrown what the industry has done. Remember, even India Cement, which has come into their fold, it grew more than twice of what the industry is growing, grew at more than high teens odd. So Ultratech Cement's prima facie, looking at it, the top line is a beat, the margin performance is mildly better, but that's encouraging because in a quarter where you had input costs that were spiking up a little bit, that's encouraging as well. So pretty good going on Ultratech Cement. Volume numbers, what we have got, remaining numbers are flashing for our viewers on the screen. I'm just trying to pull out some commentary, to see what else do we have with regard to this. But nonetheless, this number goes down as a beat. The big boy has delivered. Prima facie, it looks very, very good. I think they've announced that, they've delivered a strong start to FY27 with broad-based growth is what they're looking at. So that's good. I don't think we have any, Vinny, do you have any kind of outlook that they have given? Their capacity utilization levels stood at around 81%. So that's good as well. The operating EBITDA per ton, I'm just looking at that. It's coming at around 1,214. That's the number that they have given. That compares with around 1,198. Any kind of increase is something that the street would like, and that's precisely what's happening. So the operating EBITDA per ton comes in. The company says they continue to focus on the cost discipline as well as on the execution side as well. So, that's the reason why these numbers go down as a beat. So just to sum things up, top line a bit of a beat, margins a little bit better, volume growth of around 13%. That's a little bit higher than what the highest estimate was working with. So thumbs up. We'll continue analyzing these numbers. I think for the time being, Vinny, you wrap up on the show, and then we'll take the action forward.
Absolutely. On that note, at Ultratech trading at the day's highest point right now for you all. Good number beat coming in there. Nigel, thank you so much for that. And Gaurang as well as Ashish, thank you so much for helping us answer all those stock-related queries as well. And viewers, do send us your queries. We'll get them answered on Monday, Wednesdays and Fridays on your stocks only. But up next, we have Closing Bell to take you through all the action.
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था।
Beyond market headlines, to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Now down about when it started off in early trade, it was up almost 1%.
And the star in the performance was the oil to chemicals business.
Back on the table at 90, that is Brent oil.
Now, asset quality remained one of the best in the industry.
24,234 is where we are at as far as market open is concerned.
Be very, very careful on the promoter whom you are betting and their governance style.
CASA is one of the key areas which we have been focusing on to improve our ratio. The moment we cross 77-78%, we will look for some good growth happening in the deposit.
ये मानसून सत्र आरंभ हो रहा है
100 points lower on the frontline index, led lower by some of the big banks.
So we do have a recommendation on EU small finance.
The dollar is as strong as last week. It has not strengthened even further.
Big recovery in the markets from the lows of the day. Nifty is just 20 points off from the highs.
Well, markets are off the day's high. That is the situation, and that was the day so far. This is Closing Bell. We're coming to you from the CNBC TV 18 Motilal Oswal studios. It's also a big earnings day, and lots of Nifty company earnings reactions in focus. Ultratech just reporting about 15 minutes back. I am Prashant. With me, my colleagues Rima and Nigel. Guys, hi. Afternoon.
Hi, afternoon. Brent crude prices have recovered.
Yeah.
In the morning, Brent crude was $90 plus, and now as we speak, it's at $88 and less than that, in fact. So that explains the recovery that we've seen on the Nifty. The Nifty low today was about 24,140, and from that level, we've seen a recovery of more than about 100 points. Sorry, what did I say? Sorry. And Brent crude prices have fallen from 90 to 88, so that helps.
Well, that's right. And a couple of earnings reaction looking good. Ultratech Cement, those numbers look quite good because the volume growth has come about at around 13% or thereabouts. The consolidated volume growth is around 12.2%, and the grey cement volume as well is higher. They've also gone on to mention that their on course end of this year, wire and cables business foray, that's definitely going to be there. So that's the other data point. We'll analyze it in just a bit. For the time being, the big boy has delivered. The numbers go down as a beat.
Okay, the Nifty Bank still continues to remain under pressure, 500 points lower. But that said, it's also managed a recovery from the intraday lows. Axis Bank, HDFC Bank still nursing a cut of close to about 5.5%.
Market breadth is positive. About 1,800 stocks are higher and about 1,500 stocks are lower at this point. And actually, it's a pretty vibrant looking screen across the board in the broader space. And we'll talk about many of these individual single stock movers. Tattva Chintan will be in focus in a bit from now. Viatech Vabag is a big mover. There is a 6% pop coming up there. Some of these music, Tips Music, and there is a Sare Gama. We put out the story on Z Entertainment on Friday. Closing bell last hour on Friday, saying, well, Z, at least, the company thinks that the music business there is valued at 6,000 crores. I'm not sure the reaction on Tips and Saregamas, etc., is in response to that. To that, the SG Mart is up 4.5. Lots of stuff, individual moves as we see it. So that's going to be the focus here. Of course, bank earnings. Big moves, at least on the Nifty, both the biggest gainer, the biggest loser from that space. Well, Mitesh is with us. How should you position yourself in the last hour? Mitesh, good afternoon. Good to have you here. I think the dip's been bought, but we're still down about 90 points. What would you recommend?
Good afternoon, Prashant. See, on the index, the key here was the Bank Nifty surviving above 58,450. And now, while the PSU banks have done well today, they are still showing follow-through. I think the private sector banks are slightly subdued and the Bank Nifty has failed to give a breakout. So while we have a long bias, we're not buying the index right now. But yeah, I think, in case you get a trigger on the Bank Nifty, I would then, buy both the indices, the Bank Nifty, if it starts getting past 58,450, 500, and then the Nifty. I believe that the trigger on the Bank Nifty could occur before the Nifty, and that would be a signal to buy both the indices. Having said that, I have in fact 2 PSU banks on my trading recommendation list. PNB has broken very nicely above its previous highs. The setup is quite positive. So buy here with a stop below 109.9, 109.8. And look for a target of 115 to about 116. And State Bank of India, that's SBI, is also buy with a stop below 1,046 half and a target of 1,090 to begin with. Can be looked at.
Okay, got it. Thanks a lot for that, Mitesh. Well, let's focus on a couple of other numbers then. Shyam Metallics, that stock has made a fresh 52-week high in today's trading session, and the numbers look pretty good. So let's run you through a few of those numbers then. The revenue growth has come in higher by close to 23%, which is encouraging. Remember, they have been focusing a higher amount on value-added products as well as ramping up capacity utilization levels. And the EBITDA number is gradually moving up. Now, on an EBITDA per quarter basis, they have headed to around 765 crores, which is encouraging in itself. And if you look at it in percentage terms, the margins have moved up a little bit in a quarter actually that was quite challenging. So the margins holding or even, around that 14% odd, that's something that the street has taken very, very positively. And a sequential improvement in the margins is encouraging as well. So that's why, because of the margin beat, I think the street has taken that positively. What could have played out? They had some low-cost inventory with regard, to iron ore as well as coal. There is some backward integration that's taking place. Operating leverage is playing out. And also they're looking at higher amount of value-added products, which explains why those margins are holding at around 14%. The profit number as well has popped up. But the street is waiting by to understand what are they going to do with regard to this approval that they have taken. Is it just an enabling resolution that they've gone ahead and taken an enabling resolution to raise money via the QIP route or other equity raise to the tune of close to around 4,500 crores? Just to alert our viewers, they have a very, very ambitious plan. They're talking about $1.1 billion of capex over the next few years. Shyam Metallics goes down as a beat. The street gives it a thumbs up. And that's why, in fact, the stock has made a fresh 52-week high. Keep in mind, it's now a 30,000 crore market capitalization company. So it's not very, very cheap on a trailing basis. But the street believes that they're gradually going to scale up this EBITDA from around the 2,300 crores all the way to around 6,000 crores. That's the vision. Getting there is going to be important. Let's get in Deepan Mehta then. Deepan, hi, good afternoon. Shah Metallics, came out with an IPO at around 306 rupees, I remember. Then you saw a bit of a pop and then markets went into a bit of a tizzy. You got the IPO price again. From that IPO price, the stock is up close to 3 times. Their delivery has been pretty good. But what's your view? 30,000 crore market capitalization isn't cheap for a company that's doing around 2,500 crores of EBITDA. Your view?
Yeah, Nigel, good afternoon and thank you for having me on your show. I saw your interview also with the Shah Metallics management. I think they were sounding very aggressive and I think they were strategically expanding and diversifying into new product lines. So from that point of view, I think certainly a company worth watching. But look, I think valuations are on the higher side. Typically, it's a commodity business and you have to be a bit careful to get the cycle right. So I think rather than chasing the stock on an upswing like this, better to wait for a correction. In any case, I think that the kind of upswing in end product prices, which we have seen for a whole host of ferrous and non-ferrous metals, there should be some softness over there. And you could see a downturn in the entire commodity industry. That's my assessment. I could be wrong. I think when the industry itself is down and a little bit of distress is there, that's a good entry point rather than chasing the stock at these levels.
Deepan, what about the private sector disappointments today and Axis Bank, HDFC Bank? We were chatting with the CLSA banking analyst and his view is that the market's obsession with the NIM compression visible in the current quarter is a mistake. Because along with the NIMs, we've seen a decline in the operating costs. And the reason the NIMs came down is because these companies, these banks are lending to AAA, very strong corporates. Would you agree with that assessment? In his view, is this dip is a buying opportunity?
See, Rima, I thought the banking results were better than what we expected because we didn't expect them to be as good as this also. And I've consistently maintained that the entire banking industry is a red ocean. And these record high, I mean, the NIMs we have in this country amongst the highest in the world are just not sustainable. And the minute the bank tries to improve the net interest margin, the lending quality deteriorates. So it's a very fine balance which not all banks are able to traverse. So I would say that, sure, I think the one big trigger for the banks next 2 quarters would be the FCNR deposits. That certainly should improve the NIMs, it should help them grow the balance sheet and sustain the lending. But look, 2-3 years down the line, I think that is going to be even more competitive and these NIMs are just not sustainable. And at the same time, we cannot expect that the credit costs will remain so low. I think these are the ultimate blue sky scenario for NPAs that cannot last forever. So I'm a bit circumspect, medium to long term for the banking industry. Short term, I'm not that negative because as I said, I think a big trigger is this FCNR, which will provide a boost to profitability in September quarter and December quarter as well.
Should, in varying degrees should show up in various banks out there. They will stay with us. Tattva Chintan is, I think, limit up, locked up 20%. They reported a strong first quarter set. And Sonal is here with, of course, the numbers which are strong, but what else? Sonal, take it away.
Good numbers reported by Tattva Chintan Pharma, and this is coming after quarters of underperformance by the company. Overall revenues were up 42%, EBITDA also increased 88%. The number came in at a multi-quarter high for the company this time around. Margins were up around 500 basis points at 19.5%, and profits were up 142% as well. If you look at the EBITDA trend, the company has been continuously improving on EBITDA, and that led to a record high number this time around. Profits also worked in the same fashion. They were volatile and dipped in the quarter gone by, but then there was a recovery in quarter one, and that is what the street seems to like as well. If we talk about the valuations of the entire chemicals universe after this number that we got from Tattva Chintan Pharma, most of them are different in terms of their product profile. But let's just take a look at what Sumitomo Chemicals is trading at 35.5 times. We have Sudarshan Chemicals, which has more pigments and commoditized products at 19.8 times. Jubilant Ingrevia is trading at 26 times. Tattva Chintan Pharma has been trading at around 30 to 32 times in the last couple of years. Balaji Amines at 27. The pure alkyl amines is trading at 50 times. You have Deepak Nitrite and Lakshmi Organic. So these stocks are not trading at premium valuations, but they are not very cheap too. But the outlook in the commentary has been quite strong. Specifically from Tattva Chintan Pharma, they will achieve 25 to 30% revenue growth guidance. They will maintain 20 to 22% EBITDA margin. They did see some pressure because of supply concerns, but they expect it not to impact them in FY27. And customer demand also remains highly strong across their product profiles. So good commentary and good numbers is something that the street seems to like.
All right. Thanks very much for that, Sonal. And interesting comparison there with regards to valuations. Deepan, do you like anything in this space? Actually, I mean, you can name your pick, but Sumitomo, again, I think they've committed to invest, I think, about 1,500 crores here to expand the manufacturing base. I think the management was there when the Japanese Prime Minister was visiting. That is one. And second is Sudarshan Chemicals. It's, of course, I mean, I think a single or two line. But that acquisition, the large German company they acquired, I think the consolidation will show up in this quarter. So your pick, and if you have any thoughts on these two.
See, I think, Prashant, the industry is very difficult to track and it's quite volatile as well. But I do feel that if you study this industry hard, you may find a few winners. Of course, Tattva Chintan optically is very expensive, but if they sustain these kind of numbers, then maybe this P multiple is justified. Sudarshan Chemical, a very, very interesting special situation case. And really, it will test the management if they're able to turn Hubert around. And if they're able to make a success over there and get a lot of the products to get manufactured within India and especially manage the inventory, because there's massive inventory cost over there. If they're able to do that, then I think that the stock is still attractively valued. And by the way, the consolidation happened last quarter itself. So those numbers were visible. So very positive per se on Sudarshan and positive on the entire industry. Maybe you could buy a basket, but I think that this is an industry where you may get a few solid stocks giving very good returns. They benefit from rupee depreciation. Some dislocation is there because of supply chain, but that I think will eventually kind of regularize.
Tattva is up 20% today and 40% this month. But I guess 20 is, I mean, half of the 40% is just one day. Deepan, stocks are moving at extra 5x speed.
Yeah, well, there are very few. There are very few growth stocks, and this is what happens during earnings season, like what happened in Just Dial. Some positive news, and the stock just gets triggered. The traders get into play. Anyway, small mid-cap stocks, the liquidity is extremely low. Management promoter holding is typically high, and then eventually investors are chasing the same stocks, so which is why we see this kind of outlandish moves. But sometimes good stories emerge. I mean, for example, Tattva Chintan, 2-3 months down the line, around the next earnings season, that may provide a good trading opportunity. By then, the stock would have cooled off, the earnings would have got absorbed, maybe the stock would have corrected also. So we look for such opportunities where stocks cool off, and then those are good entry points.
Okay, we'll come back to you for more opportunities. For now, let's talk about the new kid on the bourses. Turtle Mint Fintech Solutions has reported the Q4 earnings. Yash joins in with the number crunching. Yash.
Well, as far as the stock is concerned, at one point in the morning, it was up 12%, still up about 5-6% right now as we speak, but remains under its IPO price of 152 rupees a share. As far as the numbers are concerned, first disclaimer, this is the fourth quarter FY26 numbers and not the first quarter FY27 numbers. First quarter FY27 numbers will be presented, in the next few days. But for now, this is the fourth quarter set that the company is presented. Very strong numbers for the company coming in. Revenue from operations, that has grown at about 42% in the fourth quarter. Service EBITDA, which is seen a growth of about 60%, coming in at 60 crore rupees. In terms of margin on the service EBITDA level, it's 16.8% versus 14.9%. Now, speaking about adjusted EBITDA, which is service EBITDA minus overhead costs, that has come in at about a profit of 2.9 crore versus a loss of 33.5 crore. Adjusted EBITDA margin, that has also moved into the positive territory. Of course, 1% versus minus 13%. So overall, top down, the numbers have been excellent for the company. Two important aspects to look at as far as the fourth quarter results are concerned. The first one, active transacting digital partners as a percentage of the total verified digital partners, that has gone up to 12.7% from 11.6%. Platform premium, and the revenue which the company generates out of that platform premium, that percentage has also increased in FY26 to 28.4% versus 23.8%. So, of course, business performing well, higher value coming from the premium which it generates for insurance companies. Operationally, it has been improving. The management also in the interview given today sounding a positive note of turning adjusted EBITDA positive for the full year in FY27. That's the positive note which came from the management today. The stock, of course, up 6% today, still trading below its IPO price.
Okay, well, that's a new one. So you got two listed insurance distributors now. That is PB Fintech and now Turtle Mint. Of course, I mean, Turtle Mint is 1/10 the size of PB Fintech. Yash, thanks very much for that. Deepan, any thoughts here?
No, we are going to track this stock typically 2-3 months after the listing, when all the froth has settled down, is when you can look at the stock. And of course, then the first quarterly result also is underway, and management can speak more openly about their forecast, their guidance, and their strategies. So certainly going to keep it on our radar, because we do feel that the insurance distribution space is ripe for complete organization over there. I mean, there are so many disorganized players over there, small distributors, and so many insurance companies also. So I think that the shift from unorganized to organized will certainly benefit companies like Turtle Mint and Policy Bazaar. And there's so much of mis-selling, there's so much of education required to sell insurance policies. So in a way, it's a very difficult business as well. So, but it's a nice business and it's a great long-term secular growth story. So I think we should track it. But as I said, let one quarter come and the management, kind of open up to what exactly their plans and guidances are.
Deepan, we'll leave the conversation here. Thank you very much for joining in. Get into a break. On the other side, our Alpha manager for the day, Deepak Shenoy of Capital Mind Mutual Fund, will join in for a chat. Stay tuned.
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया, और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है।
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी, और बजाज फिनसर्व इनका साथ देता है।
Okay, welcome back. The other big story that we've been, of course, tracking is the sell-off in global markets. And one pocket of the global market, of course, has been selling off. I'm talking about AI/tech, whatever you want to call it. But, just today, look at what's happened with Korea. Look at what's happened with Taiwan. I think Korea is down 6%, 6.5%. Taiwan is down 4-5%, or is the other way around. But basically 6 and 4% cuts on Korea and Taiwan today. And that brings up the 6-day correction to something very, very large. So the question is this, like we saw in January of 2025, the second DeepSeek moment? Rachna is joining in with essentially a focus on that. Rachna, take it away.
Well, in January 2025, DeepSeek erased nearly $600 billion of NVIDIA's value in a single session. 18 months on, markets believe they're watching the sequel of that movie. Beijing-based Moonshot AI, backed by Alibaba, has launched Kimi K3 at 2.8 trillion parameters. It is the largest open AI model ever released. Now, open AI here means the technology and not the company as we know it. And Moonshot has claimed that it beats every rival except Claude Fable 5 and GPT 5.6. Independent testing broadly agrees, ranking it fourth among all frontier models, just a few weeks behind the best American labs. And the real disruption is expected to be the business model. On July 27, the full weights go public. Anyone can download a near frontier model and run it. No subscription to OpenAI or Anthropic needed. But markets didn't wait for July 27. The Nasdaq is 7% off its highs. The Philadelphia Semiconductor Index, which is the purest proxy for the AI hardware trade, is down 20% from its late June peak, a formal bear market for chips. Korea has cracked 15% in 6 sessions, Taiwan about 12.5%. And here's what stands out. TSMC posted a 77% jump in operating profit, and the stock still fell 7% the same day. When strong results cannot lift a stock, the market is no longer reacting to earnings alone. Markets were already nervous, and Kimi set off the fall. That is exactly why this matters, because it didn't create a doubt around this whole AI trade. It has pretty much confirmed it. And now it leads us to 3 big questions. One, if powerful AI is available for free, will the $800 billion that big tech is spending on AI ever make money? Second, how did a Chinese lab, which is cut off from American chips, catch up this fast? And third, all this spending on training bigger models is still paying off, and how will it pay off? Because the entire data center boom depends on more spending delivering smarter artificial intelligence. The answer arrives on July 27 when the model's weights face independent scrutiny. If Kimi's claims withstand it, the AI trade faces a repricing. If they don't, this episode will be remembered as an overreaction. Either way, the economics of AI are now firmly in question.
Okay, all right, Rachna, thanks very much for that. So that's the other big driver for global markets at this point in time.
Big pricing, just a word on the pricing. Yeah. So Kimi K3 on the input side for 1 million tokens is priced at $3. A Claude is at $10. And on output, if Kimi K3 is at 15, Claude is approximately $50. So that's the extent of undercutting, nearly 70% lower. So that's...
And American big tech is all pushing back, right? Saying that, but it is what it is. But we'll see. There is this fight going on. And that's why we're saying, we're calling it as a question mark, whether this is DeepSeek 2.0. And we'll see if it all comes back like it did back in January 2025, or this is a more durable kind of a sell-off. Between Jan 2025 to now, all these stocks have done so well. So you're coming off extremely elevated levels as well. Deepak Shenoy is with us, CEO, Capital Mind Mutual Fund. Deepak, good to have you with us here. I don't know if there are any implications of all of this here in India, maybe at some level at the margin. Money is fungible, right? I mean, it can go here, it can go there. I'm talking about foreign capital. And the simplest way people have been looking at this, and veteran money managers have made this point, Naren and others, that this entire red-hot AI trade needs to cool off for money to come back into India. I don't know if you view all of this from that angle or anything specific to India.
So, Prashant, honestly, I think the technological improvements that some of these open source AI models have brought to the table is just demonstrative of the fact that some of what we thought was a moat in the larger US-based AI companies is not as much a big of a moat. What does this mean for us? It means that our IT companies and maybe other vendors and providers can actually download these open source models if they have if they set up the GPUs, set up an inference model which allows Indian providers to earn the token revenue that is otherwise going either to American providers or to the Chinese guys if we buy from them directly, right? So we could actually build this out in India and provide, service to both Indian customers and even foreign customers if they were able to use India's, geographically have the models located in India. This gives room for perhaps movement upwards. I don't know if this is going to happen. I feel we're too early, to predict where that is. But yeah, I mean, it's kind of a, I feel really bad saying that, oh, you know what, those technologically advanced guys are losing out, so you come to us because we are not as technologically advanced, right? So I think that is, I don't think that should be our driving point. We should be adopting these technologies. We have done this in the past. We did it in telecom. We did it in a few other areas where we skipped through the initial hype and cycles and got ourselves into better technology, both on payments and in telecom. We have a fairly internationally comparable technology and pricing available in India. I don't see why that can't happen in AI. I just don't think the winners are going to be the people we call IT companies today. I think there'll be new players that will come in.
Deepak, I mean, that is one way to frame it, right? How you framed it. The other way is that it's simply, I mean, it's like two roads, right? One road is jammed and the other one is kind of free, empty. So, everyone is on road A, and I mean, because it is now jammed, you look at the other routes. I mean, eventually you want to make money. You make money buying tech, or you buy some consumer company, or, at the end of all of it, it doesn't matter, right?
Absolutely. I mean, I think that's true. But here's the thing. I think, if we think that the money will come to us because AI is not attractive, the reasons why AI was attractive was because it was a supply constraint, whether it was memory or hard disks or compute. This was a supply constraint, and all supply constraint types we have seen in India. Some graphite providers worldwide are not able to, the graphite prices go up. The graphite players in India, their prices go up, substantially. And then they come back also when the supply comes back. So AI is the same. It's like that supply thing. But you're right. If some of this, heady stuff goes away, eventually I think flows will come to India. But we have to understand that when people get out of something in fear, they get out of almost everything in fear. It's not just India. It's not just Taiwan or Korea. They'll get out of everything and they'll kind of cower down and wait for this storm to pass before they then start reallocating. So expecting those flows to suddenly flow to India, I would say little premature.
Deepak, is the market overly concerned about the compression seen in the bank's net interest margins, given it's a mature industry, it's competitive? It's bound that NIMs will come under pressure sooner or later over the longer-term trajectory. So what does that mean for investments, long-term investments in banks? According to you, the metric to track should be the NII.
In the sense, I think growth overall, because if you're able to grow your earnings, that would be NII itself as one layer. It could be a combination of fee income and treasury income at another layer. But if you're able to grow the business where you can give us 23, 25% earnings growth at lower NIMs, I'm fine with that. This is the Amazon model, is your margin is my opportunity. So anyone who comes in and says, I'll lend at a lower rate, I'll take lower NIMs, but I'll grow my market share and grow therefore my effective earnings. I think those are the guys that will succeed, because to a large extent, these higher NIMs were noticeable when you had high credit costs, when you were afraid of so much more in terms of default because you didn't have good underwriting. You see here, microfinance players have the highest NIMs, but they also have the highest default rates and so on. Versus, corporate lending is more constrained. So as you get more mature as an economy, as you're able to underwrite defaults much better, I would say we are at that phase right now. We should expect NIMs to come down. NIMs are not going to be the thing that leads us into the future. It's going to be growth on credit and growth on earnings eventually. And if people can control that, I think that is where banks or NBFCs become more attractive.
So what's the call now on banks? Because in your fact sheet, we can see banks have about an 11% weightage. And that's lower than the weightage of the bank in the Nifty per se. So given all that, what's the call? Or any particular bank that you'd like to call out?
I think mid-cap banks, I won't take individual names, they're in our fact sheets, but we have seen a lot more, data actually points towards the mid-cap banks doing better in terms of both value, quality, and price momentum. All of these are actually in their favor. So ours is more a quantitative strategy. So we assimilate all these data points and then put them together, and that's when we kind of realized that the mid-cap private sector banks are actually doing much better than the large cap ones. NBFCs also, they're starting to, maybe show signs of interest, but we'll wait for the results to come in now and before we can, evaluate them on the more fundamental characteristics. But I would say strength lies in the players that have not been afraid to grow. And I think the larger cap banks have actually been afraid to grow, or they've been a little more conservative in their both deposit and credit growth. And in fact, credit growth, because credit growth is what leads to deposit growth. So I think now that we're starting to see some movements, and perhaps later this year we'll be able to look at larger private sector banks also. The public sector banks results haven't come in all, but those are the 10-15% growth kind of ranges, so not as exciting as perhaps a mid-cap private sector bank.
Yeah, we had Federal Bank with a 36% PAT growth on a year-on-year basis in the quarter. So look for those.
Absolutely. Deepak, just one last question. Since you said it's most of your sort of the portfolio is quant. I was looking at this interesting report from Bernstein from I think their quant person Rupal. So she was. The report essentially looks at 12-month EPS growth and looks at the last 6 months, and essentially, I mean, it's trying to figure out where there is earnings growth acceleration compared to the 12 months prior. I mean, is that the kind of thing that you use? Yeah,
quant is a very wide model. So you can have, like, for instance, momentum is one factor. It's price momentum across, say, a year or 6 months, or an average of all of them. It could be earnings growth over a year or 2 years, and the average, you rank all the stocks in terms of how good their earnings growth is, and then you want to rank on earnings growth. We use a more complex algorithm that combines a bunch of factors together, including profitability, value, low volatility, and momentum. This gives us composite score across all companies for every single company in our universe, and then the top 10% are effectively our target segment. And in that sense, our portfolio is built among the top 10% of what score on that. So it's a little bit of less about the future and more about the past, but we get it a little bit later.
Yeah, no, absolutely. Thanks very much, Deepak. Good speaking with you. Thank you very much for joining us. Always a pleasure having you here on CNBC TV 18. Past 3 o'clock, and I think the market is down 100, so still off the lows. And the low today is what? The low is 24,135. So you're exactly 100 points off the lows at 24,235 right now. We'll take a break. We are back with what's happening in dealing rooms and D Street Chatter with Nimesh and some trading ideas after that. Stay tuned.
Twice.
ये दया कौन है रे?
मैं है।
सखू
हाँ।
साहब बनेगा रे हमारा दया।
सर आपकी कॉफी विद मिल्क, और सर आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर आपकी ग्रीन टी।
थैंक यू दे। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई, और यहां जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ यार।
और फिर एक दिन उसे एक मौका देखा
ग्राफिक्स 1299
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उस
Welcome back. You're tuned into Closing Bell. Well, the markets are down 100 points, but we've come off from the lows. However, the positive today is that the broader markets, they've got their mojo back. Nimesh joins us to tell us what is he picking up. Nimesh, a reverse of what we saw on Friday. Today, the smaller and the mid-cap names are back in action.
Oh, absolutely. So, again, in a volatile day of trade, I would say, there is a lot of geopolitical news, and because of which we're seeing that volatility in the Indian markets as well. But interestingly, while the private bank stocks are down, there is a bit of buying, is my sense, from larger institutions into select private bank stocks in today's market. The Nifty Bank has recovered from the lows, but that's largely because of PSU banks. And there, I believe, on back of strong earnings, you're seeing a bit of momentum back in the PSU names. But from a flow perspective, it's the private banks which are well bid by larger institutions today. As you said, mid-cap index has too recovered, and there's a bit of momentum back. The mid-cap index is up more than 0.5%. There is clearly a bit of buying interest back in the broader market stocks in today's trade. But I guess today's big indication is while the bank stocks are down, the private bank stocks are down, there is a bit of nibbling happening at lower levels in those names.
Got it. All right. Let's talk about some individual stocks then, Nimesh. What are you picking up?
So within that private bank names, IndusInd Bank stands out. While there's a lot of noise about results and reactions, IndusInd Bank has quietly been bought by one of the leading family office in the last couple of days, and seeing a bit of buying traction as well. So watch out for the earnings, but could be potentially fundraising as well going forward. But at least from a flow perspective, a large family office is quite active in IndusInd Bank of late. Second stock is NMDC. It's not reacted, but my sense is there is a very large MOC sell in NMDC today at a leading Friday. So if it gets executed, you might see some pressure in that stock in the last 15-20 minutes of trade. Third, couple of names in the financial names which are well bid, which is IIFL Finance and AA Finance. Both a very specific domestic mutual fund has been looking to accumulate at current levels into both those names. So that's the reason why a bit of momentum is seen in those two stocks. and the last is Suben Life. Again, it's been buzzing in trade today, but again, there I believe there is a bit of anticipation of some corporate development. The management apparently met some large investors last week, and there is a potential monetization of one of the molecules which can come very soon in Suben Life.
All right, Nimesh, thanks a lot and good on you. Pull through that one, have a sip of water, and we appreciate you joining in and giving us all those tidbits as well. Suben is another one that we should keep on our radar. Midesh Thakkar is back with us. Midesh, tell us what's the fresh trade?
I think the markets, have not really recovered, but they haven't weakened further, so that's a good thing. I think I'll go with the BTST kind of call on Sona Comms. It's been moving up. It's been in an uptrend, and today is near the day's high. So take a stop at 706. Look for a target of around 725, 728 for tomorrow. And if you're talking about PSU banks, so Canara Bank is another one. Just trying to get past its 20-day average and closing above it. So that's a BTST with a stop at 127 for targets of 121.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, let's get you all the action coming in from the F&O market then. Today, it's actually a good day for the broader markets. The number of stocks advancing are outweighing the number of stocks declining. The other positive that I'll look at is that the Nifty, that's lower in trade. It's down 100 points, but the India VIX hasn't really spiked up. So that's telling you that the street doesn't expect any kind of big volatility from here on. So that's in fact actually a positive sign. Normally, they have an inverse relation. Moving to the options data, 24,200 call. Premiums come down to around 60 bucks from around 85 rupees, which is telling you there continues to be writing. 24,200 call, 24,250 call. Premium down by nearly around half. So at both those two, you're seeing a fair bit of open interest build up, and there's writing that's evident. Now, on the flip side, the 24,150 put, that's what's going to give bulls some kind of hope. And if you look at the FI action the last few days, they have been writing puts as well, which is giving you some kind of hope that, the lower end of the band will not break out. So 24,150 put, good amount of open interest build up out there, which brings us to the levels. The crucial levels that I'm looking at on the Nifty is around 24,000. Today, we went down to around 24,135. From there, we did a bit of a reversal. The 20 DMA as well, remember, comes in that vicinity at around 24,100. So 24,000 is important in terms of a support level. On the Nifty Bank, the 57,500, that's the important mark you're looking at. Again, we're looking at that band of today's low as well as the 20 DMA. So both those two are important support zones. Today's low becomes the next reference mark that you're looking at. Two stocks that have fairly interesting F&O action, not just for today, but over the last few days. Kalyan Jewellers, well, there was a bit of softness that we saw at the start of today's trading session, but that's recovered considerably, telling you there continues to remain a bit of a short squeeze out there, and the stock has moved up. While there appears there is some fresh buying on SRF, and the counter has been looking quite strong over the last few days. The open interest has gradually been built up. Remember, not very, very active otherwise, but this one is looking like some shorts are squeezing out, and there is some long addition as well. So both these two stocks will continue to track from here on as well. That's about the F&O action. But let's tell you about Ultratech Cement. Well, good numbers coming in from Ultratech Cement. There was a mild beat on the headline numbers, whether you look at the top line, whether you look at the EBITDA number, or even the profitability number. The key details, though. The sales realizations, that was up by close to 3.5% on a sequential basis. The street likes that. The consolidated volume growth at that sort of scale was around 12.2%, which is encouraging in itself. And the main aspect that you look at is the grey cement volume growth. That grew by close to 13%. Remember, the street was bracing for a number of around 10 to 12%. So this number looked very, very good. And that's what led the EBITDA per ton to actually increase on a year-on-year basis. The street would like to see that sort of a number. Keep in mind that, yes, there were some increases in terms of costs. But despite of this cost increases, they are focusing on cost optimization, operating leverage as well as playing out. And that's why yet they managed for that EBITDA per ton to move up. That is a positive, that the street would take note of. Though you need to keep in mind that input costs, yes, they did go up. On their wires and cables business, they say the launch is on track. Remember, they said by December 2026, it'll be, commissioned. And that's precisely what they're saying. The total investment that they planned is close to 1,800 crores or thereabouts. And the amount committed till June is around 900 crores. The company basically has shown the ability to deliver profitable growth at scale that's supported by disciplined market execution, operating efficiencies, as well as continued integration of acquired assets like India Cement. All in all, at that scale, it's a good set of numbers, and there was some debt reduction as well, which the street will take with both hands, given the kind of capex that they have lined up. Well, let's welcome Amrish Balika on the show. Hi, Amrish. Good afternoon. Good to see you, Ben. Before I want to ask you for your pick, I want to ask you, what do you think about Ultratech Cement? The big boy, has gone ahead and delivered a pretty good number, at this sort of scale. Quarter 2 is going to be anyway a weak quarter for the entire industry, and it's seasonally weak as well. What's your view on Ultratech Cement or the other number that we got, Nuvoco?
In fact, when we saw the Nuvoco numbers, I thought it was one-off because this season was supposed to be slightly weak for cement. Now with Ultratech, with this sort of volume, they're showing the growth, especially in times like these. I think it's excellent. So I would be a buyer in Ultratech at this point of time. Although earlier I thought I'll possibly wait for a quarter more, but I think with these sort of numbers, one should be looking to buy right now. Okay, all right, got that. Amrish, you have a name which is widely known across the board, Bata India, right? I'll tell you, I don't know if it's true for others, but growing up, Bata, of course, in Delhi was the shoe which was prescribed for, it was basically school shoes, right? You had to wear a black Bata shoe. And at least I thought it was an Indian company. And it is an Indian company in that sense, but of course it is foreign known, it's an MNC. But that's the pick, Amrish, for you. It's widely known, but hardly talked about in the markets. Yeah. Because the stock has underperformed quite badly in the last 3 years. But what was said and done, the largest retailer, leading manufacturer of footwear in India, like you rightly said, it's a key subsidiary of Swiss headquartered Bata Shoe organization, a household name anyways. And it's present in about 1,660 towns, 2,000 plus stores, 15,000 plus MBOs. Franchisee presence also has been rising. And expansion plans are on track, have adopted an asset-light model. Now, they had introduced something called the zero-based merchandising strategy, which seems to have worked well in the last few quarters. There was no doubt margin pressure because raw material prices had increased. There was one-time expenses. And like I said, the stock had corrected quite sharply in the last 2 to 3 years, especially in the last 12 months, but expecting some stability now. And one of the main triggers which has come recently is that Nike's Sanjay Rao has been appointed as the new MD and CEO. So it's expected that with new blood coming in, it should ensure Bata is rejuvenated. And like I said, this could be a decently big trigger. Going ahead for FY28, I'm expecting an EPS of 20. So with this, my price target is about 900. So the bet is the new man effecting a turnaround. Absolutely, because see, the stock has corrected quite sharply. Valuations at this point of time are decent, but it needed a trigger. as to why one should own Bata.
Do you know, Amrish, how much of the Bata's sales or profits or whatever come from men's shoe wear, and how much from women's? Because Bata, I mean, as a brand, is largely known as men's shoes, right? I mean, office going and I don't know. Maybe I have an old conception in mind, and the numbers are completely different. But yeah,
Prashant, I mean, in the last 4 or 5 years, they've started looking at youth, because of which they had introduced specific segments only meant for the new generation. So that will also start picking up well. But I don't think they really give those numbers as to how much is men's and how much is women and how much is kids.
Yeah. No, got that. No, it's just huge network, huge distribution, but huge underperformance as well. So if there was ever perhaps a story, I don't know how easy or difficult the turnaround is, or if there are easy fixes, but I mean, this looks like a pretty, at least the brand doesn't need to be sold, but maybe it needs a bit of a premier kind of a shine on it, right? Because I think premiumization in shoes has been all the rage. Metro shoes, for example, has done so well, and so many others which have done.
And they also have other brands like Hush Puppies is an extremely good premium brand.
Correct. But again, men's, right? I don't know if they have a women's line, but yeah.
No, it's mostly men's. Hush Puppies is mostly men's.
Got that. Amrish, stay with us. We want to just, that's Bata for you, but let's just get that report card for a big bank earnings going. Ritu's here once again with just spotlighting the big numbers. Ritu, take it away.
Well, the June quarter is in for India's 4 largest private lenders, and while they're all dealing with the same headwinds, the winners are becoming clearer. If you look at the big picture first, overall, ICICI Bank posted the best all-round print of the pack. Credit growth continues to outpace deposit growth at every bank. Corporate lending is also picking up across the board as bond market funding gets more expensive, margins remained under pressure, and fresh slippages have risen again. But most banks are attributing that to seasonal factors after a clean March quarter. Let's get into the numbers then, starting with profitability. HDFC Bank remains the biggest profit machine of the 4 by far in absolute terms, but growth is just 5%, which is the slowest in the pack. ICICI Bank's profit growth far healthier, rising 16%, while Axis and Kotak posted the fastest growth rates on paper, though on a smaller base. Moving on to the core income, ICICI Bank again leading the pack with NII growing almost 13%. HDFC Bank grew 6.7%, while Axis and Kotak reported single high-digit NII growth that trails their much punchier profit growth. On business momentum, though, loan growth remains stronger than deposit growth across all of these banks. ICICI Bank again leading the pack on credit growth. Axis growing pretty fast as well, followed by Kotak and HDFC Bank. Now, Axis is mobilizing deposits the fastest, while on the other hand, Kotak is the standout laggard on deposits with a growth of 12% year-on-year, but almost flat sequentially. Margins continue to be the pressure point. ICICI Bank is again the only bank that was able to expand its margins in the quarter. HDFC, Axis, Kotak, all of them reporting sequential compression, while Axis was seeing the sharpest decline. And finally, on asset quality, Axis is the one bank where gross NPAs rose the most. HDFC Bank ticked up marginally as well, while ICICI Bank and Kotak actually were able to improve. Fresh slippages again rose across the board, but this is more of a seasonal story. Overall, though, ICICI Bank clearly coming out on top.
Well, that is banking earnings. I don't know if we have Piran Engineer. He was the CLSA analyst we had in the morning. If he has some sound bites, we should play some of those sound bites. Very interesting conversation, by the way, with Piran. And Rima alluded to some of what he said, that maybe the market is focusing on NIMs in a wrong way and a bunch of other things. So let's actually play that view on banking out.
Barring an ICICI, all the banks reported 10-15 bips NIM compression, right? And one reason for this is over the last 2 quarters, everyone has grown really fast in corporate loans. Now, corporate loans will come at lower NIMs. If you're lending to AAA rated corporate, they'll borrow at GSEC plus 60-70 bips. So it'll come at lower NIMs, which hits you immediately. But it'll also come at lower OPEX because it's B2B. It'll also come at a lower credit cost because they're AA, AAA rated. But I think, the street and investors and analysts are just so focused on just the NIM line item that they're missing out on what comes below that. That's what I meant.
Okay. So if the stock's correct today, because the street is still disappointed, they do focus on the NIM performance, and we've seen that with the rest of, HDFC Bank, Kotak, Axis. Would it be a buy, these stocks?
Absolutely. I would say especially an HDFC Bank should be looked at from this perspective. Growth is picking up. I think NIMs have bottomed out. Asset quality for all these banks, not just HDFC, but all the banks that reported over the weekend are trending at much below normal levels. Look at the slippages some of these guys have delivered. It's at like 5-year, best performance or 7-year best performance.
Is there any bank on which, Piran, you have a sell call or you don't like?
Among the mid caps, it's RBL.
RBL. And large caps, you have a bullish call on all large private sector banks?
That's right.
Okay. And just stock-wise, if you have to play for an upside, buy it. Which stock, according to you, has the highest upside and why?
Well, for me, it would be HDFC and SBI. I think, look, I could get into the reasons for both, but effectively, it is premised on core PPOP CAGR picking up for both of them, along with asset quality issues sort of being at bay. And core PPOP is picking up because loan growth is picking up for the sector as well as for them. And the margin headwinds that banks faced last year are behind us now.
Right.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. Nifty hovering around 24,250, down 90 points, but off close to about 100 points from the day's low. Ambrish, would you buy the dip on an HDFC Bank or an Axis Bank today?
Absolutely. Surely for HDFC Bank, which anyway I've been recommending ever since the stock had corrected the last time due to controversies. And from there, it had bounced back now because of the sort of earnings they have shown. It has corrected. I think it's a buying opportunity at these levels because if you look at the valuation-wise, I think it's at a 2-decade low. So again, it should be bought only by those who have enough patience. Maybe one will have to hold on for the next 12 to 15 months. But I think we should see levels of about 1,000, 1,050 over the next 12 to 15 months.
Tattva Chintan made a big move today on the back of numbers. Have you analyzed it?
Which one?
Chintan.
Tattva Chintan, yes. In fact, I've been tracking the stock and it was a contra buy for me about close to about a year and a half back. We saw levels of closer to about 630 or 650. And I think the numbers were blockbuster. But then I think one more circuit in the stock and it will become, I think, fully priced to slightly expensive. So I would say that those who have bought in the last, 6 to 9 months, I think it's a great opportunity to at least book some profits at this point of time. Because from lower levels, it will be more or less a tripler in a year.
Any PSU banks on your radar? PNB has been the standout performer. IOB came out with numbers a while back, and that stock is surging close to about 4%.
Yeah, but the issue with the PNB, I mean, although the numbers were good, I really don't see the stock going much beyond that 125, 130 levels. So, if that's a trade one is looking at, then I think one can buy at these levels. But otherwise, if you're looking at making serious sort of wealth, then I would suggest still looking at the private sector banks at this point of time.
Got it. All right, Ambrish, always good to speak to you. Thanks for giving us all of those cues. Well, let's wind down the markets for you. Today, it was about the broader market. So instead of starting with the headline names, I'll go with the broader markets and Rima can tell us about what the Nifty stocks did. From the broader markets, plenty of big winners. Vectors continues its up move. The stock, by the way, for this week itself is up close to 11%, which just started. For the month, it's up close to 18%. Remember, Sunil Singhania Fund had got into this one, so that's why that stock was running away. From there on, it's done very well. Some distilleries, cheers all the way. The stock was up 20%. It's corrected a big deal from the top, but that one did cheers. You had Bansali Engineering as well. The stock was up close to 12%. Tattva Chintan was the other stock that did pretty well in today's trading session, and Himadri Chemicals as well continues its good run. Remember, the stock is up more than 50% in the last 6 months, but it continued to move up in today's trading session. On the flip side, Responsive Industries, a stock that's been running up one way, came in for heavy selling. That stock was down close to 14%. And the problem today was a couple of big banking names that disappointed the street. Axis Bank, there was a valuation gap argument in favor that post the dip, maybe there'll be some buying. That didn't come about. The stock was down 5.5%. HDFC Bank, that's the big boy. That's the problem today. If you look at it a contribution basis, most of the Nifty losses, most of the Nifty bank losses were on account of HDFC Bank itself. So that was the big problem point in today's trading session. But otherwise, from the Nifty pack, Trent continued its good run. That was up close to around 3%. Remember, it's pulling back some of those losses. Power Grid was strong, up close to around 2% or thereabouts. And Maruti Suzuki actually came in for some profit taking. That was down 2%. Net, your portfolio feels good because the broader markets outperformed while the headline index came in for a bit of a breather in today's trade. Well, on that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward is waiting by for you.
Pre-sim.
ए दया, कौन है रे?
मैं है।
सखू,
हाँ।
साहब बनेगा रे हमारा दया।
सर, आपकी कॉफी विद मिल्क और सर, आपकी ब्लैक कॉफी। सॉरी सर, अगर इस बॉक्स को अंडा सर्कल में डाले तो बेटर लगेगा ना? सॉरी सर। सर, आपकी ग्रीन टी।
थैंक यू दया। गांव के बच्चे को साहब बनने की चाहत शहर लेकर आई और यहाँ जिंदगी ने उसके हाथ में चाय की ट्रे थमाई।
अंडा सर्कल। हाँ आया।
और फिर एक दिन उसे एक मौका देखा।
ग्राफिक्स 1299।
अपनी जिंदगी को डिजाइन करने का। उसने अपनी नौकरी छोड़ी और खुद का साहब बन गया। शादी, बर्थडे इनविटेशंस, डिजाइन्स के साथ साथ दया अपनी लाइफ का डिजाइन भी बदल रहा था। सब मीठा मीठा था, गुड़ जैसा। कड़वा हुआ जब कोविड आया।
देश भर में लॉकडाउन लागू कर दिया गया है, जहां आर्थिक गतिविधियां लगभग ठप पड़ गई हैं और बड़ी संख्या में प्रवासी मजदूर अपने गांव की ओर लौटने लगे हैं।
वो कहते हैं ना, हालात इंसान को रोक भी दें, लेकिन उसकी सोच पे लगाम नहीं डाल सकते। उसने अपनी कंपनी फिर से शुरू की, अपनी वेबसाइट बनाई और अपने गांव को दुनिया तक पहुंचा दिया। अब बचा था तो कुछ इंतजार कि क्या आने वाला कल उस पे मुस्कुराएगा।
जो दया गांव से साहब बनने निकला था, पूरे गांव का साहब बन गया और हमें यह सिखाया कि मेहनत करने वाले पे, डटे रहने वाले पे वो हमेशा दया करता है।
ऐसे इंडियंस लिख रहे हैं नए इंडिया की कहानी और बजाज फिनसर्व इनका साथ देता है।
The last three ends the day mixed. Nifty and Sensex closed lower while the mid-cap index outperforms. Nifty holds above 24,200, led higher by ICICI Bank and Bharti Airtel.
HDFC Bank, ICICI, Axis and Kotak all post strong credit growth in the first quarter even as deposits lag. But while HDFC, Axis and Kotak see a compression in their margins, ICICI ekes out a higher margin. Both HDFC and Axis were the top drags on the Nifty today.
Ultratech Cement gains after a solid Q1. Profits beat estimates, rising 17%. Domestic sales volume grows 13.1% year-on-year.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia. With me today is Ekta Batra. Ekta, good evening. It was a fairly good day, if you could call it that, for the markets, considering what was feared, considering the developments in West Asia and, of course, the fall in HDFC and Axis. Just in the day, 90 points down, you'd take that.
Hi, Hormuz. Yes, absolutely. You'd take that in such an uncertain environment at this point in time. On one hand, there's geopolitics, and on the other hand, there is earnings, which seem to be weighing down in terms of sentiment at this point. But nonetheless, what also stood out is that the mid-cap index managed to hold up with a gain of around 0.6%. We did have the Bank Nifty, which underperformed, and rightly so, because we did have misses, or rather earning reactions on the downside coming in from a lot of the big banks such as HDFC as well as Axis and Kotak. But nonetheless, the mid-cap index managed to hold up with a gain of around 0.6%. So that's really what stood out, Hormuz, in today's trading session.
It was a complete flip, right? It was on Friday. It was the broader markets that were struggling and the benchmarks did well. And today's session, the mid-cap index ended at the day's high. And even though the benchmarks ended in the red, but they managed a recovery from the lows of the day. But here's what we have in store for you over the next 20 minutes. You have the top movers and shakers of the day with Vivek. We also tell you the first quarter numbers of the big four private lenders and tell you why Tattvachintan Pharma was up 20% today, and put the spotlight on Ultratech's first quarter results as well. Last but not the least, we delve into the key market events to watch going into tomorrow's trading session. First up, Vivek, as always, joins in for the big movers and shakers. Vivek.
Well, thank you so much for that. What a sharp intraday recovery. We saw post all of the comments that did come in during the course of the session, and after that you saw the advanced declination, the broader end of the market improved significantly. In terms of individual names, well, have a look at the pharma and healthcare names. Most of these stocks ended higher significantly. Torrent Pharma almost 5.5% higher. Mancare and Aurobindo All of these stocks doing very well in the session. You spoke about Tatva Chintan, on very, very strong volumes after a strong Q1. That particular stock stood out too. So Tatva Chintan Pharma ended up at the upper circuit, 20% upper limit. Now, PNB, again, in terms of all of the results that came in over the weekend, a clear outperformer in terms of overall metrics, a clean beat across what the street was anticipating, and NIM guidance to quite strong for FY27 as well. In terms of the entire power pack or utilities, most of the stocks today managed to move higher after a while. So names like JLW Energy, Torrent Power, going ahead and reversing their recent underperformance. And Shyam Metallics, another stock that came out of the results during the course of the session, good set of numbers coming in there, sequential as well as year-on-year improvement, and that particular stock too ended almost 5% higher. On the other hand, quite a few laggards as well. Private banks, most of the names that came in over the weekend, weak. Axis Bank, HDFC, Kotak Mahindra Bank, thereby dragging the Nifty Bank, significant weightage for most of these names. So that was a clear drag on the Nifty Bank. Tata Technologies, now despite a very, very strong Q1, what essentially happened was that a bit of profit booking after the recent surge that the stock saw. Campus Activewear, some select footwear stocks that had moved up significantly in the week gone by, today seeing a bit of profit booking. So Campus down almost 4.5%. And MapMy India today, this particular stock too, after a recent very strong rally, today ended up as the top NSE 500 laggard.
Okay, all right. Thanks very much, Vivek, for joining in and giving us all of those stocks which were in focus today. For the markets, there were a lot of stocks which were specifically in focus, such as even Thyrocare, which was up around 6.7%. It comes out with its numbers this week, so it was quite resilient. We also had stocks such as PNB, which was up around 5.6% from the entire banking space. That's what stood out from the PSU banking space. But joining us now, we have Ambrish Baliga, who is an independent market expert, and Jay Thakkar joining in from ICICI Securities as well. Ambrish, just wanted your quick thoughts in terms of how you would wrap out today's trading session. We had the mid caps, which did well, Bank Nifty, which was weak.
Yeah, in fact, I think the reactions were mostly for the earnings. And I think it's going to be that way, at least for the next couple of, at least next 1 to 2 weeks. Unless, of course, there is something major happens on the West Asia front. Whatever is happening as of now seems to be ignored by the markets. But then I think we need to keep a watch on what possibly can happen in Red Sea. That's the threat given by Iran. So that's something to be watched out for. Otherwise, I think it's going to be more of earnings and monsoon, which will play out in the markets.
Of course, earnings reactions are taking center stage, and one such name that did take center stage today in the second half of the trading session was Ultratech. That was the big Nifty number of the day, and it was a good quarter overall as well for the company. Nigel is now here to break the numbers down for us. Nigel.
Well, that's right. Good numbers coming in from Ultratech Cement, a little better than what the street was working with. If you look at the numbers in comparison to our poll, well, it was a mild beat in comparison to what we were expecting. And the key details actually should come up for you on the screen. The realizations were up by 3.5% on a sequential basis. The consolidated volume growth was 12%, and that sort of a size it's growing at that sort of a pace is amazing. And the grey cement volumes as well were up by close to around 13%. That, the input cost did spike up, and that's what hurt a little bit. However, the EBITDA per ton on a year-on-year basis actually went up by around 16 rupees per ton. And that was a pleasant surprise in a quarter when actually input costs did spike up. They had some benefit of realizations moving up, but EBITDA per ton, coming in a little bit better was definitely heartening to see. On the wires and cables business, they said that as guided earlier, they're all set to launch it in the third quarter of this year. That's towards the end of the calendar year. And they planned an investment of around 1,800 crores, and the committed amount till June 2026 was around 900 crores. Basically, Ultratech Cement has shown that it has the ability to deliver profitable growth at scale, which is supported by disciplined market execution, operating efficiencies, as well as continued integration of acquired assets, as was evident with regard to the way they turned around India Cements as well. The debt number as well came down a little bit. So put everything together, the big boy, Ultratech Cement, did deliver.
Delivered indeed, and the stock also doing well after the earnings announcement. Nigel, thank you for that update. Amrish, before we get your thoughts on Ultratech, Jay, a quick chart check as well on the index today. Is still managing to hold on to 24,200. We did that yet again today. Is the index now making a firm base at 24,000, and the trajectory is upwards, even though we might continue to see some volatility because of these developments?
Hi, good afternoon to you, Hormuz. And yes, Hormuz, you're right. In fact, the overall trend, I would say the momentum is absolutely up, and I would say slowly and gradually, if you see indices making progress only, and the base is shifting higher from 23,000, 23,200, thereafter 23,500. 800 is what we have, and latest what we have is 24,000. So I would say, Umar, then unless we don't have a close below 24,000 levels, I think the overall bias should be positive, and dip should be utilized as a buying opportunity. Yes, we did see, mainly the index had fallen today because the banking heavyweights like HDFC Bank, Axis Bank had fallen, and we saw the Bank Nifty in fact losing its momentum, which it had actually gained in the last trading session, closing well above the levels of 58,000, in fact near 58,500. But if you see, there has not been any significant uptick in the volatility index, point one. Second, the broader market continues to do good. So although last trading session we saw, because of the large cap participation which was higher, the small cap mid cap indices in fact went sideways for a couple of trading sessions, but they are back today after having consolidated for a couple of trading sessions. I think the uptrend out there in Nifty small cap and mid cap continues. And I think there is a very high probability that mid cap select Nifty in fact closes beyond the levels of 15,000 as well in this June expiry, the July expiry. So I think that any dip should be utilized as a buying opportunity unless 24,000 levels are not broken out there on the Nifty, and likewise on 57,000 on Bank Nifty, Hormuz. If you see, the private PSU banking pack in fact had made a very significant comeback. So last week it had done so with Union Bank numbers, and now it again continues to do so. So I think the weightage of PSU banking is also quite much in the Bank Nifty now. So overall trend should be positive.
Okay, all right. Ambrish, what about Ultratech? Good numbers?
Yeah, I think the numbers are extremely good, much better than what was expected. Similar to some of the other cement stocks which have come out with the numbers, especially Nuvoco. But here, as far as Ultratech is concerned, I see the stock again getting back to those 30,000 plus levels based on these numbers.
Good numbers from Ultratech. Ambrish sees it going back towards the 13,000 level. The stock that also did well today as a positive earnings reaction that came in over the weekend was the Tattvachintan Pharma. And after a prolonged period of underperformance, it has now seen some strong moves and a 20% circuit now after that result reaction. Sonal is here with the key highlights. Sonal.
Good numbers reported by Tattvachintan Pharma, and this has come in after quarters of underperformance by the company. Overall revenues were up 42%, EBITDA also increased 88%. The number came in at a multi-quarter high for the company this time around. Margins were up around 500 basis points at 19.5%, and profits were up 142% as well. If you look at the EBITDA trend, the company has been continuously improving on EBITDA, and that led to a record high number this time around. Profits also worked in the same fashion. They were volatile and dipped in the quarter gone by, but then there was a recovery in quarter one, and that is what the street seems to like as well. If we talk about the valuations of the entire chemicals universe after this number that we got from Tattvachintan Pharma, most of them are different in terms of their product profile. But let's just take a look at what Sumitomo Chemicals is trading at 35.5 times. We have Sudarshan Chemicals, which has more pigments and commoditized products, at 19.8 times. Jubilant Ingrevia is trading at 26 times. Tattvachintan Pharma has been trading at around 30 to 32 times in the last couple of years. Balaji Amines at 27. The pure alkyl amines is trading at 50 times. You have Deepak Nitrite and Lakshmi Organic. So these stocks are not trading at premium valuations, but they are not very cheap too. But the outlook in the commentary has been quite strong. Specifically from Tattvachintan Pharma, they will achieve 25 to 30% revenue growth guidance. They will maintain 20 to 22% EBITDA margin. They did see some pressure because of supply concerns, but they expect it not to impact them in FY27. And customer demand also remains highly strong across their product profiles. So good commentary and good numbers is something that the street seems to like.
Okay, all right. So that's on Tattvachintan Pharma. Thanks, Sonal, for that. Ambrish, your thoughts on that particular counter? Did well.
Yeah, in fact, I've been tracking this counter for a while. And in fact, we had bought as a contra bet about slightly more than a year back, closer to those levels of 650, 700. And that was when it had fallen from 1700 levels post-listing. So at the current levels, although the earnings were extremely good, much better than what we had expected, but with the sort of a move which we have seen, and possibly the sort of move which we will see tomorrow, it will be more than fully priced. So at these levels, I will not really suggest a fresh buy. and those who have possibly bought in the last 1 year could be a good, partial profit booking opportunity.
A similar trend on the charts as well. Jay, the stock has seen a significant run up, yes, but other than Tattva Chintan Pharma, if any other chemical stock that looks interesting to you on your charts?
Well, see, if I have to select any of these stocks, in fact, or rather the peers, I would say rather one can look at Deepak Nitrite. I mean, that is relatively looking better, I would say, because see, Tattva Chintan has in fact closed in the upper circuit or today's trading session and closed above the 1600 levels, which marks a quantitative basis. If you see, it has for the first time has reversed its overall trend, I would say, and has closed above its previous highs. So that makes a case for a further upside, definitely. After having closed 20% up, then it can consolidate or correct for some time. But then, there is not much of evidence as of now with respect to this stock, because it is also it has been an underperform overall. So would like to wait and watch out here. But then Deepak Nitrite overall within this space relatively looks better.
Okay, all right. Deepak Nitrite is what Jay prefers within this space over Tattva Chintan. But let's get talking about the big space which was in focus, which was banking. So the first quarter report card is in for India's big four private banks. ICICI Bank has emerged as a standout outperformer this time, even as fresh slippages inched up across lenders, largely due to seasonal factors. Ritu is here with a roundup of what we saw over the weekend. Ritu.
Well, the June quarter is in for India's four largest private lenders, and while they're all dealing with the same headwinds, the winners are becoming clearer. If you look at the big picture first, overall, ICICI Bank posted the best all-round print of the pack. Credit growth continues to outpace deposit growth at every bank. Corporate lending is also picking up across the board as bond market funding gets more expensive, margins remained under pressure, and fresh slippages have risen again. But most banks are attributing that to seasonal factors after a clean March quarter. Let's get into the numbers then, starting with profitability. HDFC Bank remains the biggest profit machine of the four by far in absolute terms, but growth is just 5%, which is the slowest in the pack. ICICI Bank's profit growth far healthier, rising 16%, while Axis and Kotak posted the fastest growth rates on paper, though on a smaller base. Moving on to the core income, ICICI Bank again leading the pack with NII growing almost 13%. HDFC Bank grew 6.7%, while Axis and Kotak reported single high-digit NII growth that trails their much punchier profit growth. On business momentum, though, loan growth remains stronger than deposit growth across all of these banks. ICICI Bank again leading the pack on credit growth. Axis growing pretty fast as well, followed by Kotak and HDFC Bank. Now, Axis is mobilizing deposits the fastest, while on the other hand, Kotak is the standout laggard on deposits with a growth of 12% year-on-year, but almost flat sequentially. Margins continue to be the pressure point. ICICI Bank is again the only bank that was able to expand its margins in the quarter. HDFC, Axis, Kotak, all of them reporting sequential compression, while Axis was seeing the sharpest decline. And finally, on asset quality, Axis is the one bank where gross NPAs rose the most. HDFC Bank ticked up marginally as well, while ICICI Bank and Kotak actually were able to improve. Fresh slippages again rose across the board, but this is more of a seasonal story. Overall, though, ICICI Bank clearly coming out on top.
Ritu, thank you for that update. Amrish, ICICI Bank, a clear winner in this slew of banking names that came out with results over the weekend on Saturday. But is that your preferred pick as well within the banking space? And if not ICICI Bank, where do you go? Is that HDFC Bank, which reported a very strong business update, but its results flattered to deceive? And some of the other smaller private names also have not had a very decent quarter either, for the likes of RBL and even Karur Vysya Bank for that matter. Where do you go here?
No, in fact, from a short to medium term perspective, I think ICICI Bank, again, because of the sort of earnings which they have shown, we can see some more upside as far as this bank is concerned. But if one has to pick for slightly longer term, surely I would look at HDFC Bank, especially after the sort of correction which we saw today post the earnings. And even in the past, I mean, we had those controversies, and because of which this bank was available at about a two-decade plus low in terms of valuation. So I think it's an option to buy right now. But again, it is only for those patient investors who can possibly wait for the next 12 to 15 months. because there may not be fireworks immediately over the next few months. And when it comes to stocks like RBL, I think it's already moved up decently well. Anyway, I mean, the numbers were not really exciting as such. And because of the two large investors who have come in, the banks who have come in, I think there could be some further cleaning up of the balance sheet over the next 1 or 2 quarters. So there can be some pressure going ahead. So RBL, I would avoid at this point of time.
Okay, all right. Well, Jay, what's your preference between private as well as PSU banks technically now?
Well, see, Ekta, I would say that within the private sector banks, we have seen a few of the stocks, in fact, witnessing short covering already, and because of which we saw Bank Nifty, in fact, bouncing back to the levels of 58,500 as well. Now, PSU stocks, mainly, in the last correction, had witnessed good amount of short buildup. And now today, what we have seen, since, in fact, I would say results of Indian Bank, post thereafter Union Bank, we have been seeing the PSU banking stocks actually delivering good, bounce or returns on back of short covering. So I think it could be a mix of both. Canara Bank from the PSU banking bag, I would say that would be the one stock which can still provide good returns from here on. In fact, it could be Bank of India as well, which could deliver good returns from these levels. We can see further short covering happening in these two names. Safe would be SBI. We haven't seen much of short build up there, but that would be the safe stock because it has corrected a good amount, significantly, I would say, from the top end. From these levels, the risk reward is actually reasonable out there. So these would be the 3 banks I would prefer on the PSU side. And if I have to actually look at the private sector banks from here on, from the risk reward point of view, then I would say rather I would prefer the momentum out here. And the momentum out there within the private sector bank is in Federal Bank, it's in IndusInd Bank. I mean, these are the 2 names which I would rather look at it from the private sector banks. I would not be able to comment on ICICI Bank.
Indeed, of course. And IndusInd Bank, of course, reporting results this week. So there will be another stock to keep your eyes on. But Amrish, Jay, thank you for sparing time and joining us today on the show and with your views on all the stocks that made headlines today. Take a short break. On the other side, back with the top corporate voices and some key market events to watch on the other side.
Appears to be increasing.
Welcome back. Here are some of the top corporate voices that we spoke to during the course of the day. First up, we spoke to the management of Canfin Homes, and the company remains optimistic about growth in FY27 and is targeting an AUM growth of 14%. Now, the management said that the higher portfolio runoff seen in the first quarter was largely due to lower disbursements, while it also reflected the transition of a significant portion of its loan book from annual to quarterly interest rates resets. Now, on the profitability front, the company has maintained its credit cost guidance at 10 basis points and expects net interest margins to remain around 4%. The management also said that average ticket sizes are continuing to rise, driven by higher construction costs, with the trend most pronounced in markets such as Hyderabad and in Bengaluru.
Okay, and Vinay Rustogi of Premier Energies told CNBC TV18 that ALMM policy is instrumental in supporting domestic solar manufacturing. However, he did point out that the recent relief was limited to just one segment, with the overall impact being modest. He also said the company's production for the next 6 months is already sold out. Rustagi also added that expansion remains on track, with 5.6 gigawatts of module capacity already operational, while ingot and wafer capacity expansion is progressing as planned. He further said that all capex is being funded via internal accruals with no requirement for external capital.
And before we wrap, we bring you some of the key market events to watch out for going into tomorrow's trade. Ria is standing by with just that. Ria.
Well, yes, first up in the UK, we have the unemployment data to watch out for. And back home in India, the earnings season continues in full swing. On tomorrow's list is Bajaj Auto, TVS Motors, Bandhan Bank, Adani Energy Solutions, Adani Total Gas, IHCL, JSW Infra, M&M Financial Services, Aditya Birla Sun Life AMC, CRISIL, TVS Holdings, as well as MedPlus Health Services. And from this list, TVS Motors as well as Suntec Realty each will be holding board meetings to consider fundraising options. On the IPO front, we have the listing of SBI Fund Management to watch out for. And apart from this, we also have Caliber Mining and Logistics, for which the IPO will be closing tomorrow for public subscription. In other news, PM Narendra Modi will be chairing the NDA Parliamentary Party. And of course, US President Donald Trump is also scheduled to meet with the Lebanese president in Washington tomorrow.
Okay, all right. Thanks very much for that, Ria. And on that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The U.S. bombs Iran for the 9th straight day. Iran retaliates, hits American military bases in Kuwait, targets U.S. aircraft in Jordan's Aqaba airport, claims 2 oil tankers have been immobilized in the Hormuz Strait. U.S. Secretary of State Rubio says Iran is using the Strait of Hormuz as a leverage against the world. Crude prices remain elevated, hover around the $90 mark, even as Tehran claims talks with Washington are ongoing via mediators. Iran's foreign minister says the responsibility of the recent escalation lies with the U.S., reiterates that the management of the Strait of Hormuz lies with Iran. The market closes mixed. The Sensex and the Nifty end lower, while mid-cap index rises. The Nifty holds levels above 24,200. The rupee weakens against the dollar on the back of rising crude oil prices. The Finance Ministry tells Parliament that at present there is no proposal to scrap the 12.5% long-term capital gains tax on equities, highlights an 80% jump in mop-up from LTCG tax between FY24 and FY25, adds that for now FPIs are exempt from LTCG only if they invest in government bonds. India's top 4 private banks report their earnings over the weekend. ICICI Bank outruns others with an all-round performance, is the only lender to see an expansion in its margins. Credit growth outpaces deposit growth in all 4 banks, signalling an acceleration in borrowing. Corporate credit growth pick-up seen across 4 banks as bond funding gets costlier. Our Indian banks cutting manpower. CLSA highlights that the net headcount for the sector stands at 18 lakh and has not changed in the last 2 years. ICICI Bank trimmed its workforce by over 6,000 employees in the last fiscal, the highest among private lenders. Permanent employees accounted for 77% of the reduction. The Parliament's monsoon session kickstarts with the opposition expected to corner the government on the NEET paper leaks and the Ram Mandir donation theft. 7 key bills on the anvil, and this includes amending a 55-year-old bill to give Vande Mataram the same legal protection as the national anthem. The Delhi police resort to the use of tear gas shells and lathi charge to disperse crowds as thousands of protesters march towards Parliament to demand Education Minister Dharmendra Pradhan's resignation. Reports suggest several protesters as well as police personnel injured. Cockroach Janata Party activists meet Health Minister Nadda as top ministers get into a huddle with Pradhan. A dramatic finish to an otherwise drab finale. Spain crowned the Football World Cup champions for the second time as the men in red outclass Argentina with a solitary goal in extra time. The Spanish captain Rodrigo wins the Golden Ball Award for the best player of the tournament, while goalkeeper Unai Simon wins the Golden Glove. Well, let's go straight to the top global story this evening. Hostilities between the US and Iran continue for the 9th straight day, even as Tehran claims a diplomatic exchange is still ongoing via mediators. Now, let's bring you up to speed with the latest developments. US Secretary of State Marco Rubio has said that America is still open to negotiations with Iran, but that diplomacy has to be real. This as the US military has struck Iranian military command centers and missile launch sites to degrade Tehran's ability to attack vessels in the Strait of Hormuz. US forces also confirmed the death of 3 service members in Jordan and Iraq last week. President Trump said that overnight strikes by Washington were, and I quote, in honor of American military personnel killed in Jordan and Iraq, end of quote. Now, speaking to reporters at the Maryland Air Base, President Trump also claimed that the U.S. controls the strait and Iran does not control anything. In retaliation, Iranian air attacks continued across Bahrain, Kuwait and Jordan. Iran's Revolutionary Guards claimed that they attacked U.S. military targets in Kuwait and U.S. aircraft in Jordan's airport. Other Gulf states like Qatar and UAE have strongly condemned Iran's ongoing strikes. However, Tehran still maintains that negotiations are ongoing with Washington. In a press conference, Iranian Foreign Ministry spokesperson Ismail Baghai said the talks are continuing between both countries via mediators. Baghai also said that the responsibility of the recent escalations lies with the U.S. and that the management of the Strait of Hormuz lies with Iran. In the oil market, Brent crude prices close to $90. This as attacks on vessels near the Gulf of Oman were reported overnight. According to ship tracker firm Marine Traffic, 47 vessels have transited through the strait in the last 24 hours. Here's U.S. Secretary of State Marco Rubio urging global powers to share the burden of protecting the waterway.
We are basically providing the service of protecting these ships on behalf of the world, and we're the only ones doing anything about it. So what the president is basically raising the point is, at some point, the countries and the nations benefiting from the shipping through the straits should be able to step forward and provide at least financial assistance for the cost of providing this very valuable service. The straits are supposed to be open, free of tolls, free of attack, free of all the things they're doing against these ships. So they can't have an MOU that's alive if they're violating the terms of it. What I will say is that the United States always remains open to a diplomatic solution.
Well, from one war to another, Russia and Ukraine entering another intense phase with both sides launching major overnight attacks. Moscow fired a wave of ballistic missiles and drones on Kyiv, which killed at least 8 people. Ukraine's President Zelensky has called the attacks as one of the most intense ballistic raids since the start of the war. Russia has also struck Ukrainian ports and vessels in the Black Sea, which killed 10 people. Moscow claimed Ukraine retaliated with nearly 400 drones targeting the Russian capital and surrounding regions. Well, let's bring you up to speed on the market action. Our markets did come off their intraday lows, but closing in the red. The mid-cap index, however, gained about 370 points. The Nifty holding the level above 24,200, closing 94 points lower, 540 lower on the Sensex. That's a cut of about 0.5%, but as I pointed out, it came off its intraday low. The Nifty Bank down by about 1%. The mid-cap index closing in the green today. Well, let's talk about more on the market action. Prashant is standing by now. Prashant, start of a week coming off its intraday lows, but what are the markets factoring in?
Well, off the lows by close by about 100-odd points, but still lower for the week, at least the start of the week. The weekend escalation caused oil prices, as we started this morning, to be above 90. There were some headlines which came through the course of the session. The markets, oil markets pulled back and oil prices fell at about 88 or so. But still higher, I mean, compared to where we were about 10 days back on oil. The Nifty, at least, the market going home with a cut. Nifty Bank lower. I'll get to basically the division within private and public, which is pretty interesting in a bit. Mid-cap index down more, about 0.75%. The small-cap index down a little lesser, but lower nevertheless. And here's the private versus public PSU bank index, right? The private bank index down, the biggest loser, almost about 2.5–3% down, whereas the PSU bank index is the winner. While a lot of the focus and, in the nature of speculation has been that maybe the last 5-year outperformance of private over public is about to start to reverse and privates are looking very inexpensive, etc., etc. If this earnings season is anything to go by, PSU bank earnings still pretty strong if you look at some of the retail heavy segments, so to speak. So that's the banks. But apart from that, the sectors today, pharma in focus, healthcare in focus, and the CPSE index, which was in focus as well. Now, I'm coming to stocks. As far as the Nifty is concerned, Axis, HDFC Bank, and Kotak were the big cuts, but Axis and HDFC down 5%, Kotak down just about 2% or so. Maruti was down about 2%. There was Jio Financial and Infosys, which were lower as well. On the upside was Trent, Power Grid, and Nestle, which were the top gainers. But Trent was up 3%. The other two were up less than 2% or so.
Right, Prashant, many thanks for joining us. From equities now to the currency market action. The rupee weakened against the greenback on the back of rising crude oil prices. However, the rupee fared relatively better than some of its Asian peers. Leaders say the rupee might not fall as much. However, a strong appreciation is not on the cards either. 96.44 is the dollar rupee for you. Now, shares of big private banks, including HDFC Bank, Axis and Kotak Mahindra Bank, were under pressure today after net interest margins compressed in the first quarter. Meanwhile, ICICI Bank bucked the trend and posted an all-around beat. Ritu joins us now to wrap up the report card for the top private banks. Ritu, NIM compression seems to be a cause of concern. That's what weighed on the stock performance today. But overall, what does the future look like for private banks?
Well, the June quarter is in for India's 4 largest private lenders, and while they're all dealing with the same headwinds, the winners are becoming clearer. If you look at the big picture first, overall, ICICI Bank posted the best all-round print of the pack. Credit growth continues to outpace deposit growth at every bank. Corporate lending is also picking up across the board as bond market funding gets more expensive, margins remained under pressure, and fresh slippages have risen again. But most banks are attributing that to seasonal factors after a clean March quarter. Let's get into the numbers then, starting with profitability. HDFC Bank remains the biggest profit machine of the 4 by far in absolute terms, but growth is just 5%, which is the slowest in the pack. ICICI Bank's profit growth far healthier, rising 16%, while Axis and Kotak posted the fastest growth rates on paper, though on a smaller base. Moving on to the core income, ICICI Bank again leading the pack with NII growing almost 13%. HDFC Bank grew 6.7%, while Axis and Kotak reported single high-digit NII growth that trails their much punchier profit growth. On business momentum, though, loan growth remains stronger than deposit growth across all of these banks. ICICI Bank again leading the pack on credit growth. Axis growing pretty fast as well, followed by Kotak and HDFC Bank. Now, Axis is mobilizing deposits the fastest, while on the other hand, Kotak is the standout laggard on deposits with a growth of 12% year-on-year, but almost flat sequentially. Margins continue to be the pressure point. ICICI Bank is again the only bank that was able to expand its margins in the quarter. HDFC, Axis, Kotak, all of them reporting sequential compression, while Axis was seeing the sharpest decline. And finally, on asset quality, Axis is the one bank where gross NPAs rose the most. HDFC Bank ticked up marginally as well, while ICICI Bank and Kotak actually were able to improve. Fresh slippages again rose across the board, but this is more of a seasonal story. Overall, though, ICICI Bank clearly coming out on top.
Well, it certainly did. Ritu, many thanks for joining us. But let's stay with the banking space. CLSA India's senior research analyst Piran Engineer says that the sector has not hired any new employees in the past 2 years, telling CNBC TV 18 that the headcount was stagnant at 18 lakhs, which was the number in 2024, remains the same this year as well. Currently, the total number of public sector bank employees is lesser than private bank employees. This despite PSU banks accounting for 60% of the sector's business. Take a look.
The banking sector has not hired any new employees in the last 2 years. 2 years back, the headcount was 18 lakhs. Today, it is 18 lakhs. So you've actually got a lot of operating leverage that has played out, which is also being ignored. So your OPEX to assets ratio has been improving for all these banks. So if you take like a trend of the last 10 years, PSU banks were growing headcount at maybe 1% CAGR. The private banks were growing at double-digit CAGR, barring, let's say, the years of COVID. Now that double digit has gone down to zero.
So stagnant net hiring there as far as the banking sector is concerned. And this is something that we've, of course, been tracking closely here on CNBC TV 18. Shares of Reliance recovering from opening lows after the conglomerate reported a stronger than expected June quarter. Growth in Q1 was driven by robust performance in its oil to chemicals business. Brokerages retained their bullish stance. Analysts say the company's diversified earnings profile and multiple long-term growth drivers support a constructive view on the stock. More earnings. Ultratech Cement reporting steady numbers. In Q1, domestic volume growth remained in double digits at over 39 million tonnes. Net profit up 17%. Revenue rose nearly 16% on an annual basis. This was driven by healthy demand and improved operating performance. The company also said it remains on track to launch its cables and wires business in the third quarter of this financial year, marking its entry into a new growth segment. The government told the parliament that there is no proposal currently to scrap the long-term capital gains tax on equities transactions for retail and domestic investors. In a written reply, the finance ministry told the Lok Sabha that tax policies, including capital gains rates, are reviewed periodically as part of the annual budget process and legislative revisions. Currently, the government has collected a little over 2 lakh crore rupees via long-term capital gains tax on equities in FY24 and FY25. So no plans to do away with LTCG or cut LTCG on equities. That is the government's response to a question in Parliament. And staying with Parliament, the Petroleum Ministry told the Rajya Sabha that the government has made no decision to raise ethanol blending in petrol beyond 20%. The ministry added that any future decision regarding higher ethanol blends will be taken only after scientific studies and consultation with all stakeholders. The government further added that the E20 transition has been done in a phased manner. Air India's Chief Commercial Officer Nipun Agarwal says the group is aiming to acquire 30% domestic market share in 2 years. Speaking with Madiha, Agarwal said that Air India Express is expected to receive at least 50 aircraft deliveries every year.
Express, as I said, we should start seeing the deliveries from our order book coming through from the later part of this year. And from next year, we expect about 40 to 50 narrow bodies coming in every year for the next several years. So we'll be scaling up very fast. We have 100 aircraft today. In 5 years, we should be trebling it. We should go to almost 300 aircraft. That's a pretty sizable growth. And we'll be expanding both domestically and internationally. And we have plans to grow all across.
Well, that's Nipun Agarwal there of Air India. On to CNBC TV 18 exclusive. Coca-Cola's India bottling arm is prepping for its Dalal Street debut. Sources say the Hindustan Coca-Cola Holdings has picked 4 bankers for its IPO, and these include Kotak Mahindra Bank, Morgan Stanley, JP Morgan and Citi. The IPO is likely to be a full offer for sale where only the parent company will participate. The process is likely to kick off in the last week of July. We'll head into a break, but up next, the Delhi police resort to the use of tear gas shells and lathi charge to disperse thousands of protesters marching towards Parliament to demand Education Minister Pradhan's resignation. That and more when we return.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
The big national story, the Delhi police and paramilitary forces resorted to the use of tear gas shells and lathi charge to disperse crowds as over thousands and thousands of protesters marched towards Parliament to demand Education Minister Dharmendra Pradhan's resignation. Reports suggest several protesters as well as police personnel have been injured. The Kotak Janata Party activists met Health Minister Nadda as top ministers get into a huddle with students, Pradhan. Students and activists led by the Kotak Janata Party and educator Sonam Wangchuk have been protesting for weeks, seeking the Education Minister's resignation and demanding reforms to the education system. There had been no outreach by the government before today. Not just that, until today, no government representative had met them either. Shivani Bazaz captures the mood from Delhi.
ये जो भी बच्चे सुसाइड किया या फिर मतलब पेपर लीक की वजह से जिन बच्चों ने भी सुसाइड किया है उसका जिम्मेदार कौन है?
मेरे को तो लगता ही नहीं है कि 20 बच्चों ने वो सुसाइड नहीं किया, इट इज़ मर्डर।
इंडिया का एजुकेशन सिस्टम ठीक नहीं होगा तब तक वो अच्छे नागरिक नहीं बना पाएगा। मैं चाहता हूँ कि धर्मेंद्र प्रधान का इस्तीफा दो और अपने सिस्टम को सुधारो, वरना ये जो जनता है ये बहुत कुछ कर सकती है।
Well, the anger over here is not just about one paper leak, one exam, or even one city anymore. The anger has actually crossed the Delhi NCR region.
क्योंकि किसी एक बंदे का ईगो इतना बड़ा है कि वो पेपर एक तो लीक हो रहे हैं, अकाउंटेबिलिटी नहीं ले पा रहा है कि उसने पेपर लीक करे हैं। और सिर्फ ऐसा नहीं कि सिर्फ नीट का पेपर लीक हुआ, सीबीएसई का पेपर गड़बड़ हुआ, एसएससी का पेपर लीक हुआ, नीट का जो रीनीट हुआ उसके रिजल्ट्स आए उसमें भी गड़बड़ी है।
यहाँ पर सिर्फ नीट का बच्चा नहीं है, यहाँ पर एसएससी और हर जितने भी देश में एग्जाम हुए हैं सबके बच्चे हैं और सभी यही होप लेके आए हैं कि जो ये लीक हो रहे हैं, चाहे दिल्ली पुलिस हो गया, चाहे सीजीएल हो गया, चाहे सीएचएसएल हो गया, ये एक्सपेक्टेड कोई भी एग्जाम हो गया, उस सब जगह जितने भी एक्सपेक्ट्स है ना उनको इम्प्रूव करना है हमारे को। इसकी अकाउंटेबिलिटी हर जिस भी मिनिस्ट्री की है उनको लेनी पड़ेगी।
एग्जाम अभी हमारे यूपी में लेखपाल का एग्जाम हुआ वो भी लीक, अभी हमारे यूपी में एसआई का एग्जाम हुआ, उसका स्कोर कार्ड देने के लिए सरकार तैयारी ही नहीं है। क्योंकि अगर एग्जाम हुआ है तो बच्चों को कितने नंबर आए देने के लिए सरकार तैयार नहीं है। कोर्ट में भी अपील डाल दी गई है, तब भी कोई सरकार मानने के लिए तैयार नहीं है।
And the students have one demand. They're saying that there should be accountability. Government should be answerable if some mistake has happened. And that is the biggest demand over here. We have heard that Cockroach Janata Party CJP spokesperson have gone to JP Nadda to meet him and speak to him today.
Two reasons why I am interested in this, because that, so many students, they lost their life. Somebody has to take the responsibility, and there is a problem ongoing for the many years. But then we have to fix it, and somebody has to take moral responsibility. And why I am here, you asked a very good question. I am here for two reasons. Because I belong to Andaman, under this minister, our higher education system in Andaman Nicobar Island is destroyed.
The children are in their way, they are very right, but government is doing some manipulation. We can say some education system totally they have changed.
जितने इसके खिलाफ मंचों पर भाषण दिए हैं, जितने बड़े बड़े नेता, मैं उनसे भी चाहता हूं कि विद्यार्थियों का आकर इस संसद मार्ग पर नेतृत्व करे।
आपको कैसा लगता है जब इज देयर फियर, आपको डर लगता है इस चीज से कि बच्चे की जिंदगी खराब
लगता है? तभी तो यहाँ आए हैं, दिल्ली पटना से चल के दिल्ली आए हैं, डर ही लगता है।
With your father today and you really wanted to join the protest, tell me what you think about it.
Yes, ma'am, I was really passionate about this protest. The youth, first time in India, youth have done something like that. And it's a really big issue, the NEET paper leak. Because what's the situation right now? Paper got leaked. And as a youngster, 20 students lost their lives. And we have recorded only 20. We don't know how many students lost their lives.
So the message from the protest is loud and clear. These students and parents are not just demanding answers on paper leaks. They want accountability. Accountability from a system which has regularly failed them in the last couple of years. So, as I told you, there is lathi charge, there is tear gas shelling, but the students are still coming in. The protest is swelling, not just in Delhi NCR, but in other parts of the country as well. At Ashoka Road, this is Shivani Bajaj for CNBC TV 18.
And Parliament's monsoon session kick-started with the opposition expected to corner the government on exactly that, on the NEET paper leaks and the Ram Mandir donation theft. 7 key bills are on the anvil, and this includes amending a 55-year-old bill to give Vande Mataram the same legal protection as the national anthem.
Monsoon ho ya monsoon satra, अगर दोनों प्रोएक्टिव हो तो बहुत ही प्रोडक्टिव होते हैं। और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे।
जो लाखों बच्चों की जो भविष्य है, उनके भविष्य के बारे में मैं बात कर रहा हूं, और उसके लिए आज यहाँ जंतर मंतर पे हजारों बच्चे वहां पर आए हैं, वहां लाठी चार्ज हो गया है, गवर्नमेंट मारने की कोशिश कर रही है, गवर्नमेंट दबाने की कोशिश कर रही है।
And Rachna Dhanrajani joins us now with what we can expect from the monsoon session. Rachna, the key bills that are up for discussion, debate.
Vande Mataram, the national song, is set to get the same legal protection as the national anthem. That is one of 7 key bills the government has listed for the monsoon session of Parliament, which opened today and runs until August 13 across 19 sittings. First, the Vande Mataram Bill, formerly the Prevention of Insults to National Honour Amendment Bill 2026. It amends the 1971 Act, under which disrespect to the national flag, the Constitution and the national anthem is punishable with imprisonment of up to 3 years, a fine or both. The amendment extends that protection to Vande Mataram, making willful insult or disruption of its rendition a punishable offence. The Union Cabinet cleared the proposal in May following the year-long commemoration of 150 years of the song written by Bankim Chandra Chattopadhyay. The bill is listed for introduction, consideration and passing in both houses. Now the rest of the slate. Two pending bills. The FCRA Amendment Bill introduced on March 25th provides for the cessation of an organization's FCRA certificate on expiry or non-renewal and sets up a designated authority to manage and dispose of foreign-funded assets. Then there's the Vikasit Bharat Shiksha Adhishtan Bill, introduced on December 15th and referred to a joint committee. That committee report is expected to be adopted in session. It backs the bill, which dissolves the UGC, AICTE and NCTE in favor of a single regulator while recommending safeguards on institutional autonomy. 4 other new bills. 2 of them replace ordinances which lapse unless approved within 6 weeks of parliamentary assembling. First is the Supreme Court Judges Amendment Bill, which replaces the May 16 ordinance, raising the court's strength from 33 to 37 judges. Then there's the Income Tax Amendment Bill that replaces the June 5th ordinance, exempting foreign institutional investors from tax on interest and capital gains on government securities, retrospective from April 1st. The government has stated the aim is to attract foreign capital and ease pressure on the rupee. Also listed is the Births and Deaths Registration Amendment Bill, tightening delayed registration rules. And then there's the MSME Development Amendment Bill, strengthening the delayed payments mechanism for small enterprises. Separately, the JPC report on the 130th Constitution Amendment Bill is expected in this session. That bill is not among the 7 listed, and as a constitutional amendment, it would require a special majority for passage. So we'll have to see if that one is taken up by this session of the Parliament. But these 7 will surely be taken up.
All right, Rachna, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. We're back in a moment with more.
Hello and welcome to CNBC TV 18 Energy Forum. I'm Sonal Bhutra. Earlier this year, the West Asia conflict disrupted the Strait of Hormuz and it exposed India's dependence on energy imports. So here's the exposure. Crude oil over 90% imported, gas more than half comes in as LNG, LPG around 55 to 60% imported. That's what the crisis tested. On the flip side, we are the world's fourth largest refinery with 258 million tons of capacity, and we export nearly 57 million tons of product. But that only buffers the risk. It doesn't remove it. The real fix is needing less imported fuel altogether, which is why these same companies are now betting big on renewables. At the same time, government is betting big on domestic production, with royalty cuts being announced for oil and gas producers. Upstream and downstream companies have been focusing on a swift shift to renewables. Over 4 lakh crore rupees committed by ONGC, GAIL and IOCL. ONGC alone wants to go from 193 megawatts to 10 gigawatts by 2030. But how practical is this? What makes more business sense? This is the traditional versus the new energy debate, whether both can go on together to make better investor returns or something will work better than the other. And more importantly, what is the best for the energy security? I'm joined by Nigel D'Souza and a panel of experts as well.
Well, Sonal, thanks a lot for that excellent, intro. And we're also joined by Mr. M.K. Surana, the former chairman and managing director of HPCL, and Prabal Sen, oil and gas analyst at ICICI Securities, who joins in. And also, we're virtually going to be joined by Mr. Sandeep Kumar Gupta, the former CMD of GAIL and chairperson at MGL. Well, gentlemen, thanks a lot for joining in, and appreciate you all coming down to the studio as well. Well, Mr. Surana, let's kick off proceedings with you then. India's installed refining capacity is roughly around 258 TPA, I think so. Now, with IOC alone running a 75,000 crore expansion program, HPCL as well as talking about scaling up, could you tell us, are we building for domestic demand growth, or do you think India wants to become a structural powerhouse, probably in the global markets, and look to export?
So, Nigel, as you rightly said, that the current installed capacity is around 258 million ton. With all the expansions which are already there, are going to be there in less 3 to 4 years, it will be around 300 million ton, which includes IOC,
yes,
around 22 million ton. It includes HPCL, HRRL, Rajasthan Refinery. It includes Numaligarh, 6 million ton. So, it will be around 300 million ton. Out of that, almost everything should be getting commissioned next 2 years, except the 9 million ton East Coast, which BPCL is doing.
Okay.
Now, if we see out of this 300, the current consumption is around 243 million ton of the product. When we say 300 million ton, out of that around 33 million ton is an SEZ refinery of Reliance. So, you are having around 267 million ton. Discounting for fuel and loss around 10%, so you are having around 200 and something, 240, 250. So, you are almost just balanced on a gross level.
Correct.
But when you come to the product part, there are some products we are importing, some products we are exporting. So, what we are importing is basically LPG, around 21 million ton. What we are exporting is basically HSD.
Okay.
So, if we see this total on a gross level, it will mostly be able to cater to the domestic demand, considering that last 10 years, let's say CAGR growth of products is around 2.8%, including the COVID down period as well. So, this capacity which you are creating will be just enough on a gross level for, let's say, in 3 years you will be consuming that capacity. But the second part is whether the product to product you will be able to match.
Yes.
There where the issue comes that how we can make it such that we utilize every barrel which we are getting more optimally. So, we have got around 45% diesel, around 17% MS. But the MS growth is around, let's say, 7%, and diesel growth is 2 to 3%.
Right.
So, that is where this alternative mediums which we are talking about, CNG, electric, ethanol, that helps us to have a better utilization of the total crude barrel which we are getting. So, we will be able to use it domestically. We will continue to export from the SEZ. But there is an opportunity for India, especially considering our skill set which we have created over a period of time, to tap this opportunity when the European countries are, OECD countries have become minus 2.5% growth in the refinery sector. All the new refineries came from Middle East or the non-OECD or, let's say, African country. There is an opportunity. At the same time, we need to take care of ourselves.
We still need to tap it, is what you're saying. Mr. Gupta, before I come to you, since we are on the refining subject, Prabal, let me come to you. Because we talk about refining being very strong right now. Spreads are at maybe record high in some of the cases, but this is also because of crisis.
Yeah.
Now that we are mostly serving everything domestically and using it mostly domestically, how do investors read that? Because it can be very cyclical, right? Are these just stocks where you look at them from a dividend yield angle, or when it comes to refining and the opportunity that we are talking about here, that is something which will aid earnings as well?
Yeah, I think it depends on which stocks you're talking about. If you talk about the OMCs, I think the easiest way to look, and Surana sir would be better than that to comment. They always talk, you talk about integrated margins. So at the end of the day, you have to look at what are they earning from both refining and marketing combined. Yes, there are some standalone refiners like MRPL and CPCL, which can benefit in times of, these conflict-ridden or cyclical-ridden spikes. But on the whole, if you look at the refining market, what you are looking at, even globally, as again Surana sir was saying, the developed country continues to see more aggressive closures, whether it's because of environmental reasons, whether it's because of emission levels that, you cannot process certain kinds of crude, particularly in Western Europe. So on an overall basis, I think the balance for refining will continue to tighten.
And that will improve margins?
That should improve the refining balance and therefore refining margins over the next few years. So in that sense, I think refining probably looks to be cyclically better over the next 2 to 3 years.
Okay, so I'll come back to you on that. A lot more questions. But Mr. Gupta, when we talk about gas, of course, India has been trying to get better in terms of its gas mix and overall energy consumption. But what happens now to the pipeline build-out? We are talking a lot from the CNG pipeline perspective as well. LPG imports became such a big problem during the crisis. Give us your perspective. Where do we need to build faster? And where can we look at gas infrastructure development at the immediate level?
Yes, Sonal, good afternoon to you and your co-panelists and co-anchor, and good afternoon to all the viewers. Sonal, first of all, perhaps in your introduction, you mentioned oil and gas companies as sin companies. So I want a correction because while we may be emitting carbons at the place of production, but even renewable is equally polluting. Hello, am I connected?
Yes, sir. Please
are connected.
Make your point, sir.
Yes. So as far as natural gas infrastructure is concerned, we are already ready. The country has 8 import terminals, LNG terminals, and they are utilized only to the extent of about 50%, and more terminals are in the offing. The work is on. As far as pipelines are concerned, again, the utilization is about 50-60% only. And while the pipeline laying is authorized by PNGRB, so as and when they feel the need for more pipelines, they invite the expression of interest, and the oil company or the gas companies bid for that. So as far as infrastructure, and the same is the case with city gas distribution, with the entire country being authorized in 307 geographical areas. And each entity which is authorized is expanding the infrastructure in their own geographical areas. So I believe there is no dearth of infrastructure, and infrastructure in country as it should be has preceded the consumption. And as the consumption grows, we will definitely, all the companies put together, we will expand the infrastructure also. The problem in gas consumption as of now, why it is not picking up to the extent which we would like, is the foremost is the taxation issue. GST should have come in, the natural gas should have come in GST long back, but it has not happened still. And there are states which are levying 24.5% VAT even now, while there are many other states which have 0% or 3% or low taxation rates. But I think it is now time that natural gas is covered under GST. The second is the 14% excise duty on CNG. That is totally ridiculous, and it should go immediately. And that will give a big boost for CNG consumption in the vehicles. So if these two things are done, perhaps this will give a fillip to natural gas consumption in the countries. And in fact, we are asking only for the level playing field. And same is the case with the GST rates on vehicles, whereas the electric vehicles enjoy good taxation rates, lower rates. The CNG vehicles are charged with 28% GST rates. So if level playing field on taxation front is extended to natural gas, I think everything is ready, and the consumption will just pick up.
Okay, take that point, Mr. Gupta. Before we come to you again for the refining part, Probal, since we talk about a lot of these gas utilities, some of them are annuity businesses. If we talk about GAIL from the tariff or the pipeline perspective, but then the marketing volatility makes it very difficult to judge a particular quarter. If we talk about CGDs, they were the darlings of investors at a point in time, but then again, there are regulatory hiccups that keep coming. How can an investor view these companies when it comes to the gas pipeline bit? Do you think what Mr. Gupta just mentioned could be some of the things which could improve investor interest here? There is interest, but how do they look at the investment approach when it comes to the gas utility bit?
I think fundamentally one of the points Gupta sir mentioned is very important, whether CNG is looked at as a transition fuel or the country's regulators are looking at a complete migration to EV by skipping the transition altogether, which in my mind is probably less practical to do. And therefore, as long as CNG remains a transition fuel and is seen as a relatively cleaner fuel in comparison to other fossil fuels, I think demand will continue to grow for the next 10 years at least. That is as long, and that belief has to basically come into the market that it is not a market of this or this, it has to be a market of this and this and this from an energy source perspective. And there I think CNG definitely scores much better than traditional fossil fuels. And when you look at basically how we transition away from, traditional hydrocarbons to completely EV somewhere down the line. So one of the concerns that the street has, or one of the concerns that investors have, is how do you value the terminal value, in the sense that, when you're looking at it 10 years down the line, do you attribute a residual value to these businesses? There I do believe that in India, given the kind of growth that's happening in overall energy consumption and in the overall vehicle population, even if EVs were to capture a lion's share, 20%, 30%, your residual growth itself is enough to support reasonably stable growth for CGD businesses, specifically in the CNG segment. But right now, of course, sentiment is different. The policy that came into Delhi obviously has dampened sentiment a bit. But my sense is this is a transitory issue. And as we go along, gas consumption should continue to grow at a fairly steady space.
You're positive on the CGD
Yes,
space?
I would say that, gas space should look positive from a slightly long-term perspective.
Mr. Surana, let me come back to you then. Indian refiners, they reportedly function at around 105, 115% of nameplate capacity. What do you make of it? From an investor that's looking at, should this be rewarded because of effective asset utilization level? Or should they be a little bit worried that there could be possible burnout taking place? How do you view it?
So if you do good also is a problem, if you do bad also is a problem. The capacity utilization is a function of 3-4 things. First thing is the way you designed the refinery, especially the cushion you kept in the critical piece of the hardware. So it is not, you cannot have the cushion all over.
Right.
But there will be some equipment which are very critical, whether you have the cushion there, that's one. Second thing is, normally you factor in some amount of breakdowns or shutdowns. But if your asset integrity management is good, and your maintenance, your inspection, your predictive maintenance is good, then you can run uninterrupted a refinery for 4 years.
Okay. No maintenance shutdowns required then.
Normally the refinery will be shut down only once in 4 years.
Okay.
Everything else which you are doing is basically a breakdown. Now that breakdown will not happen like all over the refinery, but there will be some critical equipment. If that breaks, the whole refinery will come down. But if your predictive maintenance is good, there are lakhs and lakhs of piece of equipment and instruments and these are there. But if you keep on having one item failing, and you can keep on having the shutdown, the starting up and shutting off the refinery is more critical than running a refinery.
True.
So that is the second piece. Third thing is your operator's skill set to run as near to the design optimality as possible. So you will always have a band of what we call is operating envelope. If you can operate in that envelope, you can flog the refinery and you can have the higher than 100% capacity utilization. But that does not mean that anything is okay. So you can run a vehicle of a 60 kilometer to 80 kilometer, but if you start running 150 kilometer, it will have an impact. So as far as you are within the operating envelope and you are able to do, so logically a good running refinery must have 100% capacity utilization or more than that, because the refinery profitability has got a high sensitivity to the capacity utilization, because your run day, the volume which you handle, so 1 day shutdown will never be 1 day shutdown. So basically a good capitalization is very good. The investor should reward it if some companies are able to consistently do a capitalization of 105, 110%. If they are doing 130%, 140%, then there is a problem. Either they are nameplate capacity understated or they are not utilizing the full gamut of the thing which is there.
So higher capacity utilization should be rewarded.
Within a limit.
Within a limit. Okay, get it. Mr. Gupta, let me come to you, because when we talk about GAIL as well and any particular company in this space, we do think about regulatory risk. There are tariff settings by PNGRB, there's gas pooling, there's pricing reform as a swing factor. And how does one look at it from an earnings predictability? When you were heading GAIL, this is something that you would have seen as well, regulatory notices, PNGRB regulations. How does that make things different for the person running the business and for an investor when they're looking at this business from an investment perspective? And how does that renewable switch happen then? What does the capital allocation look like in that case?
Yeah. So as far as the regulatory changes are concerned, except for the taxation which I talked about, the only thing perhaps which is bothering the investors or you is the PNGRB tariff petition, where GAIL for its integrated pipeline network had filed say revision of $78 rupees per MMBTU, and PNGRB fixed it at 65.69, up from 58 rupees earlier. Now, in this case, I would only mention that this is only a matter of timing, because in the scheme of things, the time value of money is already built in. So if there is delay in fixation of the due tariff, then the compensation of that automatically flows to the entity in the next revision. So it's only a timing issue. Perhaps PNGRB in its wisdom felt that the current customers, current consumers should be subsidized at the cost of future consumers. So that is why they have done it. But our belief is that it should be strictly formula driven, and the entire increase should be given to the entity as and when it is due, because then it becomes possible for the entity also to take suitable steps for building the infrastructure. While we are a government company and we do not shy away from creating more and more infrastructure despite all such constraints, but there can be other entities who may not be able to do that. So besides that, I do not see any regulatory challenge for GAIL. And this itself is also not a challenge because this is only a timing difference. As far as renewable is concerned, so as the other panelists also mentioned, that it is not a case of this versus this, but it is this plus this plus. So all companies, whether they are in the oil space or in the gas space or otherwise, every company is building renewable portfolio. We will also be scaling. As you are aware that we advanced the net zero target from 2040 to 2035, and we are very sweetly poised towards achieving it.
Okay, all right. Got that, sir. Mr. Gupta, hold that thought. Prabal, let me come across to you. Let's talk about the upstream companies. The government is bringing various policies in place to improve production. In this sort of a backdrop, and since pricing at least has improved, hopefully the war doesn't come back, but at least there is some kind of base to pricing because of what we have seen. Your view on some of these upstream companies, ONGC, Oil India, production growth hasn't been there, but now they have set out better targets, say, for the next 2-3 years.
I think very clearly the narrative from the companies has been very clear that the government has been working very closely with them to more aggressively push for exploration and essentially encourage them to basically deliver on the kind of capital utilization plans that they have, number one. Number two, I think there is a lot more focus on efficiency of operations. Alongside exploration, I think there's very clearly a focus on basically looking very closely at the costs and improving the operational efficiencies across the board in terms of budget utilization. Number three, what this may prompt, and I'm only guessing here that in the kind of environment we are in, with the better cash flows that are now going to be accrued to them, because with the changes in the oil field regulations, windfall taxes of the sort that were put in place in the context of the Russia-Ukraine crisis, those I have not been imposed, which is, I think, very encouraging. So net realizations are probably on track to deliver a decade-high number for this financial year, if crude prices were to remain in this $80-85 range for the rest of the year. So that should basically, encourage them to even go on the inorganic route and acquire more upstream assets overseas as well. And again, this is just a thought on my part. Basically, it's about securing upstream resources. If you can do that through domestic sources, great. If you can do that through overseas sources, even that is good. Mozambique Area 1 is going to start operations in the next 3 years. That's a big project in which BPCL, ONGC, Oil India all have a stake. So that should provide us some equity, LNG as well, to a significant extent. So all of those things should help, boost upstream operations to a certain extent.
Okay. So, Mr. Surana, when this is a question I asked Mr. Gupta as well, because all these companies are making a switch towards renewables. They do have targets in place, and that would require money, right? So, one, how do returns differ when it comes to traditional businesses versus new energy? Because generally it is lower in new energy. Traditional businesses have good margins, and dividend is something that investors like about all these oil marketing companies or GAIL or gas companies as well. How does it differ for the two businesses?
So the question is whether you want a Kotak moment in the business or you want to keep on evolving and adapting. So the oil and gas business still continues to be the cash cow for all these companies, and the resources are generated from there. But they have to periodically keep on investing for the futures. So like at some point of time people invested in petrochemicals or natural gas, that is giving a dividend now. The traditional fuel transportation business still continues to be the mainstay. Now for the future, if suppose tomorrow you got a carbon tax, or let's say if you are exporting and there are certain restrictions on that, then it may become a survival issue at that point of time. And furthermore, when you are having BS3, BS6, those type of thing, you need a lot of hydrogen. Now, if that hydrogen is having a carbon footprint, again, if you are not having a green hydrogen. So basically what you are doing is you are at one end trying to making future-proofing yourself by investing in this, which may become a future business generation for you. And at the same time, right now, when the current business is on, you cannot start doing a new thing when your old business is closed. So you need to have resources and you have to start doing in good time.
Right.
So to that extent, it is a path which is being followed. Now, there are multiple pathways which the companies are following. It is EV, it is hydrogen, it is ammonia, everything is being tied up. There will be some will be successful, some will not be, some will go faster. So all horses are running, let's say who goes forward.
Okay, so Probal, since you're short on time, I want to understand from an investor's perspective, how do they look at this space now? Is it a dividend yielding investment that they are making? But since they are running a lot of horses, 10 years, 11 years down the line, it will bring in returns, and a longer horizon should be taken for investments in OMCs or gas companies.
Yes, I think particularly in the current context, long term is obviously the way to go, because you have got a situation which is changing every week or every 2 weeks, and your entire year's earnings can actually go. Sir would have dealt with those situations where 1 quarter earnings, can basically change the entire financial year. So obviously you have to look long term. In the long term, dividend yield will remain a factor in my opinion, because having a 5 to 6% dividend yield is, I think, a significant value driver that cannot be ignored. But at the same time, if you are looking at basically integrated energy as a sector to invest in, I think if they can actually manage to develop the new energy alongside an equally strong oil and gas business, then all of these businesses will look in better shape from a balance sheet perspective as well over the next 5 years.
Okay. All right, gentlemen, we did have a lot more questions. Mr. Gupta, thank you so much for joining us. Mr. Surana and Probal as well. Interesting conversation, a lot more, but we'll do that for some other time. But thank you so much for joining us today.
Thank you so much. Thanks.
and welcome to News Centre. I'm Ritu Singh. Batons, barricades and a prolonged wait for engagement. That has been the story of the student protests at Delhi's Jantar Mantar over the last few weeks, as thousands demanded accountability and reforms to India's examination system. So what exactly are the protesters asking for? Here are their key demands. First, they want Union Education Minister Dharmendra Pradhan to resign, holding him accountable for repeated alleged lapses in competitive examinations and recruitment tests. Second, they are demanding comprehensive reforms to the examination system, stronger safeguards against paper leaks, greater transparency, and measures to restore the credibility of public examinations. Third, they have sought compensation for the families of students who allegedly died by suicide amid exam cancellations, paper leaks, and prolonged uncertainty. Now, until today, these protesters say there had been no formal outreach from the government and no senior government representative had met them. That changed dramatically today. Delhi police, backed by paramilitary personnel, used tear gas shells and lathi charges to disperse crowds after thousands of protesters had marched towards the parliament demanding the education minister's resignation. Reports indicate several protesters and police personnel were injured during these clashes. Now, even as tensions escalated on the streets, the Cockroach Janata Party activists met Union Minister JP Nadda, while senior ministers held consultations with Dharmendra Pradhan. Now, in what comes as the first government response on the issue so far, Health Minister Nadda said protesters submitted a written petition to him. He said he's requested all the protesters to end their sit-in and assist the administration in restoring normalcy. So the questions that we're asking tonight: why did it take 3 weeks for the government to engage with the protesters? And if dissent indeed is the safety valve of democracy, could this confrontation have been handled through dialogue much earlier? We are going to discuss all of that and more, but first, let's get you an account from my colleague Shivani Bazaz on how the march to the parliament unfolded today.
ये जो भी बच्चे सुसाइड किया या फिर मतलब पेपर लीक की वजह से जिन बच्चों ने भी सुसाइड किया है उसका जिम्मेदार कौन है?
मेरे को तो लगता ही नहीं है कि 20 बच्चों ने वो सुसाइड नहीं किया. इट इज मर्डर.
इंडिया का एजुकेशन सिस्टम ठीक नहीं होगा तब तक वो अच्छे नागरिक नहीं बना पाएगा. मैं चाहता हूँ कि धर्मेंद्र प्रधान का इस्तीफा दो और अपने सिस्टम को सुधारो, वरना ये जो जनता है ये बहुत कुछ कर सकती है.
Well, the anger over here is not just about one paper leak, one exam, or even one city anymore. The anger has actually crossed the Delhi NCR region.
क्योंकि किसी एक बंदे का ईगो इतना बड़ा है कि वो पेपर एक तो लीक हो रहे हैं, अकाउंटेबिलिटी नहीं ले पा रहा है कि उसने पेपर लीक करे हैं. और सिर्फ ऐसा नहीं कि सिर्फ नीट का पेपर लीक हुआ, सीबीएसई का पेपर गड़बड़ हुआ, एसएससी का पेपर लीक हुआ, नीट का जो रीनीट हुआ उसके रिजल्ट्स आए उसमें भी गड़बड़ी है.
यहाँ पर सिर्फ नीट का बच्चा नहीं है, यहाँ पर एसएससी और हर जितने भी देश में एग्जाम हुए हैं सबके बच्चे हैं और सभी यही होप लेके आए हैं कि जो ये लीक हो रहे हैं, चाहे दिल्ली पुलिस हो गया, चाहे सीजीएल हो गया, चाहे सीएचएसएल हो गया, ये एक्सपेक्टेड कोई भी एग्जाम हो गया, उस सब जगह जितने भी एक्सपेक्ट्स है ना उनको इम्प्रूव करना है हमारे को. इसकी अकाउंटेबिलिटी हर जिस भी मिनिस्ट्री की है उनको लेनी पड़ेगी.
एग्जाम अभी हमारे यूपी में लेखपाल का एग्जाम हुआ, वो भी लीक. अभी हमारे यूपी में एसआई का एग्जाम हुआ, उसका स्कोर कार्ड देने के लिए सरकार तैयारी ही नहीं है. क्योंकि अगर एग्जाम हुआ है तो बच्चों के कितने नंबर आए देने के लिए सरकार तैयार नहीं है. कोर्ट में भी अपील डाल दी गई है, तब भी कोई सरकार मानने के लिए तैयार नहीं है.
And the students have one demand. They're saying that there should be accountability. Government should be answerable if some mistake has happened. And that is the biggest demand over here. We have heard that Cockroach Janata Party CJP spokesperson have gone to JP Nadda to meet him and speak to him today.
Two reasons why I am interested in this, because so many students, they lost their life. Somebody has to take the responsibility, and there is a problem ongoing for the many years. But then we have to fix it, and somebody has to take moral responsibility. And why I am here, you asked a very good question. I am here for two reasons. Because I belong to Andaman, under this minister, our higher education system in Andaman Nicobar Island is destroyed.
The children are in their way, they are very right, but government is doing some manipulation, we can say some education system totally they have changed.
जितने इसके खिलाफ मंचों पर भाषण दिए हैं, जितने बड़े बड़े नेता, मैं उनसे भी चाहता हूं कि विद्यार्थियों का आकर इस संसद मार्ग पर नेतृत्व करे।
आपको कैसा लगता है जब मतलब इज देयर फियर, आपको डर लगता है इस चीज से कि बच्चे की जिंदगी खराब
लगता है, तभी तो यहाँ आए हैं, पटना से चल के दिल्ली आए हैं, डर ही लगता है।
With your father today and you really wanted to join the protest, tell me what you think about it.
Yes, ma'am, I was really passionate about this protest. The youth, first time in India, youth have done something like that. And it's a really big issue, the NEET paper leak. Because what's the situation right now? Paper got leaked. And as a youngster, 20 students lost their lives. And we have recorded only 20. We don't know how many students lost their lives.
So the message from the protest is loud and clear. These students and parents are not just demanding answers on paper leaks. They want accountability. Accountability from a system which has regularly failed them in the last couple of years. So, as I told you, there is lathi charge, there is tear gas shelling, but the students are still coming in. The protest is swelling, not just in Delhi NCR, but in other parts of the country as well. At Ashoka Road, this is Shivani Bajaj for CNBC TV 18.
All right, that was my colleague Shivani reporting from Jantar Mantar. But let's take this discussion forward. We're joined by activist Anjali Bharadwaj, who's also the co-convener of the National Campaign for People's Right to Information. She had also joined the protesters backing the Cockroach Janata Party, seeking accountability from those who are in power. Anjali, thank you so much for taking the time out to join us today. You know, these images you're getting to see from Delhi, lathi charges, tear gas and whatnot, injuries on both sides as well. You know, to start with, from a civil liberty standpoint, where do you believe the line really is between maintaining public order on one hand and protecting the constitutional right to a peaceful protest?
Ritu, I think what is really worth talking about is the demands of the students, which you have just shown through your reports on the ground. Let us recognize that there is a very, very serious deficit of accountability, and the manner in which examinations are being conducted in our country, the manner in which there have been paper leaks and repeated paper leaks. This is not a question of any one paper getting leaked. This is something that has been repeating itself over the last several years. And students have regularly been raising their voice. There has unfortunately been very little engagement. In fact, I would say no engagement from the government side. More than 22 students have killed themselves. They have died by suicide. So this is a very grave situation. We know when students go and take their exams in our country, there's a very large percentage where families can't really even afford it. They have to put everything that they have, they go into debt to be able to put a child through school and then help them sit for a NEET exam or some other exam. So it's the entire family which gets affected. And then children are dying by suicide because there is that high level of stress, anxiety, and frustration that they're having to face. Now, clearly, there has to be some accountability for these kind of paper leaks. Unfortunately, we have been seeing that despite these repeated paper leaks, this kind of problem that has set into the examination system, there has been nothing that the government has been doing in any real term. And the students have been sitting for the past 1 month protesting. So the CJP is really, that's a name, that's some, a group that has come together, but it's really the students of the country. And they are saying, the youth is saying, the future of this country is saying that we want accountability from the government. And accountability has to start at the top. They are asking for the resignation of the education minister. The government has refused to engage with them for the past 1 month. 22 days. People have been sitting on a hunger fast. Sonam Wangchuk has been sitting, but also students. Neha, Manish, Amin, many other students have been sitting for 22 days. It's not a joke. The government has just not engaged. And they gave out this call for a parliament watch. for a parliament march if nothing happens. And the government didn't reach out. This needn't have happened. If the government had reached out in time, if the government had responded to their demands, these kind of scenes needn't have played themselves out at all. It is very, very unfortunate.
It is indeed. And, of course, the students and their parents are demanding accountability. But, like you said, perhaps if there was engagement earlier, some of these scenes could have been avoided. But now that we've finally seen some ministers reach out today, is that going to be enough, at least in the near term, to bring down the temperatures? Or do you think unless students get a concrete roadmap on some of these demands they put forward, especially on accountability and the resignation of a minister, is that what it will take to cool down temperatures?
So let's understand, we've had examinations, we've had all these examinations happening for decades. The system was being managed. There was the CBSE, which was doing many of these exams. The NTA, the National Testing Agency, was put in place. It's a highly centralized agency. There has been a lot of concerns about the NTA, the way it has been set up, especially because it has been set up not under an act of parliament, which means there is no legislative oversight. So the NTA is not accountable to the parliament of the country. And the NTA has been set up as a society under the Societies Registration Act. Now, this makes everything a big joke because we need an organization like the NTA, which conducts exams for more than 1.25 crore students every single year, to be a highly accountable body. But it has been set up as a society. And then it really, everything lands at the doorstep of the government, of the minister in charge, which is the education minister. Because if the NTA is not accountable to the parliament, if the NTA is this completely centralized body, which is conducting NEET, which is conducting JEE, which is conducting CUET, and then it continuously fails, repeatedly fails, and there are these paper leaks and exams are either postponed or cancelled, it affects the lives of students. So what is required is a very, very systematic accountability framework to be brought in. The NTA in its current state must be dismantled. And the education minister has to take accountability, because we cannot have, last time we heard that in the Supreme Court, when this matter was being heard, we were told that the Prime Minister is now looking into this matter. Now, is this how in the NEET exam, is this how examinations can happen in a democracy? And the manner in which the government is today dealing with the protests is completely undemocratic. Protests are extremely legitimate. These are peaceful protests, and the government should engage, not turn students into their adversaries.
Anjali, we're out of time here, but thanks very much for joining in, with your thoughts on the matter. We will, of course, continue to take this discussion forward, and we're now going to be joined by Sanjeev Srivastava, a senior journalist who will be with us after the short break. Stay tuned. We're back in just a moment to continue this discussion.
Iran's negotiating.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
back. You're watching News Centre. Now, the monsoon session of the Parliament is kicked off on a stormy note today. The opposition protested the alleged neat paper leak and the reported theft of donations from the Ram Mandir Trust, demanding a formal discussion on both of these issues. Now, both the houses were adjourned for the day. Ahead of the session, Prime Minister Narendra Modi urged all political parties to ensure that there is meaningful discussion in the Parliament session. He also highlighted India's economic resilience amid the disruptions that were caused by the West Asia conflict. Mallikarjun Kharge, the leader of opposition in Rajya Sabha, raised the NEET examination row, saying it concerns the future of lakhs of students. Listen in.
मॉनसून हो या मॉनसून सत्र, अगर दोनों प्रोएक्टिव हो तो बहुत ही प्रोडक्टिव होते हैं। और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे।
जो लाखों बच्चों की जो भविष्य है, उनके भविष्य के बारे में मैं बात कर रहा हूं और उसके लिए आज यहाँ जंतर मंतर पे हजारों बच्चे वहां पर आए हैं। वहां लाठी चार्ज हो गया है, गवर्नमेंट मारने की कोशिश कर रही है, गवर्नमेंट दबाने की कोशिश कर रही है।
Refusing a discussion is what has led to today's disruption, because the opposition wanted these issues up there, wanted an opportunity to talk about them on the floor of the House. And if Parliament is not there for raising these issues, then honestly, what is it for? I mean, it can't just be a sort of notice board for the government to announce its bills and get them passed.
Well, let's bring in our guest, senior journalist Sanjeev Srivastava. He joins us now for more on what we should expect from this Parliament session. Sanjeev, thank you very much for taking the time out and joining us here. You know, the opposition choosing to begin the session pressing for discussions on the paper leaks and the Ram Mandir Trust donation theft. What are you expecting in this session? I mean, is that going to set the political narrative for the rest of the session, or just the opening salvo with those?
I think the narrative has been set these last few parliament sessions. The opposition and government never seem to see an eye to an eye, and they're never on the same page. And the same trend is likely to continue in this session as well. The big question is about the numbers. The big question is whether the BJP, which its supporters and BJP leaders were suggesting in the run-up to this session, that they will somehow get to that magical number of 362 to ensure a two-thirds majority for themselves in Lok Sabha. So one has to watch out for what happens to those numbers and when do they come into play. And till then, the opposition and government will be doing shadow boxing on different issues. The opposition, obviously, like today, they will try and raise the examination leak issue, this Jantar Mantar protest, the Ram Mandir Chanda Chori issue, and the government, of course, will try and force through its own agenda, which is some important legislations they have in mind. But most of their legislations and their actually revolve around the number, whether the government will or will not have that number to push through its parliamentary agenda of two-thirds majority, actually, because most of their agenda centers around constitutional amendment.
Sanjeev, if you just go by the Prime Minister's remarks, very much focusing on the economic agenda, saying how the economy remains resilient irrespective of what's happening, what's ongoing in West Asia. Do you think some of these economic issues, therefore, are likely to dominate, just going by the Prime Minister's remarks, over this political bickering, that seems to be happening?
See, I really don't know whether these remarks were part of his opening remarks about monsoon and monsoon session being productive, about Indian economy being resilient. That, of course, itself is subject to debate. how resilient or not resilient we are. What does the future hold like? Will he come out with certain taxation reforms? There was so much of talk when the markets were really going south a few weeks back about what kind of legislation or reforms may be done. But now all that talk has taken a backseat. Maybe Parliament is the right forum for them. I think if the opposition comes up with some interesting and positive measures on tax reforms or financial reforms, and if they take the opposition also into confidence, I'm sure that should not be such a contentious issue as other issues like delimitation bill. And but again, that would much depend on what kind of number game plays out at the end of the day in Parliament. Does the government get that number of 2/3 majority, which can help them push through those legislations? Because at the heart of it, everything is politics, no?
Yeah, yes, very much. But the agenda is very much economic as well. But, Sanjeev, there are 7 key bills that are lined up, everything from the Vande Mataram song to, education-linked reforms. What to your mind, with this ambitious agenda, what do you think we'll see, would get priority out of these?
Very difficult to outguess the government or second-guess the government. But given a choice, if I had a choice, which I do not have, but at least, but the Vande Mataram bill or debate is something, how will it help the nation? It's something which is aimed at a political end, not really an administrative, financial, fiscal, or any long-reaching thing which matters to the country. But that is something which will serve some politics for the BJP. It will again polarize the House. And so that's a different ballgame altogether. But if they come up with a meaningful education reforms bill, but how meaningful will it be? The government doesn't seem to really believe in engagement with either the protesters or the opposition. So I would still like to trust the government that they may have taken their concerns and demands on board and come out with a good bill. I'm sure if it's a good comprehensive bill, which meets the concerns of everybody, the opposition should support that bill. Because the one thing which we really and desperately need in our country is a proper education system, which is really right now going nowhere. It is causing us more harm. Daily keep on reading how government schools produce children who can't even properly read, write, count, multiply. So we need to have a proper education system if we really want to become a Viksit Bharat by whenever, 2047 or whenever.
Sanjeev, in your breadth of experience, you've been looking at this for a long time. We've seen sessions that are politically noisy but legislatively productive and others that are complete washouts. Based on the start today, and it's been a stormy one, which way do you think the session is headed?
I'm no soothsayer. I really cannot predict that. But like a parrot, I'm repeating it myself. If the government has the numbers to push through constitutional amendment bill, then however noisy this session may be, the government will get its legislative agenda implemented as much as they want. Yeah, I think women reservation, one nation, one election, they may be coming first on the block. The UCC, etc., I still think because of some of the alliance partners only of NDA like PDP not being fully supportive of it, that may have to wait. But if they do not get the numbers right, if they still fall short, then this session is likely to be a washout and will be devoted to a lot of noise and just chaos. Because then the government will not have the numbers to push through its constitutional amendments, opposition will not relent, and the government has so far shown no interest in meaningful engagement with the opposition. So then you know what the end result will be. So let's see.
Yeah. All right. Sanjeev, thank you very much for joining in with that. We thank you for your time here. Thanks very much.
Thank you.
And on that note, we're going to wrap up this edition of News Center. But stay with us. More news and updates continue right here on CNBC TV 18.
headwinds.
India has created history, and that is thanks to Skyroot Aerospace, one of India's homegrown startups. And they have done what no other private company in India has done so far. They've taken a rocket to orbit. Remember, this is a company that was founded only in 2018. It did its first rocket launch, which was suborbital Vikram S in 2022. And today it has made history, taking India into the space race with capabilities in the private sector to do rocket launches. It launched with the idea of being the Uber for space, and that is the ambition and the aspiration that drove Pavan Kumar Chandana and his co-founder to take aerospace to where it is today. Joining me now to talk about the big day, everything that went on to get Vikram 1, which is their homage to Vikram Sarabhai, into orbit, is Pavan Kumar Chandana. Pavan, congratulations from all of us here at CNBC TV 18. You know, we've tracked your journey pretty much from inception, from 2018 to your launch in 2022 and today. You know, I have to say, Pavan, as I was watching that moment with you sitting in the control room, there were many goosebumpy moments. But for me, the biggest goosebumpy moment was watching all of those young scientists and engineers. The average age at Skyroot is 28. The hope and optimism on their faces, that for me was the highlight of this morning. Besides, of course, watching that rocket go up on space. What were you feeling as you sat there, Pavan?
Yeah, I think, Shireen, we have done something no company has done before. We launched India's first privately developed rocket to orbit in the very first attempt. There's also a very large global milestone because hardly any company who attempted orbit without past heritage has succeeded in the very first attempt. And it's all been done by, like you said, a 28-year-old average team. And then handling such level of complexity as rocket science and achieving it to orbit in the very first and nailing it is phenomenal. I mean, it still feels like a dream to me.
You know, I'm sure you will take time to absorb the enormity of the milestone that you've just achieved. And as you pointed out, in the very first attempt, and not many rocket companies can claim that. But Pavan, you know, I want to go back into the control room because it was supposed to be an 11:30 a.m. launch, and then there was a revised timing of 12:05. And, you know, when they reinitiated the ALS, my heart was beating really fast. And I could see, you know, when I was watching you on your screens, you didn't exude any nervousness, but there was a sort of equanimity there on your face. What were you feeling when the time was revised, the launch time was revised?
See, when a rocket launch is going on, you know, you should be as cool as a cucumber because you should take the right decisions at the right time. And in fact, the rocket launch, the automatic launch sequence putting on hold is, put us everybody aback, and we had to solve the problem, and our team really looked into it, solved it very quickly. We're back on track in just few minutes. Just by 30 minutes, move. In fact, like the day before launch, most rocket companies pray that it has to lift off because typically the automatic launch sequence holds for everything because that's its job to do. And we had a hold, but we had to solve it, and we solved it, and we got back to lift off.
Pawan, I'm sure that there has been some amount of a debrief that has already happened, and your team has looked at what this mission has been able to achieve so far. I'm no rocket scientist, I'm no expert, but I've only been looking at some of the feedback, and there were some sort of, nervousness around the stage 3 aspect of the mission. If you can explain to me whether you shared that nervousness as well, and if I were to ask you to debrief the mission, what would it read?
No, in fact, if you saw the trajectory, it was pitch perfect. It was spot on. It was tracking the trajectory throughout it, and there was some visual observations during the stage 3 separation. We are yet to understand what exactly it is, but the mission went perfect. We are going through the data right now, and mission all data looks so good, and we reached orbit seamlessly. Right. So I think the data said for itself, and it was fairly good. But in fact, we lost some communication in between, and the communication came back, and then we were able to track the vehicle really well, and it reached orbit.
Well, I'm sure that all of this is going to be, of course, something that will be looked over in time. But Pawan, let's explain to our viewers what has happened today. Let's start by talking about Vikram 1. Now, for the layperson, it's as large as a 7-story building. It is completely designed and made in India. What have been some of the other unique aspects that you want to call out about Vikram 1?
So Vikram 1, Shireen, is India's first private orbital rocket. That means the rocket has a capacity to put satellites into orbit. And the rocket, as you said, is 7-story building tall. And it is completely built with carbon composite. Carbon composite is 5 times lighter than the strongest steel. And it makes the rocket very light, more efficient. It has engines which uses 3D printing to manufacture. And as the rocket goes, the rocket separates, the stages separate. And we use, a modular and a proprietary separation system, which is very low shock and uses pneumatics. And so many of such technologies were introduced first time in the country, and then we made it to orbit despite the complexity of the tech and completely new, a lot of new tech into it, and also fairly complex rocket science which went into the first mission, and very happy that we reached orbit in the very first attempt.
Yes, let's also talk about the payload now, Pawan, because it is, of course, one of your own satellites. You also carried, as part of the payload, other satellites as well, and some other interesting items that went into orbit also. Take us through the payload and the significance of what went up.
See, the statistics show that, the first launches, to orbit never succeed. So typically they fly with either dummy payloads or no payload. And at Skyroot, we have been very fortunate to fly 6 payloads. And 2 out of the 6 are satellites which separate. One of it our own satellite, Scope, and the other satellite of Graha Space. Both of them successfully separated. And then we ejected satellites into orbit in the very first attempt. And you have payloads, very interesting payloads, like we have a robotic arm which demonstrates in orbit to catch debris in space, and we have a German company putting a payload to test the separation mechanism, and we also have 2 artworks as well. So we have micro sculptures of the 3 great scientists of India: Dr. Vikram Sarabhai, Dr. C.V. Raman, and Dr. Abdul Kalam, sculpted into the eye of a needle, by a micro artist for several months of passion, and that as a tribute to the great scientists. In fact, the rocket is named Vikram, and our engines are named Kalam, and we also have an upper stage engine named as Raman. And all 3 are going in the rocket, and this microsculpture also went with the rocket, which is a very unique payload as a tribute to the great scientists. And also we have a very special diamond, and like we say, like a diamond in the sky, we were able to put a beautiful diamond in space today. And this is a green diamond, by a company called Cosmos Diamond, and it was shining bright in space, as you can see from the camera views. I think it's the first diamond ever to be put in space.
Well, quite appropriate, like a diamond in the sky. But Pawan, you also did something interesting. You had everybody who's worked on Vikram 1 sign their names on the rocket itself. How many people actually worked on it? How many signatures went up?
So, in fact, everybody who worked on the rocket, on those last final days of integration and liftoff, signed on the rocket. So we have close to 200, 300 scientists, engineers signing on the rocket, and it's very emotional. You worked on rocket for several years, and then signing it off to space has been a great connection which we have built with the vehicle. And it's a proud moment for all of us, and the rocket took off really well. A lot of great wishes as it took off.
Yes, a lot of great wishes. I'm sure that you've got a lot of messages from all parts of the world so far. Of course, the Prime Minister and others have already congratulated you, but any other interesting messages from people that you've received so far, Pawan?
Yeah. So in fact, we have a very special card which has been received by none other than our Honorable Prime Minister Modi ji. And that card, the Prime Minister wrote as Vande Mataram, and that card is in orbit right now. So Vande Mataram is in orbit.
Yes, Vande Mataram is in orbit. But today we're celebrating the success of this launch. But what has it taken to put this rocket in orbit? And I want to talk about the frugal innovation as well as the frugal engineering, because the costs that you've been able to achieve, the costs that you've been able to demonstrate are also significantly lower in comparison to the global benchmarks. The question then, Pawan, is how? How has all of this happened? How have you been able to make in India frugally both high innovation but low cost?
In fact, Shri, India has been blessed with a great ecosystem for over 6 decades. India is a country which went to Mars, Moon. We have big rockets, small rockets. ISRO has done a phenomenal job in 60 years in building an ecosystem. So Vikram 1 rocket has more than 400 suppliers, all from India. So you have this ecosystem already quite robust and built in India, and it has been launched from the historic first launch pad. The same pad where some historical launches, some of the really, really proud launches from the country has taken place, like Mangalyaan, etc. And so we took off from the launch pad. So the infrastructure is available. The supply chain ecosystem is available. So you did not invest a lot of infrastructure to be able to do this. So our focus was on design, optimizing, using the best tech to reduce the cost. I think that focus really helped us reduce the cost. And also, like I mentioned, 3D printing, reduces the number of parts, reduces the cost significantly. Carbon composites, if you master, has a significant impact on cost. And also, you can mass produce the rocket like never before. So these are the, some of the advantages. And the frugality is in our DNA without affecting precision. You can see the first mission itself is a grand success. So we have no compromise on precision. Yet, we have cost effectiveness and frugality at our core.
When we last spoke, Pawan, we were talking about how challenging it was to actually build the team and get people to join you. And you said that people actually thought it was a joke when you sent out ads saying that you were looking for scientists and engineers. I would imagine that today the picture will change completely. You will be inundated with young engineers and scientists looking for opportunities with Skyroot. I also want to link this to the fact that you formerly were at ISRO. You started your space career at ISRO. You were a scientist at ISRO. Today, what we are seeing is that there seems to be an exodus from ISRO at this point in time. Perhaps people are exploring private sector opportunities, etc. As somebody who started at ISRO and today is the founder of Skyroot, creating history, how do you believe that we should look at what is happening at ISRO? Does that concern you?
Oh, no, not at all. In fact, it's I think a bit exaggerated, because ISRO is an organization of 16,000 people. So 100 people leaving out of 16,000 people is like extremely low attrition. I think ISRO is blessed with extremely low attrition, unlike any other company. So I think this is a bit exaggerated, and I think it's a very so something which is not in fact much lower than a typical private sector company or corporates. So I think that way it's not like a big exodus which is really happening out there. And this was very large and very structured, and so I don't think it will create a huge impact as well. And it's also good to have like talent moving out and having different kind of experience, or like building companies, or like people won't even join ISRO. Many people dream about joining ISRO and building their career in ISRO as well. So I think this is a cycle, but I don't think there is a alarming number which is coming out. In fact, when I came out of ISRO, probably hardly anybody. In fact, everybody who joins ISRO retires in ISRO. Very few people are the ones who do, because like 100 over 16,000 employees is not a big number at all.
Republic.
This is an upcycle as far as space tech is concerned, not just here in India, but globally, on the back of what we've seen happen with SpaceX. Given that, and given what you've been able to achieve today, are you perhaps looking at fast-tracking the possibility of an IPO?
So right now we're not thinking in the direction, because we just reached orbit. The next phase is to reliably reach orbit multiple times and then get to commercialization. The target to get to commercialization at scale. So I think it is going to take us some time. In fact, like companies in the past have taken like, SpaceX is a almost 25-year-old company now, right? So you have to take that path of commercialization, and then I think maybe later on we can think in this direction. But right now our core focus is building more rockets, launching them reliably, establishing ourselves as a very reliable launch customer, launch player globally.
So let's talk a little bit about the future trajectory now. When we last spoke, you said that you were looking at least one rocket a month. That was the plan, or that is at least the ambition. From there to commercialization, what are we actually talking about? And run me through what we can now realistically expect in terms of monetization, in terms of revenue. What are you starting to bake in after this successful launch?
Yeah, so in fact, we'll have this year, and next year we want to ramp up the production so that at some point, I mean, it's difficult to tell at which point we'll get to one launch a month, but hopefully sometime next year we will. We're targeting to reach one launch a month. In fact, our recent factory, which was inaugurated by the Honorable Prime Minister, Infinity Campus, we have built the infrastructure to be able to manufacture one rocket a month, but we're yet to get to that production capacity. But I think this successful mission will help us accelerate to produce more, because a lot of the rocket has been proven right now, and it's a good time to increase the production rate. So once we get, hopefully next year we get to that production rate, and that is like, in fact, globally speaking, very, very few companies, launch. Hardly, in fact, hardly any companies launch at that cadence even today. So I think that would put us, as probably the quickest companies to get to that cadence. And then from there we scale. We scale pretty big. We have other versions of the vehicle called, we have a Vikram 2, which has a capacity which is 3 times of Vikram 1, almost a ton to orbit, which is also very attractive, launch vehicle or rocket at the market. So we'll have evolutions of the vehicle, which higher payload capacity, and it serves the wider range in the market.
So realistically, when can we expect Vikram 2, which, as you said, will be a ton to orbit, which is the next milestone that you're targeting?
Yeah, so we're looking at something like end of next year.
End of 2027. But, Pavan, I want to talk a little bit about the mindset and the engineering and the complexities around engineering is one aspect, but the mindset to believe in the mission, to believe and have the courage and the conviction of breathing life into your dreams, so to speak. And I know you said that you don't think about failure, and you've always framed problems from not the point of what if we fail, but what if we succeed. So today, does that give you validation? And what has been how have you been able to create that mindset, that culture of conviction, of courage, of innovation within the young company that you have run?
Yeah, in fact, that's always a work in progress. I always say, we do 2 things. One is rocket engineering and the other is people engineering. And the people engineering is as important as rocket engineering for a rocket company, because the technical rigor is very important. That's what we, the temper and the rigor is what we cultivate. And in fact, if you see even today's success is a testament to how the team is built, how the team thinks, the attention to detail, because in a rocket, a zillion things can go wrong. Even the minutest things which we never imagined can go wrong. So I think the attention to detail is extremely important, from how you design parts to manufacture parts and to assemble parts. It's a long journey, and everything has to be perfect. There is no room for error. I think building a culture with that rigor is, I think, is a problem statement to solve. And I think with today's success, we have a good fair amount of confidence that we can scale it to even next level. But in fact, we also see companies who have some probably maybe their first few missions fail and they have a good cadence of success in some time, and then they also start having some failures in between, because that has to be sustained as well over a very long period of time. So it's a work in progress which keeps going on, and our team, I think, are really proud of how we built our team, and really people with that kind of attention detail, and also people who actually literally made the first attempt at orbit successful.
Well, building a culture of 0 errors, that is, as you pointed out, it is significant, but it also is significant to do that at scale, which is what you're hoping to do. But, Pavan, what did you tell your team? What was the first thing you told your team at the end of the launch?
No, it's all celebration, So we are all adrenaline kicked in. In fact, most of us did not have much sleep. In fact, I myself did not sleep for the last 3 days. So we were like on it, all in, on it for the launch. And then the moment this succeeded, it's all adrenaline, and that we had that high and that celebration, because we knew how much effort has gone into this and how much big this milestone is. So I think after this, I just congratulated my team. In fact, most of them had exceptional confidence that this will go well. And then once we saw it actually unfold, before our eyes, it's an experience which we can't describe. I just told them that this is a time to take some rest and and then get back soon